overnight in the Asia session. They're talking with a lot of positivity about 2025 and about the structural changes they're bringing about to the business. A Bernie Madoff provision, which took us back, but that doesn't seem to be moving things around too much in terms of where the stock goes over in Hong Kong. And Porsche in focus. We've had some news on car sales delivery, so we'll continue to watch the entire auto sector.
Okay, here we go. Time for Tuesday's Open. Let's see how Europe does. Strong session in the US yesterday, more moderate session out of Asia. Where do we focus our attention here in Europe this morning? Maybe a little bit of softness coming through. Corporate results are going to have a meaningful impact on what we see. It's going to be interesting to see how the banks trade with HSBC out, BNP out. You've got UBS tomorrow. That's going to be a big event as well. Stock 600 is down by 0.1%. The FTSE's up by 0.1%. What does that tell us maybe about where we're seeing some of the losses? Too early to tell, I would say. CAC yet to open. DAX, SMI, all looking quiet this morning. The IBEX is up by 0.3%. You've got Iberdrola numbers out this morning as well to factor into your thinking there. But we're going to wait for the CAC, we're going to wait for the DAX, we're going to wait for the SMI. Critty, what are we seeing in sectors?
Well, right off the bat, I mean, I'm just looking from an index contribution perspective on the stock 600. You are seeing a tale of two banks. To the upside, HSBC is driving it higher by about 2.3% this morning. To the downside, it's BNP. Those are your biggest contributors and weights when it comes to the stock 600. Besides that, I'm seeing a little bit of a hodgepodge, Anna. When it comes to the underperformers, I'm seeing tech and luxury taking a little bit of a backseat today.
Yes, and because of that divergent performance between HSBC and BNP, then that sector is sort of a little range bound. So banks overall not going very far, but certainly the move higher in London for HSBC, up by 2.5%, is adding to a little bit of outperformance in London. We're up by 0.1% on the FTSE 100. We're not open on the CAC and we're not open on the DAX, but BNP Paribas does seem to be open and is down by 3.6%. A lot of questions being asked then about this individual credit, but even away from that, questions around Sudan, and little has been added to that conversation, perhaps, the Sudan conversation overnight.
So, tactically, what do you do here? You've got a big credit that's a problem. Do you tell the market about it? Do you give the market details about it? Do you try and give some kind of clarity and allow investors and analysts to get some sort of understanding? Or do you say, actually, it's too early, we don't know yet, or we're not going to give some details out? It seems they've gone for the latter strategy, and I wonder whether the market will take that more negatively than maybe shining a light on it.
Well, I have to say, I'm not entirely clear when you make this decision, but sometimes it seems to be that there's a duty to protect a client or protect the privacy, and so you can't say anything. But on other occasions, like when we talked to Barclays, they just out with, this is what we had to do, this was the exposure to this business in the US that went bust.
But it leaves the market asking questions.
Yes,
it doesn't know, so the instinct is therefore to take a more negative perspective on it. I don't know, I can't, if you're not telling me, I'm going to assume the worst. You have to, as an investor, you maybe have to assume the worst. Maybe that's what you're seeing in BNP Paribas this morning. Novartis is not going down well either. Novartis is down by nearly 4% on the back of its numbers as well this morning.
It's interesting that UBS, though, is having a good day, and I believe the earnings are coming out tomorrow, I want to say. So.
I can assure you of that. I'm going.
Yes, we will have Guy Johnson in Zurich, so maybe you can ask what's going on with the UBS shares. But it is seeing heavy volume. So I think when you look at the bank sector, quite literally, it is split into a hodgepodge of both sides. To me, what's interesting, though, is that tech is taking a backseat. NVIDIA and Deutsche Com talking about a partnership in Germany specifically. You would think that there'd be a little bit more excitement in the likes of the tech space, at least here in Europe, and we're not really seeing that. I wonder how much of this, though, is a retracement from the gains that we saw yesterday.
Absolutely. That seems fairly logical, doesn't it? Sort of big day up. It's interesting that Asia has not had such a positive reaction on the tech front, and maybe Europe with it does have some tech, but less of a factor.
But they were all hitting record highs yesterday. The S&P 500 closed at a record high yesterday, closed at a record high on Friday as well. The Asian index was at a record yesterday as well. So maybe today is just a little bit of a breather. Let's get a true perspective on this. Peter Oppenheimer, Chief Global Equity Strategist over at Goldman Sachs, joins us around the table. Peter, there's a lot of different threads that we can pull at. This is a good thing that we have you for a good chunk of time here. Let's start with the tech story. We've got a lot of tech earnings coming out this week. NVIDIA is still pumping money in every part of the world. How are you thinking about tech?
Well, in a positive way, because I think there's a lot more momentum. As you say, the big dominant hyperscalers are significantly increasing their capital spending, and that's generating a whole host of new growth opportunities in a broader context in the sector as other companies come along and look to provide new products and services on the basis of that increased capex. And I think that although technology has really dominated the debate and indeed the performance of stock markets, over a long period of time, well before the introduction of large language models, it's really been driven by very, very powerful underlying fundamentals. And so, although we've seen this sort of focus and domination of technology, it's backed by fundamental growth, and I think that's probably going to continue.
Well, I think what's so interesting about the tech conversation on both sides of the Atlantic is we're starting to talk about CapEx spend with a lot of the hyperscalers, the AI, the infrastructure, the data grids, et cetera. I don't really like to partake in the valuations comment, like thinking around tech, because I feel like tech is always going to and has always historically traded on very high valuations. But I am curious, should tech, when you talk about valuations, be trading something more akin to the likes of its value peers? I'm thinking Chevron, Exxon, et cetera. These are American names, of course, but basically value-intensive stocks that are more CapEx exposed. If now CapEx is a tech theme, how do you pair the two?
Well, I think it's an interesting point you raise, because the performance of the tech sector, which has dominated global equities, not just in the last year or two, with a focus on AI, but really since the financial crisis. So for 15 years, consistently outgrowing and outperforming other sectors around the world. That was generally in a period where there was relatively light capital intensity of the leading tech companies. And they were sort of leveraging in software and cloud computing, generating very high margins and returns.
Things you can't quite quantify.
Exactly.
Yeah.
And now you're right to say that these companies are shifting their business models and becoming much more capital intensive. I think two things are happening. Firstly, you're getting a symbiotic relationship now building up between the main tech stocks and the infrastructure players around them. For many years, there was a huge bifurcation in the market between growth, technology largely, and value stocks, which were seen to be low returning with very low growth prospects. But now, because of the ramp up in demand for electricity and data centers and other forms of infrastructure, which the growth prospects of these technology companies increasingly rely on, you're getting a broadening out in the market. So actually, very interestingly, despite the real focus on technology, you've seen both pockets of value and growth doing very well this year. And you've seen lots of value companies performing at least as well, if not better than tech companies.
Yeah.
And that broadening out is also happening geographically. Despite the focus on big cap tech and the US, actually virtually every market geographically this year has generated similar returns in local currencies, even in dollar terms. Generally, non-US markets outperforming. So we're getting this broadening out, despite the focus on tech.
Can I pick up on the tech theme? And this does link to the broadening out, actually, and just cite the performance of one stock this morning. Capgemini, so tech consulting business in France, started the day up by 9% on the back of their numbers, now up by around 8%. And we don't have to talk about the company specifically, Peter, but just in terms of the interesting thesis, what's happening here. You know, this is an industry that many people thought, how much is this going to be enabled versus disrupted by AI? And maybe the jury's still out, but in this current round at least, maybe the consultants are fighting back. According to Bloomberg, analysts saying within these numbers there's broad momentum in the AI-related services.
Yes.
I wonder if we're finally getting to a point where businesses are a little bit more able, a bit more willing to say, okay, we think we're ready to invest, we think AI can do this for us, and we're going to need these people to help.
Absolutely. I think if we look at the history of significant technological innovations, as this has been true from the Industrial Revolution, the steam engine, railway, mainframe computing, and so on, you get a significant focus on the innovation to begin with, and the companies at the epicenter of generating the infrastructure around it. But in time, it broadens out, and you get significant growth opportunities in companies that can provide new products and services around that transformative technology. And I think that's what we're in the early stages of seeing. Of course, we saw it in the internet and the dot-com bubble. That was a much more speculative bubble than we're seeing now, in our view.
Yeah.
But there were a great deal of hopes around the telecom companies that were building out the underlying infrastructure. But soon, a lot of the winners were really companies that could leverage that embedded CapEx,
Yes.
provide new products and services, and grow at very fast rates.
But I remember there was always that that awkward phase where every company said, "Oh, we're going to have an internet too. We're going to have a website too, and we're going to sell all our products on the web." And suddenly that was a thing. Everyone does now, but for a time there was a lot of questions about whether.
Well, and we're starting to see companies saying, "Well, we have an AI strategy. We're looking to
and
leverage
is the difference profitability this time around? Is that what sets us apart from the tech bubble? That back in those days there wasn't much profit attached to it.
Absolutely. Let's be clear. The dominant companies that are at the heart of this infrastructure spend are uniquely profitable with extremely strong balance sheets. So I think the big difference between then and, for example, now is that while CapEx is rising dramatically, and CapEx to sales ratios are approaching in technology the levels we were seeing back in the late 1990s, CapEx to free cash flow, for example, is really very low. Most of this CapEx spending from the hyperscalers is coming from their own internal free cash flow. And so they're able really to scale up and meet increasing demand relatively easily. Back in the late 1990s, companies were tapping the debt markets, the equity markets. We saw something like 500 IPOs in the tech sector in '99. This year we've had a handful. It's a very, very different
You're
environment.
not worried about these sort of circular flows of money within the tech space, that NVIDIA helps out OpenAI,
Absolutely.
and OpenAI can then buy NVIDIA product, that sort of
vendor
financing thing.
Yeah, something we're watching at. Clearly, that is one of the sorts of things that you have as bubbles and enthusiasm develop. But I think, in our view, we're in the early stages of this. The fundamentals are much stronger. And, of course, the banks' balance sheets, as we've been discussing, are very strong. So they're less levered to, increasing CapEx spending that these dominant companies are actually generating.
Let's talk about the banks' balance sheets from a different angle. So Stock 600 so far this year up by 13.48%. Banks 45.47%. They have way outperformed every other sector. We've had a series of conversations with bank CEOs over the last few days. This morning, BNP is the one that stands out. Credit issues are beginning to bubble up and become more problematic. They're not detailing it at BNP Paribas this morning. The stock is down. Do I need to start applying a discount to the banking sector because of concerns over credit? Jamie Dimon tells me it's not a worry. Goldman Sachs tells me it's not a worry. David's been talking this morning. Are you worried?
No, and I'll tell you why. If you look at what's happened over the last 15 years since the financial crisis, the bank sector, because of tighter regulation, has significantly increased its capital base. If you look at the Tier 1 capital in the European banking sector, 10 years ago it was something like 4%.
Sure.
Now it's 15 or 16%. And because you have positive yield curves, positive interest rates, economic growth, and very strong balance sheets, you're generating high returns. So, the return on equity of the banking sector has gone up from less than 5% to 12 or 13%
Do we
over the last few years.
understand the risk, though? How much visibility? The Bank of England is really worried about this stuff. And I'm wondering whether or not we should be worried as well. The bank's concerned about the fact that it doesn't have line of sight on where some of the credit risk lies.
Well, that's because there's been disintermediation away from the banking sector into the private sector. Because the banks have been
But
very
how much of the risk remains within the banking sector?
Well,
UBS clearly had a problem with it the other day.
Yes.
BNP's flagging a risk with it this morning. How much do we understand about the risks and that disintermediation that has existed, and where the risk actually lies?
Yeah, I think there's more risk in the private markets than in the public banking sector. In the end, of course, banks need to make more provisions if you get weakening economic growth.
You would expect provisioning to rise going forward from
moderately here, because we're still expecting economic growth. So the risk for banks is really if you get an economic downturn, and I think the prospects of that are still relatively moderate.
Do you think the banks can keep growing at the kind of rates that they've delivered so far this year? Like 45% to the upside?
Well, it's been our favourite sector over the last year and last year, the year before as well, because they were transitioning from a value trap, having to raise capital, cut dividends, very low growth, into a sector that's really compounding growth for shareholders with very low multiples. Now, are they going to repeat that kind of performance? Probably not, but I think they've still got the prospect of outperforming. They still have relatively low multiples, and they're generating very strong cash flows, buying back stock, paying dividends. So there's a value proposition there, which is working well. By the way, we talked earlier about the spreading out of sectors. There's a lot of focus rightly on AI. European banks have outperformed mega cap US tech this year. They did last year as well. that doesn't mean that tech isn't doing well. You're just getting a combination of value creation as some value sectors accrete compound returns for investors, but also some good quality compound growth as well. And that's really been part of our diversification story.
But Peter, it feels like I'm being told two different stories, not from you, but just like from the markets in general. On the private credit front that the guy's talking about, it's inevitable that you are going to find one bad egg if ultimately your lending growth is that enormous, especially in the private markets, which we've seen even banks dabble into. So that's, again, inevitable. Whether it's systemic is a different question. But then you're also hearing this broadening out theme that you're talking about in terms of even tech stocks and value and growth all trading up together. Those are indicative of an expansionary economic cycle, of a growth cycle. But you look at credit spreads, you look at what's happening in even public credit markets, that's not where it feels like the markets are, that we're in the expansionary phase. It feels like we're slowing down, we're preparing for the next recession around the corner. How do you square those two? Which one's wrong?
I think we're still in an expansion phase of the global economy. We have US interest rates still coming down. We have the dollar weakening. We think that will continue. When you get that combination, you tend to get risk assets performing reasonably well.
Yeah.
Now, there are always other factors that can come into play. We know that risk assets, equities, and credit are expensive, so they're already reflecting a lot of optimism. And that's really why we're talking about diversifying more broadly to improve risk-adjusted returns. It's inevitable as you get excitement really building around the narrative of AI that you are going to get more competition, more capital coming in, more borrowing, particularly against younger companies that are trying to grow and scale up. And no doubt there'll be some failures on the way. A lot of that, I think, will be in the private markets, which has been doing a lot of this funding. But I think it will be less systemic because it's unlikely to really have a very negative impact through the banking system into the real economy.
All right, Peter Oppenheimer, Chief Global Equity Strategist over at Goldman Sachs. We thank you so much for joining the program this morning. Guy, lots of heavyweights, lots of moves.
Absolutely. In terms of what we're seeing in the core six, let's take a look at some of the numbers and watch out to see what we can extrapolate from it and spread from it. You've got negativity pretty much across the board. In the tech sector, ASML and Schneider are both down, which is interesting in the light of the solid performance we saw yesterday out of US tech. Little weakness into the luxury space. You've got Novo Nordisk softer. It's going to report numbers next week. This morning, it is Novartis, which is definitely down. Safety seems to be where people are focusing. Nestle, absolutely flat in this market this morning. You are seeing some weakness in the banks. BNP Paribas is down by over 3% this morning. Much better performance, though, coming through from HSBC. Let's deal with the details of some of these big stock moves that we're watching. Chloe Melle's here with the details.
Good morning, guys. So as you just mentioned, BNP Paribas is down quite a bit this morning. That is after the bank's trading unit took a hit from souring debt in the third quarter. That actually really overshadowed what was otherwise a really big jump in equities trading during that period. And it's, of course, another setback for the bank after a court ruling linked to human rights abuses in Sudan. So now that really puts pressure on the CEO to reassure investors that the bank can move past those challenges. Moving on to HSBC, which is a very different story. It is up this morning. It is up 2.4% after raising its profitability outlook. And that is despite the fact that earnings were actually a little bit weaker because it had to take a $1.1 billion provision linked to the amount of fraud case from over a decade ago. So it's actually a little bit of a mixed bag, but it seems that the market is really focusing on that raised profitability outlook for 2025, and HSBC is therefore up this morning. Moving on to the pharmaceutical space, and Novartis is down after some lackluster results. So earnings were weaker than expected, and that's because we're seeing the impact of generic competition start to feed through into earnings. Novartis is trying to mitigate that by making acquisitions. It's just bought a biotechnology company to try and gain access to those blockbuster drugs and mitigate that threat of generic competition. But in the meantime, it's seeing that impact, and we are down 3.6% as a result. Moving on to Nordex, which is a company that makes wind turbines, and it upgraded its margin guidance. Analysts have said that this is a blowout boost to guidance, and that is rising. And then we also have Capgemini, which is a software company over in France that raised its sales guidance thanks to really strong demand for AI-related services. And we're seeing the stock really rise this morning, 5.4% for Capgem. And finally, Simrise, which is a chemicals manufacturer, cut its sales guidance, and we are down 4% as a result.
Chloe, thank you. Chloe Melly from our equities team. Coming up on the programme, France's biggest bank takes a hit on souring debt. We were just looking at the performance of that stock with Chloe there. That stock is down more than 3%, BNP Paribas, of course. And provisions are also in the news over at HSBC, but not having a negative impact on the stock in their case. We'll break down the earnings stories from the banking sector next. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Minutes past the hour. Welcome back. This is what markets look like in Europe this morning. Single stock names are having an impact. Certainly BNP is a big part of what we're seeing in the CAC 40 this morning. So the French bank out with numbers, HSBC also out with numbers. That's the difference you're getting maybe between London and Paris this morning. We know there's lots of things we don't know about BNP, and I think that may be the issue this morning. So BNP Paribas trading unit has suffered a hit from souring debt in the third quarter. It's talking about a specific credit that is causing problems. We don't know what that specific credit is. We were told by Lars Machenil, the CFO, a little bit earlier on, it's in the payments area. I don't know where that takes us. Tom Metcalf joins us from our banking team. That's the issue this morning, isn't it? We don't know. And they probably can't provide us clarity to satisfy the market this morning. So that leaves BNP Paribas share price in a difficult position.
Yeah, exactly. I mean, it just sets off a guessing game, right? So as you said, there's, 900 million of provisions this quarter, which is much more than it was expected, which is probably why the shares are down so much. Yep. And within that, there's this intriguing specific loss of 190 million euros, which they can only say, look, it's a specific file. And as you had the CFO saying, the detail you may not manage to get out of him was it's in the sphere of payments. And I think he did say something like it's not the usual names flying around. So it's not a first brand, presumably. It's not a tricolor. But of course, like you say, what that leaves is people going, well, who is it? And what should we be thinking about that? And there's various, probably regulatory reasons BNP Paribas can't go into more details. But certainly it's something, my team's going to be trying to find out is who exactly is this file on? And, that will then help the story. Is it, very clearly an idiosyncratic thing? Yeah. Is 190 million, that's a big chunk of change. So it's a really fascinating dynamic. And, it's not really BNP's, I guess, ability to kind of disclose that, but hopefully my team can kind of break that today. That's certainly what I'm going to be asking them.
Yeah. Excellent. Setting the bar high, Tom. Now, HSBC, we've had some disclosure there of a provision from a rather unlikely source, perhaps, because this takes us back a decade or more. A legal process. We've got this. They've taken a provision regarding Bernie Madoff.
Yeah, 2009.
What's happening? Because that's not moving the stock. The stock is up on hopes around 2026 and what they can do.
Yeah, so interesting different situation here. So what HSBC did actually disclose that yesterday, so the day before results. Market absorbed it, 1.1 billion, big number, but manageable in the context of HSBC. And then they've come out with a very strong set of results, obviously impacted by that big provision, but the market's able to kind of focus in on, okay, well, let's look beyond that 1.1 billion. It's a one-off. As you say, very historic. So the case has started, I think, in 2009. And, we had the CFO talking about it, basically going, look, there was a court ruling on Friday. We obviously have to adjust, provide for that. There's a big chance, there's a lot of unknowns here, that provision changes. So yes, in comparison to BNP Paribas, it's kind of, HSBC have done a good job, I think, of making clear that's, this big one-off event that's focused on the underlying business. So different comm strategies there, obviously out of different situations.
Yes, of a different era, that one. Tom, thank you very much. Bloomberg's Tom Metcalf with all that is happening in the banking sector, and there is a lot to talk about. Also, lots going on in tech. Let's go there now and just check pre-market on what's happening in the United States, because remember, we are an hour closer to our US friends right now, this week, for a 1 week only. We are an hour closer. So we have this pre-market trade. So we've got Qualcomm down just a touch, but I mean, yesterday's story was a big climb of 11%. ARM was also up as a supplier to Qualcomm, up by more than 4%, launching chips to take on NVIDIA on data centers.
Which takes us to NVIDIA. But the comparison between the two, I think, is amazing. Over the last 5 years, NVIDIA's done something like 1,400% to the upside, and Qualcomm's done some 54%. I can't exactly remember the numbers. But presumably Qualcomm's got quite a lot of ground to make up. So it's going to be interesting to see what happens. Corvo, what do we know there?
Well, M&A is back on the table in every single sector. The Information, the major tech publication over in the States, reporting that the Apple supplier, Skyworks, is holding talks to buy Corvo. So, of course, you can already see that pre-market bid higher by almost 12% on that stock.
Yeah, let's talk about energy and Next Era. Often energy and AI and tech go together these days, don't they? Tech, Next Era, up by 3.5%. The company is planning to restart one of its nuclear power plants in Iowa as part of a collaboration with Google. Coming up on the program, President Trump tells Japan's Prime Minister that she can have anything she wants. This is Bloomberg.
Take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
to the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
In case you missed it on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
In case you missed it on the opening trade.
Rates are on hold. I think rates being on hold is appropriate for the current period. If they tighten more, then we have to loosen later. More than a year ago, I talked about that being a policy boogie.
Yep.
And I thought that's not a good thing for monetary policymakers to do. The hold is appropriate at this point.
Avoid dancing at all costs.
Don't miss the opening trade live every weekday.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back to the opening trade. About 30 minutes into today's session, and we are seeing a sell-off on our hands and worsening as we speak. The underperformer, to my surprise, actually, is the DAX, down about 0.4%. The CAC not having a great day either, down about 0.2%. Guy, my suspicion is that this is a tech story that might just be weighing on the German index.
Yeah, you got SAP down. There's Rheinmetall on the move as well, which is worth noting as well. Obviously, that's become something of a heavyweight within that market. In terms of the balance, as you can see, 163 up, 414 down. Volume's a little light. Which is interesting on a down day. That's worth bearing in mind as well. Remember, gold's kind of moved a little lower as well this morning. There's a number of different factors in this market that you need to take a look at. In terms of the leaders, what's driving us to the upside? The outperformance that Critty mentioned in the FTSE 100 is down to HSBC. Massive heavyweight within that market is up by over 3%. Spain's actually doing relatively well on the back of Iberdrola as well. Air Liquide within the chemical space, not doing too badly. Remember, chemicals is something you want to pay attention to. It's a precursor for the entire economy, particularly here in Europe, and that's worth watching too. The numbers out of Iberdrola certainly driving that stock high. In fact, wind turbine stocks this morning, take a look at Nordex, doing very well. On the downside, Novartis, we were talking to the CEO a little bit earlier on. That stock is down by 4%. SAP, that's what's causing maybe some of the German weakness as well. But Paribas, I think, is the really interesting story this morning. What is that credit? What is happening in terms of provisioning? That's what seems to be the story as well. Plus, also, I think you just got to factor in your thinking around what is happening with the French economy at the moment and the difficulties that we could potentially see for the new government there a little later on this week. So that's the picture out of the markets. Anna, what else do we need to know?
Yeah, let's get an update on some of the other stories that we're putting front and centre this morning. Goldman Sachs CEO David Solomon has downplayed concerns that have surfaced following the collapse of US firms First Brands and Tricolor. In an interview with Bloomberg TV, he said he doesn't see any systemic risk looming in the credit market. Jamaican officials are urging residents to brace for Hurricane Melissa as it tracks toward the island at Category 5 strength. The powerful storm is packing intense rains and winds, threatening to cause widespread destruction on the island. Authorities are also warning of catastrophic flooding, with the storm expected to deposit up to 1 metre of rain across parts of Jamaica. And President Trump has reaffirmed the US alliance with Japan, calling the nation, quote, a strong ally. After meeting the nation's first female prime minister, Sanae Takaichi, he praised Takaichi's defense spending plans as the two leaders signed a framework deal on critical minerals and rare earths. Critty.
It's fascinating to see that friendship grow just days after she took office. Let's get a little bit more context on what not only his trip looks like, but what the relationship between the United States and Japan looks like. Paul Jackson joins us from our Tokyo studio. Paul, it looks like they're best friends. I don't think I could have said this for Takaichi's predecessor. Walk us through what has been achieved.
Well, certainly the flattery was free-flowing this morning as both leaders kind of slapped each other's backs metaphorically with compliments. Donald Trump was saying that he would do anything for Japan. The US would always be there. Meanwhile, Takaichi was saying the world was a more peaceful place because of Donald Trump, although she did stop short of saying she would nominate him for the Nobel Peace Prize. However, the backslapping continued. They didn't touch on some of the thornier issues that might be a bit more problematic for the relationship. There was also a golf putter swapped between the two sides as Shinzo Abe, the former prime minister, who both leaders admire, his putter was given to Donald Trump. I don't think he's short of putters, actually. But make no mistake, all the flattery was covering over the fact that this was really the US coming to Japan to cement their strong arming of Japan into spending money in the United States to the tune of $550 billion, because that's what Japan is going to have to pay to get this deal, which it's signed on the dotted line for.
Yes, and talk to us about foreign policy, security, defense. Prime Minister Takaichi is a foreign policy hawk, I understand, and there's been a lot of conversation about spending more on defense. How much has that endeared her to President Trump?
Well, I think that was a good move. I mean, I think for Takaichi's perspective, she wants to show that she's got statesmanship, that she can perform on the international stage, and also not become a new target for Donald Trump. So she wants to give him what he wants to hear. So bringing forward the raising of defense spending to 2% of GDP, bringing that forward a couple of years, that was a smart move by the Japanese side. And of course, Takaichi's saying all the kinds of things, the lines that the US wants to hear, you know, about taking more responsibility for defending itself and ramping up its spending. And as Donald Trump put it, also spending a large amount of money on more US weapons. Also, just honing in on the investment front, Donald Trump told sailors on the George Washington aircraft carrier that Japan, Toyota in particular, was going to spend $10 billion on new plants in the US. So he recommended that they all went home and bought a Toyota.
All right, Paul Jackson, we thank you so much for giving us the down low from Tokyo. We thank you so much. As we continue to analyze Donald Trump's visit to all of Asia, got the perfect guest to dissect maybe how this leads up to very crucial conversations with his Chinese counterpart. Elizabeth Engelson, Associate Professor in the Department of International History, the London School of Economics, joins us around the table. Elizabeth, there's a lot I want to digest here in terms of this kind of march to that high-stakes meeting, but I want to start with one of the things that Paul just laid out in terms of the U.S. and Japanese relationship. He talked about investment coming from Japan into the United States, which just a few months ago was kind of a non-starter when we're talking about the likes of Japan's investment in from Nippon Steel into U.S. Steel. And one of the key concerns was national security, to actually allow international investments into what Donald Trump at the time had called, you know, crucial American infrastructure. If that is now what he's using as an olive branch in some of these trade agreements, kind of opening those borders for investments, does the same apply to China?
This is such an excellent question, Kriti, and you're really getting to the heart of some of the dynamics at play here. So first and foremost is just how difficult investment, or how necessary investment in this infrastructure is in the first place, that Trump does need foreign investments as well as a significant US government investment in a lot of these industries as well. But as you're saying, there are also extraordinary tensions with the national security dynamic at play. And here we're seeing the ways in which national security is defined according to which country is the investor. And at the moment, at least, Japan is seen as not to pose the same dynamic or same threat that China obviously does purport to provide the United States. But the bigger sort of concern here is the ways that Donald Trump's visions of building a manufacturing strength within the United States and building up a resilience to a reliance on China is really going to be costly, capital intensive, and raise national security concerns. I mean, the other thing to keep in mind with what's happening with Japan is that this $550 billion fund is one that Japan has signed on the dotted line to allow Trump, at least at the moment, allow Trump to decide how it is spent. This is an incredibly open national security risk for Japan too. And so I think there are real tensions underlying a lot of these headline deals that Trump is touting across the world. The current one is Japan. There's also deals with Thailand, Malaysia, Cambodia, and other parts of Asia as well. And the details are where it really matters.
Well, let me get super nerdy super quickly, if I can, even further. One of the key things that stood out to me in the U.S.-Japanese framework, or at least the commentary, was how he approached the currency conversation. He is actively, and Scott Bessent has actively criticized both Japan and Switzerland when it comes to basically trying to do FX interventions. This is something he's now looked at when it comes to the relationship with Latin America, using FX as a positive way to kind of build a relationship. He did that with Argentina. When it comes to China, currency manipulation has been a key sticking point. Do you think we get some clarity on that, or even a move forward in terms of either attacking China or pulling back from that currency manipulation story?
I think the currency manipulation story is a long-term sort of issue that has been, it's not just affecting, as you're saying, China, it's affecting a whole range of countries that Trump has sort of listed as problematic and as manipulators. Ireland is also on that list, right? And so I think the thing here is that there are two dynamics at play throughout what Trump is doing, both in Asia and more broadly, and that is the short-term headlines, the short-term celebrations of various breakthroughs, but these longer-term issues as well. So currency manipulation being one of them, being a way in which Trump is indicating at least an attempt to put pressure on certain countries over, in this case, issues of currency manipulation. You see it also, of course, with semiconductors and with other sort of crunch points too. So in that sense, it's part of a larger, longer-term story of the United States seeking to put pressure on countries, including Japan, including China, including Ireland for that matter, when he needs to.
Elizabeth, good morning. I know your focus is come at this from a sort of historical, geopolitical perspective. We're getting a lot of headlines, though, coming out of China right now about what they foresee for their economy over the next 5 years. And one of the things they're talking about is vigorously boosting consumption. Now, waiting for China to do something material to boost domestic consumption so it doesn't have to be so reliant on exports has been something that economists have talked about for a very, very long time. I wonder how this plays into the relationship between China and the United States, because China would want to see this. They would want to see some of the gluts in production being eaten into by domestic consumption in China.
Yeah, I mean, this is part. So we saw a real centering of this issue last week with the fourth plenum planning for the next 5-year plan. And what's happening here is China's really seeking to create a more advanced manufacturing sector within its country and sort of high quality manufacturing. And this is really part of a much larger attempt that China is putting in place, but also the United States, to de-center the real interdependence that still exists between these two, the world's two largest powers. So in seeking to boost consumption, that is an attempt to sort of move beyond what's called involution within China, there's this real sense, or in Chinese as a neijuan, and it's this real sense in which the interdependence between the two countries needs to be unpacked. So with China, we're seeing it through diversification as well. So the big headlines is, of course, soybeans, China turning to Brazil. But in the United States, States too is these attempts at diversification. We're seeing it with the rare earths, with the attempts for at least attempts for Trump to have deals with Australia, with Japan now, and other countries. I mean, these tensions, though, and problems are still showing us the extent to which both countries are and remain interdependent.
Right, and we see, as you say, lots of news flow around rare earths and trying to play the strongest hand you've got as you go into this conversation then, I suppose, this week between Trump and Xi. Do we sense that there is anything that's going to come out of this meeting that's going to give us a big picture reset on the trade relationship between these two countries? Or is this all about firefighting for another 12 months around hot button issues?
I think the firefighting is the big picture issue, is the big picture story. I think what we're seeing now is a pattern of volatile cycles. So what will likely happen on Thursday is something similar to what's been happening over spring and over summer here in Europe with all the different meetings, track 2 meetings that have been taking place in the lead up to this meeting on Thursday, where we're seeing sort of crisis moments here and there, moments where both sides flex their muscles, and then a walking back of that as well. And I think that is the new norm, these sort of cycles that have been going on really since Trump's administration. One difference, I would say, is that China, at least particularly since October, with sort of its expansion of the rare earths listings, its restrictions or its announcement of restrictions on lithium batteries as well, China is now really showing its interest in being more assertive and aggressive in that cycle of crisis and walking back, that China is taking an active role there and not just sort of being defensive in response to the United States.
Is Taiwan on the table?
Taiwan is sort of coming back to Kriti's point earlier. Taiwan is one of those sort of long-term, really sort of significant underlying issues. There's a lot of talk that it's possible, it's probable, in the same way that perhaps something like Ukraine is on the table and conversations about China's capacity to sort of work with Russia on that issue. I think the key thing with Taiwan to keep in mind is that Trump himself has a relatively disinterested approach to Taiwan. But members of Congress and of the Republican Party more specifically there are groups within the Republican Party who have a very, very strong interest in Taiwan. And so Trump is taking a relatively transactional approach to Taiwan, sort of asking it to pay for its security and so forth. But that is a very, very fundamental sticking point between both countries. It may be discussed on Thursday. It certainly will be one that won't be resolved on Thursday.
Great to see you. Thanks for talking about us and setting us up nicely. This is Elizabeth Ingleson, Associate Professor at the Department for International History at the London School of Economics. Coming up, financial heavyweights gather in Saudi.
Many high-quality companies that need capital that's flexible and long-term in nature, and they need that partnership orientation. And there's a lot of investors who want that exposure. And so this opportunity, I think, is already large, and I think it's going to continue to grow.
CEO of Brookfield up next. David Solomon doesn't see credit risk over at Goldman Sachs. Certainly doesn't see systemic credit risk. We'll talk about that next. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome back to the opening trade. We are 49 minutes into Tuesday's session, and we see divergence across these markets. Most of the markets in Europe, to be fair, are retreating down by 0.3% on the Stock 600. The FTSE 100 just keeping its head above water. Oh, there we go, just gone unchanged. But HSBC is what makes the difference there. That heavyweight stock in London pushing that market to slightly higher territory this morning than the others. Now let's return to some of the global themes that have been up for discussion over in Saudi Arabia this week. Goldman Sachs CEO David Solomon has told Bloomberg exclusively he doesn't see any systemic risk looming in the credit market following the collapse of First Brands Group and Tricolor Holdings in the US. Solomon is among those Wall Street giants speaking to Bloomberg at the Future Investment Initiative in Riyadh.
I don't see anything in the context of a handful of bad credit situations that's leading me to say that we have a systemic issue around the corner. Yeah. Unfortunately, lenders make mistakes. There is fraud in markets, and that's something that as lenders we all have to try to protect against. But we should not be fooled by the fact that this is a very robust credit environment. Credit spreads are tight, and when we do have a cycle, which probably will come when there's an economic slowdown, there will be losses, and we'll feel that across the economy.
Standard Chartered CEO Bill Winters agrees with some of what we heard there from Solomon, exclusively telling us he also doesn't think there are hidden risks in the credit market.
A lot of the noise and drama around private credit is, somehow that there's a whole bunch of risk that's hidden in the system because it's no longer in the banking system, and that's going to present some systemic exposure. I don't see it. At some point, if the credit cycle turns down, they'll have losses. Okay. And those investors will have lower returns or negative returns, but that's business.
Bill Winters there. Yeah, really interesting conversations about whether there are systemic issues, whether the banks will provide, if we see a downturn in credit and poorer underwriting standards, whether this sticks to banks or whether this will be entirely in the non-bank arena. That seems to be where the market's
Where has the non-bank arena got its money from, I guess is the question.
Yes.
That's the umbilical cord that links what is happening between the regulated banking sector and into the shadow banking sector, I guess we call it. There's a number of different ways you can kind of talk about that sector. But there is still a connection.
Yeah, as banks lend to the lenders.
Precisely, and this is where we don't know yet where the risk is and how quickly it feeds back up that umbilical cord. It's really hard to tell, but certainly judging by the performance over the last few days, there is still a connection.
I think the behavior of the banks when it comes to this is really interesting here, because initially when you have this massive kind of private markets boom in both equity and in credit, post-COVID, the banks were not a part of it. They were traumatized by the GFC, traumatized by this kind of 06, 07 mortgage, whatever.
Yeah.
So a lot of it, to your point, was financed by the Apollos, the KKRs of the world, among others. Now you're starting to see deals that are a combination. It's JP Morgan with a name your private whatever, or your bank.
But that link
with
has
private.
existed for a while. There's still been this connection back into the banking sector.
There has. But my point is, I think the exposure question that you're saying is one that's more recent, and it's in partnership as opposed to one that was
maybe
the banks are lending to the credit firms. Now they're both lending together. Is more my point.
Yeah, but even when they were lending to the credit firms that they were lending, that connection is still there. But where does the risk lie within that relationship?
Fair, but does it even matter if the lending growth, again, I'm putting my bull hat on, if the lending growth is so big that it can offset and take basically any of these one-off impairment charges, then does it matter? And that brings up the question, is it systemic or are these one-offs? And that's basically what we had. Yeah, we don't know.
Yeah, absolutely. A lot we don't know, and we'll continue to ask the questions around this. Chrissy, let's talk about what else is on the agenda for today.
Yeah, we should. I mean, we are, of course, keeping one eye on where Donald Trump is in Asia. He is, of course, in Japan. We were just watching him make comments in the USS George Washington as well. But there's plenty of data that we've got our eye on. U.S. consumer confidence heading at 2 p.m. UK time. Remember, we did receive weak sentiment data last week, so we'll see if that's reflected in some of the data that we get today as well. And then it's earnings central, ASM after the European close. But I think NVIDIA, you've got your eye on NVIDIA in a pretty big way.
It's the GTC event that's taking place. It normally takes place out on the West Coast. It's taking place in D.C., kind of Silicon Valley coming to Trump, basically, who's not there, ironically. And you've got this keynote speech coming up from Jensen at about noon today, which I think will be certainly something you want to watch out for in terms of what he says, kind of where he thinks we are at the moment. So that'll be certainly something to watch out for.
Yeah, 4 p.m. London time, I'm told. Bloomberg's Valerie Teitel is around here. She's got her eye on every single thing out there. We were just talking about NVIDIA. Let's start with NVIDIA, then we'll broaden it out.
Sure.
I mean, what do we expect to hear from this keynote?
Well, look, it's interesting that they're having this conference in D.C. So if Jensen Huang, the CEO of NVIDIA, wanted to make a political comment, this is the audience to do it. And we know that Jensen has always been a proponent of the fact that U.S. tech companies should have access to the Chinese market, and restricting that access for U.S. companies would only dent the U.S.'s AI dominance. So we could have some spicy things to say, and this is obviously right before Trump and Xi sit down in South Korea on Thursday. So watch out for that. But he's also used these conferences and these keynote addresses to announce new products and to declare an AI vision. And we know that ahead of these Mag 7 earnings later this week, there are still a lot of questions on the monetization of AI and how we're going to get there from this rapid growth in data centers. Now, he could have, a vision for us, but, I guess NVIDIA is still a cash king when it comes to their AI chips that they make. It's not necessarily their profitability that matters. It's how the general AI sector is going to eventually turn this into a big monetization event.
Should we mention commodities? Because whilst we've been tracking all that's moving this morning, maybe we haven't given enough attention to what's going on with oil prices, down around 2% on oil prices this morning. Of course, they went up with the sanctions news out of the US toward Russia. That was last week. Gold prices, Guy, you've been flagging, we're down at 3,900, threatening to go below that
throughout the morning. We keep having we're getting there.
It's been an impressive two-day slide for gold now. It was down over 3% yesterday, down nearly 2% today. That is a 5% slide. I mean, that was those kind of moves we don't normally see. I mean, the bulls out there would say yes, but we went straight up in a straight line, 30%. Yeah. It's natural that some gas comes out of this trade, but there has been ETFs have been sellers in the last few days, and ETF inflows has been something that's really been driving that last leg of gains. So we'll keep an eye on ETF flows. But talking about the crude market, we do have WTI and Brent both down around 2%. Not a lot of new news, at least for the crude market. So it's interesting to see this kind of retracement. We now have WTI trading at a 60 handle after hitting a 65 on those new Russian sanctions from the U.S. that was announced last week. There is still fears of a supply glut in the oil market. There is articles out about how much tankers, how many barrels of oil are currently out at sea, and those numbers compare to the heights of the COVID pandemic, essentially. So these barrels still trying to find a home and trying to find demand.
All right, Bloomberg's Valerie Teitel walking us through a little bit of everything. And we should remember we have one eye, of course, on what's going on in the States. The pre-market open is very much there. Balaji was talking about the oil story, 64.32 on Brent.
And I'll just say, I don't think I've ever seen so many headlines about China in the space of about 15 minutes. So we've got most of it focused on consumption, but also pushing back against some U.S. policy.
Okay, that wraps things up. We're going to carry on watching all these markets. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg. Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
In case you missed it, on Bloomberg Tech Asia. I'm in a Nissan Ariya with the latest ProPilot system developed with Wave's AI technology. Bloomberg NEF says we'll see a robotaxi fleet about 6 million strong on the roads by the next decade. And with many of these projects scheduled to deploy across the world in the coming year, the era of robotaxis may be arriving soon to a city near you. Don't miss Bloomberg Tech Asia every month.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
In New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Trading trade. Futures muted after a searing rally in Monday's session as President Trump pledges a stronger relationship with Japan. All of this, of course, before his meeting with his Chinese counterpart Thursday. Mounting layoffs. Amazon and Paramount announcing job cuts in the last 24 hours as corporate America tightens its belt and turns to AI. And bank CEOs downplaying credit market concerns at the Future Investment Initiative. We're live in Riyadh this hour. So let's take a look at the futures picture then, because we're not seeing much movement at the moment. We did get that massive rally yesterday. It stalled out a little bit in the Asia session overnight, although just in the last few minutes, we're getting several headlines out of Xinhua News to the effect that China is going to boost consumption, is going to concentrate on quantum tech, on 6G. A lot of future-facing headlines coming out just in the last few minutes. Funny timing that with the Trump meeting coming on Thursday and such warm relations with Japan. So warm, in fact, that the yen is trading below 152 today. Let's take a look at the bond picture because we started with those auctions this week. They have been going pretty well. We have the 2-year at 3.48, the 10-year yield well back below 4%. Now 4 seems to be a ceiling as opposed to a floor, and the 30-year yield well below 4.60. So a little bit of curve flattening as we enter day 28 of the shutdown. I should also mention that copper continues to be at records and gold is back below $4,000. Make of all of that what you will, but let's get to some individual market movers now. Over to London, Valerie Titel. Valerie.
Good morning, Vani. I have a few to mention in the chip sector. Let's start with Micron Technology on a back foot, down 1.25% after its rival Samsung moves to slash some prices in the high bandwidth memory chip sector that Micron competes with them very heavily in. Samsung announcing they want to slash prices by around 30% in order to gain market share. So perhaps we're now looking at a very competitive landscape in the HBM chip department. So Micron on a back foot, as well as its competitor SK Hynix over in South Korea was down some 7% on the back of this announcement from Samsung. Sticking with chips, let's talk about NXP Semiconductors. They're out with earnings yesterday, giving a bullish guidance here. Now, this is key because they operate in the autos and industrial space here, Vani, and there had been some delays from their customer orders off the back of all the uncertainty around Trump's tariffs. They don't see that any longer and given a rosy outlook for Wall Street. So NXP Semiconductors up 1.6% in pre-market. Lastly, let's talk about the power trade. Google is teaming up with NextEra Energy. This is a nuclear power company in order to collaborate on future nuclear power production. NextEra Energy up 3.4%. They've also said that on the back of this collaboration, they are restarting a nuclear power plant in Iowa in order to team up with Google's power needs. Bonnie?
Valerie, thank you so much. And later this hour, we're going to be speaking with Kim Crawford of JP Morgan Asset Management as we enter day 28 of the U.S. government shutdown. But first, President Trump and Prime Minister Takaichi deepening ties.
This woman is a winner. So, you know, we've become very close friends all of a sudden because their stock market today and our stock market today hit an all-time high. That means we're doing something right.
Joining us now from Tokyo is Bloomberg's Paul Jackson. Trump promising almost anything to Japan. Paul, what's behind this?
Well, there was a lot of flattery and backslapping going on today as the leaders kind of congratulated each other. Trump offering to do anything for Japan and saying the U.S. will always be there. And Takaichi saying the world is a more peaceful place because of Donald Trump. The self-congratulation continued. But later in the day, Donald Trump told U.S. servicemen that Toyota was going to spend more than $10 billion putting up plants all over the U.S., therefore he should buy a Toyota. And this takes us to the crux of the matter. Donald Trump was here to essentially cement the strong arming of Japan into forking out $550 billion in investment in the U.S. And amongst a plethora of pieces of paper that came out during the day, one was a guide, a fact sheet to over 20 projects that are under consideration for this investment fund. Remember, this is an investment fund where Donald Trump makes suggestions and Japan has to provide the funds within 45 days or it risks tariffs going up again.
And obviously we're having that problem with South Korea that the investment promised is now, you know, a little bit in question because we can't get the details straight. So there is the possibility that that will happen, but certainly President Trump is making waves in Japan and with the markets as well, with the yen trading below 152. Does it stay there, Paul?
Well, that is to be, I think one of the key factors going forward is what action the Bank of Japan takes after the Fed this week, how near term we expect the next rate hike to be, and also how aggressively Prime Minister Takaichi spends in an extra budget to deal with the inflation problem that is at the heart of Japan's voters' dissatisfaction with the previous administration of former Prime Minister Ishiba.
Paul, thank you so much. Very appreciate the context this morning. That's Paul Jackson there in Tokyo. Many tech companies laying off employees this year, with the latest being Amazon reportedly cutting jobs across many departments. It could affect as many as 30,000 people. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, why these particular cuts at Amazon? It seems like a massive number. Put it into context for us.
Yeah, it does. So 30,000 people. That's a little shy of 10% of their corporate workforce, and just about 2% of the total workforce. They employ over 1.5 million people. I think there's a number of things going on here, but essentially this is Amazon readjusting its workforce after a large amount of overhiring through the pandemic, and it's not the first round of big cuts they've made in the past few years. Now, I think clearly there is an AI element to this, that they're feeling like they can make these job cuts because the AI technology is maturing, and there are clearly some parts of those jobs that can be replaced by technology. And but Andy Jassy, the CEO, has always been a big proponent of automation. So I think there's a number of things going on there, but it's not just about AI. I think AI is part of the solution for an overhiring problem they had a few years back.
Yeah, I mean, we have seen several headlines in recent weeks from tech companies, including Meta, for example. And at the same time, they're spending a fortune as well on new hires, on AI hires and so on. Are they just switching around what they're prioritizing, Matt?
I think there is an element of that, and that's definitely the case with Meta. With those 600 AI job layoffs they made, it was just to kind of redivert that into other areas. Obviously, the Paramount job cuts, you mentioned at the top of the piece, 1,000, it's about 5% of Paramount's workforce. I think that looks a bit, to me at least, more like a classic M&A synergy. They kind of merge with Skydance. So I think there's a lot of different things going on here, but I think definitely there's an element of moving jobs from one part of a company to another as they kind of reposition themselves around the AI opportunity. So it's not necessarily about net cuts. It's about making sure they've got staff in the right places to take advantage of this new opportunity.
Yeah. Matt, shares of Qualcomm continuing to rise in the pre-market. It announced new chips to take aim at NVIDIA. The stock soared, more than 20% at one point in yesterday's session. Are these chips, I mean, have we seen them? Do we know what they're like, and if they really are a direct competitor to NVIDIA's chips?
Yeah, so I think these new AI 200 chips don't actually hit the market until next year, but it's definitely kind of very much Qualcomm trying to get into the AI server market and take on NVIDIA. From what we know so far, it looks like there's a couple of different ways this offering could come to market. One is just as the chip, which could sit alongside other technology from the likes of NVIDIA. The other would be as a full AI server, which would very much be a direct replacement for products from companies like NVIDIA. Now, Qualcomm's obviously been very slow to get into the AI market. They started at it from a very different angle, from being a smartphone provider and moving into AI PC chips, which has been successful and growing, but they definitely need to kind of get bigger in the AI server market to kind of deliver a stronger midterm opportunity. And that the big advantage that they're looking to leverage is that the chips they've historically made for computers and smartphones have had to be incredibly power efficient. And obviously, as we all know, power is a massive issue in AI servers. So they're potentially looking to leverage that, because obviously as more corporates use AI processing, they're going to be really focused on the operating costs, and power is going to be a big part of that operating cost. So I think there's an opportunity here for them, but they've got a lot of work to do to convince big players in the data center market to at least test their products.
Yeah, and gain customers. That gain yesterday, 11%, and we're up fractionally again this morning. Matt, thank you so much. That is Matt Bloxham there. Over in Europe, bank earnings rolling in, with BNP Paribas trading unit reporting a hit from souring debt in the third quarter, adding to challenges after a string of recent setbacks. Joining us now is Bloomberg's Tom Metcalf. So Tom, this earnings report was very interesting because it added a sour debt provision on what it called a specific credit issue. Did we get any more details?
Yeah, probably the last thing BNP Paribas wanted, but yeah, there's sort of this now questions being asked about exactly which firm they've had to take this provision against. So 190 million euros they're saying is against this specific credit event. They aren't given any more details, so they have clarified it's not related to sort of some of those names that we've been swirling around, so it doesn't appear to be a first brand. It's not Tricolor. But of course, yeah, what the market and what we are over in London now asking is like, who on earth is this firm? So that's something we're chasing, and it's just the last thing BNP Paribas wanted. As you mentioned, there's a lot of sort of recent developments that haven't been great for the sort of sentiment on the stock. So particularly a recent court ruling on Sudan, which suggests they might be on the hook for perhaps several billion of damages. So it's the kind of thing they wanted, a clean set of earnings, but they're really being overshadowed by, in part, a lack of guidance upgrades, but also this credit provision.
Yeah, I mean, not mentioning exactly what it was makes people even more curious, right? Let's move to HSBC because we did have that hit from the Madoff provision and pre-tax profit was down 14% year over year. How concerned should HSBC be?
Well, no, the market's broadly speaking, been briefed on that, and they're stripping that out as they look at these earnings. And, actually HSBC shares are up today, and that's really because, taking aside that 1.1 billion Madoff-related hit they've had to take, it does look like underlying performance is pretty positive. So you had HSBC raising its 2025 guidance, basically saying that net interest income and return on tangible equity, they're expecting that now to be higher than they thought. And, that's the takeaway for HSBC, seemingly that their strategy of streamlining and simplifying does seem to be now taking root and kind of passing through into the results.
I do want to ask you about this LIBOR rigging scandal, which continues to dog us literally 10 years later. The man who went to prison for it, Tom Hayes, suing UBS now for $400 million, alleging it scapegoated him. And I should mention that that conviction was quashed 10 years after the conviction by the UK Supreme Court.
Yeah, exactly. I mean, another twist in this long-running tale. So, yes, Tom Hayes come out suing UBS, I think, in a Connecticut court, and effectively saying, they threw me under the bus, they handed me over to regulators, and it turns out the criminal court's on a silver platter. As you say, that conviction has been quashed. He's already served some jail time. And, this is a really interesting matter because, of course, it's not just Tom Hayes. There's other traders out there who had similar convictions quashed effectively or expect them to be quashed. And so the intriguing thing for me is, putting aside the merits of the case, is just how many more of these, kind of legal challenges are going to be hitting the various employees of these traders.
Exactly. I'm sure the lawyers are also watching with interest. Tom, thank you so much. Bloomberg's Tom Metcalf there. Now to other top stories trending on the terminal this morning. European car sales rose for a third consecutive month in September as more affordable EVs enter the market. New vehicle registrations increased 11% from a year earlier, with deliveries climbing in the UK and Germany by 14% and 13%, respectively. China has expanded its free trade pact with a group of Southeast Asian nations, a region that President Donald Trump sought to court with a flurry of trade deals. Chinese Premier and Malaysia's Prime Minister oversaw the signing of the China-ASEAN Free Trade Area in Kuala Lumpur. OpenAI is offering a free year of its ChatGPT Go service to users in India in an effort to capture a market of 1.4 billion people. The company will open with a free promotion to users November 4th. That coincides with its first Dev Day exchange in the country. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ. Mondays on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field.
Jerry Jones, Erica Ayers-Badon, Robin Arzone, Justin Tuck.
Stay tuned. You won't want to miss it.
Tomorrow, the Fed decides.
This Fed is anchored to a massive step down in payrolls.
They are data dependent. We have no data. As far as the employment picture is concerned, I think that they have a pretty good read.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
The Fed remains on track to cut rates.
You looked at the dot plot, and the dispersion looked like a B-52 bomber's wingspan.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
I'm Bonnie Quinn in New York. The Future Investment Initiative underway in Riyadh. Bloomberg's Jumana Bersachi sat down with Goldman Sachs CEO David Solomon. Take a listen.
The Fed, will cut rates tomorrow, and then we'll see. I know the consensus is you'll get another cut before the end of the year, but the policy rate has been higher. I think they're looking to move more toward neutral, and so we'll take a step in that direction. But I think the Fed always is an observer of what's going on in the real-time economy. The real-time economy can shift very quickly. At the moment, I would say the U.S. economy is in quite good shape, but I wouldn't jump forward. There are lots of forward prognostications about the path of interest rates. I would just highlight mostly, I'd look at the moment. You can project forward, but just because there's a forward projection, it doesn't mean that's where we'll wind up.
Uncertainty out
There's a lot of uncertainty. I think this is a great opportunity for people that are in credit businesses and are deploying significant capital as lenders in credit businesses to look at their procedures, their practices, their underwriting standards, look through their portfolio, and really take a strong evaluation of where they are.
Yeah.
You can't separate the fact that we've been in a very, very long, easy credit cycle, one of the longest I've seen in my career, without a real credit pullback, without an economic environment that's really put an enormous amount of pressure on credit. And in that context, credit spreads are historically tight.
Yeah.
And I know at some point there will be a credit cycle. It will probably come at a period of time when the economy slows more acutely, or there's some sort of a macro event that changes confidence we have in growth and the trajectory of the economy. And when that happens, given the velocity of lending activity, there will be losses in credit, and those losses will be felt across the system. But that's different than a systemic crisis. And I don't see anything in the context of a handful of bad credit situations that's leading me to say that we have a systemic issue around the corner.
Yeah.
Unfortunately, lenders make mistakes. There is fraud in markets. And that's something that as lenders we all have to try to protect against. But we should not be fooled by the fact that this is a very robust credit environment. Credit spreads are tight. And when we do have a cycle, which probably will come when there's an economic slowdown, there will be losses, and we'll feel that across the economy.
Goldman Sachs CEO David Solomon there speaking with Bloomberg's Jumana Bersachi this morning. Let's now go live to Riyadh, where Bloomberg's Francine Lacroix is speaking to some of the biggest names at the Future Investment Institute Summit.
Less relevant. Is it true? Let me be a bit provocative by arguing against it. One, our access point to a financial service by the individual. The number of banking accounts held by 15 years above and has been increased from 3 billion accounts in 2014 to now 5 billion accounts. And the global account ownership ratio has also increased from the 50% to now 80% over the past 30 years. Two, banks have been indeed providing financing to fintechs and the non-bank sectors. For example, in the United States, the bank lending to a non-bank sector has doubled over the past 5 years. Finally, banks are even distributing the products generated by those non-banking sectors as well. So that all means the banks remain an indispensable intermediary. And with that, however, we happen to be complacent, and what we need to be conscious of, and what we need to be prudent is, as a responsible intermediary, upon the intermediation, that we have to be careful about what we are going to intermediate in order to preserve the overall safety and soundness of the World Bank systems.
Mr. Russell, now how do you expect actually Saudi banks, but also broader Middle Eastern banks to change because of the disruption, which could be new entrants, which could be private markets, so what you're selling, and AI?
Francis, we are changing already. So when we talk about fintech or disruption or digital banks, I always respond by saying we are.
And you can continue to watch that full panel on your terminal at Live Go. Coming up, a look at what else is making headlines in your front page news. That's next. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
In case you missed it, on Bloomberg Tech Asia, I'm in a Nissan Ariya with the latest ProPilot system developed with Wave's AI technology. Bloomberg NEF says we'll see a robotaxi fleet about 6 million strong on the roads by the next decade. And with many of these projects scheduled to deploy across the world in the coming year, the era of robotaxis may be arriving soon to a city near you. Don't miss Bloomberg Tech Asia every month.
Time now for your front page news. First up, the New York Times reporting officials in Jamaica are concerned only a fraction of residents have headed to evacuation centers as Hurricane Melissa barrels towards the island. Jamaican authorities anticipate 50,000 will be displaced, with just 1,700 evacuating by last night. Next up, the Financial Times leading with Apple set to top $100 billion in annual revenues from its services businesses for the first time this year. The FT pointing out if Apple hits those numbers, that would make its services division alone larger than the entire annual sales of Disney, Tesla, or Tencent this year. And on the Washington Post, more than 100 former Justice Department officials urging a federal judge in an amicus brief to dismiss charges against former FBI Director James Comey. And those are your front page headlines. This is Bloomberg.
Trump to have been, you're never too young to learn AI. That's why he's urging the government for school kids as young as 6 to be taught how to use it.
Within this system, from first grade, they all start with the AI education. They play 4 years, just playing. And then from 5th grade, they start to develop AI by themselves. And STEM and robotics, I see very clearly how Vietnam should be in future. Vietnam just about 100 million people, young people, good education, and latest technology. That's the only way to go. Education not contribute much profit for equity, but from the country point of view, that's most useful contribution, what equity should do. And today we're thinking about every kids, not in cities like Hanoi or Ho Chi Minh City, but kids in the countryside should got the good education. That's what we're going to do now.
So you're leapfrogging?
Yes, exactly.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Trading trade, futures muted after a searing rally as President Trump pledges a stronger relationship with Japan before his meeting with his Chinese counterpart Thursday. Mounting layoffs, Amazon and Paramount announcing job cuts just in the last 24 hours as corporate America tightens its belt and turns to AI. And bank CEOs downplaying credit market concerns at the Future Investment Initiative. We're live in Riyadh this hour. Let's take a look at those markets then. As you can see, we have some movement on Russell 2000 futures, not so much though on the S&P and NASDAQ 100 futures complex. Of course, yesterday the S&P finished up 1.25%. The NASDAQ 100 was up 1.8%. Let's take a look at the bond universe. We have plenty of auctions this week, and of course, markets are waiting for that Fed decision, even as a cut is 98% priced in. But it's the language around the cut and what the questions asked might be that are moving this market. We have the 10-year yield now firmly below 4%, which seems to be now a ceiling, and the 30-year yield all the way down to 4.5446. A couple of fairly well-received auctions, and they continue as well. And then just to point out that the yen is below 152 per dollar as the president finishes up his visit in Tokyo. And we have some headlines out of China as well to the effect that consumption is going to be boosted, and a lot of positive things about the Chinese economy. That from Xinhua News Agency. Shanghai Composite Index did top 4,000, but then it strolled out. Let's get to some individual stocks to watch now. Over to London and Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with some breaking news that the U.S. government has announced an $80 billion investment alongside Westinghouse Energy, Cameco, and Brookfield in order to boost nuclear power reactors, nuclear power facilities to power the next era of the AI trade. We're seeing shares of Cameco up 14% in pre-market off the back of this announcement. Now, Bonnie, nuclear power and the power trade around AI has been a real focus of not only the U.S. government but investors of late. We've also heard that Google is teaming up with Next Era Energy in order to collaborate on nuclear power needs. If you can flip the board, Next Era Energy is also seeing a boost off the back of this announcement from Google that they are teaming up. The Next Era shares are up 3%. They've signed a 25-year agreement with Google that does include restarting a nuclear power plant in Iowa to help Google with its AI power needs. Lastly, let's end in the chip space. NXP ST Semiconductors. This is a semiconductor company that is focused in the autos and the infrastructure space, giving a rosy outlook when it came to its earnings after the bell last night. Those shares are up 1.6%. This does tie into the tariff theme here. Some of their customers had delayed some orders of chips at the back of tariff uncertainty. They see that uncertainty alleviating, and those customer orders are returning. Bonnie?
All right, Valerie, thank you so much, Valerie Titel there. Day 28 of the U.S. government shutdown and no end in sight. JP Morgan's Kim Crawford is concerned about a lengthening shutdown, also slowing wage growth, and says the Fed will maintain its easing bias tomorrow. Kim is Global Rates Portfolio Manager at JP Morgan Asset Management and joins us now. So Kim, of all of those worries, what's top of list for you?
Well, I think right now we're looking at the U.S. shutdown and how long that is going to go on for. Our base case is still that this is going to remain pretty short-lived in terms of the look ahead. But I do think, if it does continue lengthening for a significant amount of time and more paychecks get missed, then you go into the realms of non-linearity and discussions around more permanent scarring. But for now, we still think there are guardrails in place and that the macro impact will be relatively short-lived.
It's just another blind spot, right? And we've seen obviously deterioration in the data quality as well because we're relying on private sources for economic data. What is the Fed supposed to do if this continues past tomorrow's meeting? How does it read the health of the economy?
Yes, I think the Fed doesn't have the payrolls data at the moment, but there are still a lot of other indicators that it can look at. So on the labor market front, you've still got job openings from Indeed, you've still got the hiring rate in JOLTS, you've still got the labor market differential in the Conference Board survey, just to name a few. And those are still consistently painting the same labor market picture that we saw pre-shutdown, which is a labor market that is slowing gradually while slack continues to build. So I think that they do still have enough data. And then, of course, on the inflation front, we actually got the CPI number. And there, it's still pretty contained. Yes, we are seeing that goods inflation reaccelerate on the back of the tariff pass-through. But the magnitude is still pretty contained. I think businesses have clearly figured out ways to deal with these tariffs differently. Inflation expectations are still contained as well. And then, importantly, you've got that significant services disinflation offset that we saw, which we think will continue as well.
Kim, how concerned are you about layoffs right now? We have the official word from Amazon from their press release now that 14,000 in its corporate headquarters are going to be laid off. That was after Reuters reported 30,000 total layoffs. And of course, as Neil Dunham pointed out during the week, we've had layoffs at Nestle, Molson Coors, Target, Applied Materials, Charter Communications, GM. You can add Paramount, Skydance, and Chegg to that list now. I mean, these take on more significance when we don't have official data, right? Are layoffs really picking up in corporate America?
So I think it's a pretty bifurcated economy that you're looking at the moment. Part of the layoffs, I think, are structurally AI-driven, where the Fed's monetary policy isn't going to be the most effective tool to combat, as Wallace said a few weeks ago. But I think part of it is still a cyclical demand weakness. But our base case is still sub-trend growth. It's not recession. We are seeing some pickup in layoffs, but not something where the Fed, I think, needs to go way below neutral in terms of cutting rates yet. I think if I look at Q3 earnings as well, that are building this week and what our corporate analysts are telling us, margins are still healthy and they are high, partly on the back of layoffs, of cost reductions and efficiency gains. And then you also have investment that is going to be coming through on a look-forward basis because there's less uncertainty around trade. And then demand as well is expected to be relatively stable as long as this no hire, no fire equilibrium remains in the labor market.
So let's look at the FOMC. They obviously begin to meet today, decision and news conference tomorrow. What happens market-wise, Kim, if we get a very divided FOMC or, for example, if we get a two-sided dissent? So, Myron or somebody else wants a 50 basis point cut, but others don't want any cut at all tomorrow.
So I think Myron we all know that he probably will be dissenting. I think the rest of the committee is going to stick with that 25 basis point cut, given that the data they have, the labor market continues to slow, they still are above neutral, and they, I think, can still move gradually towards neutral. What we're actually going to be looking out for a bit more this week is the decision on quantitative tightening. Do we get any indication of when the Fed is going to stop its balance sheet runoff? If we look at our measures of liquidity to GDP, they have been running quite tight for over a month now, and I think there are some tensions in the funding market that the Fed should address. So we're looking out more for that and what the composition of the future balance sheet of the Fed can look like as well.
Where are you seeing those tensions, Kim, and how would you suggest that the Fed address them?
Yeah, so I think it's just stopping that balance sheet runoff before year end. I think there's enough in the data to suggest that they should do that just before year end to remove that tail risk of a funding flare up that then increases interest rate volatility as well. We also know that the Fed wants to move back to an all treasuries balance sheet. So the question for us is, where then do they put those reinvestments from mortgage-backed securities and treasuries back into the market? Is it more at the front end or more at the back end, or just split across the curve?
Yeah, I mean, this curve has had a bias towards, moving a little bit lower, Kim. Is 4% a ceiling now, do you think, for the 10-year yield?
So we're looking at a range of 3 3/4 to 4 1/4. It's been a pretty strong magnet, that 4% level. But I think what the market really needs is to see that payrolls data come back as the shutdown is lifted, and just see that tier 1 data to really push it into its next move, either lower or higher, depending on where the data goes. Where we actually really see value in government bonds is not so much the very front end at the moment. I still think you're getting a relatively cheap option on maybe a harder a softer economy taking hold. But I think really the real value comes in that forward space of intermediate rates, where I still think they are pretty high, considering that we have less uncertainty now on fiscal trends, economic outcomes, and the international flows as well. So we still do see a lot of value, probably more in the intermediate forward rates as for bonds in your portfolios as a global diversifier, just as inflation still remains pretty contained.
Kim, there is a scenario where this shutdown continues, right? And we're looking at Thanksgiving and beyond. But to this market then is, how important is trade and the outcome Thursday of the Trump-Xi meeting?
Yeah, so I think, the trade talks are going in the right direction. I think we are getting some stability for now. I don't think we think it's the end of US-China trade tensions, but what I imagine is that you get a broad framework for the relationship going forward, which then contains some tension, and then you get more smaller discussions along the way and smaller agreements, more to kick the can down the road. But as we've seen in markets this week, it has been good news, particularly for risk assets, as tension and uncertainty eases for a while and prevents the most disruptive outcomes for the time being.
All right, Kim, well, let's hope it stays that way. That is Kim Crawford of JP Morgan Asset Management. Thank you so much. Now to other top stories trending on the terminal this morning. JP Morgan's CEO Jamie Dimon said he continues to cajole staffers into the office because the firm has seen junior bankers aren't able to learn as much when working from home. Speaking at the Future Investment Initiative in Riyadh, he added that even top managers struggle to have honest conversations when meeting remotely. Former UBS trader Tom Hayes, who became the face of the LIBOR rigging scandal, sued his former employer, accusing it of handing him over on a, quote, silver platter to global prosecutors in order to protect the bank, UBS, and its senior leadership. Hayes filed a claim of malicious prosecution against the Swiss lender for at least $400 million in Connecticut on Monday. Americans are heading into winter less protected against one of the season's deadliest viruses, with flu vaccination rates forecast to fall more than 10% this year. CSL expects U.S. vaccination rates for the 2025-2026 season to drop 12% overall and 14% among people aged 65 and older compared with last year. Coming up, Trump's visit to Japan continues. We discuss Trump's trip, plus his upcoming meeting with China's President Xi Jinping. This is Bloomberg.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern, only on Bloomberg.
This woman is a winner. So, you know, we've become very close friends all of a sudden because their stock market today and our stock market today hit an all-time high. That means we're doing something right.
President Trump reaffirming ties with Japan and its alliance with the United States. For more on the president's trip in Asia, Bloomberg's Tyler Kendall joins us now from Tokyo. So Tyler, obviously very, very warm relations between the two leaders. What can you tell us about actual specific details ironed out in the meeting?
Yeah, hey, Vani, good morning. Well, we did get a series of announcements out of this expanded bilateral meeting between President Trump and the new Japanese Prime Minister Takaichi. Now, the two countries did sign this agreement when it comes to critical minerals, though it's light on details. It appears to be a cooperation agreement where both sides are going to help bolster each other's industries, not just in mining, but also in processing, as China really has a grip on the market. They also signed a memorandum of understanding when it comes to shipbuilding. That was between Commerce Secretary Howard Lutnick, who's here on the ground in Tokyo, and his counterpart, as again, China has a grip on this market. It accounted for more than a third of all total global fleets last year. Now, perhaps, well, those agreements seem to be a little more light on details. It appears that this is in a move to bolster U.S. and Japanese ties. We did get the most information we have to date when it comes to Japan's pledged $550 billion investment fund, seen as absolutely critical for the country securing that more preferential tariff rate of 15%. Japan today, Vani, released its first list of potential projects, all in these key critical areas that the U.S. has deemed essential to bolstering its own position in a bid to counter China. Includes a range of projects, everything from artificial intelligence to energy and corporate names such as SoftBank, Toshiba, and also Westinghouse. Now, again, this isn't the finalized list. The Commerce Department is going to have that final say, but of course, Japan is critically important in those negotiations going forward.
And of course, the president is going to want to talk about those deals as he heads to South Korea for APEC next. Tell us what's in store.
Right, it is clear that all of the stops ahead of this critical meeting on the sidelines of the APEC summit between President Trump and Chinese President Xi Jinping have been designed to give the U.S. as much leverage as possible. I just went through the Japanese deals. Take what happened over the weekend on the sidelines of the ASEAN summit in Malaysia. President Trump also inking and reaffirming trade deals with some Southeast Asian countries, particularly when it comes to critical minerals. Again, now at APEC, President Trump on his first day tomorrow, he's going to address the Leaders Summit and also have a bilateral meeting with the South Korean president. Still still big questions about South Korea's trade deal. In fact, they have yet to see that 15% tariff imposed, as it appears that they are at a standstill over that their version of that investment fund pledge, though it does appear that they are making movement. President Trump saying that he is ready to sign the deal and that he has it in front of him, but we still need additional details then. And then Thursday is leading us up to this highly anticipated meeting with Chinese President Xi Jinping. Of course, yesterday we had been previewing that it appears that a framework has been reached for President Trump and Xi Jinping to finalize, but it is teeing up some key diplomatic wins, Vani, but at the end of the day, it still leaves some of those core, deeper divisions at this point not yet finalized.
Yeah, exactly. Tyler, thank you so much. That is Bloomberg's Tyler Kendall in Tokyo. Well, that key meeting taking place during President Trump's visit between him and his Chinese counterpart. Now, ahead of Thursday, China is deepening its economic ties with a group of Southeast Asian nations by expanding its free trade pact. Joining us now is Bloomberg's Brendan Murray. Brendan, China has been doing this, right, even, before Trump started his Liberation Day tariffs, but it really ramped up this approach, let's say, to other countries when that happened. Can you give us, the lowdown on where we're at?
Yeah, it sounds like both sides are going to pull back from the cliff's edge with the highest threats that they've made toward each other. China, according to the framework that we've been reporting on, will not expand its rare earths export controls, and the U.S. is not going to put the 100% tariff on top of the existing 55% tariffs on Chinese imports. So that was seen as key. Those two issues were seen as key to extending the truce that the two countries have at the moment and avoiding any sort of escalation into a full-blown trade war.
And then China had been slowing down soybean purchases ahead of the Xi-Trump summit. I guess it'll be a win if it ramps those up again.
Yeah, obviously, that would be a win for President Trump in farm country. Soybean prices have rallied for the past couple of days on expectations for this increase in demand from China, but it doesn't really count as a net win. This was something that China has done all along, and they just basically stopped when Trump launched his trade war in April. So farmers will see this as a nice additive to their income during this harvest season. But in terms of the overall strategy that the Trump administration wants to have to rebalance the trading relationship, soybeans are kind of a small issue. Particularly, it's not a huge concession for the Chinese to buy American soybeans.
Yeah, for sure. Brendan, thank you so much. That is Bloomberg's Brendan Murray there. Job cuts piling up in corporate America, with the latest coming from Amazon announcing in a press release that it's cutting 14,000 corporate roles. Let's get more now with Matt Bloxham of Bloomberg Intelligence. Matt, we see periodic layoffs at tech companies. Are these layoffs that we're seeing in recent weeks more significant than we typically see?
Yeah, I guess they are, and I guess the question is, what's really kind of the motivation? I think in the case of Amazon, it seems like this is them still kind of recalibrating after quite substantial overhiring through the pandemic, and I guess it also talks to kind of the future economic outlook. I think if Amazon felt confident that the market was really going to grow strongly, then perhaps they wouldn't be laying off so many people. But there clearly is this element of technology evolution, and particularly AI, and companies are always looking for productivity improvements. Amazon in particular is very focused on automation. So I think as the AI technology matures, companies are looking at ways to either kind of recalibrate jobs, shift people to kind of different tasks, or in some cases reduce net headcount. Obviously, we saw some news overnight too that Sequoia Capital is planning to invest in Rogo Technologies, which is looking to improve, I guess, in the short term, the life of junior bankers, but maybe ultimately, replace them. And obviously, we've seen similar moves by OpenAI recently to kind of to replace junior bankers who work upwards of 80 hours a week.
Yeah, absolutely. Matt, thank you so much. That is Matt Bloxham there of Bloomberg Intelligence. Coming up, we're going to get you set up for your trading day with an earnings bonanza. That's all next. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
In case you missed it on the opening trade. Rates are on hold. I think rates being on hold is appropriate for the current period. If they tighten more, then we have to loosen later. More than a year ago, I talked about that being a policy boogie.
Yep.
And I thought that's not a good thing for monetary policymakers to do. The hold is appropriate at this point.
Avoid dancing at all
Avoid
costs.
dancing. Don't miss the opening trade live every weekday.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now, a look at what's ahead today. So before the bell, we get earnings from UPS, JetBlue, Royal Caribbean, and more companies. Then at 10 a.m. Eastern, we're going to get the Conference Board consumer confidence data, all the more important because of the disappointment, of course, from Michigan on Friday. And then more earnings after the close. We get Visa and Electronic Arts. That's all after the close. Let's take a look at some micro movers now, just as we get United Health earnings. We first look at NextEra, up about 2% here. Google is accelerating its nuclear energy deployment in the United States, giving that stock a boost. Cameco up more than 14%. It signed an $80 billion pact with Westinghouse for nuclear reactors. You can see a theme across the markets today. The strategic partnership also involves Brookfield Asset Management and Cameco, obviously. And then Pony AI. Uber is said to be planning to invest in Pony AI and WeRide Hong Kong listings, and that has those ADRs up 4.4% right now. So let's look at the macro picture. Still trying to find some direction for S&P futures. I can tell you Russell futures are lower. Gold off by another 2% plus today. We're down below 3,900. If that was a safe haven trade, well, perhaps the central banks will step in and buy the dip. And then the 10-year yield below 4%. That's it for Bloomberg Brief. Surveillance is ahead.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now
than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Expectations have definitely crept higher as we get to this very big week of earnings.
I think the bar is high.
The street at this point in time is essentially looking for double-digit growth.
If the Mag 7 can continue to deliver, that continues to drive a lot of upside.
I don't really see this bull market changing anytime soon.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Tuesday at all-time highs, Chair Powell's Federal Reserve beginning its two-day meeting as tech giant Amazon is announcing a big round of job cuts, and BNP Paribas, the latest bank, to say it suffered a hit from souring debt. That stock trading lower this morning.
Yeah, and it's the worst performer of all of the European banks at a time when European banks have been doing very well. It really kind of encapsulates the issue. BNP talked about a specific credit situation that caused it to post an additional $200 million of loan loss reserves aside. But it goes to something David Sullivan of Goldman Sachs said. What's the difference between specific credit situations and systemic credit problems? Right now, it is really more of the former. It has not become the latter, and it won't unless there is a real kind of weakening in the global economy.
David Solomon speaking to Jemana Basechi over in the Middle East, really downplaying systemic risk, not credit risk. And I think you're right to draw that massive distinction. The other thing I'd point out this morning, most read story on the Bloomberg terminal today, BNP Paribas, why? Just echoes of 2007, those credit funds being shuttered back then. Anyone old enough to remember that? That's kind of the echo. The rhyme maybe this morning, but I think it's a bit of a stretch to suggest it's the same thing.
It does, though, highlight the fact that maybe there are some excesses. And one thing that David Sullivan did say is this is possibly the longest credit cycle in his life without some sort of downturn. And it raises a question, what are we missing? And the fact that we have seen easy financial conditions, albeit with very high rates. But this really speaks to this question of what froth is not being really adequately accounted for.
That's the latest on credit. The Federal Reserve is going to have to talk about this potentially tomorrow afternoon in their news conference with Chairman Powell. Also tracking the latest events in Tokyo, Japan. Happening right now, a sit-down conversation with the president and several business leaders, including executives from Salesforce, Honda, Toshiba. We're going to have a group of executives get together with the president later on this morning.
This is really par for the course anytime President Donald Trump goes out internationally. We saw this in the Middle East. I saw this when I was traveling him with the United Kingdom. He doesn't want to just have state visits. He wants to make sure he's bringing business leaders from the United States alongside and also interacting with the local business community, especially when he's inking deals with a country like Japan, which is pledging to fund $550 billion worth of projects in the United States. But you look at who's going to be there. It has to do everything with AI investment, with car manufacturing, as well, of course, with defense, when you think about Anduril Industries also being present.
They're having a good time, aren't they? Telling the new Prime Minister you can have anything you want. A putter comes in return. Shinzo Abe's putter, that's a nice gift.
I think that was a brilliant gift from the Japanese to really pull on the heartstrings of this president, because he absolutely talks about all the time how much he adored Shinzo Abe and talks about how he was one of his closest allies and friends when he was in the White House. Trump won.
In many ways, this was always going to be the easier meeting on this trip, the harder meeting 2 days away.
Yeah, but even the easier meeting, where are the actual words? Where are the documents of the trade agreement? Can you solidify that? There was a lot of nice rhetoric. This is the question. Can you solidify it to something else, especially given that a lot of details still haven't been worked out?
If you are just joining us, welcome to the program. 3 days of gains on the S&P 500, the biggest 3-day gains since May. On the S&P, a record high. On the NASDAQ, a record high. On the Russell, An all-time high. Equity futures this morning just about unchanged. Coming up this hour, Jack Caffrey of JP Morgan with stocks at record highs. Henry Levin of CSIS ahead of US-China trade talks. And Tony Wang of T. Rowe Price looking ahead to earnings from Big Tech. We begin this hour with stocks little changed as investors await key earnings and a Fed interest rate decision. Jack Caffrey of JP Morgan writing the economy is at an interesting inflection point. If the Fed is committed to more liquidity and lower interest rates, traders have to take note. Jack joins us now for more. Jack, good morning.
Good morning.
It's another way of saying don't fight this. Keep riding it.
Don't fight the Fed, and it feels at the margin. If you look, say, at the Atlanta GDP Now survey, the economy's printing closer to 4%. That's 250 basis points above estimates of long-term durable growth in the United States, and now you want to add liquidity, and now you want to give it a lower interest rate. So, little jet fuel, perhaps, onto a robust economy.
How do you want to leverage that robust economy in the equity market?
Well, I think there's certainly, we've been living with sort of a bit of a K-shaped equity market. If you touch AI, life has been very positive for the last several years. And we'll get some really interesting checks on that Wednesday and Thursday afternoons to see whether we'll see incremental increases in capital spending intentions. The industrial economy, the more traditional U.S. economy, has been operating for effectively in a 2.5-year near recession or recessionary-like lack of growth. And I think at some point we need to see that part of the economy start kicking in. Whether it's been housing, which I think is going to be a really tough one when we consider the steepness of the curve and the still challenging issues with respect to rates, and that so many people are in at very low interest rates on their first purchase, their home purchase. I do think that we have to look out for where we can start seeing some stocks which are underappreciated that need to participate. The transports are one where I think people need to be paying a little bit more attention. They suffered, and they have certainly moved opposite of the direction of the broad economy.
There's a lot to unpack there. I'm curious about the jet fuel. And if the jet fuel is equal across the K-shaped stock market, in addition to the K-shaped economy, will Fed rate cuts actually help the broadening out, or will it just provide more jet fuel for the winners year to date?
I think what we've seen, again, speaking back to the K-shape, the beauty of why AI has worked so well is it's been cash funded and earnings funded, and these companies haven't typically been reliant on debt financing. When you move to the second or perhaps third tier suppliers of that story, that is where you have certainly seen the need to borrow, versus the more traditional parts of the economy where they haven't really seen the growth. And I think that's where you have certainly seen more use of leverage. And to come back to where we were talking, or where you were kicking off the show, where credit has been episodic rather than systemic. I mean, the reality is ultimately systemic only comes after episodic becomes a very frequent event, not a truly episodic situation.
Are you staying away from tech stocks that have higher degrees of leverage, the Oracles of the world that are borrowing a lot more?
I think we are trying to be very thoughtful around where you start seeing a company which historically has had great margins actually starts announcing that they have such a bright future ahead of them that they want to be using more leverage in order to get there to satisfy that growth. Certainly when you look at Oracle, it does sometimes appear to look like if you want to play OpenAI, that winds up becoming sort of the clearest expression of OpenAI in the broad capital markets, which should not be construed as a recommendation of that stock on my part, please, if compliance is listening. But one where you do have to come back to, this has been a hugely profitable business for long periods of time, and that's something they need to borrow a lot of money. That leverage greed is where things get interesting, but when it's one-off, it's one-off. When it's systemic, then you start worrying.
When you look into the earnings that are set to come out for these AI companies, how high is the bar?
The great thing is U.S. companies are spectacular at managing their expectations to levels that they can wind up beating. And, here we are, call it a week and a half into earnings, and you're looking at 8% upside on an earnings basis. I do think that it's really guidance that matters as you wind up working your way through. And to the extent you can announce a seemingly unexpected deal and get some warrants and have your stock go up 25%, that's not an earnings comment, but just this market's ability to be very positively surprised. Whether it was a 12% rally in a semiconductor maker who is seen as not being an AI play, said, wait, look at me, I can play this game too. 20% immediate rally and closed up 11, 12%. This is a market that continues looking for good news and embraces it. The flip side is bad news, you're down 7 or 8%. So there is a lot of volatility under the surface.
Following the Amazon news yesterday, I was reminded of a World Economic Forum survey that talked about how all of these AI companies are saying how, or a lot of companies are just saying how we're going to probably have to let go. Almost half are saying we have to let go employees because AI is going to take their jobs. Now that might be good for AI equities, but how do you balance that with how bad that could be for the economy?
Yeah. The burden of having studied a lot of history is I try to go back to look for where I've seen experiences like that. And I recall at some point the United Auto Workers were facing off against Ford, and Ford talking about automation, and the United Auto Workers president saying, well, who will buy your cars if you fire all of us? So that is and remains a constant tension between a desire for greater efficiency and a desire for actual customers. I think that brings us back to, can we start seeing a continuation of the work that said that you were actually starting to create a lot more smaller and newer companies that actually wind up being the creators of jobs. The reality is big companies don't tend to create a lot of jobs. They tend to look to things like horizontal integration, horizontal mergers, and that comes with quote synergies, just sort of a bloodless way of saying job cuts. So can we come back to creating more of an entrepreneurial opportunity set? And that's where, why people look at the NFIB surveys, what is small business saying? Reality is NFIB, A, tends to move with headlines, and B, the problem is small businesses remain small businesses, which is why they don't have the economic impact you'd think. But it's small businesses that might capture that new business formation that actually wind up being the next great company over the next 10 or 20 years.
Synergies, right-sizing, language I've never really enjoyed. We've seen a lot of that over the past few weeks, not just Amazon. Of course, 14,000 in the context of a 1.5 million employee company doesn't sound like a lot. It isn't, but this is adding up. It's Amazon, it's Target, it's GM. We've heard this repeatedly over the last month.
The difference between with Amazon and GM and some of the others, Target, is that GM explicitly, Amazon specifically talked about AI and how much it is going to replace employees. And is this a welcome thing for shareholders? Is this not? Is this just an excuse to try to trim around the edges because they have expanded, to your point, so substantially doubling in size in terms of their staff since the pandemic? Or is this something that really is the beginning of a stronger trend?
The Federal Reserve doesn't have jobs data right now, but it's got some corporate announcements to latch onto, that's for sure. Jack, it's good to see you. Thank you, sir.
Thank you.
Jack Caffrey of JP Morgan Asset Management. That two-day Fed meeting kicking off later on this morning, concludes tomorrow, of course. That news conference with Chairman Powell just around the corner. Let's give you an update on stories worldwide with your Bloomberg Brief. Let's cross over to Yahara for more. Hey, Yahara.
Good morning, John. President Donald Trump praised Japan's new Prime Minister Sanae Takaichi in Tokyo as the two signed vague documents on trade and critical minerals. Trump praised Takaichi for her plans to increase defense spending and offered, quote, anything you want to the country, which he said was an ally at the strongest level. Meanwhile, Goldman Sachs CEO David Solomon says there is no systemic crisis happening in credit. Solomon described recent losses at regional banks as idiosyncratic events, adding they serve as a reminder to stay vigilant. Wall Street has been plagued with credit concerns since the collapse of First Brands and Tricolor. And as you all were just discussing, Amazon is cutting 14,000 jobs from its overall corporate workforce. The online retail giant said it would offer most employees a 90-day internal job search window. It also said that while it is cutting jobs in some areas, it will continue hiring in other key strategic areas. Its workforce as of June was over 1.5 million strong. That's Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, striking a deal with Japan.
This will be a relationship that will be stronger than ever before. Anything I can do to help Japan, we will be there. We are an ally at the strongest level.
That conversation up next with the former White House China advisor, Henrietta Levin, from New York City this morning. Good morning.
day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
There really is something for everybody this week. Tech earnings. You'll hear from NVIDIA CEO Jensen Huang. If you miss him, you'll hear from him later this afternoon at 12 p.m. noontime. And then, of course, the Federal Reserve decision happening tomorrow afternoon and Chairman Powell news conference. Look out for that. Full coverage right here. Special programming at Bloomberg Surveillance, of course. Then the trade focus really ramps up. The president sitting down with the Chinese leader on Thursday. Let's talk about trade. Under surveillance this morning, striking a deal with Japan.
This will be a relationship that will be stronger than ever before, and I look forward to working with you. And on behalf of our country, I want to just let you know, anytime you have any question, any doubt, anything you want, any favors you need, anything I can do to help Japan, we will be there. We are an ally at the strongest level.
Here's the latest this morning. President Trump and Japan's Prime Minister Takaichi signing agreements on critical minerals and trade ahead of his face-to-face meeting with Chinese leader Xi Jinping on Thursday. Bloomberg's Tyler Kendall joins us now live from Tokyo. Tyler, some very, very warm, kind words from the U.S. leader to the newly minted Japanese Prime Minister. Do you expect a repeat of that on Thursday?
Hey, John, good morning. No, this was clearly going to be the easier meeting of the two set up for this week, though President Trump also has a meeting with the South Korean Prime Minister, President later this week, as we know that there are still some key details to be ironed out there. But it is clear that the White House is trying to use the series of meetings ahead of Thursday's event to try to gain as much leverage as possible, as President Trump really piled on the praise for the new Japanese Prime Minister Takaichi here in Tokyo earlier today. Now, the new Prime Minister only had a matter of days in office in order to prepare for this, but it is clear that a series of steps ahead of time perhaps set her up for success. That includes Japan announcing that it's accelerating its target date to boost its military spending to GDP, something President Trump applauded, but also said that he heard from the Prime Minister directly that they're going to start to boost their imports of U.S. military supplies. It was just a series of headlines that we got today designed to bolster the U.S.-Japanese alliance, but also apparently counter China. You mentioned how they signed this deal when it comes to critical minerals. They also signed a memorandum of understanding on shipbuilding, as China accounts for more than 1/3 of total global fleets. Now, those deals are a little short on details, but we did get perhaps the most details to date when it comes to Japan's pledged $550 billion investment fund, seen as absolutely critical for the country securing that more preferential 15% tariff rate. Today, John, the Japanese government released its first list of potential projects that could come from that fund. They are all in these critical sectors that the U.S. has deemed absolutely essential when it comes to competition with China. The corporate names on that list include SoftBank, Westinghouse, and also Toshiba, as President Trump is really just moments away from meeting with business leaders for a reception here in Tokyo tonight.
It's Tyler Kendall with the latest in Tokyo, Japan. Tyler, thank you. Looking out for that business meeting a little bit later this morning. We'll keep tracking that for you. This is the easier one. We've said that a few times. It's also a delicate dance to demonstrate that you want to bring rare earths and rare earth production to back home, onshore, domestically, and then boost production with your allies as well. At the same time, de-risk from China and come to an agreement with the Chinese on Thursday. That's a difficult, delicate dance.
It is difficult. but it's why it's in this sequence. He had to go visit all the allies first and then end with China and Xi Jinping, because he's going in with a lot more momentum and a lot to show for, as a show of force, really, how the United States is in this region, bolstering what China is doing, not just when it comes to rare earths, but also showing a united front when it comes to defense.
Let's talk about China. This is from the former White House China advisor, Henrietta Levin, writing the following: China is confident it has the upper hand in this trade war, and it will still be hesitant to make concessions without getting much more in return. We should assume China's commitments are temporary. Henrietta joins us now for more. Henrietta, welcome to the program. Do you believe that both sides are sufficiently incentivized to come to a deal on Thursday?
I do think that both sides are seeking an extended period of stability in the relationship, but on whose terms remains an open question. And Xi Jinping is incredibly confident walking into this meeting with Donald Trump that he has the upper hand, having successfully wielded China's choke points on rare earth exports to get the U.S. to back down from high levels of tariffs quite a few times over the course of this year. But nonetheless, I do take heart in the fact that at least coming out of these trade talks over the weekend, setting up the leaders' engagement, the meeting with He Feng and the U.S. counterparts, at least both sides are describing what they have agreed in similar terms. Both sides are saying there is a consensus framework that the leaders are now reviewing. And this is not generally the case when U.S. and Chinese negotiators have met to discuss trade issues over the past few months. It often seems like they're talking about totally different conversations. And so this suggests that there is finally enough of a common understanding to at least start to unwind some of these retaliatory measures that have characterized the past few months of the U.S.-China relationship.
Henrietta, I love that you end there, unwinding the retaliatory measures. At the end of the day, aren't we just back to exactly where this relationship was in Geneva in May?
Yes, but slightly worse from the U.S. position. We do see the elements of this potential framework really focused on managing the fallout of the trade war rather than addressing the structural economic imbalances in China's model of growth, causing such significant economic challenges, not just for the U.S. economy, but for the broader global community. We're not seeing those issues addressed. We're seeing commitments for China, for example, to resume soybean purchases from U.S. farmers, which is, those purchases were only withdrawn in the first place in the context of the trade war. We're seeing China potentially commit to delay implementation, not revoke, but at least delay implementation of sweeping new rare earth export controls in which China would effectively be claiming authority over huge swaths of the global economy. They also impose those regulations as part of the trade war. So this really is more about managing the fallout of this very aggressive approach to U.S.-China relations rather than breaking new ground.
When we have this about year delay when it comes to the advancement of these export restrictions on rare earths, what do you expect both sides to do in that year?
It's a great question. And first of all, I wouldn't necessarily assume that if China says we have a year before this is implemented, I wouldn't assume that's what's going to happen. I think that any commitment China makes, whether it's purchasing agricultural products or delaying these rare earth regulations, it's dependent on the U.S. Maintaining what China likes to call positive atmosphere. So basically doing nothing that China would find irritating. And honestly, it's quite unlikely that we'll see that play out. So even if this is an opportunity for near-term stability, I wouldn't bet on China actually in a consistent, expeditious fashion giving U.S. producers the rare earths they need over the course of the next year. But I think it does at least provide some breathing room for Washington and its allies to focus on a real collective project of diversification. This is not a problem the U.S. can solve on its own. And you even saw that in some of the other trade deals that Donald Trump struck over the course of his Asia trip with Malaysia, for example, which is itself an important producer of rare earth materials. There is a segment of their trade framework that attempts to bolster a U.S. access to these rare earths from suppliers that are less reliant on China. And the U.S. will have to turbocharge that effort over the next year if it's going to make a dent in China's chokeholds on these global supply chains.
Henrietta, how much has the sort of a discussion between the U.S. and China affected a changing in the attitude that the U.S. seems to have toward Southeast Asia, toward Malaysia, toward the Philippines, toward Taiwan, toward Vietnam and Thailand? I mean, do you get the sense that there is some sort of softening in some of the terms because of this sort of trilateral effect, trying to get some of the resources that the U.S. needs, getting more leverage into these meetings?
I do. And I think one area that traditionally Beijing and Washington have agreed on, for better or worse, is that the U.S. network of alliances, especially in Asia, but around the world, is a fundamental source of American strength and staying power and ability to compete effectively with China over the long term. And so this is important because Beijing, as I mentioned, is feeling really confident. They feel like they've gotten the U.S. to back down. They feel like they don't have to give anything in these negotiations. But as the U.S. starts to rebuild some of these partnerships focused on critical minerals, also other areas of the relationship, for example, President Trump's very warm meeting with the new Japanese prime minister, all of that, I think, raises really useful questions in Beijing about maybe the U.S. is actually playing a stronger hand than Beijing had originally bet on. Because these problems are just so significant. The scale of China's production capacity is so significant that there's just no solution to issues like rare earths without the U.S. partnering closely with its friends around the world.
Henrietta, appreciate it. Thanks for being here with us. Henrietta Levin there of CSIS. It is 7:25 in Tokyo, Japan. The president is about to sit down for a dinner with executives from Salesforce, OpenAI, Toshiba, and Honda. The Commerce Secretary just wrapping up speaking. We're going to hear from the president very shortly, and when he begins to address that room, we'll take those comments live.
So we just heard from Howard Lutnick. He's talking about all these deals that have been driven by this relationship, is strategic investment initiative, and he's talking about things in nuclear, semiconductors, and energy, critical for the United States, especially as they go into this meeting with Xi Jinping.
Up next on the programme, we'll catch up with John Lieber of Eurasia Group as the government shutdown nears its 5th week. Plus, Danny has your morning movers. UPS jumping on an earnings beat. From New York City this morning, you're watching Bloomberg TV.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
The opening bell about 3 hours away. Equity futures on the S&P just about unchanged, all-time highs with some movers before the opening bell. Here's Danny with more. Hey, Danny.
Hey, John, a lot going on this morning. Start out with a lot of nuclear deals, one from the U.S. government, one from Google. The one for the U.S. government, $8 billion from a company owned by Cameco and Brookfield, that's Westinghouse, to, again, invest $8 billion into nuclear and AI infrastructure. So Cameco up nearly 12%. NextEra, that was a deal with Google to restart one of their nuclear projects to provide them energy. So those shares are up 3%. Meanwhile, some earnings to get through just in the past 30 minutes. United Health, a beat and a raise. Some confidence that finally this company that has been struggling can turn things around. It's had issues from C-suite drama to a tragic shooting of one of its branches, alongside higher costs for pharmaceuticals. So those shares up 3.3%. Meanwhile, also UPS earnings, another positive one. And you can just see how much the street was surprised by how positive they were. It was a beat for them. Shares up 15.8% because UPS has been dogged by woes of higher tariffs, higher costs, meaning customers have been pulling back. They've rerouted their networks. Clearly that has worked. FedEx also rising in sympathy. Those shares up 3.5%, John.
Danny, thank you. Appreciate it. Let's head back over to Tokyo, Japan, awaiting comments from the President of the United States. Let's listen in. Those comments just wrapping up in Tokyo, Japan. The president about to sit down for a meal with business executives in the Japanese capital. Executives from Salesforce, OpenAI, Toshiba, and from Honda.
He's really that brief in his remarks, but he's talking about how he finds that the U.S. stock market on this record, the same way the Japanese stock market has been on a tear. So he's really relishing in the fact that as he meets in front of these business leaders, the close ties he has with this country. They are announcing a ton of investments, and that's what you saw Howard Lutnick, the Commerce Secretary there, take these photos, bring up these CEOs who are investing billions of dollars into the United States. And what the administration is saying is that this is all created by the tariff policy that they have been working on for the past few months.
We'll continue tracking this trip in the Japanese capital, of course. The next leg of things really kicks off a meeting with the Japanese leader. You're going to hear from the president later on. And then on to Thursday, when the U.S. leader is sitting down with the Chinese leader as well. On a radar this morning, to wrap things up in Japan, the president meeting with the new Japanese Prime Minister Sanae Takaichi, praising her plans to boost defense spending and offering her anything you want to strengthen diplomatic ties. Elsewhere, BNP Paribas falling after taking a $1.05 billion hit from loan losses in what the bank is calling a specific credit situation. Meanwhile, Goldman Sachs CEO David Solomon downplaying the credit concerns, saying he sees no systemic risk in the market. And finally, Amazon announcing a major reduction of 14,000 corporate roles, giving most impacted employees 90 days to seek a new internal position. Amazon will continue hiring in key strategic growth areas, particularly those focused on AI. That's the latest on our radar this morning. Turning to politics, Vice President J.D. Vance reportedly expected to meet with Senate Republicans on Capitol Hill later today as the government shutdown nears its 5th week. John Lieber of Eurasia Group joins us now for more. John, welcome, sir. We had a guest on the program that said maybe you've got to wait until the end of November. What are you looking at in the calendar that suggests it might come sooner?
Yeah, there's a couple deadlines coming up that I think are going to start putting a lot more pressure on Democrats, in particular in the Senate, in order to end the shutdown. And the biggest one is SNAP disbursements. So food stamps, people are going to start missing payments for food stamps, which means they aren't going to be able to use the program to buy food for their families. And I think that's going to be a pressure point that starts to really increase and ratchet up pressure on Democrats to end this. Because, as we've discussed before, I think that there are policy losses here that Democrats really care about. And those policy losses start mounting as time goes on. So by the end of the first week in November, you're going to start to see some real pain from the government shutdown that you just haven't seen to date. There's already talk about air traffic control, controllers starting to miss paychecks and starting to be hurt by this. And those costs just keep going up. For what benefit? There doesn't seem to be much benefit coming out of this shutdown. And I don't think that dynamic, the benefits really change over time, but the costs certainly go up.
But John, what's the strategy? Will Democrats decide to vote to reopen the government, or are they going to do these rifle shot bills, these one-off funding bills to, say, pay essential workers or give the money needed for SNAP?
They'd like to do the rifle shots, and some Republicans like that approach as well. But I think that this is really all about healthcare, and that's where the Democrats have hung their hat in this shutdown, and that's the issue that's going to help them, give them the cover to resolve it. So I don't expect you'd see any of these narrow bills that reopen parts of the government pass. I think that most Republicans recognize that's a losing strategy for them, or believe that's a losing strategy for them. Senator John Thune was out saying something like that last night, even though he previously endorsed the idea. And I think the Democrats are dug in here. They have a strategy. They say this is about health care. They say this is about restoring some of the cuts to the government. And that's ultimately going to be their path out. But they need, I don't think they're going to get a deal done by the end of this. They'll probably get some promises to get a deal done, and then they'll reopen the government within the next, call it 7 to 14 days.
Some key elections we have next week: mayor race in New York, governor races in New Jersey, Virginia. Then you have Proposition 50 on the ballot in California. Do these affect the government shutdown?
They could if Republicans overperform, because it suggests the Democrats are in a weaker position. The Democrats should do well in these elections. These are off-year elections in New Jersey and Virginia, which are typically considered referendums on the party in power. Those are blue states. The Democrats should do well. If they do less well than anticipated, that I think would weaken the Democratic position on Capitol Hill. It'll send them a message that politically they're weaker than they thought and they need to try a new tactic. If they overperform and do quite well, then it gives them some tailwind and tells them that their tactics are working, that they're actually weakening the Republicans and they're weakening Donald Trump. And if that's the case, then I would expect they would dig in a little bit more.
John, how do you pair the sort of split screen of Washington, D.C. shut down at the same time that President Trump is doing international diplomacy? How connected and how much does that resonate domestically with some of the deals that are being struck in places like Malaysia and Japan?
Yeah, it's notable because they really don't seem at all connected. It's like Trump's living in a totally different world and playing a totally different game than the Democrats are. And he continues to kind of create his own reality this way by just going about business as normal. He's knocking down the East Wing. He's doing business deals in Japan. He claims he solved another war while he was overseas. And so he's just doing his thing, and it's almost as if the government shutdown doesn't matter to him at all. And I think that's a telling sign of the Democrats' weakness here, because I don't think Trump cares all that much. And I think that the American people are used to this level of noise and chaos coming out of the Trump administration. And so therefore, government shutdowns just don't mean what they used to. And it's a lot harder to get political leverage and make Republicans feel political pain from this shutdown.
To that point, John, I mean, are we seeing anything in the polls that are seeing that are speaking to this blowback by popular opinion to Republicans, or is it essentially just anger at Washington, D.C. for perpetual dysfunction?
Yeah, as far as I can tell, there's been a mild softening of Donald Trump's approval ratings, but I think, again, he's playing by a different set of rules, and I just don't think this affects him all that much. The last poll I looked at on this suggests both sides are seeing their approval ratings go down. But, again, this doesn't matter politically. I think in 12 months we'll be fighting over something else, and the government shutdown is going to be in the distant rearview mirror, and it won't matter at all electorally. It'll just be a weird historical oddity that we had this long shutdown.
John, when we look to what else we have to wait that potentially impact policy coming out directly from the Trump administration, the tariff policy, how are you preparing your clients for the Supreme Court decision on IEEPA?
Yeah, the IEEPA decision is one of the more important catalysts on the calendar. As far as I can tell, there's no legal consensus around this thing, and we've heard all manners of opinions about what the court might do. From the court will adopt the lower court's argument and strike this down, to the court is likely to affirm the president's executive powers, to somewhere in between, where the court could strike down some aspects of this, it could leave in place other aspects of this. We've heard if the court does strike this down, it may not issue refunds. It may force the refunds to go through lower courts. So I think there's no legal consensus. I think for our clients, what we're telling them is that the Supreme Court has tried to minimize disruptions to business activity, and that's what we'd expect no matter what they decide, which means we think refunds are probably unlikely to be granted by the Supreme Court, but allowed to be petitioned through the lower courts, which means they will be time-consuming. And we also think that if the tariffs are struck down, the administration has ample other tools to rebuild at least part or most of this tariff wall through Section 122 of a separate trade act, which allows them to put in place 15% tariffs universally for 150 days, which they can do while they start to do separate 301 investigations into unfair trade practices, meaning that over time, they can reassemble the tariff wall against China, against Japan, against Vietnam, against the U.S.'s larger trading partners. They're not going to get to, the Seychelles and other countries that are paying tariffs that don't matter right now, but all the U.S.'s big trading partners are going to face eventually this new tariff wall. I think the Trump administration is behaving in a way that suggests they aren't that concerned about this court case. And I'm not exactly sure how to interpret that. I don't see how slapping a 10% tariff on Canada because you didn't like an ad that the Ontario premier put on during the World Series equates to an international economic emergency. So it does look like the administration is making this very difficult for the court to uphold their usage of this law. And to me, that suggests they're probably going to strike down broad parts of this.
John, appreciate it. A notable last point there. John Lieber there of Eurasia Group. Two notable developments in the tech world as well. So let's start with the first one. PayPal and OpenAI coming to some kind of payments partnership. That stock is up big time in a pre-market high by 13%. That's the first note. The second one, on that dinner with the president in Tokyo, Japan, a notable attendee, Apple's Tim Cook arriving at that dinner as well. That one unexpected.
Unexpected, and also what immediately comes to mind is that Tim Cook has learned his lesson on how to deal with the Trump administration. I was with the president in the Middle East, and every single speech he gave, he would point to his quote-unquote friend in the audience, Jensen Huang, and said, another friend of mine, Tim Cook, where is he? He didn't show up. Then Tim Cook clearly got the message, and he went to the UK visit, and there he is sitting with the president now in Japan.
Live pictures from Tokyo, Japan. More on that story a little bit later this morning. With an update on stories worldwide with your Bloomberg Brief, here's Yahira. Hey, Yahira.
Hi, John. Mexican President Claudia Sheinbaum says the U.S. is extending a deadline to reach a trade deal by several weeks. Sheinbaum says both she and President Trump agreed to extend talks to give both nations more time to reach an agreement on non-tariff trade barriers. Trump earlier set a November 1st deadline to raise tariffs on certain Mexican goods from 25% to 30%. Meanwhile, the U.S. government shutdown is in its 28th day with no end in sight. Democrats rejected a call from the country's biggest federal workers union to go along with Republicans' demand for a clean short-term spending bill. Most federal workers missed their first full paycheck last Friday. Shutdown is the second longest in U.S. history. And Hurricane Melissa is heading toward Jamaica as a powerful Category 5 storm, the island's worst storm ever. The U.S. National Hurricane Center said Melissa's winds are likely to cause, quote, total structural failure. Jamaica's prime minister said residents in flood-prone areas should be prepared to flee, given the high risk of complete displacement and loss of life. That's Bloomberg Brief, John.
Yahara, thank you. Appreciate it. More from Yahara in about 30 minutes' time. Up next on the program, Mag 7, Momentum.
I mean, the earnings season so far has been amazing, right? 87% of beats. We're running at 10% growth year on year. I think if the Mag 7 can continue to deliver, that continues to drive a lot of upside.
A big 2 days coming up for earnings, Wednesday and Thursday. We'll get you a preview with Tony Wang of T. Rowe Price, live from New York City this morning. Good morning. You're watching Bloomberg TV.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Difficult to track events in Tokyo, Japan, but here's the latest. The president has stepped up to the podium, and now we can take a listen. Let's take a listen to the president of the United States.
Tremendously successful, great businessmen, beyond business, really. Most of you are really beyond business, so it's an honor to be with you. We had a long day, a long couple of days. We were in Malaysia. We're celebrating a great end to a war that could have happened. It was a big deal. I won't bore you with the facts, but we ended 8 wars in 8 months, and I think there's another one coming. I thought the one coming was a lot easier than the Middle East. We did great with the Middle East, but with Russia, I thought that was going to be an easy one, Ukraine and Russia, because of the relationship with President Putin. But that didn't work out too well so far, but it will. We'll get it done too, but it'll be... That'll be number 9. I think that's just about it. Anyone starts, I think generally speaking, I'll end it. Otherwise, a lot of people die, and we don't like that. But I want to thank our outstanding ambassador, George Glass, who you just heard from. Thank you, George. And his wife, Mary. Mary, thank you very much. Great job. This is such a great group of people that you put together. I'll be meeting with President Xi the day after tomorrow. I'm going to a wonderful place where I think a lot of you may be going. We're going to be meeting tomorrow at a very fantastic meeting. Who's going tomorrow? Is anybody going that I know in this room? I think a lot. Tim, are you going? Maybe? You're not. You mean you came here for this? And you're just going back just like that? Well, we'll be going to South Korea, and then on the following day, a meeting with President Xi, as you probably heard. I'd be surprised if anybody didn't hear. That's a big meeting, and I think it's going to work out very well, actually. I think it's going to be great for everybody. But I also want to recognize people that have been doing a fantastic job. Our cabinet, we have a lot of members here tonight. Secretary of State Marco Rubio. Where are you, Marco? Stand up, Marco. Thank you. Great job. He's doing a great job. They're all doing a great job. Secretary of War, you know, what used to be Secretary of Defense, Secretary of War, Pete Hegseth. Thank you, Pete. You know, we used to be Secretary of War. It used to be the Department of War, and then we became politically correct. We won World War I, we won World War II, we won everything in between and everything in front of it. And then we'd win wars, but we'd leave after we won. We'd go into wars that we shouldn't have been in, but then we'd just leave. We'd bomb the hell out of somebody and would leave. And I said, you know what do you think of that idea? Pete said, I like it. I said, boy, that didn't take long. Right, Pete? But he's doing a great job. He's doing a great job on the border, too. You see what's happening. And we had drugs coming in, a lot of them coming in by sea. There aren't too many coming in by sea anymore. They've decided to take a pass. I don't know if you've seen what's happening, but it's really been amazing what's been happening in terms of our border. We have a border that's totally closed. We used to have a border that was totally open. We took in 25 million people. Many of them should never have been there. And they came from prisons, jails. They came from mental institutions, insane asylums. Some people say, how come you mentioned both? I said, well, the insane asylum is a mental institution on steroids, and it's beyond a mental institution. But we took them both. And we took drug dealers. We took everybody. What a disgrace. What a disgraceful job they did, the previous administration. And I wouldn't normally say that, but what they did to our country was incredible. And now, you know, we had a country, it was a dead country. Everybody, so many of the leaders that I've met, King of Saudi Arabia told me they all said essentially, we thought your country was dead. 1 year ago, we thought your country was dead. Now it's the hottest country anywhere in the world, like by far. I mean, we have some leaders here, so I don't want to insult anybody. We have the hottest country in the world. So I just want to thank some of these people. Scott Bessent, you're doing a great job. Secretary of Treasury. Thank you, Scott. Thank you, Scott. Great. How good is he on television? You know, he soothes the markets. I don't soothe the market. I sometimes disturb the markets. He soothes the markets. He goes, I said, Scott, go in and clean it all up for me, Scott. And he goes in, bop, 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 bop. And he's really terrific. He's done a great job. And I'm thinking about him for the Fed. See, now the camera's going, breaking news, but he won't take the job. He likes being Treasury. So we're not thinking about him really, oh yeah. But we're very proud of the job you're doing. Secretary of Commerce, Howard Lutnick. Thank you, Howard. We just did, I guess it's about 518 billion in the other room. We were a little bit short of 500, and then we had a couple of people that just announced, including Toyota, 10 billion, going to open new car plants throughout the United States, a lot of them. And it's great because of the tariffs and because of the November 5th election, I think both. But the tariffs have been tremendously helpful in terms of national security, the national security for our country. And a lot of the wars that I stopped were because of tariffs, and frankly, I did a great service to the world, but because of tariffs, because of trade. If you look at India and Pakistan, they were going at it. 7 planes were shot down. 7 brand new, beautiful planes were shot down, and they were going at it, 2 big nuclear powers. And I said to Prime Minister Modi, and I said to the Prime Minister, a very nice man, a very good man, and the Field Marshal over in Pakistan, I said, look, we're not going to do any trade if you're going to be fighting. No, one thing has nothing to do with the other. I said, it has a lot to do with the other. 2 nuclear powers. We get that nuclear dust all over the place. All of you are affected, right? And we said, no, we're not doing any deals if you're going to fight. And within about 24 hours, that was the end of that. It was amazing, actually. And we've done numerous like that. I would say trade is responsible for 70% of the fact that we didn't have wars by using our heads, because they want to trade with the United States. But I said, we're not going to trade if you're going to go to war. And it's amazing how quickly they were able to make deals. And, you know, they would have been fighting for 10 years, killing millions of people, numerous of them. So we're very happy about that. But I also want to say that U.S. Trade Representative Jamieson Greer's, like, he's really fit. Where is he? He leaves everybody happy. Because everybody, you know, they have such confidence in him. Even the other side. I mean, you have to have both sides have confidence, especially when it comes to trade between countries. But Jamieson, you're doing a great job. Thank you very much. Really appreciate it. And we had a phenomenal day here in Japan with a momentous trade deal. We made a big, beautiful trade deal for both countries. In fact, to the best of my knowledge, I think Japan also had their best stock market day ever. So your new prime minister is doing very well. First female, first woman prime minister. And I said, you already hit the highest stock price you've ever hit. So she's very happy. And we spent the whole day together. It was beautiful. And she's great. We went out to the USS George Washington, the SS George Washington. It was really great. The sailors and a lot of others, we had a lot of people, a lot of military people were there, but boy, that was some scene. It was incredible. You wouldn't believe that a ship could hold that many people. But I just want to say that she is a delight, and I think she's going to be a great prime minister, really do. I got to know her pretty well in a short period of time. She was a very good friend and ally of Shinzo Abe, who is a friend of mine, one of my best friends in terms of this world, the world of nations. And he was a great man, and he got, unfortunately, what happened to him was sad, very sad. But he was a great leader, and we miss him very much. But a fantastic tribute to the U.S.-Japanese alliance aboard that ship today, USS, think of it, USS George Washington. It's the only ship that just doesn't come back to the United States. It stays here. And it's very proud. This is our largest military contingent, Pete, I think like 66,000 soldiers, Navy and others. So this was a fantastic day. The level of excitement and enthusiasm, it's so easy. People say, how do you speak in front of that many people and enjoy it? When you have so much love, there's such love. There was such love on that ship. It's really easy to do. They don't understand that. It's easy to do. But tonight, I'm more confident than ever that the friendship between the United States and Japan is strong as it can be. And it's thriving, it's prosperous, and it'll soon be, I think, greater than ever before. And we had 4 great years. You know, we had the greatest economy in the history of our country, but we're blowing it away this time, to be honest with you. We're blowing it. We had 4 great years. As you know, we had the 1-year deduction. I call it the 1-year little deduction, like you can deduct every single thing. Nobody ever thought that was possible. That beats 38 years, right? But now we did it for a period of 10 years instead of a period of 1 year. It's much stronger. And you can deduct structures. And for the people, you have no tax on tips, no tax on Social Security. Think of it, no tax on overtime for your workers. And it really covers everything. The great, big, beautiful bill. We got everything done. I said, let's get it all done. A lot of people want to do it little, small pieces, like 9 of them, 12 of them. I said, put it all into one bill, and if we get it done, we're done for 4 years. We don't need anything more from Congress in terms of that, right, Scott? We got it all done. It was a little risky, but because if we didn't get it done, I don't know, who knows what would happen with these radical left lunatics that we have to deal with. But we got it all done, and now we're set, and you're set. The investment in this country is set. You have all that you want. The people in this room are the living embodiment of the U.S.-Japanese economic partnership that together we're taking to even greater heights. It will, I think, never be like it is now, but it'll get even better if that's possible. I especially want to thank Japanese company SoftBank. I think Masa is here. Where's Masa? I played golf with this guy last week. He sank every putt, every putt. We played with Bryson DeChambeau. We had a great match. And the great Gary Player. Gary Player's 90 years old and he shot 70. Is that right? That's right. We won the tournament. We had 36 teams and we won the tournament. And we didn't cheat either. You know, a lot of those teams cheated because I know how they play and they did not shoot those scores. But I think we got, well, it helped to have Bryson hitting a ball 400 yards. You know, it's always nice to have. I said, I'll take Bryson on our team. But we had a great time, and you played great, and you putted very well, and I appreciate it, because I now have an extra trophy on my desk, and I like that. Yes, please. That's right. 4 eagles. We made 4 eagles. And no, I seriously mean, every time he stood over a putt, I'm not saying it's going to happen every time, but it happened this time. And he's bing, and we didn't have to putt because we're playing best ball. So we didn't have to putt. So thank you very much, Masa. That's better than all the deals you made. That made him feel better than all the deals he's made. Thank you. It's great to be here. We'll do it again. But I also want to thank Toyota for that great, it's not a contribution, it's an investment. We're having investments in our country greater than ever before, greater than any country has ever had, actually. We'll talk about that. And I also want to thank the people from Carrier here someplace. Where's Carrier? They were here. Just thank you very much. They made a big contribution also to the White House fund. We're redoing lots of things in the White House. We're bringing it up to the way it should be. And you probably heard, I don't know if anybody heard about, we're building a little ballroom over there. People are loving it. Now they're loving it. It took them a little while to understand what was going on, but now we actually got an editorial from the Washington Post and from the New York Times saying, you got to build that ballroom. I couldn't believe it when that happened. Look, they're back there right now. They can't believe I'm saying good things about them. But it's been great. But I want to thank Carrier. They make great air conditioning, heating, and things, and they were very generous. It's really fantastic what they did. And with the help of many of you here tonight, almost all of you, the only people that haven't done anything snuck into the room, because I think you're all here because of what you've done. And so if there's anybody that hasn't done anything, please raise your hand and we'll throw you the hell out of here, okay? But Japan is already America's 6th largest trading partner, and I think as of today, that's gone up probably 2 notches, and the #1 source of foreign direct investment. And so they're very happy because, as goes our market, so many countries, they invest in the United States, but we've never had anything quite like what's happening. And I think it's going to get better. I can say it now. So we have over $17 trillion of investment in 8 months. And I think by the time we go to the 12-month period, we'll have over $20 or $21 trillion invested or to be invested. Very importantly, I mean, the money's coming in, and a lot of it's commitments that are incredible. Tim Cook is doing, I think, like $600 or $650 billion, right? Think of it. You've done more than the entire group here. We raised $518 billion, and there's one man sitting here at $650. But good, and everything's, they're treating you great, right? We give them fast permits. We give everybody fast permits. No more waiting 20 years before you get rejected. You know, they used to have a process. I know a couple of people, they started a process when they were young men. Now they're old men and they got rejected. Can you imagine? They devoted their whole life to getting a couple of permits. One of the things I did that's really helping AI because of the massive amount of electricity that they need is I said, you build your own power plant if you'd like. So far, everybody said, we like. But at first, they weren't doing it. I said, I wonder why. Because they didn't believe me. They didn't believe they were actually getting this. You know, we have a grid that's like a lot of grids, it's old. and nobody ever said that we're going to be, doubling. You have to double or triple the amount of electricity that we currently have. As an example, in the United States, you have to triple it, but double it at a minimum, but really triple it in order to take care of just AI. Can you believe this? More than double what we have currently. So for all of that, we have to more than double it. And I said, well, that's not, something you can do from the grid. I mean, how would you do that? You have an old grid, and it's doing okay. We're fixing it, but you can't do that. And I came up with the idea that you're building a plant. They're spending $50 billion to build a plant. I said, you can build your own electric generating sources. And honestly, some of the people in this room, they're building electric generators that are so far beyond anything that's ever been built before. They're using all different types of fuel. They're using nuclear. They're using oil and gas. They're using coal as a backup. Coal is a great backup. If something happens, you can put it aside, and if you ever need it, you can use it. But it's a great thing. And we're getting you very fast approvals. Lee Zeldin's doing a fantastic job. We're giving you fast approvals. You don't have to wait, 9 years. You're waiting a matter of weeks, literally a matter of weeks. You're coming in with the best engineers in the world. You know what you're doing. And so as you build your plant, you're sort of in the utility business, like Con Edison in New York. You're building your own electric. And you can build it as much as you want. And if you have any left over, you sell it into the grid. So our grid picks up a lot of electric without really us doing anything. You talk about private sector, that's the ultimate. But everybody loves it. And they're coming, honestly, I mean, somebody that understands that better than information, which is what the other part makes. You're going to make a lot of money with information. And but somebody that really does understand the generation of electricity, the kind of plants that are being built are unbelievable. They're far beyond anything being built in terms of your regular utility companies, which, it's sort of an older business. So I congratulate you. But the beauty is that you start building immediately. Tim, you don't have to wait, well, if we went by the grid 10, 12, 15 years, but the permits are fast, and you open as soon as you have your plants or your combination of plants. Some are building it on top. Some are building it to the side. Some are building separate buildings. Some are building in one building. And I love the idea. But literally, it took them a while to really, they thought I was kidding. It was so good. They said, no, he's kidding. I said, I'm not kidding. That's why we're leading China. We're leading everybody in this race. So we're with you all the way, and I hope everyone's going to do great and make a tremendous amount of money and create a lot of jobs. Under the historic trade deal with the Prime Minister that is signed today and private sector agreements that were signed moments ago, we'll be increasing our commerce very, very much further. Japan's going to be investing $550 billion into the United States, and it's an amazing thing, and they're happy, and they're gonna love it. It's going to be really good. It's going to be great for everybody.
The President of the United States there, addressing a room full of business executives in Tokyo, Japan, as he wraps up his trip in the Japanese capital before moving on to South Korea to meet with the Chinese leader. A range of topics covered by the President of the United States there. The notable one, I think, is on the Federal Reserve and the future of the chair position. This on Secretary Bessent. Bramo, I'm thinking about him for the Fed. He doesn't want it. That link's not going away.
Well, and this is the reason why a lot of people are saying until we get some sort of solidification of who the candidates actually are, you can only take what Scott Bessent is saying as lip service, because it could change. He's also talked about other people. I'm thinking about even Lutnick as potentially being on the Fed. So, I mean, it's sort of a question of how this is going to work out.
Once again, the president says Scott Bessent is the guy that goes out there and soothes the market when he rattles them up. He soothes the market. I don't soothe the market. I sometimes disturb the market. So I said, go in there, Scott, clean it all up for me. I said yesterday, the longer this drags on, the likelihood of Scott Bessent becoming the next Fed chair increases, because at some point, Trump may be relentless when it comes to Bessent and say, I really need you to do this for me.
And to be fair, it's dragging on and on. We thought we might have a decision by now. Now we're looking for maybe hearing something closer to the end of the year. If you're just joining us, welcome to the program. 3 days of gains on the S&P 500. Equity futures just about unchanged this morning. All-time highs coming into Tuesday. Coming up this hour, we'll catch up with Katie Kaminsky of Alpha Simplex Group with a record tech stock rally. We'll speak to the former White House trade advisor Kellyanne Shaw as the US inks a new rare earths deal with Japan. And Deepak Puri of Deutsche Bank joins us as the Goldman Sachs boss plays down some of these systemic credit concerns. We begin this hour with stocks at all-time highs ahead of Max 7 earnings. Katie Kaminsky of Alpha Simplex Group writing, the rally in equities has been relatively broad-based with big tech slightly outperforming. Katie joins us now for more. Katie, welcome to the program. Jack Caffrey of JP Morgan kicked off the program with us and said you don't want to fight this bull market. Do you agree?
I'd have to agree. And actually, you have to start asking yourself the question, what are the things that could be a sort of a stop for this big rally that we've seen? And there isn't anything that's obvious. I think I am watching, though, what Fed commentary will be this week, just given the fact that we don't have data for future meetings. So I think that is one potential curveball. But in general, earnings are good, growth is good, and the trend has been very strong from a technical perspective.
Katie, that's the equity market. The equity market's pricing in a rebound in economic growth. I wonder what you think the bond market is pricing, because this rally, particularly the long end, coming out of the summer, has surprised many. What do you think explains it?
Well, I think, bonds have really been focused on sort of potential rate cuts, and seeing more accretive inflation data is also very positive for bonds, especially on the long end. I think an interesting point is we haven't seen a steepener. We've seen sort of a pause in that particular move in bond movements, which means basically that you're seeing a flatter yield curve. So I think bonds are very focused on rate cuts, and that has been pretty consistent. But trend signals have not been very good at timing those moves in bonds, and there haven't been sort of very strong themes to follow, except for that bonds have been slightly up. So I'd say it's still a little tricky to trade bonds this year.
Katie, it's been tricky to track the correlations. Everything seems to be rallying at the same time. Stocks, bonds, and precious metals too, until very, very recently, when the gold trade started to unwound. Do you see that as an isolated story in its own asset class, or does it speak to something else happening somewhere?
Well, I think gold is something we really should watch, because it's the only thing that's telling us something interesting right now. I think, you've seen this very strong gold theme for the past couple of months, and you have to start asking yourself how much of this is an overextended rally and, deleveraging out of sort of what has been a very profitable trade, and how much of it is a shift in sentiment about concerns. Because I often see gold as something that people use to hedge their concern for things like inflation. And, the recent moves in gold could give you pause that something might be changing that we haven't really understood yet.
Well, what could be changing? Is the market just feeling better about the geopolitical situation and the trade narrative coming from the Trump administration?
I think that's the case. So maybe it's a change in sentiment, but it also could be, and this is the one kind of wild card question, is like, let's say that we have a little bit of a pause from the Fed that would affect real rates, which also affects gold prices. So I think, gold is an interesting one. It's the only thing that's kind of moving in a different direction right now. So some of it could be sentiment drifting more positive. That means everything's kind of in the same direction. But, we'll have to see. It is something to pay attention to.
Katie, there's a lot of catalysts just in this week alone. We have tech earnings, the Fed meeting, and of course, the president sitting down with Xi Jinping. What are you most acutely focused on?
I would say I think the rhetoric around China has been very important. I mean, you saw those moves. It has the ability to move the market. And it is a theme that the market has been concerned and focused on. I mean, obviously earnings are important, but I think, some resolution of some of the volatility we've seen around that has been received very positively by the market. So I think that's something we're watching. We're also seeing in commodities, take a look at soybean prices, for example. And so you could see, other moves as a result of that particular discussion.
Katie, dangerous territory for me to ask this question and to wrap up this conversation with it. Is there a credible bear case going into 2026? And if there is, what is it?
I think this is a really hard one. And, I love to be a bear, but You're not seeing it in the data right now, and I think gold was one of the themes that was a little bit of a hedge position, I'd say. So I'd say right now there's really very little signals that suggest a bear move. I do think the Fed potentially pausing due to lack of data could, kind of cause some stress for the markets. Is it a bear case? I'm not sure. We'll just have to see. But you're right. There's not a lot of bear signals out there.
Katie Kaminsky with the latest. Katie, thank you. Appreciate it. Katie Kaminsky there of Alpha Simplex Group. If you're just joining us, welcome. Equities coming into Tuesday at record highs. Several key events for this week. Earnings, of course, tomorrow after the closing bell. Likewise on Thursday, in between a Federal Reserve decision. That happens tomorrow afternoon. And a news conference with Chairman Powell. Of course, no forecast this time. Difficult to forecast when you don't have the data anyway. The next round of forecasts come in December. But the build-up continues to that big meeting over in South Korea between the Chinese leader and the President of the United States. Up next, before we get there, cutting a deal with Japan.
This will be a relationship that will be stronger than ever before. Anything I can do to help Japan, we will be there. We are an ally at the strongest level.
Up next, we'll catch up with the former senior White House trade advisor, Kellyanne Shaw, live from New York City this morning. Good morning.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Equities trading water this morning. The whole of the trading day is really the build-up to tomorrow when we get more than $10 trillion of earnings from big tech, together with a Federal Reserve interest rate decision. Then it's on to Thursday, another $10 trillion plus of earnings from big tech, plus a sit-down conversation with the Chinese leader and the President of the United States in South Korea. Equities going nowhere, coming into Tuesday at record highs. Under surveillance this morning, cutting a deal with Japan.
This will be a relationship that will be stronger than ever before, and I look forward to working with you. And on behalf of our country, I want to just let you know, anytime you have any question, any doubt, anything you want, any favors you need, anything I can do to help Japan, we will be there. We are an ally at the strongest level.
So here's the latest this morning. President Trump and the Japanese Prime Minister signing deals on critical minerals and trade ahead of that big bilat. The meeting between the Chinese leader Xi Jinping and the President of the United States. Joining us now is Tyler Kendall, joining us now from Tokyo. Tyler, just tracking that conversation the President was having with business leaders in Tokyo, a standout conversation, I think, for us was on Secretary Bessent and the future of the Federal Reserve. Tyler, I know that's a bit of distraction, given that we're focused on trade, but what did you make of those comments?
Well, John, it was interesting to hear President Trump suggest that he is still at the top of his personal list to lead the Federal Reserve, but that, as Treasury Secretary Scott Bessent has told us reporters before, he thinks that he currently has the best job in the U.S. and isn't interested in the position. I was pretty struck by President Trump's own comments saying that he enjoys when Bessent goes out and soothes the markets, while he himself acknowledges that he disturbs the markets. Kind of a moment of chuckle there among the attendees in the room, as President Trump really was trying to establish his ties with this business community that has assembled here in Tokyo amid these planned investments. The economy, of course, top of mind, as President Trump himself told them all that they must be happy when they're watching the stock market.
Tyler, what are we expecting next from the president? He's wheels up this evening. What are you focused on?
Right, exactly, Anne-Marie. Well, we're still getting some of the bits and pieces from his trip here in Tokyo as he concludes his visit, including on these planned investments from those companies that are in the room. This pledged a $550 billion investment fund. It really feels like the White House is trying to gain as much leverage as possible as it heads into these negotiations with China on Thursday. President Trump himself telling the business leaders in the room that he thinks he's prepared for a very good meeting, in his own words, as we know that both sides are trying to bolster their own positions. While we've gotten some positive indications really from everybody, from U.S. officials to Chinese officials, I will point out that China is doing the same thing the U.S. is doing leading up to this meeting. Just this morning, we saw China ink a pact with trade negotiators in the ASEAN summit with these countries in Southeast Asia, which mirrors really similar to what we saw President Trump do with leaders in Cambodia, Thailand, and Malaysia as well. So I'm keeping my eye on how both sides are trying to boost their leverage, even as it appears that trade tensions are simmering.
Tyler Kendall in Tokyo. Tyler, thank you. Joining us now around the table to extend the conversation, the former senior White House trade advisor, Kellyanne Shaw. Kellyanne, good morning.
Good morning.
Back from Tokyo.
I am.
How was the flight?
It was long.
The president seems to have energy that none of us have. Let's talk about what's on the table in Tokyo, Japan. What have we actually agreed? Is there something substantive here?
Sure. Well, this is the very first time that Japan's new prime minister was meeting with the president, and there were some nerves that I detected in Tokyo leading up to that meeting, wanting to make sure that she was able to build the same type of rapport that Prime Minister Abe and others have had, and I think she succeeded in doing that. But in terms of what was agreed, we saw the president and the prime minister sign the trade deal that they had previously agreed to, so it wasn't anything new there, but it was really that big moment of making this deal official. Also an MOU on shipbuilding, as well as an MOU on critical minerals as well, so a real partnership on some strategic sectors.
Kellyanne, how much is this a precursor? Because the president wants to go in with the strongest hand possible when he meets with the Chinese.
Yeah, I think that's exactly right. And so Japan is our 6th largest trading partner, #1 source of FDI, and a huge player in Asia. This was an important deal for the president to really put his stamp on. He's going into a meeting with South Korea's president. That will be important to see whether we can get a deal there. And then you had 4 trade agreements and frameworks, which were just announced as well. I think all of that is setting the stage for this big meeting with President Xi, which is really what everyone's waiting for.
So let's talk about China. Beijing says that they've reached a preliminary consensus. The United States says they reached a framework. I'm sure the truth is somewhere in the middle. What did they reach?
So we don't know exactly. What we do know is there are pieces that were agreed to. And so over the last several months, U.S. and Chinese negotiators have been working on text, this framework agreement that they've been talking about. The pieces that fell into place were a delay in the rare earth export controls up to potentially a year, according to Secretary Bessent. In exchange, the United States is going to delay its 100% tariff implementation, but we also had fentanyl put on the table, which I don't think anybody was expecting. So we could actually see the U.S. lower some tariffs in response to that. Plus, we have a TikTok deal. We might have something on shipbuilding, which the Chinese side seems to indicate, and then we could have cooperation on Russia. So overall, this is a slightly bigger package than we were even expecting.
It's clear for the United States, and correct me if I'm wrong, the biggest win is the deferment of the rare earth export controls. For China, is it potentially getting rid of that 20% tariff on fentanyl?
Well, I certainly think the Chinese don't like the 20% tariff rate. But there isn't really a scenario I see in which China is going to end up with a lower tariff rate overall than some of our other trading partners in the region. So to the extent we do see tariff adjustments, I'm assuming it's going to be relatively small, somewhere around the 5 to 10% range, as opposed to that full 20%.
Where do you see the relationship going if there's only a deferment on rare earth export controls for potentially this year?
Well, I think this is really the trillion-dollar question. What happens with the United States and China? Unlike Trump 1.0, when we were trying to get China to stop stealing technology, stop engaging in unfair trading practices, stop subsidizing industries, I don't think anyone in Trump 2.0 is under any illusions that we're going to get China to walk away from its state-directed non-market economy. So this is really about managing the relationship, making sure it doesn't fall off a cliff, trading where it makes sense, and continuing to manage those national security measures that both sides will inevitably be taking.
Hasn't this all showed, though, that these economies are too intertwined to really either of them take any harsh actions?
Well, there's definitely this element of mutually assured destruction, right? And so that was a concern going into this meeting, that if China wasn't willing to at least delay these rare earth measures, that the United States might take steps to really throw this relationship in a place that was going to be very hard to back off of. They talked about these mutual vulnerabilities, mutual choke points. It looks like all of that will be avoided for now, but to your point, this could come up 3 months from now, 6 months from now, a year from now. I think this is a very dynamic relationship with a lot that could potentially go wrong.
Getting China to rebalance is tremendously difficult. You tried, the Europeans have tried, President Biden tried, President Trump is trying twice. What we see this year is they're on course for a record trade surplus, even with trade effectively shutting down between the US and China. How do we get China to rebalance? I think that's still the central question to all of this. As you think about it, you've been in the room. How difficult is it?
Yeah, I think you're right. I mean, this is a massive problem that has been built up over the past 30 years. So there isn't a one-stop fix to really address this issue. But what we have seen are those trade numbers coming down with the U.S. China just a couple weeks ago published its global trade, and while trade has gone up with the rest of the world, it's gone down for the United States, and that's a good outcome from the perspective of the Trump administration. They think the tariffs are helping. Also, the ambiguity and the tension about doing business in both places is making businesses think twice, and all of that is helping balance, but this will take a very long time to correct.
If we could take the US hat on and attempt to put the European hat on, or rather take the US off and put the European hat on, you're with me. Can the Europeans follow suit? Do you think ultimately, because they've got to eat the overcapacity now, the rest of the world does because the US isn't going to anymore, is the message to them that if you want the same thing, ultimately you've got to put up the walls too?
Yeah, I mean, this is the fundamental challenge. To really take on China and to get it to reform its non-market economy in a way that's more consistent with the rest of the world, it would take cooperation by all of the allies. That is a step that Europe and others have not been willing to take yet. Even in the context of the war in Ukraine, which is existential, the Europeans were not willing to put on those 100% tariffs. So when it comes to economic threats, it's even harder to steer them in that direction.
Which is why some people believe maybe that rare earths move from China was a bit of a strategic misstep because it had the potential to bring the Europeans closer to the US on this position.
You immediately saw European leaders discuss potentially using a tool that they have never rolled out, the anti-coercion measure. But Jonathan, they are behind when it comes to what China is doing. BYD plants are being set up. China is dumping right now on Europe, and it is absolutely hollowing out Europe's industrial base. And almost what the Trump administration is doing with China might just force Europe to get alongside Washington.
Kellyanne, thanks for coming into the studio. It's good to see you.
Thanks
for being here. Thank you. The former senior White House trade advisor, Kellyanne Shaw, on the situation in Japan and, of course, the next leg of the trip in South Korea, the meeting between the US and Chinese leader. Equities at the moment close to all-time highs on the S&P 500, a three-day winning streak coming into Tuesday. Up next on the program, we'll catch up with the Arkansas Congressman French Hill as Democrats face new pressure to end the shutdown. Plus, Danny has some morning movers. PayPal shares jumping on a payment partnership with OpenAI. That stock is up by 15% from New York City. You're watching Bloomberg TV.
Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The opening about 2 hours away. Equities going into that just about unchanged on the S&P 500. On the Nasdaq 100, up by 0.1%. The Russell this morning pulling back by about a third. In the bond market, just to check in on the scores for you, 2s, 10s and 30s. 10s at the moment just about unchanged. 398 on 2s, just around 350. As we count you down to the opening about 2 hours away with your morning movers, let's cross over to Danny for more. Hey, Danny.
Hey, John. It's a busy week for earnings and a busy morning, too. We got Royal Caribbean earnings, the cruise line operator. They raised their guidance, but it wasn't by enough. To be fair, shares have run up 40% year to date, so maybe the bar was high. They did flag a few things. Adverse weather meant that bookings weren't as strong for the fourth quarter. We're heading into the fourth quarter. They also had to temporarily close one of their sites in Haiti. All of that weighing on results, shares down 7%. We also had PayPal earnings. It was a beat and a raise, but that's not why shares are up 15%. It's the only thing that gets shares to move this much, and it is an AI deal, specifically a deal with OpenAI. ChatGPT is going to integrate PayPal's wallet so you can have the AI bot shop and buy things for you. So those shares up 15.5%. Finally, Wayfair also reporting earnings, and it was a beat from them. There were expectations, or at least hopes, that lower interest rates would mean that more furniture shopping would happen. You did see revenue grow 8%, and it's a company that, despite all of the tariff impact, is already up 90% year to date. So with this, they will have more than doubled their share price, a move of 11.3% in the pre-market, John.
Danny Berger there. Danny, thank you. More from Danny, of course, later this morning in the next hour. On our radar this morning, one of our top stories, the president praising new Japanese Prime Minister Takaichi and offering her, quote, anything you want to strengthen diplomatic ties. The leaders signing trade and critical minerals deals, but the details remained vague still.
This could not have gone better for Japan. I know we're still waiting for some details when it comes to some of these specifics on trade and on business investment. But you have to think, you are a brand new prime minister, the president of the United States coming over after dealing with incredibly, at times, difficult rhetoric when it comes to trade. He's saying, I will go above and beyond for you, especially when it comes to defense. So as Kellyanne Shaw was saying, she just got back from Japan. What she was hearing from executives and some individuals close to the government, a little bit of nervousness with the president coming over for Japan. This couldn't have gone any better.
It's a pretty interesting sequence, isn't it? Tie up things with your allies in the region, in Asia, and then move on to South Korea and sit down with the Chinese leader. Just how much leverage has the president got? How much, to what extent is this deal already signed and done?
This deal, it sounds like from what Kellyanne Shaw was saying, who was there at the table during Trump 1, is almost done. There is a framework. Will that framework be made public? This does feel like a work in progress. And as Kellyanne said, it's really about managing this relationship from this point on, potentially not this grand bargain that a lot of people thought we would maybe get with Beijing going into Trump's second term.
That's the latest on trade. Let's turn to tech. Qualcomm shares up slightly after hitting a 15-month high on Monday. The jump following the unveiling of new chips and computers for the AI data center market as the company tries to challenge NVIDIA. Their stock is down this morning by 1.4%. And finally, Goldman Sachs CEO David Solomon saying he doesn't see any systemic risk looming in the credit market. Solomon describing recent recent losses at regional banks as idiosyncratic events that serve as a reminder to stay vigilant about underwriting standards. David Solomon catching up with Jumana Basechi over in Riyadh, Saudi Arabia. We're going to hear from Jumana a little bit later this morning when she sits down with the JP Morgan executive, Mary Erdos. Let's turn to the shutdown. Democrats now facing pressure from the largest federal workers' union to put an end to the weeks-long stalemate in Washington. Joining us now is the Republican Congressman French Hill of Arkansas. Congressman, welcome back to the program, sir. We've had a couple of guests talk up maybe this ending at the end of November. What are your constituents saying to you, sir?
Well, John, it's nice to be with you. Well, this Schumer shutdown has been a disaster while they try to get $1.5 trillion in new spending, undo all the reforms to the Medicaid program, just to name two items. We're putting farmers at risk in my state. I met with farmers last week. They're desperate for the Congress to come back into session, work with Secretary Brooke Rollins on a particular effort to have a stopgap measure to help them between now and the benefits in the great, big, beautiful bill in the next fiscal year to help our farm economy, which is in desperate shape. We have record Chapter 12 bankruptcies in Arkansas. I've got 400 National Guardsmen that are on furloughed and on unemployment this week in my district. So my best advice is that if Schumer would release these Democratic senators, let's get the government back open and continue our negotiations on appropriations.
Congressman, do you think that Republicans should all be back on the Hill to potentially await maybe a single funding measure to either pay those individuals like you're talking about in your district that are not getting paid, or federal workers?
Well, the Senate has put those bills on the floor with the senators right there, and Chuck Schumer has blocked the motion to proceed to pay federal workers, to take other targeted actions to pay military employees. I mean, this is the kind of shameful rhetoric and approach that Chuck Schumer has taken. He's holding federal employees and state employees that are funded by federal grant programs hostage, and that's why the employee union of the federal government spoke out yesterday. But that's what I hear from folks in my district every day. The House is at call. We did our work 5 weeks ago. We're on call. We can be back here in minutes if the Senate moves to open the government. And as this drags on, we're just going to be confronted with another vote on the continuing resolution in just a few days. So we've missed all this time of important work on agriculture, on banking, on reviewing housing policy, all because Schumer wants to spend $1.5 trillion more and do away with all the reforms that we made in the Medicaid program.
I guess my question is Speaker Johnson and you and your colleagues willing to vote for some of these one-off spending bills if the Senate was able to pass it?
Well, look, the Senate, what needs to happen is Chuck Schumer needs to reopen the government. That's what needs to happen, Anne-Marie. That's the easiest thing to do. 5 weeks ago, we offered a clean CR that had Democratic support. You have Democratic senators saying that Chuck Schumer is wrong. You have Democratic House members saying that Chuck Schumer is wrong. So he just needs to get with reality and recognize that we should be opening the government, and then we can continue the work on FY26 spending.
You mentioned agricultural and some of the farmers that are suffering right now. A lot of that has to do with the fact that in retaliation to the Trump administration's tariffs, China is no longer buying soybeans. Well, that we're expected to change today or this week. How is your district reacting to what is going on in terms of trade relationships this administration is having with China?
Well, the principal challenge to our row crop farmers in Arkansas is that we're potentially entering the 4th year of bad finances. $1.5 billion in losses is forecast for this farm year. That's the 3 years, and we're getting ready to enter a 4th year, brought about by higher costs due to the inflation during the Biden administration and the inflationary effects of Russia's invasion of Ukraine. These have crushed the cost side of producing a crop. And then prices have stayed fairly reasonable all during this period, but we've had surplus crops around the world. You're right that Joe Biden did not enforce Trump's agricultural products deal in his term, and that only about 60% of the soybeans that China promised to pay and Trump won, those purchases were made. So I hope that President Trump can get that market back open for American growers. But we also have to recognize that 4 bad years in a row is going to put the banks in trouble and the farmers in trouble. Before I was in Congress, I was an agricultural lender. I know about how challenging it is with 2 back-to-back losses, but you do a third or start a fourth, you're going to put a lot of farmers out of business.
Congressman, this is a slightly uncomfortable question. I understand that because of what this business means to the people of your state. But at the moment, the U.S. is making, I think, a well-articulated decision to de-risk from China. That would therefore, in some ways, make it difficult to rely on China being a buyer of anything for the foreseeable future. Do you think that's something we have to reconcile with farm production in this country, that we can no longer rely on the Chinese buyer, even if we get some temporary relief and a soybeans deal this week?
Well, I think that's why you see Secretary Bessent and Secretary Lutnick emphasizing soybean markets all around the world besides China. We don't want to ever in business put all your eggs in one basket, and we've been very dependent on the Chinese market, as you know, for the past 3 decades. But we have to recognize we've got to open up other markets around the world. We've produced the best soybeans in the world at the best price, and we have the best farmers, and so we just need to make sure that we diversify that market. Because you're right, our farmers are at risk as long as we're in the middle of a de-risking strategy from China. But that's not just in ag products, but across the board, obviously.
It's true. You're right in the middle of it right now. Congressman, appreciate your time, as always. The Arkansas Congressman, French Hill. Great to see you, sir, as always. It's an uncomfortable topic for the farming industry, the agricultural industry in this country.
China, since the 1990s, has always continuously bought soybeans from the United States. It's the first time that the purchase is literally at zero. And what French Hill is talking about is the fact that farmers are faced with higher input costs. They are dealing with weaker prices and tighter credit, what is going on in the farming industry. And this administration has said that there's going to be a farmer bailout. We also saw a farmer bailout in Trump 1, billions of dollars. The problem is the government is shut down, so it's really difficult. They have some money that they can use at USDA, but it's really difficult to get a full bailout when you don't have legislation.
And no end in sight. Right now, at least. It could go to month end. Equities just turning higher, just a little bit positive by not even 0.1% on the S&P 500. With an update on stories elsewhere this morning. With your Bloomberg brief, let's cross back over to Yahara for more. Hey, Yahara.
Hi, John. UPS shares are soaring more than 10% in the pre-market after the company smashed third-quarter profit expectations. The results suggest the CEO's turnaround plan is gaining traction after the shipping giant struggled with slow demand and high costs. UPS unveiled it has eliminated about 34,000 jobs this year in its workforce, which includes drivers and package handlers. Meanwhile, JetBlue shares are sliding 1% in the pre-market, despite the carrier reporting a smaller than expected loss in the third quarter. Adjusted net loss came in at $144 million compared to the average estimate of $155 million in the period. The airline, like all the others, expects relatively stronger demand for its premium offerings compared with the main cabin. And the $2.9 billion commuter rail project to connect New York City's northern suburbs to Penn Station is facing a 3-year delay. The MTA saying Amtrak, which owns the railroad tracks, hasn't provided enough access to their infrastructure for construction. The project is now set to be completed by mid-year of 2030. That's your Bloomberg brief. John?
Yahara, thank you. Appreciate it. Up next on the program, concerns about credit.
I don't see anything in the context of a handful of bad credit situations. It's leading me to say that we have a systemic issue around the corner.
The Goldman Sachs boss, David Solomon, sitting down with Jamal Basechi at Bloomberg in Riyadh, Saudi Arabia. We'll get the latest on his thoughts and developments coming from BNP Paribas. We'll get a view on the market with Deepak Puri of Deutsche Bank up next.
in case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Packed week ahead. We've been through the events already. Lots of earnings, a Fed decision, a sit-down conversation with the Chinese and the US leader. Later on today at noon, you'll also hear from the NVIDIA CEO, Jensen Huang. Also interested to see Tim Cook in the room with the president a little bit earlier in Tokyo, Japan. The president holding a business meeting with business leaders in Tokyo, in the Japanese capital. Unexpected. Didn't expect to see Tim Cook of Apple.
Didn't expect to see Tim Cook. I find it interesting because I was with the president in the Middle East. Tim Cook was not there, and the president continuously reminded the audience, and Tim Cook, I'm sure, saw that video back, that he wasn't there. And then Tim Cook quickly made sure he was in the United Kingdom when the president went for that state royal visit. And now he showed up in Japan. One thing notable, though, the president did say to Tim Cook, are you joining me for the rest of the trip? I'm going on to South Korea. We'll be there. And he's like, oh, you're just here for the night. Oh, okay, you're not coming on the rest of the trip. I think there's something going on there. He loves to jawbone him about, you know, and he's keeping score, who shows up and who doesn't.
He was the diplomat of the moment in the previous administration, in President Trump's first term. Then it turned to Jensen Huang, and Tim Cook was kind of left out in the cold. And this is the delicate dance for Apple at the moment. Maintain a presence for production in China, shift a bit to India, and manage to keep the US happy at the same time.
It's Jensen Huang for sure right now. This is an individual that before Trump came into power, everything he was socializing to the Biden administration and to the market, what he wanted to see in terms of chip policy, well, Trump did it. The diffusion rule is really key. And Jensen Huang told me about this in Saudi Arabia on that trip. He said the diffusion rule is dead. That was all under Trump. And guess what? Jensen Huang is speaking today in Washington, D.C., and then guess where he's going? To meet President Trump on this Asia tour, and they'll be having a conversation tomorrow.
You'll hear from the NVIDIA CEO a little bit later on this afternoon. We'll catch up with Ed Ludlow ahead of that. Ed's down in Washington, D.C. We'll talk to Ed in about an hour from now. If you're just joining us, welcome to the program. Record highs on the S&P 500. Equity futures this morning positive by 0.1%. On the Nasdaq 100, higher by 0.13. Some outperformance on the small caps last week. On the Russell this morning, some underperformance. We're down by about 1/3%. Going into that Fed meeting tomorrow, your bond market's shaping up as follows. 2s, 10s and 30s. Bond yields at the moment look a little something like this. Yields just about unchanged on 10s at 3.98, on 2s up a single basis point, 3.49. At some point this morning, the Federal Reserve's two-day meeting will begin. Under surveillance this morning, concerns about credit.
I don't see anything in the context of a handful of bad credit situations that's leading me to say that we have a systemic issue around the corner. Yeah. Unfortunately, you know, lenders make mistakes. There is fraud in markets, but we should not be fooled by the fact that this is a very robust credit environment. Credit spreads are tight, and when we do have a cycle, which probably will come when there's an economic slowdown, there will be losses, and we'll feel that across the economy.
David Solomon of Goldman Sachs playing down systemic risk. Here's the latest on everything else. BNP Paribas, a trading unit, taking a third-quarter hit from souring debt, adding to recent concerns about private credit. Deepak Puri of Deutsche Bank Private Bank joins us now for more. Deepak, good morning, sir.
Good morning.
Look, I think David Solomon did a decent job of drawing a very, very big line between systemic risk and credit concerns. There's still concerns, I think, about a turn in the credit cycle. Do you share them?
Maybe episodically, right? So we have seen one of these, idiosyncratic risks every now and then come out. For me, Jonathan, the biggest risk is this year we have seen two really big supply shocks. And we still don't know the full-term ramifications. I'm talking about tariffs and labor supply. So once you have those two, I think 2026 might be a better test case for these kind of supply shocks and their unintended consequences. As for now, I think, episodic news with regards to credit, I'll take it really episodically.
Well, at least one of them might be lulling this Federal Reserve into early interest rate reductions. The Fed seems confused at the moment. We know we've seen it in the data, massive step down in payrolls growth. Got that. What's behind it? Demand or supply? Which one is it?
I think labor market is one of those conditions where demand adjusts to supply in a way. So if the supply of, workers is reducing, I think demand is going to start adjusting to it. And what we are seeing is this automation drive from companies that is hurting, the overall supply. What is also a little bit disturbing is the government shutdown, because I think it sort of exacerbates the labor market conditions.
Typically, Deepak, as you know, and Anne-Marie's laughing, because typically we look right through this. It doesn't matter. It's a bump in the road. Growth comes back. Basically, it's growth delayed and not derailed.
Sure.
The longer it goes on, do you start to change your thoughts on that?
I think yes, primarily because it's after a while it becomes exponential in terms of the output activity. So the first few weeks, the consensus is 10 basis points of economic output gets reduced. But after a certain point, let's say this ends up being mid-November, you're going to start seeing more concerns with regards to the impact it's having on broader economy, and then obviously it'll have an impact on the labor market. So I would not be completely, negating the fact that yes, over the years, whenever we have a government shutdown, it tends to be, short-lived and painless. This time it might be different.
I'm only laughing because you say the word disturbing, which I also find disturbing. The market is creating fresh all-time highs, clearly ignoring it. Besides the impact it can have on the economy, how long could this Federal Reserve or investors go without economic data?
Well, they have shown tremendous resilience to drive their policy without much, but because they're using anecdotal evidence as to get a grasp on where the economy is. And I think even there is a government shutdown, crisis, let's say, quote unquote, there's so many other positives that are happening in the markets, Anne-Marie, that I think takes too much precedence over government shutdown. I think the fact that you are looking at an AI hyperscale CapEx spending guidance, which might come again a lot better than expected. You have a little bit of a framework between the US and the Chinese with regards to the trade and tariff. That could be potentially a game breaker, because within that trade and tariff, one of the uncertainties has been the Chinese one, because that's really where the bone of contention has been. And then last but not the least, the Fed. There is this expectation maybe end of QT, you look at the SOFR, 20 basis points over the Fed funds overnight rate. You can argue that there is some liquidity tightness where the Fed would be, want to ease some of that. So all these three things, I think, are taking much greater precedence over the government shutdown.
But these three things, it sounds like we have a tremendous amount of certainty on. The trade story seems more optimistic with China. We know that the Fed is going to cut, 98% chance the Fed is going to be cutting interest rates. So what gives the market potentially, or where do you see the market potentially having a little bit more of a cautious tone? In regards to what?
Yeah, I think from now till the year end, once these three things are not disappointed, right? There's no disappointment with these three things. I think the seasonality will take over. So from now till the year end, I would not be surprised if you see a little bit more of this risk taking, and then, investors chasing a very high rally market, which is usually the case. I think the biggest concern for me is really what transpires in the first half of 2026, where you are going to be going through a cyclical sort of softness in the markets. And now we'll get to know what is the worst outcome with regards to the labor markets, because we didn't have the data for the last 2-3 months. So in totality, so what could potentially happen? And I think if this labor market statistics are similar to what we have seen in the previous years, where June, July was the weakness and then it started getting better, then it'll be okay. However, there is a likelihood that it might not be the case that way. And in that particular instance, I think the markets need to recalibrate to a much starker economic reality that the economy is slowing more than expected.
Well, what do you think the source of that slowdown or that softness, as you call it, for the first half actually is? And to what extent will it be offset by the massive tax refunds that I keep hearing about that are going to kick in early next year?
Right. I mean, it depends. I mean, we are thinking it's going to be with a 0.6 to 0.1%. Right now, you look at GDP now, the nowcast from New York Fed, everything is showing up with a 3 handle, so it's much better. But these things can change quite quickly. So I would not be surprised if you start seeing a below potential GDP number for the first half of the year. And on top of that, there might be some concerns about these credit conditions, these credit stresses that are developing, becoming a little bit more broader, default rates going up. So I think primarily that's one area of concern. And then last but not the least, I would not be, the lagged and varying effect of the tariff. I think the fact that we are having these bilateral, MOUs does not necessarily mean that the lagged effect of the tariff rate, which is 5 times what the world is used to, is not going to have an impact.
Final question from me in the 40 seconds we've got less. Greater potential for higher stocks or lower bond yields in the first half of next year?
How about neither? I think because last time I came in, I said you don't want to be overly bearish, and the question was that the markets can go up and bonds could rally. And that was in early September. I would not be surprised if you see a little bit of a bond weakness going up, so the yields going up, and stock markets having a little bit of a recalibration come early parts of 2026.
That's a toxic mix for this market, that's for sure. Deepak, plenty to think about. Thank you, sir. Deepak Puri. Thank you. Thank you very much. Deepak Puri there of Deutsche Bank. Up next on the program, we'll catch up with Usung Kwon of Wells Fargo with a new price target year-end on the S&P 500. We'll speak to Bloomberg's Anurag Rana, the former Dallas Fed President Robert Kaplan, and the CEO of JP Morgan Asset and Wealth Management, Mary Erdoes, joining us about an hour from now. From New York City, the third hour of Bloomberg Surveillance. Up next.
Is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter. But it's bad for the product. It's not good. After that, I'm never doing that again.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The Fed will just have to deal with the data that it can get.
Data or no data, you still have to make policy.
We actually are expecting less rate cuts than I would say the market is.
We are not rooting for more rate cuts.
The risk is you're cutting into a higher growth, higher inflation environment.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. All-time highs coming into Tuesday morning at the close on Monday. A record on the S&P, on the NASDAQ, on the Russell. Futures this morning positive by 1/10% across the board, with the exception of the Russell. Underperformance there this morning by 1/4%. In the bond market, a little bit of a snooze so far on 2s, 10s and 30s, just about unchanged, just south of 4% on 10s. Sub 350 on 2s, 349.39. This week ain't snoozy. Check this out. The week ahead full of tech earnings, a Federal Reserve interest rate decision, and a meeting between Trump and Xi in South Korea, just after a sit-down conversation with the Japanese leader only hours ago.
Three huge catalysts when it comes to this week, and one of the biggest ones and the overhang that's been in the market for months since Trump took office is how is the relationship going to be managed with Beijing? We heard from Kellyanne Shaw. She was at the table. Trump won. She literally just got off the plane. She was just in Japan. She said in Japan, business leaders, some government associates were nervous. The meeting could not have gone better for the Japanese. And what Trump is doing is making the rounds in Asia before he sits down with Xi Jinping, really bolstering the U.S. position in Asia Pacific when it comes to the tit for tat we have been seeing between Washington and Beijing. So far, this looks like this meeting is going to be very well managed from what the Treasury Secretary has said in terms of rare earths being deferred, and they're going to be buying some more soybeans, and Trump is going to take a 100% tariff threat off the table.
You'll hear from Jensen Huang a little bit later on today. He's down in Washington, D.C., the boss, of course, of NVIDIA. One thing we didn't expect to see in the room in Tokyo, Japan, was Apple's Tim Cook. Who is the diplomat of the moment now? Tim Cook making a move in Tokyo.
He's trying to edge out Jensen Huang, but I have news for you. The president also said, sitting down with business leaders, that after Jensen Huang speaks in Washington, D.C. today, he's getting on a plane to Asia because the president says he plans to meet the NVIDIA CEO, and he is going to be on the last leg of that trip with the president. So I think it's still a toss-up, but it looks like Jensen Huang is still the diplomat for Trump too, although Tim Cook definitely had the hat for that one for Trump won.
For the moment, at least, and things can change. Equities are higher by 1/10% on the S&P 500. Coming up this hour, we'll catch up with Oh-Seung Kwon of Wells Fargo as stocks trade near all-time highs. We'll catch up with Bloomberg's Ed Ludlow as we break down the latest moves from Adobe, and the former Dallas Fed President Robert Kaplan with a key Fed rate decision just around the corner. We begin this hour with stocks edging higher as investors gear up for a crucial week of earnings. Oh-Seung Kwon of Wells Fargo raising his year-end price target on the S&P from 66.50 to 7100 and writing the following. We're out with a big call this morning, calling for an everything rally into year end. Our call is to buy low quality, junk, high beta, and small and mid AI CapEx beneficiaries. A full risk on trade. Osung joins us now for more. Osung, good morning.
Good morning.
I mean, that's quite a call, so let's get into it. What's the source of this change for you?
Yeah, so we see about 5 potential catalysts into year end. We're bullish. So those 5 are seasonality. Obviously, November, December has been the best 2 months for the S&P, but not just for the S&P, but especially for the laggers. After tax loss harvesting in October, we typically see laggers rallying in November through January. Number 2, AI CapEx. I think we're going to see another upper surprise in AI CapEx when hyperscalers report this week. Number 3, potential tariff refund. So IPA hearing is going to be next week. The ruling is probably going to be in January. And there's about 60% chance, according to betting markets, that it gets repealed. And if that happens, we're talking about $160 billion of tariffs collected being distributed to the economy, which is going to be huge reflationary. Number 4, the OBBB tax return. We estimate about $800 incremental tax return per filer this upcoming tax return season, which is going to be bullish for the consumer as well. And lastly, potential government reopening. That's going to be bullish as well.
Okay, so let's break down some of this. I'm going to let Anne-Marie handle everything to do with Washington, D.C. I want to ask you about tech spending. So the CapEx story and what we're going to hear from the major tech players on Wednesday and on Thursday. They're spending lots. Do they need to report some really robust revenue growth alongside that for investors to continue tolerating this?
I think for hyperscalers as a group, we're not that bullish because they're the CapEx spenders. Their free cash flow is coming down. And historically, you want to avoid companies that are in an investment cycle, which is basically hyperscalers today. The areas that were more bullish is really the CapEx takers, especially the smaller cap companies that are really starting to benefit from this hyperscalers CapEx increasing. The major players right now, even the CapEx takers, they're at full capacity. There are a lot of crumbles that are falling off the table, and those crumbles are huge for those smaller guys. So that's really the group that we like. We have a basket of about 25 smaller cap AI CapEx beneficiaries that we like.
Let's go to tariffs, because I think the IEEPA story is underappreciated right now in the market, and the fact that you can have north of $90 billion having to be repaid back to these businesses. But the Trump administration basically has other ways to get around tariffs. So doesn't that get rid of that reimbursement? Because companies are going to have to pay it, just it's going to have a different title to it.
Yeah, but I think into that event, potential event, that binary event, we're going to see some reflationary trade because investors will want to position for that potential repeal of tariffs. I think the knee-jerk is obviously going to be very bullish for equities. Rates probably higher and gold higher on physical concerns. But in the medium to longer term, this could potentially create more uncertainty.
Then there's the shutdown. If the market is shrugging off now, why would they care when it reopens?
Yeah, I mean, government shutdowns historically have been non-events, basically. But coming out of shutdowns, we typically see the S&P rallying even harder. No news actually has been good news for the market because there's no data coming out and there's no negative catalysts for the market. Even if the government reopens, there's probably going to be about at least 2-week period where we still don't see much data. It's more going to be what companies are saying and how the third-party data is suggesting. So I think that's still a pretty bullish setup for equities.
Low quality and junk. What is low quality and junk?
Yeah, so unprofitable tech. Okay. So more speculative stocks, some of the laggers that have underperformed that are really struggling. So we're essentially pitching a catch-up trade into year-end because I think it's going to be a full risk on into year-end.
Do you need the Federal Reserve to come along for the ride and keep signaling more to come?
Yeah, I mean, I think Fed is basically a done deal. They're probably going to go on Wednesday. And if that's the case, I think Fed is probably, we are in a real easing cycle. So the Fed is done. It's more about fundamentals now. And, you know, some of the risks that we are seeing that have proven to be less of a risk than what we had expected initially.
This picture you're painting, I feel like, is the meme stock frenzy we saw. Are you expecting almost something like that?
We could see a little bit of that, too. You know, we until last week, we were seeing some of that happening in some of the meme stocks and the retail-driven names. I think last week was a little weird that the setup itself was pretty unfavorable because last week, if you think about all the earnings that came out, it was mostly regionals and industrials, which were obviously facing more headwinds. There was no AI earnings, and we had the CPI overhang on Friday. So I think that setup, the calendar setup itself, was a little shaky. CPI was obviously very positive. And into this week, when we are going to hear from all the AI companies, we have the Fed, we also have US-China on Friday. So I think the setup is pretty favorable for some of the lower quality stocks.
If you have 7,100 for this year, what does that mean for your 7,200 target next year?
Yeah, we're thinking about that. We're going to revisit our 2026 numbers. I still see
Sounds like it
more
has to be
upside.
higher.
Yeah, I still see more upside to that number.
We had a guest on the program that said maybe we could see a soft patch in the first half of 26. You must have heard him. He was on right before you. What gives you hope that this can continue through 26? I'm not going to pin you down for a new price target. We'll wait for the annual outlook. But what gives you hope that that's the case?
Yeah, I mean, it's really going to be driven by earnings. We still see a pretty healthy backdrop for earnings. We're forecasting 11% growth for 26, followed by another 12% in 2027. So if that's the case, even if multiples stay the same, we're talking about, low teens return in equities.
I'm not going to question the earnings because every time I do that, Wednesday, Thursday hits in earnings season, the tech players come out and they knock it out of the park. So I won't question the earnings. I do wonder how you think about the rest of the world. The international stock story had its moment in the sun. The first quarter of the year, everything kind of ripped, and things have settled down since. Where are you on the US versus the rest of the world?
Yeah, I think US still looks more favorable in terms of the AI story. I mean, the rest of the world, we could potentially see a catch-up trade there too if we start to see the manufacturing cycle really turn. But the areas that we are more bullish are really around AI.
Is there one thing that makes you nervous? Given how bullish you sound, I mean, we've been through all the bull case. Is there one thing that just sort of niggles at you a little bit?
Yeah, I mean, I think hyperscalers probably because their free cash flow is coming down. And they are the biggest companies in the S&P 500. So if you start to see more of a rotation type of trade rather than broadening out with everything rallying, then that's not going to be good for the S&P at the index level.
Sung, it's good to see you. Thanks for breaking down the call. Sung Kwon there of Wells Fargo, 7,100 year-end, 7,100 year-end on the S&P 500. New price target. Who am I to question that, given the rally we've already seen since the April low? From New York, welcome to the program. Equities up by 0.1% on the S&P 500 with an update on news worldwide with your Bloomberg brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. PayPal shares are soaring 15% in the pre-market after the payments giant reached a deal with OpenAI to embed itself within ChatGPT. PayPal will now provide payment technology to help turn user searches into purchases. The company also reported third quarter earnings that beat estimates and approved a quarterly cash dividend program. Meanwhile, Google has signed a deal with NextEra Energy to supply power for its U.S. data centers from a restarted nuclear plant. NextEra will start delivering power from the Iowa plant by 2029 under a 25-year agreement with Google. Building nuclear power plants to fuel the energy demands of the AI boom can take years, so reviving closed facilities is emerging as a faster option. And in sports, the LA Dodgers are up 2-1 in the World Series after a marathon 18-inning win over the Toronto Blue Jays. Dodgers star Freddie Freeman hit a walk-off solo home run to give the Dodgers the 6-5 win. 6 hours and 39 minutes later.
Absolutely ridiculous. Yahara, thank you. Thank you very much. Up next on the program, we'll get you some morning calls. Plus, we'll catch up with Bloomberg's Ed Ludlow with Adobe announcing new AI plans. That conversation just around the corner from New York City this morning. Good morning.
astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
You have to start asking yourself the question, what are the things that could be a sort of a stop for this big rally that we've seen? And there isn't anything that's obvious. I think I am watching, though, what Fed commentary will be this week, just given the fact that we don't have data for future meetings. So I think that is one potential curveball.
That was Katie Kaminsky of Alpha Simplex Group, looking ahead to a week full of event risk, including tech earnings, a Federal Reserve meeting, and a sit-down conversation between the Chinese leader Xi Jinping and the President of the United States, the 2 largest economies on the planet, negotiating over trade later on this week. That conversation is about 2 days away. In the equity market at the moment, all-time highs on the S&P 500, adding some weight to the rally, up by 1/10% on the Nasdaq, up by 0.2. Austin Kwon of Wells Fargo saying there's more to come. New price target for him. He moves from 66.50 to 7100. Says we're out with a big call this morning, calling for an everything rally into year-end by low-quality junk, high beta, AI capex beneficiaries. He calls it a full risk-on trade. That's quite a call to make, and it's quite a moment to make it going into this week.
Absolutely, in this week, because you have 3 really key catalysts when it comes to the Fed, when it comes to tech earnings, and of course, when it comes to managing this relationship with Beijing. We basically have the base case for 2 of them. We're still waiting exactly what's going to go on with tech earnings, potentially. But when it comes to this trade agreement, and something I thought was really interesting, Osang was talking about, the fact that we can potentially get as well, when it comes to tariffs into year-end, the fact that IEPA, we still do not know what the Supreme Court is going to rule on.
That's right.
Committee for a Responsible Budget put out a note yesterday talking about how we've collected $195 billion in tariffs this year. That's up 250% what the United States collected last year. But if IEPA is struck down, you are talking about north of $90 billion having to be refunded to these companies. And Osang says that is very bullish in the short term.
That could have some consequences, though, for the bond market. That may well be bearish, which is an odd one, because back in April, of course, it was bearish. They went on. But given the revenue story you described, the dependence on the deficit for those things going forward from here, what would it mean for the long end of this bond market? Yields unchanged this morning, 398 on 10s, on 30s, 455. Yields at the very front end of the curve in focus as the Federal Reserve gets together. 2s at 349.39. That's the price action. Let's get you some morning calls. First up, Baird raising its price target on Apple to 280, expecting tailwinds from its upgrade cycle. Your second call comes from Citi, raising its target on Palantir to 190, citing positive channel checks across its government and commercial businesses. And finally, your third and final call from UBS, raising its price target on Amazon to 279, highlighting expectations for AWS growth going into earnings. That stock is higher by 0.7%. Let's stick with tech. Adobe shares higher, with the company announcing continued integrations of generative AI into its tools. Bloomberg's Ed Ludlow joins us now from Washington for more. Ed, that stock is up by 2%. What's the story?
Yeah, it's hard to know if this is just an OpenAI bump by association, because one of the technology plays that Adobe is doing is offering third-party models through its suite of applications. And as we know from recent weeks and months, if you're a technology company, in particular a software company, and you make an announcement that includes the words OpenAI, stocks tend to rise. But, you know, I also feel like a part of the move is based on the conversation that we had with Adobe's CEO, where he's basically saying, we don't get the credit for the work we've been doing for the last few years, because the market right now only cares about announcements around infrastructure investment. How many chips do you have? How many dollars are you pledging? And his point to me was, we've done all of that. And what you will start to see is the investments we made in AI show up in revenues and margin expansion and profit in the software that we already sell. And a bit of fighting talk from someone in a company that may be usually a little bit more muted on that subject matter.
Ed, we will hear from Jensen, the NVIDIA boss, a little bit later on this afternoon. That's why you're down in Washington, D.C. He's the man at the epicenter of all of this. Is he facing an increased challenge from elsewhere?
Yes, in the sense that, the Qualcomm story yesterday was quite severe. The market reaction to a product that has a very specific application. He also just faces the pressures of setting himself up for this. As we've been writing about in the Bloomberg terminal, there is a perception that NVIDIA and Jensen Huang are doing this in Washington, D.C., blocks from the White House, because they still need to convince the president to move forward favorably when it comes to whatever's happening in China. John, GTC is a developers conference. It's always technical. It's always product-based. We already know quite a lot about the NVIDIA product roadmap for the next 5 years. But as you know, the dynamic for NVIDIA is very clear. They need the president to tell them what they can or can't do in China right now. And you will have seen the headlines this morning that I think from the president himself saying he expects to see or meet with Jensen Huang tomorrow. And that is all that matters right now. Can NVIDIA go back to a market in China where they once had 80% share and currently have kind of zero as they navigate shifting policy?
Yeah, it's interesting to have the conference in Washington, D.C. to get to the president, get the sights of the United States government and the president, even though he's in Asia. So I guess it's important that he's going to go take this trip and go meet the president overseas. Ed, how important is that conversation going to be, given the fact that right after the president likely will meet Jensen, he's going to be sitting down with Xi Jinping?
Yeah, again, pardon the pun, but how much of a negotiating or bargaining chip is NVIDIA in this trade negotiation? Jensen Huang's language that he has used quite consistently, to his credit, is completely in line with this new generation of China hawk that's in the White House, people like David Sachs, who basically take the policy stance that it is better for America to export a deprecated chip and technology to China than none at all, in the sense that they will stop China from having domestic champions or China selling its own technology into markets like the Gulf and Africa. The problem is that we're still in limbo. And so if the president is able to use it as lever to say to China, okay, you can have the NVIDIA deprecated chips, we want rare earths, that is something that's still playing out. What's not clear in this new era or generation of China hawk is which of those individuals have most influence over the president.
Who has the most?
And we'll see where we get in trade.
Ed, who do you think has the most influence over the president right now in the tech sector? Trump won. It was really Tim Cook, who made an appearance this evening with the president when it comes to business leaders in Tokyo. And then the president tomorrow is going to see Jensen Huang. Who has more of the influence?
Jensen Huang. We've been speaking endlessly about the travel time that Jensen Huang has had with the president, the Gulf, the United Kingdom, and the president comments on Jensen regularly. I actually don't know what the context of his Jensen Huang comment was this morning, the president, I'm assuming he was asked about it. But outside of what happens on television cameras, are reporting about what happens in the corridors of the White House and behind the scenes. Clearly, and you broke that story, do you remember, AMH, where the president at the AI Winning the Race Summit said that at one time he was considering breaking up NVIDIA, but was informed by his advisors, well, now Jensen's a nice guy, I don't think I'll do that. That relationship has been maintained and has not been volatile, like, for example, the president's approach to Intel and Lip Bhutan.
There has been one issue that the president has done in terms of NVIDIA that hasn't been welcome. And I'm wondering, Ed, is it even happening in reality? What's going on with that 15% tax when it comes to certain chips for export licenses?
Yeah, the latest on it is actually quite dated, but I interviewed the CFO in August when they had their last earnings, and her point was pretty dry and straightforward. I'm the chief financial officer of this company, and I have to comply with Sarbanes-Oxley rules and other audit and compliance rules. And right now, per that conversation in August, which I appreciate was some time ago, they didn't see a mechanism that allowed for a publicly traded company in America to share revenue with the United States. And I haven't seen anything since then. But again, one thing is certainly true in the technology sector in this administration. When the president says that he's going to do something, he moves quite quickly and it happens. There's just not an understanding on the codified base in which they can do that.
Ed, appreciate the update. Looking forward to your coverage of the event a little bit later in the nation's capital in Washington, D.C. Bloomberg's Ed Ludlow there. Some breaking news just moments ago from ADP. Mike McKee's run into the studio to break it down for us. Mike McKee, some weekly data maybe.
Yeah, all of a sudden we have some ADP data. ADP now says it's going to put out a weekly report on payrolls and still do the monthly report. Their first report shows 14,250 jobs on average during the 4 weeks ended October 11th. Now, I'm not sure how much that tells us because it includes 2 weeks of September, which would fall into the September report, 2 weeks so far of October, and that would essentially mean 28,000 jobs at that point. But we'll have to wait and see what it means over the long run. They're also going to release their pay estimates on a weekly basis. This may help fill some of the gap that's been caused by the government shutdown and the lack of BLS data. But again, ADP, we don't know all of their methodology, so we don't know how accurate this is going to be. It doesn't usually match up with what the government reports on its monthly basis.
Mike, any relationship between this news and the news around the Federal Reserve and ADP in the last week?
We don't know. ADP has been very closed-mouthed about it. They don't want to talk about it. We do know that they stopped providing data to the Fed. The Fed has been getting it for years and years, and raw data, and adjusting it their own way for their own models. And we don't know why they stopped, but at this point, this seems to be either a response to that in part and a response to the lack of government data in part. But it is something to work with, I suppose.
Mike, we'll take it. I'll catch up with you in a minute. More to discuss, no doubt. Up next on the program, the former Dallas Fed President Robert Kaplan with a key Fed rate decision just around the corner. Plus, Danny has some morning movers for you. UPS surging on stunning profit expectations. That stock is up by more than 12%.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions.
It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The open about 60 minutes away. Equity futures on the S&P 500 futures positive by 0.1%. Likewise on the Nasdaq, a three-day winning run. The biggest three-day rally going back to May. We caught up with Wells Fargo just moments ago, looking for 7,100 into year-end, calling for what they called an everything rally. That's the stock market this morning. Let's get you some single names, some morning moves with Danny. Hey, Danny.
Hey, John. Some rallying happening here, too, in the single names. And it really is, as Ed Ludlow was talking about, you announce a partnership with OpenAI and your shares go higher. PayPal and Adobe this morning, whose CEO was speaking to Ed Ludlow, saying our shares are undervalued, announcing a partnership with OpenAI and Google AI that their tools would be incorporated into Photoshop, so those shares moving higher by 2%. We also heard from SoFi this morning, earnings from the financial services company. Their estimate for users for the full year is now 3.5 million. Before, it was 3 million. That's an upgrade there. Also, for the third quarter, they said they had record number of users, record revenue, and record new products on their platform. So those shares up just over 4%. Finally, the big gainer this morning is UPS. I should mention it's down 25% year to date, so that shows you where expectations were heading into their earnings. But it was their profitability expectations for the year that beat basically all of Wall Street. What are they doing? They're cutting costs and they're laying off people. In fact, their outlook for how many people they're going to lay off is 70% higher than the estimate that they gave before. So those shares jumping 12%, John.
Danny, thank you. Looking forward to the program in about 29 minutes' time, going into the opening bell. 59 minutes away. As we count down to the Federal Reserve decision, the October FOMC meeting, two-day meeting, kicks off a little bit later on this morning. The decision just around the corner. Bloomberg's Mike McKee has more. And maybe, Mike, an update on a sprinkle of economic data on a weekly basis.
Yeah, we got this new report from ADP. They announced this morning that they are launching a 4-week moving average every week of how many jobs have been created according to their payrolls. The number they come up with for the 4 weeks ending October 11th, so this would be a week delayed, is 14,250, which would suggest very sluggish hiring, although that includes 2 weeks of September. So we have to wait till they get farther along to get a monthly picture for October. But it would justify where the Fed is, at least according to the Fed, worrying about the idea of employment and what that means for the economy. So we do expect a 25 basis point rate cut tomorrow. That's kind of been baked into the markets. So then the question becomes, do we get a lot of dissents? And if you're looking for dissents, you could have them on both sides, to cut more or to hold. We're looking for any guidance for what they might do in December, although that's going to be a tough order for Chair Powell because they don't know. They don't have the data right now. So I don't think you can bet on a December rate cut necessarily. And then what's the future of QT? This is something that has come up in the last couple of weeks, especially last week when Chair Powell mentioned it in his speech that they're coming to the end. The total size of the balance sheet has shrunk significantly, although it's never going back to where it was before the pandemic, in part because that's the balance sheet and it includes currency and things like that. Total Treasury securities now below $3 billion. The future of QT is a debate on Wall Street, and we're getting people on both sides. The Bank of America folks representing a number of the Wall Street firms say there's a very small echo of 2019 in what we're seeing now in money markets. The Fed overdrained cash and likely knows it. In other words, they've got to stop now because we're going to start to see a 2019 reaction in the money markets. The folks at Morgan Stanley say they don't see the same problem, that it's a different kind of problem in terms of liquidity, and they don't think funding markets are implying signs of liquidity short-ups, so they think the Fed may keep going for a little bit longer. All this to be determined, and we'll find out 2 p.m. Wall Street time tomorrow afternoon.
Looking forward to your coverage. Mike McKee in the room with Chairman Powell tomorrow afternoon at 2 p.m. Eastern Time. The decision, of course, 30 minutes later, the news conference. Sticking with that looming interest rate cut down in Washington, D.C., I'm pleased to say that joining us now in the studio here in New York, the former Dallas Fed President, Robert Kaplan, now with Goldman Sachs. Still used to calling you Mr. President. We'll go with Robert this morning. How are you, sir?
Good to see you.
It's good to see you. Let's talk about the data if we can. You're in a position now where you've got a ton of data yourself. What's it like at the Federal Reserve? Just this idea of flying blind without having that official data. What does that mean?
On the margin, they can still use private sources and they can talk to businesses. The sense is that hiring is sluggish. I think you hear that from business. You also hear from business, we may be belt-tightening, but we're not firing significantly either. And so the reason the unemployment rate's not going up is because supply of labor is flat to down. And that's so far what the data says and what anecdotes say. I think it would be helpful to the Fed to start getting more of the formal data just to reinforce their views, particularly as they get closer to neutral. If you're above neutral, if you're still restrictive, it gets more of an urgent need as you get closer to neutral, which I think neutral is in the range of 3.5, 3 3/4. They're getting closer.
You think we're pretty close, based on that estimate?
I do.
There's a range of estimates on the FOMC. There always is. What's interesting to me is to see this step down in payrolls growth without seeing that real step up in unemployment. Do you think there's evidence that slack has increased? And how would you anchor your view around the labor market right now? On payrolls or around a pretty stable unemployment rate?
So here's what we're seeing out there. College graduates are having a hard time finding jobs. Hiring is less. However, also talk to businesses, construction and other industries where they've got a large number of unfilled positions. So there's a mismatch issue. So the part I think I'd be trying to figure out from my former job, is this a cyclical slowing or is a lot of this a matching issue that over the next year or two will get fixed by better matching? And right now, I think the jury's out. It looks like some cyclical slowing. That's why the Fed is cutting. But I think there's a point at which they're going to need to keep retesting that thesis.
Based on your estimate of neutral, it implies that you don't think we're that restrictive right now, and therefore
that's right.
It would suggest that you don't think much of this is cyclical.
Yeah, and the reason, by the way, for the debate about neutral, again, when most people say the long-run neutral rate is 2 3/4, they're assuming a 2% inflation rate. But inflation is not 2% right now. It's 2 3/4 to 3. I still think the real Fed funds rate that's neutral is about 3/4, and that's why I say 3.5, 3 3/4. The issue is if inflation is still 7,500 basis points over target, you want to really scrutinize what's going on in the labor market, because do you really want to get to neutral with inflation this much above target? I think right now they're trading this off and saying, listen, we've got to guard against a weakening in labor. I would agree with that, and I would cut in October too. But beyond October, even though the market thinks it's a done deal for December, in my mind, if I were in my former job, I'd really want to be vigilant about it.
Do you think we're that close to questioning the credibility of this pursuit of 2% inflation at the Federal Reserve?
I don't think so, and here's why. Yes, we've been above target now for 3 or 4 years. Having said that, China overcapacity, disinflationary. AI over the horizon, disinflationary. And the reason this matters, there's 85 million Americans roughly who make 50 or 55 grand a year or less, have lost 25% purchasing power, are struggling to make ends meet. And for them, inflation above target is like a regressive tax. And so that's why I think it's still important to get in the neighborhood of 2. Doesn't have to be exactly 2, but in the neighborhood of it.
Chinese overcapacity, disinflationary, now for the rest of the world. Maybe not for America.
That's
the wars
right.
have gone up. How does that change the story?
Well, so the Fed over the last couple of years has benefited from the fact service sector inflation has been running in the mid-3s, but goods have been disinflating, fueled heavily by China. The tariff episode has stalled that, at least for us. But over the horizon, once the tariff situation settles down, I still think that disinflation may start to seep in, but we've interrupted it, and that's why you see overall inflation kind of just stuck and going sideways.
How do you view the tariff story in terms of its impact on goods?
Well, so in the near term, tariffs, I can tell you from businesses I talked to, have slowed growth. They may spur growth over the long run if it spurs more investment, but in the short run, it slows growth, it comes out of margin. And for goods, many companies I talk to are taking it in margin because making a price increase decision is a big strategic. They're not prepared to do that. So they're going to accept lower margins, they're going to do some belt tightening. Over the horizon, though, the next year or two, most companies also I talk to want to get some of that margin loss back and price when they can. But for the moment, I think they're taking a lot of it out of margin.
How are companies you're talking to thinking about IEEPA and the fact that the tariffs they're paying that might actually get refunded for?
I think the assumption by businesses, and I would guess other countries, is if this authorization doesn't stand up in the courts, the administration will find other authorizations. So I think people are proceeding on the assumption these are going to continue.
You're traveling the world, speaking to businesses all around the planet, across several geographies. We were just talking, you'd recently back from Brazil. You're a very well-traveled man at the moment. You don't have that sort of regional Fed bias anymore if you ever had one. You're not just US-centric now. Right. Are you hopeful for the global economy based on what you're seeing?
Listen, there are 2 or 3 tailwinds for the global economy. One, AI, data center, power, boom, has the promise to improve productivity growth globally. And one of the big problems around the world is aging populations, not everywhere, and over leverage. If we can get productivity growth higher, that's great. In the US, we've got regulatory relief coming. Maybe that'll spread to other parts of the world. And we've got tax incentives coming. And so there's a lot of optimism. However, I would say deglobalization makes it harder for many countries outside the United States to solve some of the problems that they're facing, and it likely raises costs.
Robert, it's good to see you. It always is. Should do this more often. Thank you, sir. Robert Kaplan, the former Dallas Fed president, now, of course, vice chair over at Goldman Sachs. Let's give you an update on stories worldwide this morning with your Bloomberg brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. ADP is launching a new weekly release of its preliminary U.S. jobs estimate. The latest data shows an average gain of 14,250 private sector jobs over the 4 weeks ending October 11th. Weekly estimates will be released every Tuesday starting today, drawn from payroll data from over 26 million private sector workers. Meanwhile, Paramount Skydance will begin a major round of layoffs tomorrow with 1,000 job cuts. Sources telling us here at Bloomberg a second round of cuts is also expected later, with the total number previously reported at about 2,000. Paramount Skydance was created through a merger back in August, and its new management is moving quickly to cut costs and restructure. And President Trump's social media company is getting into the booming prediction markets business. Trump Media and Technology Group is planning to make prediction contracts available on its Truth Social network, where users can bet on events from political elections to inflation rate changes. The service, called Truth Predict, will also feature bets on commodity prices and events across all major sports leagues. That's your Bloomberg Brief. John?
Yahara, thank you. Up next, we'll say you well for the day ahead, plus we'll catch up with the CEO of JP Morgan Asset and Wealth Management, Mary Odos. Mary, just around the corner.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Live from New York City, welcome back to the program. The opening bell about 45 minutes away. Equity futures positive by 0.1% on the Nasdaq 100, up by 0.2. That's the story on Wall Street. For a special guest, let's head over to Riyadh, Saudi Arabia. We're joined now by our anchor, who leads our coverage in the region, Bloomberg's Jemana Basechi, who's standing by with more. Hey, Jemana.
Hi, guys. Yeah. That's right, coming to you live from Riyadh. Really happy to say that joining me right now is JP Morgan CEO of Asset Management and Wealth Management, Mary Erdos. Good to have you here with us. It's been a really busy couple of days, and actually we're only day one of FII. But JP Morgan, we're here on Sunday. You were celebrating your 90-year anniversary in Saudi Arabia. And I've got to say, for those who are unfamiliar with Saudi Arabian history, that's even before oil was discovered.
Yeah, absolutely. I'm so happy to be here with you. And if you all could only see the crowds of people that are here, 9,000 delegates here in Riyadh for the FII. It's a really exciting time period, but it's even more exciting for JP Morgan, 90th year anniversary celebration with all of the ministers and important heads of different sectors and the like. But it is incredible to think that 90 years ago, we were facilitating gold payments and moving it here into the region before oil was even discovered. Yeah. And the journey that we've been on with all of our partners here, it was great to see at the JP Morgan event that we had on Sunday night to celebrate. So many of the ministers said, I was trained by the JP Morgan credit training program back in the day. And so we're very proud of that and our partnership that we've had for so many years.
Quite the evolution for both JP Morgan and, of course, for the country as well. You know, now we talk about diversification away from oil. But you sensed an opportunity 90 years ago. Now there are so many banks coming to the region. It's becoming a lot more competitive. How do you hold on to your market share and compete versus all of the other international banks that want to gain this market share?
It's competitive everywhere in the world, and it's increasingly competitive here. We're very proud. We have 430 people in the region. We just this week named Riyadh as our global headquarters for the region here, so we're very excited about what that means for the opportunity. But, you know, we facilitate inbound and outbound payments, investments, all of the things that make the world go round. And we work very hard, and it takes very long-term time to make these partnerships and develop the trust. Yeah. And so to think about not just one industry, but many industries, to go through hiccups, to ride through good times and bad times. And, you know, that's what makes these relationships. And so.
And as these countries have matured and grown very quickly, what you have seen is an accumulation of wealth. So wealth management is also a big focus for many banks out here. And you have a huge influx as well of ultra high net worth individuals that, again, are adding to this cycle. Would you say that wealth management investment priorities in this part of the world are different from other jurisdictions?
No different. You know, everybody has a home country bias. We can't get away from it depending on where we live. But everybody sees the opportunities. And if you just show up at FII for a couple of days, all the opportunities are here. Every major asset manager is here. Everyone's talking about the opportunities. Many discussions on AI, as you know. But everything from energy to onshoring, reshoring, manufacturing, and all the different opportunities that exist.
Yeah. Let me ask you about some signals that are coming through from the U.S. economy. Obviously, we have the Fed meeting coming up tomorrow. They're widely anticipated to cut interest rates. But CEO Jamie Dimon a couple of weeks ago was talking about there being potentially other cockroaches in the credit market, something to be alert to. How do you see the signals coming through right now?
Yes, well, I mean, we stress test the portfolio of investments that we make with our own balance sheet as well as our clients' balance sheets each and every day. And you have to do that, especially when you get to top E levels in all of these markets, of which we've had. We haven't had a correction in a long time. We haven't had a recession in a long time. And so the closer you get to that time period, nobody knows when it is. You have to make sure that the clients and the balance sheet of whether it's an individual, an institution, a sovereign wealth fund, or our own bank is able to sustain that. And so when we stress test that, we look for, what are the little, even micro signs of what might be going wrong. And that's our job. That JP Morgan prides itself on fortress balance sheet. We want to be there in good times and bad for our clients, and so we need to make sure that we're able to have the cash ability to help clients as they ride through those times. And there aren't major signs, but you're seeing little pockets of it. You see a little amend and extend on credit terms and the like, and so we're watching it, and we're watching it very closely.
Yeah, how are you feeling about 2026? Again, I started this off saying that the Fed are about to cut interest rates again.
Yes.
How do you see the momentum going in to 2026? Because most recent results obviously quite positive. Can that momentum continue?
Yes, I mean, we should be seeing more inflation than we are. There's a lot of things. Remilitarization should be inflationary. Tariffs should be inflationary. It hasn't cut through the system as much as you would have thought, and so you're getting interest rate cuts. That's very bullish for the economy. You're getting a lot of reinvestment. That's very bullish for the economy. And so I think 2026 is setting itself up to be another great year. It's just you have to pick your pockets. You have to risk manage. You have to make sure that the things that have ridden up so well, have you right-sized them? Have you trimmed them to be in the pocket of the portfolio that they should be?
So you mentioned artificial intelligence earlier. I do want to ask you whether you are actually seeing a return on investment by introducing AI into your operations, and then also, whether actually there's scope for AI to replace people's jobs, especially junior and at analyst level.
Yeah, I mean, AI is a lot of people have said, is there an AI bubble? I said that's like asking if there's a computer bubble. It's not really a thing. AI is a new way of working, and it's a really important factor in all investments that people make, in all companies, and especially JP Morgan. We spend a lot of time on it. As you know, we spend $18 billion on technology a year, and we're on the forefront of many things, whether it's AI, quantum computing, and the like. But for us, it's about deploying it in a way that you rethink how you do things in the organization. Can you do it faster, better, cheaper, quicker, smarter? Can you catch the errors? Can you protect the clients? Can you make sure that the cyber defenses are even stronger than they would be? But if you look at S&P 500 companies, only about 10% of them say that they actually have AI in their products and services out there. And if you look at the mentions of AI when you talk about quarterly earnings or even just our own investment managers going and meeting for the different management teams out there around the world and all the companies, it's only about 40 to 50% of international companies. The good news is it's even higher in the US, about 70%. And that will trickle through. And it's just like how we see it in our own company. You start with fixing the no joy, get rid of all the no joy work, try to get AI to optimize those kind of things. And then over time, you realize you have to stop the way you're doing all things and rethink entire processes and procedures. Yeah. Why am I optimizing 10 steps when I maybe should have just gone from step 1 to step 10 and removed everything in between?
Ultimately, do you see AI as a massive cost deflator? Is that how you're thinking about it from a business perspective?
It could be a cost inflator, but it should be just a great efficiency gain. And the better you can do things, and the better products and services, and they're tailored just to you. I know exactly what you want, on which day, what you've been waiting for, what you're nervous about, and how do I customize that, and then how do I do that at scale? And when I can do that with AI, and if I have curious talent, that's all you need is curiosity and a little AI, and you can go very far in making the right products and services for the clients of the future.
Yeah. Ultimately, though, do you see some of these jobs, as I mentioned, those entry-level jobs, being replaced by AI?
Not at all. Somebody earlier today said, yes, a lot of jobs will be replaced. I totally disagree with that. I think the jobs that will be replaced are those for the people that are not curious, for the people that are not using AI, for the people that don't say, how do I rethink this? How do I dig in deeper? And so every time you get to think about using the technology that's at your fingertips and figuring out, how many times did you mention something last week when I was watching you on late night Bloomberg TV, which I do every night of my life, and it's a great joy to hear all of the things that you're covering. And you say to yourself, well, if I could just plug that in, and if I could have it summarize what you're saying every night for me, and I could think about how I'm going to apply that, and then I take those vast streams of information. That's all you need. You need curiosity, and you need great people to do it. So I don't think it's a job destroyer for those kind of people. I think it's a job destroyer for the people that are waiting and fearful that it is going to take over their job.
Mary, thank you so much. Also, it's good to know that I have at least one viewer for our Bloomberg Horizons show. John, I'll toss it back to you.
Jemana, thank you. We want them to tune in and watch, not just summarize what someone might have heard overnight. Anyway, Jemana, thank you very much. Appreciate it. As we count you down to the opening bell, here's your trading diary for the week ahead. At 12 p.m. Eastern Time, NVIDIA CEO Jensen Huang speaking at NVIDIA's tech conference on Wednesday, the Fed's interest rate decision and news conference with Chairman Powell, plus earnings from Microsoft, Alphabet, Meta. Thursday, President Trump and the Chinese leader Xi Jinping meeting in South Korea. Plus, we get more tech earnings from Apple and Amazon. And an ECB rate decision is just around the corner, too. Coming up tomorrow, here's the lineup for you. Julian Emmanuel of Evercore, Gargi Chowdhury of BlackRock, Alicia Levine of BNY Wealth, Jay Goldberg of Seaport. Why is Jay interesting? The only sell on NVIDIA, 73 buys, 6 holds, 1 single sell, and it belongs to that man right there.
NVIDIA is going to be important tomorrow. You know why? After Jensen Huang speaks in Washington, D.C., he's going to meet with the President of the United States before the President sits down with Xi.
A very, very busy week begins tomorrow with an interest rate decision from the Federal Reserve and a lot of tech earnings. More than $10 trillion of market cap reporting. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
All right, markets look like they want to rally again. 30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up from UPS to United Health, investors wading through a flurry of corporate earnings ahead of the big tech parade.
And in those earnings, mounting layoffs, UPS, Amazon, Paramount, among the companies announcing job cuts in the last 24 hours as corporate America tightens its belt.
Also targeting 7,000, Wall Street maps out the S&P's path to new highs as sky-high expectations become the base case.
So many earnings to sort through and a lot of announcements, Matt. I have one company that did both of them. It was PayPal. They announced a raise and a beat, but that's not what has shares higher by almost 9%. It's another OpenAI partnership. PayPal, the first company to add its digital wallet to ChatGPT. PayPal also raised its earnings guidance. They weren't the only one, Matt. You also had Adobe announcing an OpenAI partnership. You say OpenAI, and congrats, your shares rally.
Yeah, and they need it, right? Because they've been massively underperforming this market, as has UPS, but it smashed Wall Street's profit expectations and says it's cut 34,000 jobs so far this year. As a result, these shares, also big underperformers, are finally getting a boost, Danny.
Let's get more on UPS. Joining us now is Bloomberg stocks reporter Matthew Griffin, and he's been following this earnings report. Matthew, good morning. Great to have you. How much of this about UPS outperforming and the profit expectations is about the underlying business doing better versus just slashing costs and jobs?
Danny, thanks for having me, and that's a really good question. The answer is kind of in the middle, is that these stories are really tied together this year and for the last few years. UPS has been facing some pretty significant challenges. You have competition from Amazon, you have higher costs, you have pressure on the volume of shipments that it's seeing. And so in response to these challenges, the company has set out to cut costs and to cut jobs. We knew that they were embarking on this cost-cutting push. They said they wanted to cut 20,000 jobs, but there were questions about the speed that those efforts had achieved and whether it would be fast enough to kind of catch up as they cut business with Amazon, for example. This report is really soothing investors' worries there. They cut 70% more jobs from their operational workforce, that's their drivers and their package handlers, than they previously said, so 34,000 jobs, which is a sign that those cost-cutting efforts are going well, and that ultimately flows back into the underlying business here.
How are they going to be able to continue operations, if the economy continues to grow with 34,000 fewer employees? Is this about cutting out low-margin deliveries like Amazon packages?
Exactly. So UPS is not necessarily saying that we want to do less business in the lines of business that are strong for us. They're saying, and they've said this year, we want to reprioritize into businesses that are more profitable. So though Amazon, coming into this year, that's their largest customer, but also those shipments are lower margin, and so that's where you get this push to cut that business. And that may be the plan here, is that there's room to add, but you don't need the capacity, you don't need the workforce to handle those shipments that weren't as beneficial to the company.
All right, Matthew Griffin covers UPS for us. Thanks so much for coming on set. As Matthew mentioned, UPS is not the only company announcing job cuts this morning. Amazon announcing it's going to eliminate itself roughly 14,000 corporate jobs. These cuts include roles in logistics, payments, video games, and cloud computing. Joining us now is Bloomberg Tech co-host Ed Ludlow. And Ed, I mean, this is a massive, massive employer. So 14,000 isn't a huge amount, but what's it about? Is it because we've just gotten some major job cuts only a couple of years ago from Amazon? Is this about trying to offset the hit to margins from tariffs, or is it about replacing jobs with AI?
It's about bloat, really. I mean, 14,000 jobs is less than half what Reuters reported it would be yesterday, right, which was a 30,000 figure. But even 30,000 in the scheme of the 1.5 million employees isn't that much. You know, Amazon communicated that this is about cutting bureaucracy and layers of middle management. The difficulty for the market is that previous signals from Andy Jassy, the CEO, made it about AI. So in a world where AI is more pervasive internally and as a sales product, that would have some impact on roles. But in the communication that came out overnight, in the confirmation of the 14,000 number, it was much more simple than that. They're bloated in certain areas. Sources told us that it is quite wide-ranging, you know, everything from the video games offerings through to payments, services, etc. But flatten the management structure is kind of what Amazon's focus is.
Matt and I were talking yesterday, Ed, about a story from The Verge that came out last week where Amazon had hoped to cut 600,000 jobs over a long period, but because of what they see as AI replacing things. We've also had job cuts announcements in tech from Meta, for example. You're talking about very straightforward job cuts to streamline. Ed, when does that start to converge with technology replacement?
Yeah, so remember that a part of Amazon's story is the history of what happened in the pandemic. You know, there was a period from the year 2020 through to 2022 where the overall headcount basically doubled. But then you have to distinguish between fulfillment and logistics roles and corporate roles. These 14,000 jobs overnight are corporate roles, right? Managers, not people literally physically moving goods. The report that you're citing talked about a world where Amazon's investing heavily in robotics. We know they are. But like many things in the world of real world or physical AI, this is something distant in the future. You know, right now they're just kind of showing us what they're creating and playing with. It's not a 2025 story that every action in a fulfillment warehouse or regional distribution center on the Amazon.com side, because always remember, like, cloud is the majority of operating income. We're talking about the much lower margin e-commerce business. Like, robots are one day, but they're not 2 day.
Ed, I just had a trader message me a GIP graph of ASML shares. They've taken a dip on your scoop with Ian King that a Peter Thiel-backed startup is going to try and challenge their sort of lithography dominance. What do we know?
Right. Okay, so this is a company called Substrate. It's based in San Francisco. It has been in stealth for a number of years and out of the gate has raised about $100 million at a $1 billion valuation. It has a new form of lithography machine where the light source is a particle accelerator. By comparison, ASML's machine is extreme ultraviolet light. But what Substrate was telling me is that every component of their lithography machine is done in-house by them. They have not worked with any other tech companies. The images that you're showing are the wafer patterns. And basically, read the story, but what they're demonstrating is that the scale of those features on your screen are as good or better, sharp or sharper than what ASML's high-NA lithography machine is able to achieve. But again, the business plan is very different for Substrate. They want to not sell these machines to one of the chip manufacturers. They want to be a chip manufacturer, be the TSMC of America, an American foundry, and that is a long shot, to put it mildly.
All right, Ed, thank you so much. That's Bloomberg Tech co-host Ed Ludlow and the Substrate CEO James Proud will be joining Ed and Caroline Hyde on Bloomberg Tech at 11:30 a.m.
That's an
Eastern
angry picture
this morning. He's a serious dude.
That's very serious.
Got to be serious if you're going to be on ASML. Now, in other very serious news, this just crossing the wire, a new deal in packed between Microsoft and OpenAI. It's a new stake in OpenAI's PBC. What does that mean? Well, joining us is Bloomberg Tech co-host Caroline Hyde. And Caroline, with these new agreements, first of all, Microsoft immediately jumping on this news, but I just looked through the headlines, and I'm going to be honest, a lot of it is like a foreign language to me, but it just showed the two are coming closer together. What exactly is this agreement?
We knew that a memorandum of understanding had been signed and the details are getting close for this public benefit corporation. That's the PBC bit that ultimately OpenAI is forming. It wants to be a for-profit business. It was founded as a not-for-profit. The not-for-profit will still oversee OpenAI's public benefit corporation, and now we try and work out who has stakes in what. We understand Microsoft has $135 billion overall valuation ownership of the public benefit corporation. That's bigger than OpenAI's. We understand a few months back, Brett Taylor, the chairman of OpenAI, put out a statement that the overall philanthropic arm of OpenAI would hold a $100 billion valuation stake in the public benefit corporation. But remember, they've raised money from others. Thrive, for example, is in there. They will get a stake in this PBC, as it's known. But what's interesting is that OpenAI has still got a contractual obligation to buy Azure, to buy cloud from Microsoft going forward, to the tune of $250 billion worth of Azure services. But this is also talking about how once AGI, once artificial general intelligence is hit, in whatever form we decide that that is made, what happens then? Because this was always the deal between Microsoft and OpenAI. When Microsoft first pumped money into the company, it was they would have exclusive rights to OpenAI's overall IP until AGI was hit. Well, now we start to understand really what's going to happen in at that particular point as well. And they say Microsoft retains IP rights, intellectual property rights, Azure API exclusivity until AGI. But OpenAI can now jointly develop some products with third parties. You've already seen that happening. OpenAI was starting able to get cloud from others, like Oracle, for example, like Google, because they couldn't just get enough cloud from Microsoft. Microsoft, in turn, is starting to offer Anthropic within the overall Copilot offering, not just OpenAI. So these are the new terms of the deal. We knew this was coming, and this is a forward-looking relationship, and that's why there's such a sigh of relief, because many had wondered what on earth would happen when OpenAI did indeed solidify that public benefit corporation angle.
I mean, so they're going to buy, they've agreed to buy $250 billion worth of services from Azure, which has annual revenue of $75 billion. So they're essentially agreeing to buy, more than 3 years of what Microsoft makes in all of the rest of its businesses in cloud. That should show you, I don't know the timeline, but that should show you the scale.
That's the thing that we need to dig into is like exactly on what time this contractual incremental service.
If it's in 5 years, that's massive. If it's in 10, it's less so, right?
$250 billion is a lot, but think Sam Altman is spending $1 trillion at least in terms of overall AI infrastructure. So he's seeing that his cloud compute needs are going to be enormous for the next decade or so. And Microsoft's going to be a key player in that.
But there's also this weird thing where they're like, we've taken an $130 billion stake in OpenAI, and by the way, because of the share price raise, they've also created almost that much amount of market cap. It's like they're creating money out of thin air and investing said money.
Are you trying to hint at an AI bubble again?
Well, okay. Should we talk about the other thing? It's Microsoft announcing an OpenAI partnership or stake. It's PayPal. Yeah. It's also Adobe. Every single one of these companies are like, we're working with OpenAI, and this is what happens to the share price.
Just think about a couple of years ago, anyone would say we're doing something with NVIDIA, and your share price would pop. Now, anyone says we're doing something with OpenAI, and their share price pops. I mean, sometimes you're giving equity to OpenAI, like in the case of AMD, and their share price absolutely walloped higher on the back of that deal. And so, yeah, PayPal's saying, look, we're going to integrate our payments ecosystem within OpenAI. We're going to also use OpenAI within our own business a little bit more. That's sending PayPal surging. But Truist, analysts over at Truist saying, sorry, I think eventually every payment form is going to be in these general chatbots.
Exactly.
Look, already Etsy's got a deal, Shopify's got a deal, but now really PayPal's trying to be out there saying we're thinking agentic AI for our future. They've already got a deal with Perplexity, they've got a deal with Google, and now they're doing it with OpenAI as well.
I mean, keep in mind, you'll be able to use, I'm sure, your Visa and MasterCard debit cards.
I know you're going to be wanting to use that locked up
You'll be
Bitcoin.
able to use your Amex. The thing is, like, PayPal gets this boost today, but those shares over the last 5 years are down 63%, while the S&P has risen more than double.
Yeah.
So, I mean, it's hard to underperform this much. You know, a real company can hardly do this badly. So,
well, buy now, pay later came into the ecosystem and started to erode in terms of market share. And really, that's what the CFO of PayPal is speaking to, that it's a whole new way of doing business that they've seen. Consumers want to pay in different ways. PayPal used to own really sort of the monopoly on when you went online and wanted to pay for things. Suddenly, you've got a myriad of buttons, but they want to keep on building up Venmo, for example, and monetize that. And they've actually shown and brought out for the first time actually what their billions of dollars of revenue will look like for Venmo for this year. They have beaten, they've raised their full year guidance. They are trying to do a turnaround under the new CEO. And I think they're starting to show that incrementally he can make these sorts of deals. But yeah, the fundamentals need to change. And they're also talking of a US consumer that's under duress right now and that payments are starting to come down in volume. They just want fewer but bigger transactions over at PayPal.
All right, Caroline, a huge wrap, a lot going on. Obviously, you've got to get back to your desk and
we're changing the whole show.
And work on Bloomberg Tech after these Microsoft headlines. Caroline Hyde anchors that program with Ed Ludlow, kicks off at 11 o'clock. Right now, let's get a check on futures. We've got just about 15 minutes to go until the opening bell. And of course, we hit all new record highs on nearly every benchmark index yesterday, even the Russell 2000 eked out a record high yesterday.
And the equal weighted also had a record high yesterday. By the way, the S&P was little changed when we started this show. What's moved it up? Almost 1/4%. It was, you can see it exactly on the line of when that Microsoft deal was announced. It's such a huge part of this overall market right now.
It's true. Actually, Joe, bring up a GIP of just the S&P index, just the benchmark index, the futures, and you can see this huge spike with the Microsoft OpenAI announcement. So it's not just that it drives PayPal, a stock that, you know, has underperformed by 170% over the last 5 years, but it drives the whole market, which is up 18% year to date.
And it's moving, like, this is the kind of thing you'd expect to see after a macro jobs release data that looks really good, right? But that's not what this is. Driving that spike higher is an agreement between OpenAI and Microsoft.
Wow. All right, some of the other movers we're watching. United Health boosted its profit outlook and expects growth in 2026. That firm has struggled this year amid a number of problems, including a federal criminal probe, and it's now up 3% in the pre-market.
SoFi, they're also gaining this morning. They boosted their earnings forecast. Fee-based revenue jumped 50% year over year. They added they expect to add 3.5 million members into this year. It's also leaning into stablecoins and crypto offerings.
And Royal Caribbean issued an underwhelming forecast as rough weather and the closure of an exclusive destination in Haiti will impact results. Remember, we're preparing for a massive Category 5 hurricane to hit the shores of Jamaica.
Coming up on the show, top executives from Wall Street dismiss fears of a brewing credit crisis. Goldman Sachs CEO David Solomon arguing he doesn't see any systematic risk looming. We're going to show you some of his remarks. That's coming up next. You're watching Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15%. We are resolute now, and we've communicated a firm intention to increase our stake
in dubious to a controlling state. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's get now to high interest. Look what's making headlines around the world. President Trump is wrapping up his Japan visit with a dinner of top CEOs that includes Apple's Tim Cook, OpenAI co-founder Greg Brockman, SoftBank CEO Masayoshi Son. Trump praised the prime minister, the new prime minister of Japan, Sanae Takaichi, and pledged to be there for Japan. The two leaders vowed deeper defense and economic ties with Tokyo, outlining $550 billion in U.S. investments in energy, AI, and minerals. The president is now going to head to Seoul and then San Francisco for the APEC summit. Meanwhile, President Trump's media firm is entering prediction markets, unveiling a Truth Social feature that users can use to place wagers on elections, inflation, and sports. The venture, called Truth Predict, has backing from Crypto.com and extends Trump Media's crypto push as rivals Polymarket and Kalshi see record trading. The CEO, Devin Nunes, says it will democratize information by turning free speech into market foresight. That's amazing marketing. Goldman Sachs CEO David Solomon said he doesn't see systemic risks in credit markets despite the collapses of First Brands Group and Tricolor Holdings. He spoke with Bloomberg's Jumana Bersetchi at the Future Investment Initiative event in Riyadh earlier.
I don't see anything in the context of a handful of bad credit situations that's leading me to say that we have a systemic issue around the corner.
Yeah.
Unfortunately, lenders make mistakes. There is fraud in markets. And that's something that as lenders we all have to try to protect against. But we should not be fooled by the fact that this is a very robust credit environment. Credit spreads are tight. And when we do have a cycle, which probably will come when there's an economic slowdown, there will be losses, and we'll feel that across the economy.
Striking a different tone than perhaps J.P. Morgan's Jamie Dimon. Coming up on the show, Moneta Chief Global Market Strategist Ethan Devitt discusses earnings revisions and the rise of job cuts this quarter. This is Bloomberg Open Interest.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
The bull case for the S&P 500 at 7,000 is quickly becoming the base case heading into the final months of the year. BlackRock CEO Larry Fink says the U.S. remains the place to stay heavily invested. He spoke at the Future Investment Initiative in Saudi.
Money is going to move around all the time, but I would say most global investors have a very large overweight in the U.S., and I think that's going to be the place to have your overweighting for at least the next 18 months.
Let's bring in Moneta, Chief Global Market Strategist Ethan Devitt. Ethan, great to see you this morning. And everybody is bulled up that we're going to get something like a melt-up. There's a lot of event risk just this week between big tech earnings, between the Fed. Can anything stand in the way of this market and 7,000?
I would say at this point, maybe 7,000, yes, there could be some profit taking at that level. But where would the negative surprise be? We've already had a bit of a storm in a teacup around tariffs. That now seems to have eased given this positive signs coming out of these summits. We know that earnings or expectations have been very well managed. Therefore, to beat on the upside is probably not too difficult for these large tech stocks. So that's certainly looking positive. We've already been dampening down the talk of cockroaches in the credit arena, and that's probably putting some investors' minds at ease. But what we still don't know, and what I find intriguing, is why gold has come off. Because essentially all of the risks that were there driving the increase in the gold price, none of them has gone away.
I was actually wondering about that myself, but I figure it's still almost $4,000 a troy ounce. Like, it doesn't mean everyone has sold it just because it's dropped below that big round number, right?
No, certainly not. And some of the speculative interest has probably come out of that. And there's been some profit taking. Anything that's up north of 60% year to date, there's certainly ripe for profit taking. But what I do think is important is the sense that this has come off because maybe some of the risks have dissipated. And the risks, I think, are more macro risks around gold, such as the fiscal debt, etc. So not something that has really gone away at this point.
All right, Ethan, we'll have more coming up after the market open. That's Moneta, Chief Global Market Strategist Ethan Devitt.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating operating there, you wanted to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg. We are moments away from the start of trading, and there have been a flurry of announcements, including one from Microsoft and OpenAI, that have really boosted this market higher, at least in terms of the futures. You can see we're up 0.25% here, and the NASDAQ futures up 1/3%. A record on a rally, or rally on a record, I'll say, again, as I said yesterday, after we hit all-time highs on nearly every benchmark index yesterday, or at least everyone that I've checked so far, we're rallying further. This is pretty cool. Andrew Ross Sorkin ringing the opening bell at the New York Stock Exchange in honor of his new book, 1929. I'm in the middle of it. It's pretty incredible. The Financial Times, the Wall Street Journal, the New York Times have all given it great reviews. They say it's a work of scholarship and genius narrative storytelling. So check it out if you care about history. Pool Corp, speaking of history, 30 years listed on the NASDAQ. It's not been a great history, though, for investors. Over the last 5 years, it's down 20%, and over this year to date, it's down 14%. So it hasn't been really fantastic if you own the stock, but I guess still an incredible milestone. Right?
Yes, very well put, Matt. I love it. Look,
if you bought stock in 1929, by the way,
and probably do really well.
You're doing great.
You're doing so well. Yeah. And maybe it's a sign. We're talking about Andrew Ross Sorkin writing his book about 1929. Stocks are at an all-time high. What could go wrong? A stock to watch this morning, it is Microsoft, and it has moved the entirety of this equity index higher. Microsoft up 3.8%. It's getting a 27% ownership stake in OpenAI, worth about $134 billion. That was announced at the top of this hour. And this thing about this market, you announced something about OpenAI, and congrats, your share price will rally. PayPal is going to be the first company to add its digital wallet to ChatGPT. Those shares up 7.8%. They also had earnings that beat, but who cares? They got an OpenAI deal, Matt.
All right, UPS is seeing its biggest gain since 2022. It smashed Wall Street's profit expectations and has cut 34,000 jobs so far this year. Of course, this is just one more story of a company that has really underperformed the market. UPS has done very poorly over the last 5 years. It's been done very poorly year to date, and as a result, especially when you consider the S&P has doubled, right? The economy has grown so much, and yet UPS has done so badly. Over 5 years, down 37%, even with today's 10% gain.
So the bar is low, and that puts the gain in context.
Yeah, I mean, that's just the story of a lot of companies coming out with earnings today. Amazon, hasn't dropped, but it's underperformed the Mag 7. It's underperformed the S&P drastically, and it comes out with a layoffs announcement, and the stock pops. So that's one of the sort of storylines that we're following.
It feels like the storyline. Profitability is better at these companies because they're cutting jobs. And how long can that sustain this equity market?
Right. Well, we look forward to how also the Fed takes this in tomorrow. Let's bring in Moneta Chief Global Market Strategist Ethan Devitt. Ethan, are we seeing, now the cost of trying to drive stocks, trying to drive profits, by releasing your workforce? Is that going to be the story of this season?
It certainly has been a message that has been rewarded consistently. CEOs know that. They know that this is the kind of good news is bad news is good news conundrum. And we spoke about cockroaches last week. This is really the scorpion story. This is the story of AI with a sting in the tail. We know that the sting in the tail around AI is definitely job losses, and we haven't fully digested what that means for the consumer. So just getting back to the sense of overweighting the US, right now, the sort of story we've heard Larry Fink speak about is this, have been records in the US. It is primarily a big tech and AI story. But I think it's interesting that you mentioned these laggards that have started to play catch up. If one is to overweight the US, it is critical that that is done in a way that is diversified across the spectrum, not to be overly concentrated in those big tech stocks, which are going to be more volatile after the kind of run-up we've seen.
And Ethan, we're going to be speaking to our in-house economists in the next hour about all these job cuts, but just looking at some of them that we've heard in the last month, and this really just scratches the surface. Okay, UPS, 34,000 cuts this year. Amazon, 14,000. Target, just under 2. Applied Materials, 1,400. Charter Communications, 1,200. Nestle, 16,000 jobs globally. Sure, that helps with margins now. But at what point, and if any point, Ethan, does that weaken the overall economy, and especially for some of these consumer-driven companies, start to bite?
I think it's already biting, certainly at the consumer level. It's not been reflected in share prices. That is the divergence between the real economy and the stock market that we're seeing. And we know from the leaked memo from Amazon this week that there are far more job cuts on the horizon. There is a narrative that suggests that with cobots and co-pilots, that there'll be a lot of demand for AI engineers and people to run the robots or cobots. But I do think that that's really trying to mask the picture that we know the big driver of this is efficiency, is productivity gains, and the ability to displace workers. So the question is, what does that do to Main Street? And I don't think we've figured that out yet. The jobs data we're getting is patchy. We know that with the shutdown, there has not been the consistency there. So we have to think about this K-shaped recovery and how the lower end consumer is coping. They have been saved to date by the fact that fuel prices are low, food prices are somewhat in check, but we know that they have a little bit of participation in the stock market, so it's not completely divergent and foreign to them. But the lower end consumer will be in focus, and that's where we're going to see this pinching on the private credit side.
I wonder how AI, this story is going to play out, because, you know, we're investing now trillions, or forecast to invest trillions, and there's a lot of circular deals that may or may not make sense. But it does look like we're going to see AI destroy a lot of jobs. And that can't be good for the economy. Or is it kind of evened out by the fact that our labor pool is shrinking anyway?
Well, certainly it's shrinking with this new immigration policy and maybe with the aging population, but I think we know that the aging population, they do need to come back into the workforce. That was a big thing we saw change during COVID. The older population did not come into the workforce. They have to come back in now simply because inflation, despite the fact that the headline level is low, we know that experienced inflation, especially around healthcare costs, and that's why we're still in a shutdown, is because of disagreement regarding that. That is going to affect the lower end consumer. So I do think that the jobs numbers are very mixed. And what's important is that who is really controlling the narrative here? If the narrative is being controlled by big tech, we will get a positive spin on the job cuts. And we will get a positive spin on AI being good for the general public. I think it's important really to parse back the narrative, look at the fundamentals, look at the subprime auto loan companies that are not making it, and then go from there. So it is a problem. It's the sting in the tail. This is a scorpion story, not a cockroach story, but we really do need to be more nuanced in how we look at AI.
Yeah, a cockroach, I'll gladly squash. A scorpion, I would scream and burn down my apartment building, I think. Ethan, thanks so much for joining us this morning. Moneta, Chief Global Market Strategist, Ethan Devitt. Let's get back to that OpenAI and Microsoft deal, where Microsoft will ultimately own 27% of OpenAI. Microsoft also just crossing $4 trillion in market cap. Here with more details is Anurag Rana, software analyst for Bloomberg Intelligence. Anurag, what do we understand about this deal? Obviously, the two are already very much so linked, but it's this valuation. Are they taking a bigger stake in OpenAI? How has the relationship changed with the news this morning?
Yeah, I think, the most important part for us is that Microsoft maintaining the intellectual property rights to their models and products. I think that stands out to us. the financial things is not that important, frankly, because, again, Microsoft is not short of money, nor they are looking to, make some money out of it. But having those rights till 2032 really protects their assets, their Copilot, from getting, watered down, frankly, because their own models, they are not at par at this point, and it's only two models, whether it's OpenAI, Anthropic, or Gemini, but they're not going to go and work with Google. So it's that to us is the most important thing.
These companies, don't look that expensive. I think NVIDIA, yesterday I looked at the forward PE, it was like 42, and that was the highest among, other than Tesla, among the Mag 7. Microsoft is trading at 35, which is punchy, but I guess investors are just hoping that the earnings will continue to catch up.
See, Matt, I can give you a number of people who'll take the other side of the argument because, how much are they going to go revenue by? 12, 13, 14%? How much will earnings go up by? 12, 13, 14, 15%? And then you have to pay a 35 multiple for that. So there are enough people who'll take the other side of that argument that, why am I paying 35 times for a company that's going to grow earnings 14, 15 times?
Anurag, with these companies that you cover, that there's been this real fear of disruption from AI. A lot of the software companies, you had two of them, PayPal and Adobe, this morning announced partnerships with OpenAI, and you see a big rally. Is that enough to assuage fears that they're going to be replaced by AI? If you can't beat it, just join it and add it on to your tool suite offering?
See, we have said that for a while, that we don't think it's going to get disrupted, at least the large enterprise vendors. What they are showcasing right now is you can access some of those tools through OpenAI. OpenAI is one of the most popular apps for consumers right now. And if you can actually go out and tap into your enterprise workloads from that, that's really convenient. And the more OpenAI is showcasing that they will partner with the likes of Salesforce or Adobe, I think that's really good for, I think all of them, frankly.
All right, Anurag, great to get some time with you. I hope we can get you back on again soon because there's so much going on in the space. Anurag Rana of Bloomberg Intelligence covers these mega cap tech companies for us out of Chicago. Coming up, UPS delivers a stunning earnings report and prepares more cuts. More on that next. This is Bloomberg Open Interest.
Do you think the dollar will remain the only reserve currency in the world, and are you as comfortable with the dollar as you used to be?
The dollar has been, as you say, a reserve currency for about 80 years. Actually, if you wanted to go further back, you could say it's almost after World War I, when the US had lent money to Europe and the UK for ammunition and so on, and then they had to get paid back in dollars, and that's when the strength of the dollar really began. So it's 100 years, 80 years, 100 years of dollar strength, so much so that important commodities, gold, oil, are denominated in dollars. Dollars are part of the payment system. When countries talk to each other, they represent their GDP and various figures in dollars. I think undoing that will take a long, long time. And, 3% in foreign exchange terms is not that much.
Okay, so you think the dollar will stay as the reserve currency of the time?
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game. Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Some top calls, the analyst action that we're watching this morning. First up, Snap gets downgraded at New Street Research. The analysts there warning that the company could face perpetual declines in users as efforts to limit teen social media use take aim at Snapchat's core demographic. Those shares down 1.7% this morning. Next up, Wall Street reviews are mixed after Corning's third quarter results that fell short of expectations. Analysts highlighted weakness in the company's optical business. They also said that fundamentals remain solid, but high hopes for AI-driven growth leave little room for error. Those shares down 3.4%. Finally, UPS is surprising Wall Street, smashing profit estimates by cutting costs and jobs. Analysts say that the results prove that the company is making progress in its turnaround. Truist, for their part, says the company is set up for strength into the holiday season, Matt.
All right, so that's a stock that we're definitely watching, and we want to get more on UPS, cutting jobs and boosting its outlook. We welcome Lee Klasko, Senior Transportation and Logistics Analyst for Bloomberg Intelligence. And Lee, this is a stock, as I've been saying this morning, one more of these stocks that's severely underperformed the benchmark index over the last 5 years and year to date. Is cutting 34,000 jobs enough to turn that around?
Well, I think it's part of the process, right? So UPS is on this journey, shall we say, of reshaping its network. And the reason why it needs to reshape its network is that, it had heavily relied on Amazon for volumes, and now they're kind of, as they would say, they're doing a glide path down of that volume. And that's just because it's really low margin business. And they're in the third quarter of a 6-quarter glide down. So we should see more volumes coming off. And what they're able to do, now that they don't have this surge in low margin volumes, is they're able to get rid of certain facilities, reduce headcount, and also those reductions are being driven by technology innovations that are helping the company be a lot more productive. Going into the quarter, I think investors and analysts were very cautious. They didn't really know what to expect because of the impact of the de minimis exemption, which was removed for all countries, a couple of weeks ago. And that obviously was going to have an impact on the business. But if you look at, where management is guiding on the fourth quarter as it relates to revenue and margins, it looks like the fourth quarter, at least for consensus, is at least this morning, there's about like 9 to 10% upside on the high end of that range that management provided this morning. So I think, it looks like management is executing on its plan. And we'll see, what that will bring in 2026.
Lee, how much are supply chains just still an issue for UPS, and one that will remain an issue despite some of the network changes they're trying to make?
Well, the good news is when supply chains are in flux, that's a good thing for companies like UPS because they're helping their customers. They noted on their morning call, their third quarter call this morning, that they're seeing a lot more customs business because the de minimis exemption was eliminated. Customers now need help getting their shipments cleared through customs, and they saw a surge of that. And because of the investments that they made in technology, they're able to do it more profitably. So they saw a surge in volumes, and those volumes were more profitable because they were really able to, a large percentage of that volumes were done electronically and really without a lot of human intervention.
Are the competitors doing better? I look at FedEx stock, and it's also not, a fantastic gain, actually a loss over the last 5 years also, but only 3%.
Yeah, so, I cover freight markets, I cover all markets, and the freight economy has not been good over the last 3 years. And that's really been a drag on most of these subsegments, and they've lagged the broader industries. As it relates to UPS, I mean, UPS has had, as we saw, it looks like they're executing on their plan. There were some quarters where, they came in short of expectations. But, what we view is when looking at UPS from this print, and we're I would say most encouraged about is that they're expecting a relatively normal peak season, which is really great because going into the season we were thinking that it was going to be a pretty tepid peak season, and they're telling us in the investment community on their earnings call that most of their enterprise customers are expecting more normalized peak this year.
All right, Lee, thank you very much for that. Lee Klasko of Bloomberg Intelligence after UPS's earnings. Another earnings we're covering coming up. United Health sees growth in 2026 after a meltdown earlier this year. Initially, that gave a boost to share prices, but now they are falling in this morning's trade. We'll have more coming up next on Bloomberg Open Interest.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Open Interest. Quick check on stocks. We are looking at now losses on the S&P, but maybe this is just a breather after hitting all-time record highs on the S&P, the Dow Jones Industrial Average, the NASDAQ, the Russell 2000 yesterday, and those are just the American benchmarks. So right now, little change there. The NASDAQ still up about 0.3% after a slew of earnings and announcements, a couple of them related to OpenAI. Check out NVIDIA right now up 1.2%, so that's helpful for the NASDAQ. Should also buoy to some extent the S&P. Alphabet shares are down. Remember, we're going to get tomorrow and Thursday 5 of the Mag 7, including Alphabet report. Microsoft is one of them. $1 billion in Azure cloud services from the former. Apple right now only up 0.1%. For a brief moment, if you blinked, you missed it. Apple's market cap rose over $4 trillion. I still haven't been able to graph it on the Bloomberg, but I'm trying. UPS is up 7.25% right now after raising its guidance as well as cutting 34,000 jobs. The market likes that. Not sure how the Fed will react tomorrow. And United Health Group right now, little changed, but there's some red on the screen, which is interesting, right, Danny? Because...
Yeah. Oh, now it's green, so it heard you and decided to defy you. No, but to be fair, it's waffling back and forth between gains and losses. When it opened, United Health opened up 4%. Now, it did beat Wall Street expectations for the third quarter earnings, and it raised its outlook for the year. Bloomberg Health editor Cynthia Coons joins us now. So, Cynthia, we can't decide what to do with this stock, but what did the results show us?
Yeah, so basically there was some good news, there was some bad news. The good news is that they talked about growth going into 2026. They raised their guidance a little bit. I mean, investors are a little shell-shocked. United's been a very predictable, steady, growing, beat and raised stock, and it sort of changed that narrative earlier this year. So this earnings looks like more of the old United. Obviously, it's only one quarter, so I think there's a little bit of people want to get a little more excited, but they know that this entire industry is under pressure. They mentioned some realignment charges on the call, so I think the stock may be tempered a little bit just as investors try to really understand how they're going to chart a different path than they have been.
What does United Health need to do? They've had an awful year, right? At least in terms of the stock and also in terms of a lot of other things at the company, but it's down almost 30%. Do they need cheaper drug prices? Do they need higher premiums? Do they need different demographics? What are they doing wrong, and what's the market doing wrong for them?
This is a really, really tough industry, and it's interesting to see what's happened to insurance in the last year or so, because these companies used to be so predictable, and they grew a lot as government made a lot more healthcare available through ACA and subsidies and Medicaid, and a lot of that's getting pulled back right now. So it's a lot of kind of retrenchment for companies, and these companies that are in the business of forecasting not quite getting it right. And we've seen this with a lot of companies in the space. So I think for United, what they've already done in terms of pulling back expectations a lot, if you look at they're on track and for their earnings to hit a level that's quite low compared to where they've been. So I think really pulling back expectations is probably the best place they can start with. And then it's going to be execution, but there's a lot of kind of landmines out there. There's the ACA subsidies, maybe people falling off of those plans. There's the Medicaid cuts, and there are a lot of ways that this whole industry is just going to remain under pressure for a little while.
And there's still a lot of things overhanging this company too, right? Like various probes that still need to be worked through.
Yeah, and that's going to take a long time to play out. We've seen some of these probes. I mean, often when the settlement pops up, you kind of almost forgot that was happening. So these things go on for a long time, and there's a lot might come out that might affect the company. So as they figure out how to get the business into the right size to navigate what's going on in the here and now, they still have some of that recent baggage.
Is regulation also, has that been a problem? One big beautiful bill had really adverse effects for other healthcare companies. Was it the same for United Health?
That's going to be an issue that plays out as the Medicaid stuff is going to come in the next couple of years, but it's going to be a big issue across healthcare for insurers, for hospitals. I think there are a lot of ways that could continue to hurt the healthcare system, and we'll see it show up in earnings in years to come.
All right, Cynthia, thanks so much for joining us. Cynthia Coons runs our health care coverage for us here at Bloomberg. Take a look at what's going on in stocks right now. As you just saw a moment ago, little change on the S&P, but the NASDAQ continues to rally. The Russell down 0.7%. Coming up in the next hour, Goldman Sachs' David Costin will talk to us about whether or not he sees 7,000 as the base case going into 2026. Plus, Apollo's Scott Kleiman talks credit and its deal to fund Keurig. Dr. Pepper's takeover of JDE Pete's, and Merlin CEO Matt George will talk to us about automating flight. Didn't that happen like 50 years ago? We'll get the update. This is Bloomberg Open Interest.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. The National Hurricane Center says the eye of Category 5 Hurricane Melissa is approaching western Jamaica right now. The outer bands are lashing the coast with rain and winds of up to 175 miles an hour. Lisa Powell with the island's Red Cross.
A lot of the communities, especially along the southern coast, they're low-lying, and so flooding is a major concern.
Correspondent Jason Allen is in Kingston.
The outer edges of this storm really starting to kick up some waves, and that's bringing in some more intense storm surge. In fact, by the time that the storm completely passes over the island, Melissa is forecast to bring storm surges up to 13 feet, and in some places, drop more than 30 inches of rain.
Tourist Marnie Stewart from St. Louis will ride out her first hurricane in Montego Bay.
They've been giving us care packages that have like cups of noodles, tuna sandwiches. Continue to pray for Jamaica.
The Pentagon's anti-drug operations continue in the Eastern Pacific. Defense Secretary Hegseth says the U.S. carried out 3 new strikes on 4 alleged drug running. There is 1 survivor. Texas is suing the company that makes Tylenol.
State Attorney General Ken Paxton's lawsuit claims Johnson & Johnson and its spin-off company Kenvue knowingly withheld evidence about Tylenol's alleged links to autism and ADHD. President Trump warned about those unproven links last month.
Don't take Tylenol. Don't have your baby take Tylenol.
Medical groups say Tylenol is the only pain reliever safe for use during pregnancy to treat high fevers. A New York federal judge dismissed hundreds of lawsuits filed by families, citing a lack of scientific evidence. Michael Wallace, CBS News.
Amazon says it will cut 14,000 jobs starting today. That number is expected to climb to 30,000. CBS's Kelly O'Grady.
This is them saying, we've got a lot of areas in the corporate level that we think we can be more efficient on, and we're going to take some of those resources away, and then we're going to add some resources in an area that we think is going to be growth-worthy.
Another big company's just announced job cuts. UPS says 48,000 corporate employees will receive pink slips, more than double an initial plan. Progress in the fight against obesity. CBS's Jim Krasula.
The U.S. adult obesity rate has dropped to 37% from a record high of nearly 40% in 2022, according to the ongoing Gallup National Health and Well-Being Index. An estimated 7.6 million fewer Americans are considered obese compared to 3 years ago.
This is CBS News. More baby primates are being smuggled across the southern border thanks to viral TikTok posts.
Investigators say poachers shoot mother monkeys so they can take their babies, which are then smuggled across the U.S. border and sold as pets. At the Gladys Porter Zoo in Brownsville, rescued infants arrived dehydrated and traumatized, clinging to stuffed animals instead of their mothers. Law enforcement says they've confiscated 109 baby spider monkeys in the past 2 years, likely only a fraction of the total. A bill in Congress would ban the private sale of primates nationwide. David Schechter, CBS News, Brownsville, Texas.
More human parents are naming their newborns after the boys in blue.
Comes back in. It's lifted to deep right field. Towards the corner. Goodbye.
Nameberry charts a 1,000% increase in searches for Shohei this week. And that was before Ohtani's heroics and last night's big win. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Tuesday morning. We are broadcasting live from the BAM Mutual headquarters in Lower Manhattan here. We're going to be talking about the municipal bond market over the next couple of hours. A lot of exciting news in this marketplace. It is a large market, it is a growing market. Tons of new issuance in the municipal bond market. We'll break that down over the next couple hours. We're going to start by checking in with Ira Jersey. He's Bloomberg Intelligence Chief U.S. Interest Rate Strategist. We'll get his thoughts on what we might hear from the Fed this week. Sean McCarthy, CEO of BAM Mutual. He's going to be on site here. It's his offices, and we're going to talk to him about the municipal bond market and what's going on there. Poonam Goyal, Senior U.S. E-commerce and Retail Analyst, talked to us about Amazon cutting 14,000 corporate jobs. What does that mean about the business of Amazon? Brian Barney, Parametric Managing Director, he's going to join us here talking about the markets here. So we've got Lisa Mateo sitting in for Scarlett Fu. I'm Paul Sweeney. We are at the BAM Mutual headquarters in Lower Manhattan. I call it World Financial Center, but the kids call it Brookfield Place. But in any case, we're down here. We're having a good time. Let's kick this whole thing off with John Tucker and a Bloomberg Business Flash.
All right, this flash being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. Well, more records, anything higher after yesterday's record closes for the Dow, the S&P 500, NASDAQ 100. NASDAQ 100 right now 98 points higher, up 0.4%. The S&P 500 4 points higher at 68.79. The Dow is up 183 points. Only 2 of the 11 major industry group in the S&P 500 in the green, though, right now. And of course, the Fed meeting that started at 9 tomorrow, widely expected to deliver a quarter-point rate cut. Also this week, 5 of the other Mag 7 report earnings. Some of the earlier momentum with Apple kind of evaporating. It's down right now 0.1% after touching $4 trillion. That's trillion with a T in market cap. Microsoft, OpenAI finalizing a new agreement, long negotiated partnership of Microsoft. As a result, those shares, they were up 2.8%. And also one of the standouts of the morning, shares of UPS. Looks like their turnaround effort kind of on track. Those shares right now, 8% higher in the early going. And I just wanted to bring these headlines to you guys. Catastrophic winds moving onshore southern Jamaica. This is from the National Hurricane Center. They also say Hurricane Melissa, that this is the last chance to protect your life. Very serious problems there. And the data we got just a few minutes ago, the Conference Board Consumer Confidence coming in a little higher than expectations at 94.6. That's the headline number. And of course, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Lisa and Paul.
All right, JT, thank you so much. We appreciate that. Lisa Mateo sitting in for Scarlett Fu. I'm Paul Sweeney. We're broadcasting live from the BAM Mutual headquarters down here in Lower Manhattan. For those of you on YouTube, the view behind us is a great view. Uptown, of the Hudson River. This is the view I had when I worked at Salomon Brothers like a million years ago. The best office. I peaked office back like in the early 90s. Great view. But we're down here at the good friends BAM Mutual here. All right, let's take a look and see what's happening in the marketplace here. We're going to go to Denitsa Sokova from Bloomberg News. Denitsa, what are you looking at here in the markets?
We have to start with Microsoft, obviously the big story of this morning. Microsoft and OpenAI finalized this new agreement. It's been in the works for a very long time. The ticker, of course, is MSFT. The stock was up as much as 4%. Now it's about 3%, but clearly one of the big gainers in the S&P. This is removing a layer of uncertainty for both companies. Under the new pact, Microsoft is getting 27% ownership stake in OpenAI, and the price tag of that is $135 billion. Of course, the agreement clears aside a major obstacle for OpenAI. The company has spent so much time of this year working to restructure and become this traditional for-profit company, and that has been an obstacle there. Microsoft will still have access to artificial intelligence startup technology until 2032, including models that achieve the benchmark of AI general intelligence. Microsoft will no longer have a right for first refusal on OpenAI compute, but the startup has made an additional $250 billion commitment to buy services. So, yeah, this is clearing a major obstacle, the really strong reaction in the market, and still, even as indices are losing some of the gains there, the reaction remains very positive.
And Denise, UPS, kind of two stories. They had the strong profit, but also big layoffs, too.
Big layoffs, yes, but investors have been reacting positively to that. And obviously, it's the main number that has really impressed the street is adjusted earnings that came at $1.74. And the street was expecting $1.32. So really big positive surprise there. Of course, profit expectations are helping, but cutting costs and eliminating 32,000 jobs has been a major impact here. The ticker is UPS, of course, and shares are up about 5%. Actually, in early trading, they jumped as much as 13%, so perhaps some of that euphoria is fading. The cuts to its permanent operational workforce include drivers and package handlers, and it's a massive jump from last year. It's a 70% increase from last year. As part of the sweeping cost-saving initiative, UPS has closed a lot of operations, 93 leased and owned buildings. The shares were under so much pressure this year. They were down 29%. Similar story with FedEx, which was under a lot of trouble. It actually, in September, it said that it anticipates a $1 billion headwind. That said, we're seeing some relief for both companies today. We're seeing some optimism for fourth quarter revenue, higher than the company previously expected. But we're still with under pressure year to date, so we're yet to see if that earnings momentum can be maintained, really.
All right, finally, PayPal.
PayPal, it's all OpenAI story. PayPal shares surge after he announced a partnership with OpenAI, and of course, a pretty good earnings result. It boosted its adjusted earnings per share guidance for the full year. So what we're seeing is that PayPal raised its 2025 adjusted earnings per share forecast. It's about 20 cents higher than before. The ticker, of course, is PYPL. The stock is up about 11%, one of the big gainers today. PayPal is instituting its first dividends. It's 14 cents per share, so perhaps some of the optimism is coming from that as well. The company announced a tie-up with OpenAI, so they're going to embed its digital wallet in ChatGPT. Obviously, everyone is using it for searches, and the idea is that that users will be able to use PayPal as a payment method at the checkout, and they will also process vendors as the instant checkout feature. So perhaps really big partnership there.
Right.
But yeah, big jump on the news.
Okay. All right, Denise, thanks so much for that. We appreciate that. And if we want stock movers, that's the podcast, folks. Quick hit on the movers and shakers, the winners and losers in the stock market. You can get that podcast anywhere you get your podcasts here. Market drivers, today is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn more about their consultative support and technology. All right, we got the Fed meeting today, Lisa.
Yes.
And then tomorrow we will get the, the statement at 2 p.m. Wall Street time. At 2:30, There will be a press conference. Michael McKee, Bloomberg's Michael McKee, he's heading down to Washington. Hopefully he's taking a Acela train, not the plane. We're still working on that, but he'll have all the reporting there for us. Let's check in with Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Ira, what are you going to be listening for tomorrow? Because I'm not going to be listening, but I'm trusting you're going to be listening to this press conference at 2:30. Ira, talk to me. He's out playing soccer. You know, he's probably watching the Aston Villa match. So, but I guess the big issue, Lisa, is going to be the language we hear from Fed Chairman Powell as it relates to maybe future guidance as to rate cuts. It seems like the market right now is discounting maybe 2 rate cuts this calendar year, one here and one maybe in December. And then in 2026, what do you get? Do you get 1, 2, 3? That's kind of where the uncertainty.
And then it's about, with the shutdown, we haven't had data. We had CPI, maybe private sector labor market. But what is the Fed going to be looking at more now? Is it inflation data? Is it labor data? And then you had today, ADP actually said they're coming out with weekly, which is a change too.
I think they sent an opening in the marketplace, and let's kind of jump in here and try to fill that need here. But again, the market here, given the surge here, the S&P up 15% year to date, the NASDAQ up 20% year to date. It feels like when you talk to a lot of the pros out there that the market is in fact discounting more than 1, more than 2, maybe 3 to 4 rate cuts over the next 4 to 5 meetings. You combine that with what appears to be another quarter of very good earnings coming out of corporate America. Boom. That's all you need, it seems like.
Yeah, very good earnings. And then with tech earnings coming up, too, everybody's getting ready for that. And then you have China trade talks, too. That's also
thank you.
So all these things influencing the markets, how much of an influence they'll have, we'll set to see, because we have President Trump in Asia right now. He just spoke with Japan and has a lot on tap from South Korea to China to more.
And this trip by all, it's a lot of rhetoric coming out of it, but it's all positive rhetoric, I would say, on the margin. The devil's in the details, of course. I've seen some reporting that says basically we're getting back to maybe where we were before all of this started in terms of our reset with China, that maybe this is all ado about nothing. But again, the rhetoric coming out of the President Trump and the administration regarding this trip has generally been pretty positive. I think it's been perceived positively by the market, and that's kind of one of the drivers here that we've seen over the past 4 or 5 trading sessions.
Yeah, and also interesting was the dinner that they had over there in Tokyo. A lot of big business leaders there, from OpenAI to all of the names that were there, and what that means, what kind of precedent that sets as well.
Yeah, I think corporate America has figured out a way to kind of work with this administration, which is work with this administration as opposed to try to kind of take a standoffish position. So we've seen, really since the beginning of President Trump's administration, a retinue of CEOs and execs make their way to the White House to speak with this administration and try to see where there's common ground. So we'll keep an eye on that. But again, the big meeting for the Fed is going to be today. Tomorrow. And
Day one, today.
We'll have full coverage of that tomorrow, and we'll keep it on top of that. And then, of course, President Trump and President Xi meeting Thursday in South Korea. So again, the hours are so different that the news comes out when we're sleeping, and then by the time we get in, it's like
because this morning we were talking about a dinner.
A dinner, right? Exactly right. All right, looking at the futures here. We've got the S&P up 5 points. We've got the Dow up 240 points. That's a 0.5%. The Nasdaq's up 96 points. That's about 0.4%. The Tom Keene VIX sitting right at 16, so we're okay there. The 10-year Treasury yield 3.99%. We'll have more coming up.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we're being brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. And right now, the major averages, they are higher, not by much. S&P 500 up 5 points at 6881. Still good enough for another record. Dow Jones Industrial Average up 200 points. The NASDAQ 100 97 points higher. Traders driving stocks to new highs as Apple became the third stock in history to top the $4 trillion market cap. Apple shares have since pulled back. Right now, they're down just about 0.5% right now, and 0.5% actually. Microsoft's going to get a 27% ownership stake in OpenAI. That's worth about $135 billion. Well, Microsoft's going to have access to the AI startup's technology into the year 2032, and shares of Microsoft, they were up 2.5%. You had earnings from UPS, smashing profit expectations, fueling confidence in the comeback plans. The company also disclosing it has cut 34,000 jobs this year, and UPS right now up 7.3%. And then job cuts at Amazon. They plan to eliminate about 14,000 corporate jobs just months after the CEO there, Andy Jassy, warned that AI is going to shrink the company's workforce. And then you have PayPal shares jumping. The company announcing a partnership with OpenAI. We're going to integrate the digital wallet into ChatGPT. And then Skyworks buying the chipmaker Qorvo. This is a cash and stock deal. It values the company at about $10 billion. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Lisa and Paul.
All right, JT, thank you so much. We appreciate that. Lisa Mateo sitting in for Scarlett Fu. I'm Paul Sweeney. We're live at BAM Mutual headquarters down in Lower Manhattan. This is what I call the Oppenheimer building. I call it World Financial Center, but the kids call it Brookfield Place. I don't know what's going on down here, but it is a great part of town. I worked down here pre-9/11, and what they've done down here, folks, if you're not from the New York area, if you come to the city, you have to come down to Lower Manhattan and see what they've done down here. It's just extraordinary. It's just really, really vibrant down here. We're joined right now by Sean McCarthy. He's the CEO of BAM Mutual. Sean, thanks for having us back to your offices. We appreciate it, sir.
You know, thank you, Paul and Lisa, for coming. It's this is an annual tradition, and we really appreciate it.
Absolutely. I think when I was here last year at this time, you said 2024 was going to be a record year in municipal bond issuance. That was what happened. How about this year?
This year's going to be, in all probability, another record.
Wow.
The growth of the business has been really robust. A number of factors that make that happen. First, the state and local governments, the responsibility is being pushed down on them to issue more infrastructure debt. So if you think about infrastructure, 80% of what you think about is just infrastructure is financed at the state and local government level, not at the federal level. So this has been a year where many issuers have come to market, and that's a result of a lack of, a change in the federal support from healthcare to other programs. And so we think the state and local governments are going to pick up where the federal government is stepping back. And so I think it's going to be a record year this year and probably pretty robust next year.
Now, are there certain areas of munis that have performed better than others?
So, well, I think from an activity standpoint, it's been across the board.
Okay.
So you see a lot of healthcare, general obligations, which are full faith from state and local governments themselves. Lots and lots of projects across the country. I think one of the areas that's going to be most dynamic going forward is power. If you think about AI, the amount of power and data centers that are and their demands. I was speaking to one of the heads of one of the largest municipal power agencies, and he said that the demand that they're being asked for, now let's assume that some of it's double counting, is going to be 4 to 10 times what they produce right now.
So, Sean, just for the folks that don't know what you guys do, BAM insures municipal bonds, giving another level of certainty for investors.
That's correct. So we are a AA rated insurance company by Standard & Poor's. And really what we do is guarantee, different than other kinds of insurance, we guarantee timely payment of principal and interest when due. So that means if there is a credit event that would cause a default, we pay first and then mitigate later. But one of the unique things that we do, and the reason why at this point we've, through our inception, which is 13 years, we've guaranteed $170 billion worth of transactions, and we've had no defaults on these transactions. And that's really because we focus on municipal essential infrastructure, state and local government obligations, and we work with municipalities. So if there are bumps in the road, like what happened during COVID, we're proactive in working with the municipalities to make sure that they're in the best financial health that could be.
And how have munis been performing compared to treasuries?
I think that the way we look at it, it's when issuers are coming to market and what the performance of municipal bonds are. We're going to have an investor come speak a little bit later today, I think. And the relative performance has been really quite robust, and I think that that's going to sort of augur into the next year.
Talk to us about just credit quality of the municipal bond market. I haven't really heard or seen or read about major blowups, whether it was years ago Puerto Rico or Chicago or just Illinois in general, quite frankly. We haven't really seen that too much.
So I think massive individual credit problems is not what's happening at the moment. I think what you're going to see happening, what we feel is happening, is a greater differentiation among credits. So, for example, if you take healthcare, there are lots of very big financial hospital systems, large single hospital institutions, and a lot of small rural hospitals. How they're going to be affected by what happens to Medicare and Medicaid payments, and how technology changes the way healthcare is delivered, is going to create a different sense of who the winners are and who the losers are. Would be a good example of that.
Are you expecting a slowdown by the end of the year, maybe November? Do things tend to
at the
end of the year?
I think you're right. I think volume will tail off in the fourth quarter. It usually does, unless there's a change in the tax law. But one of the important things that happened earlier this year was that when the big, beautiful bill was passed, tax exemption in municipal bonds really was not affected. So that enabled, at the beginning of the year, if you think issuers were trying to come to market to try to, because they weren't sure what the outcome was going to be, and then later the market environment was so favorable that they continued to participate in the market to bring their new issues to market. We'd see going forward, if interest rates continue to decline, you probably have a better idea of what's going to happen tomorrow than I do, but if you think about that effect, there'll be a greater number of refinancings as well that come to the market.
All right, Sean, thanks so much for joining us. Always appreciate it. Sean McCarthy, he's the CEO of BAM Mutual, hosting us yet again at their offices in Lower Manhattan, and a spectacular view looking around at the Lower Manhattan uptown and across the Hudson River. Good stuff here. One of the stock stories in the news, folks, is Amazon cutting 14,000 jobs. I was doing some reading of Bloomberg News, and they had almost doubled their headcount pre-pandemic.
Sure.
So coming out of the pandemic. And so it makes sense that they should be shedding some jobs, perhaps. Let's check in with Poonam Goyal, Senior U.S. E-commerce and Retail Analyst for Bloomberg Intelligence. Poonam, talk to us about Amazon here. 14,000 jobs, it seems like a big number, but I do know, and for those affected, it is a big number, but they have, over 1 million employees. So what's happening at Amazon?
Yeah, it sounds like a big number, but in the grand scheme of things, and for Amazon, it's not needle moving, right? It's 14,000 is about 4% of its corporate workforce, and even smaller when you look at it on a base of 1.55 million employees worldwide. So still very small, but they're cutting, right? And that's the thing. They've been cutting since after the pandemic, as you mentioned, and we think this is just the beginning. We're just scratching the surface. There will be more cuts with Amazon, especially as automation and AI continue to fuel efficiencies across the organization. We haven't even got to warehouses yet, right, where there's a lot of automation going on.
So is AI the main reason behind the layoffs? I mean, is the company trying to offset that rising AI capex?
I mean, it helps, right? Because they're continuing to invest in AI and CapEx through AWS, but how do they drive margin efficiencies? It's through using some of those efficiencies and paring back on the employee headcount. That and automation. Those are the, I think, two biggest things that are going to drive the need for more efficiency and then give back to the company through fewer headcounts.
I don't know, Lisa, call me cynical, but I believe, this is my opinion, that AI is going to be a net job taker, and I think in size, too, for a lot of industries. I think this is going to be a real issue.
We're continuing to see it in different stories.
I think so, and some CEOs are trying to paint a different picture. So, all right, Poonam, let's take a look. You're the boss of all things retail. How's this holiday season going to be here? Is this going to be a good year?
I think so. I think the consumer has been holding up relatively well. Spending is higher, and we think Amazon's continuing to take share. They're going to be reporting this Thursday, and we're expecting solid retail sales numbers, high single digits, and we do think that they're going to take share once again this holiday season. Overall, I think the consumer will show up.
Can you dig into, go back to Amazon, Andy Jassy's kind of role in the company? It seems to be filled with job cuts, changing different programs. What's his focus right now?
I mean, he clearly said that he's going to be cutting back on jobs earlier this year in the summer. So we do see that rolling out. I think the focus is to invest in long-term growth. I mean, he was very clear in his statements that, we can't worry about the intra-quarter, the quarter-to-quarter trends, and we really need to stay focused on the longer run. How does Amazon continue to remain the leader that it has been? Because as you know, it's very easy to now operate an online business, whether it's through Shopify. Everyone almost has the same playing ground to compete in. So how does Amazon differentiate? And the only way to do it is continue to invest in the future. And right now, that's AI, whether it's Gen AI, Agentic AI, wherever it may lead us, it is AI.
Wow. See, that's the point. Wherever it may lead us. That's kind of how I think corporate America's pursuing this AI thing. Poonam Goyal, thanks so much. We appreciate it. Poonam Goyal does all the retail coverage for Bloomberg Intelligence. She is our ace in the hole there as it relates to Amazon. And again, this stock, it's flat today. Mm-hmm. It's up 3% year to date, so it's trailing the markets big time. And I think, it's just a question. It's a story that's driven entirely, I would say, by AI and the cloud and all of that. And they are spending big, but they've always spent big. They have always said we invest for the long term. And starting 25 years ago, the street said, we're okay with that. Yeah. And it's been a great name. It's worked out.
Well, companies want to see, when is it going to pay off?
Yes.
That's the other question.
Yeah, exactly right. So when is it going to pay off? What's the return on investment here? So we'll keep an eye on that. We'll keep the CEO's feet to the fire, if you will, as it relates to that. All right, we're going to have some more coming up from the BAM Mutual headquarters in Lower Manhattan, my former stomping grounds back in the day. Some great companies down here, some great, vibrant revitalization of Lower Manhattan. It's just been
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This on a day when adding to yesterday's record close for the major averages. We have the Dow Jones Industrial Average up 284 points. S&P 500 up just 6 points at 6881 on the index. The NASDAQ 100 57 points higher, and that's up 0.2%. One of the standouts today, shares of Microsoft up 2.2%. OpenAI giving Microsoft a 27% stake as part of a restructuring plan, clearing the path for ChatGPT to become a for-profit business, the maker thereof. Shares of Microsoft, again, they are higher on this news today, up 2.2% right now. Best performing stock in the S&P 500, that belongs to Skyworks Solutions. Those shares up over 13%. They've agreed to buy Qorvo. This is a cash and stock deal, and it values the company at least $10 billion. Did get data today in the absence of government data with the shutdown. Consumer confidence from the conference board. It fell for a third straight month. There were dimmer views about the outlook for the economy as well as the labor market. And the Fed meeting that started right around 9 o'clock Eastern and concludes tomorrow with what is expected to be a 1/4 point rate cut by the policymakers. And 5 of the Mag 7 report earnings this week. And let me just conclude with this. Transportation Secretary Sean Duffy warned that flight delays could get worse as the government shutdown enters day 28. Air traffic controllers missing their first full paycheck. Sounds like he expects more of them to call out sick. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Lisa and Paul.
All right, John Tucker, thank you so much. We appreciate that. Lisa Mateo sitting in for Scarlett Fu. I'm Paul Sweeney. We are broadcasting live from the BAM Mutual headquarters, their offices down here in Lower Manhattan, talking about the municipal bond market over these 2 hours of Bloomberg Intelligence program. We're joined by Brian Barney. He's a managing director, institutional portfolio management and trading. The firm is Parametric. Brian, good to see you again, my friend. We chatted yesterday on the surveillance program. You're back. Talk to us about the municipal bond market from the perspective of investor performance this year. I know the fixed income market's been pretty darn solid. How about the muni market?
Yes, thanks for having me. Yeah, so this year, it took a little while for munis to get on the scoreboard.
Okay.
The first few months of the year were turbulent. We had April hit us with the Liberation Day. And so it wasn't really until late summer, early fall where we saw performance. So that was welcome, of course. The master index is up about 4%. And the long end of the yield curve has finally come back to fair value. It was mispriced for some time.
So what's the reason for it? What's the demand? Why the increase in demand?
Yeah, I think we were pounding the pavement in the summer telling investors this is a very opportune time to invest given the absolute yields in the marketplace, yields that we have not seen for about a decade. So when you look at, for example, a 20-year muni, which we keep highlighting as a part of the curve we like, an investor can earn about 4.5% tax-free as recently as 2 months ago. So we were saying this is a great time to invest, and finally it took a little bit of a treasury rally and for investors to really take notice that this long end was mispriced. And so we started to see a flood of investors enter the market, both in our SMAs, our separately managed accounts at Parametric, but also mutual fund flows and ETF flows have been pretty robust late summer into early fall.
So the good folks at BAM Mutual, they like when there's record issuance. You guys in the marketplace, not so much. How have munis performed in this deluge of new issuance last year and this year?
Yes, that's going to be certainly a little bit of a headwind, but also can be a tailwind at times. So, yeah, the market and investors has to digest this supply. We'll see probably $550 billion of issuance this year, which will be up, roughly over 10% versus last year, which was last year's number was up about 30% from the year prior. So we are on an upward trajectory of supply, and more investors are going to take notice. So Paul, I'll rephrase it and say certainly it could be a headwind, but for an investor looking to lock in income, and that's what this really is for. The municipal market is for tax efficiency and for income collection. We think supply is a good thing. It'll keep valuations in balance, and maybe they might not be as rich as they've been in previous years. And investors can really achieve their goal, which is really the primary goal is to get tax-free income. And a 4% yield in the long end and 3% yields intermediate are pretty attractive.
So with that said, what's the number one mistake that investors make in the bond market?
Yeah, good question. We would normally say that many investors will kind of chase returns, but that's true of all markets, I believe. But this time, I think some of the chasing that's going on is warranted. If you look at yields today, yes, they've rallied about 50 basis points. But if you look at valuations today relative to treasuries, they're fair valued. So I think that's a good entry point. The yield curve is very steep, so we're definitely encouraging investors who have a long-term mindset to move out the curve and lock in some of those longer yields. And we might see more volatility, and rates might go up and down. But if you can lock in a 3.5% to 4% yield on your portfolio, we think that's attractive over the long run.
I see the best performance in the municipal bond space has been the taxable municipal bond index, up over 8% this year. Tell everybody what a taxable municipal bond, what that market is, and why is it performing so well?
Yeah, so taxable munis are a part of the overall taxable bond market. Roughly $500 billion in taxable muni supply out there. And issuers that you'll hear from will issue tax-free, as they normally do, but they can also issue taxable, and that gives them more flexibility with their use of proceeds. They can bolster their balance sheets. They can use it for pension liabilities and other purposes. And that market trades much like the corporate bond market. So when you look at corporate bond returns and U.S. ag returns, much of the taxable muni market is part of that ag.
All right, so I'm the natural buyer of the tax-free municipal bonds because I live in New Jersey. They're taxing me 7 ways to Sunday. Who buys the taxable municipal bond?
Great question. Naturally, it would be someone who doesn't pay taxes. Your endowments, foundations, potentially some public pension plans, corporate pension plans. Hedge funds come in this space and can take advantage of the inefficiencies that exist across the entire muni market, taxables included. So those are some of the big players.
Now, there's a lot of headlines out there. I mean, we have a Fed meeting. We have, trade and tariffs. Do all these things affect the bond market?
Absolutely. Yeah, we certainly kind of keep our finger on the pulse of what is a crystal ball that's very cloudy with all that's going on. But certainly we have a view on absolute rates. We look to, the political regime and all the things that are going on there. But we want to have a sense of where we think yields might go. And we also want to have a sense of what munis might do relative to the Treasury market.
One of the big themes just in the overall financial markets has been AI. Everybody's talking about AI. 3 years ago, we didn't even know what that was. I think we called it big data back then. Is there a place for the municipal bond market to maybe finance some of the build-out of AI, whether it's a data center or something else?
Yeah, I would think so, certainly. I think, the municipal market, the issuance in this marketplace serves, the common good and for these municipalities to build out new projects, whether it be a school building or it could be some project, related to energy. So I think that's certainly one case.
Before we go, we're almost into November. So what's a muni bond trend to look for in let's say 2026?
Yes, I think right now is a good time to enter the market. As we roll into December, we'll see less supply, so there'll be more of a tailwind to performance. So we encourage investors to get invested. As we roll into 2026, we could see another heavy supply year. So I think entry points are key. Choose your entry points wisely. Make sure you lock in income while you can.
Brian, thanks so much for joining us. Good to see you again. Brian Barney, Managing Director, Institutional Portfolio Management Trading. The firm is Parametric. Talking about the municipal bond market, seeing some positive returns, looking at the Bloomberg Municipal Bond Index. It is our index. It's up about 4.2% here year to date, and it was in the red, as Brian was saying, for much of the year. The taxable muni business, though, that's where the juice is, up over 8.2% is total return year to date for that taxable part of the market here. Looking at the overall markets here today, the equity market, S&P is up 8 points, the Dow's up 300, and the NASDAQ is up about 74 points here. So we've got some decent markets out there. Coming up, Brian Barney, we just chatted with Brian, but coming up, we're going to be talking some more municipal bonds. We're going to get some more thoughts on what this Federal Reserve is going to do. Again, meeting today. They're meeting tomorrow, and we'll have Bloomberg coverage starting at 1:30 p.m. tomorrow with the surveillance team, Tom King and the gang, and they'll take you right through that meeting and right through the press conference as well. We're going to have more coming up. This is...
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Lisa Mateo sitting in for Scarlett Fu and Paul Sweeney. We're broadcasting live from the BAM Mutual offices in Lower Manhattan. Well, speaking at the FII in Riyadh, Saudi Arabia, Citi CEO Jane Fraser said both AI and private credit will transform financial services, and banks must adapt to both. She tells Bloomberg's Germano Persetti that AI is the biggest long-term shift set to, quote, rewire the economy by boosting efficiency and reshaping risk management, though it also brings new risks. Let's listen in.
When you look at financial services in general, how they will be transformed but also disrupted, if you look at AI and private markets, where will the biggest transformation come from?
So I think both are going to be transformational. And frankly, financial leaders, we're all going to have to win at both of them. Here's how we're thinking about it. On the AI front, it's probably the biggest shift, but it's in the longer term. We're just beginning to unleash the potential in AI at the moment. But it will be the rewiring of a lot of the global economy. It will be of financial services. And I think on AI, we can see it in three different areas. The one that's more immediate, which is the operational benefits we're getting as we're replacing manual tasks. We're able to move data at greater speed. We're able to find anomalies faster. So the operational side, I think we're all beginning to see bottom line benefits. You have the revenue side. The one that's exciting immediately is personalization. And people don't always say, oh, financial services, empathy. I think this is our opportunity to make some of the changes there. But it will change business models. It will change revenue models. I don't think we quite know how yet. And then you've got the risk dimension. And that's one where it's going to enable us to manage risk better, but it's also going to create new ones. And the bottom line for us all on AI is not whether it's going to happen, it's how thoughtfully and well do we execute it in our businesses. Private credit, that one is happening pretty quickly right now. We've got to decide, is this a tug of war or a team sport in private credit as banks? It's usually more fun to play in a team sport, but there's some areas where there's a zero-sum game, there's other areas where it's the benefit of both. Right now, it's not a huge part of the business model, but the inflection point is where private credit and AI meet, and I think that's what we're seeing in particular in the Kingdom. Is how is the AI infrastructure getting built out? How are we going to finance some of the models that are out there? What's happening to the power equation? And this is where it's not easy. This is not cooker-cutting finance. So banks play an important role in structuring, as I'm sure you'll hear from all of us, different deals we're working on. And private credit is an important part of the equation. The world needs both of us. So let's try and make this more of a team sport and as big a pie as possible. Let's not be complacent. There's going to be winners and losers.
I like the way you put it. Is it a team sport or not? Venkat, what's your take on private markets, but also AI? Because AI could accelerate really quickly.
As always, it's hard to follow Jane because she just said all the good things. But I do think on AI, just to add first, it represents obviously a great general purpose technology which can have a transformative effect, not only in how we run ourselves, but how we present ourselves to our customers with empathy, hopefully. Equally, when we think about our workforce and our colleagues, it is an opportunity and a risk. It's an opportunity to create a much more dynamic, enabled, empowered workforce and help it manage the transition because some jobs will transition. It's a risk because if you don't pay attention to it, then you can end up with divisions in the workforce and more disruption than you'd like. On private credit, at one level, this is something that banks have been doing all the time. And when we think about a definition, at least the definition I like to use, is that it's credit that does not come through banks and does not come through the public markets. But it comes through lots of recognized players, insurance companies, asset managers directly, including what we call the private credit funds. And I think it should be a team sport. I think there are some things banks will not find it appropriate to do under their capitalization rules. Others should do it because the world needs the credit. And banks should work with them, either by financing them or even working jointly directly. But that's the best way to get credit into the economy.
All right, that was Barclays CEO C.S. Venkatakrishnan and Citi CEO Jane Fraser at the FII conference in Riyadh, Saudi Arabia. Catch more of this conversation on the Bloomberg Terminal or at Bloomberg.com. And AI is everywhere. We know that, Lisa. All companies are talking about it in the applications. And I guess from the financial services industry, they have two sides of it. One is how does it impact our business? And then how do we think about financing the development and rollout of AI across the economy? So they see it from lots of different angles.
Sure, and the private credit angle was interesting too. How many times do we hear team sport?
Yes.
In that, it's a number of times. Quite a different, tone from what we heard from Jamie Dimon when he talked about cockroaches. So
yes, exactly
it's
right.
a different tone.
Yep.
But two interesting sidebars from it.
Yep, absolutely. Coming up in the next hour, we're going to hear a TV simulcast. Robin Denholm, she's the chairperson of Tesla's board of directors. That must be a tough job when the CEO is the founder of the company, but we'll hear from Ms. Denholm. Bloomberg's Germana Bersecci, she speaks with Goldman Sachs CEO David Solomon. We'll listen in to that conversation. That is a tape, so we've got a lot coming up from various conferences around the world. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Your top stories Global business headlines are coming up in just a moment. We get S&P 500 looking at the markets here. Not a lot of movement here, kind of up and down, red and green. Got the S&P up 4 points, the Dow up 240, and the NASDAQ up 69 points. So a little bit of green on the screen.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Lisa Mateo sitting in for Scarlett Fu. I'm Paul Sweeney. We are live. We're broadcasting live from Lower Manhattan, the headquarters offices of BAM Mutual, talking about some folks here in the municipal bond business, a big business getting bigger, new issuance, record new issuance last year and this year. So we have some good conversations there. Coming up, we're going to check in with a TV simulcast, Bloomberg Television simulcast. Robin Denholm, she's the chairperson of Tesla's board of directors. We'll hear a conversation with Ms. Denholm. Bloomberg's Giovanna Bercecci speaks with Goldman Sachs CEO David Solomon. We'll bring that to you as well. We're going to check in with Bloomberg meteorologist Craig Allen on Hurricane Melissa. It looks like it's going to be crashing directly into Jamaica, so we'll get the latest there. Nora Woodstruck, Chief Analytical Office Governance for S&P Global Ratings. How are the credits out there in the municipal bond market, the credit quality? We'll get some discussion there. But right now, let's kick this hour off with our good friend, Charlie Pellet.
All right, I thank you very much, Paul Sweeney, and here's what's going on. U.S. stocks trading at records. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. Wall Street traders leaving stocks near records amid speculation that artificial intelligence and Fed rate cuts will keep driving corporate earnings. That slide in gold is deepening, but we begin with the equity markets. An 8-point gain right now on the S&P. We're at a record 68.83, 6,900 in sight, up by about 0.1%. The Dow up 233 right now, up by about 0.5. NASDAQ Composite Index up 80, up 0.3. NASDAQ 100 Index up 0.3. But not all parts of the market are taking part today. We got the Russell 2000 Index of small cap shares retreating now by just about 0.2%. The 10-year 3.97%, with the 2-year currently yielding 3.48%. Gold now up 39.51 the ounce, down $30, another 0.8%. Silver, though, higher, up 0.3%, 47 even right now for an ounce of silver. Crude down 2%, just above $60 a barrel, and Bitcoin little changed, up 0.6%, 115,196. Fed policymakers have begun their 2-day meeting, so what potential surprises might we see tomorrow? Robert Kaplan is vice chair at Goldman Sachs. He's former president of the Dallas Fed. He was a guest this morning on Bloomberg Surveillance.
I don't know there are going to be surprises they're going to cut tomorrow. They're going to announce, I would guess, they're going to end the quantitative tightening. Those aren't surprises. I think the only possible surprise is I think Jay Powell, I believe, should leave the door open to cutting in December. The markets are pricing in that they're going to cut in December, but he's going to want to leave some optionality just in case.
Former Dallas Fed President Robert Kaplan interviewed this morning on Surveillance. Again, the 10-year right now, 3.98%. NVIDIA's 3-day AI conference called GTC is underway in Washington. All eyes will be glued to the keynote address today by CEO Jensen Huang. Right now, NVIDIA shares up 0.8%. So again, recapping right now, we've got the Dow, the S&P, NASDAQ all advancing. We are looking at another day of records. Right now, S&P up by just under 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Lisa Mateo sitting in for Scarlett Fu. I'm Paul Sweeney. Lisa and I are broadcasting live from the offices of BAM Municipal Leadership here. They're down here at BAM Management. They ensure municipal bond issuers are a big, important part of a big, important market. So we love checking in with those people and getting the latest on the municipal bond market. Coming up, Robin Denholm, chairperson of Tesla's board of directors. Lisa, I'm just looking at Tesla stock. It's up 2% today. It's up 14% year to date. But it's kind of in a transition period. They're trying to transition from, hey, we're electric vehicle company to, hey, we're so much more. We're AI. We're robotics.
Self-driving.
Self-driving. And it's none of those things are necessarily coming to fruition at the exact moment, but they're being slowly rolled out. And that's where the focus is of Mr. Elon Musk. And he's trying to pivot the company, I think, and pivot investors to focus on that and less so on the bending steel part.
Yeah, and there's a lot of questions about, his leadership at all. How much is he in the front and center of the company? His pay package has come up a number of times. He actually spoke about it on the call too. That was another part of it.
Pay package, $1 trillion over 10 years or something like that. But again, he says it's about maintaining control of the company. I guess keeping his interest.
Keeping him there.
Yeah, keeping his interest in the company, because he does have so many other business interests now that he's stepped back from some of his Doge responsibilities, focusing again on the company. So, again, we'll be interested to see what role the chairperson plays here, Robin Denholm here. I would think that would be a difficult job with such a strong leader, a founder. I would think it'd be tough to kind of necessarily work with that type of person in a chairperson role. So we'll have to see how that plays out. But again, stock up a couple of percent today.
That's been doing year to date. Not too bad as well.
Yep, up 14%.
Okay.
Year to date, trailing 12 months, up 76%. So kind of getting back on the track there. And again, the focus for this company from Elon Musk, if he had his way, it would be focusing on some of the other businesses from the traditional car business here. This is a company with market cap, $1.5 trillion. So just keep that in mind. So we saw Apple hit $4 trillion today. So some of the numbers out there are just extraordinary here. But again, this is they're out there with their EVs. People, you talk to Matt Miller, and Matt Miller, the car guy, says they need new models. They need new, something to refresh the lineup out there.
Right, and how it's doing in the China market too. That was another big question with it.
Yep, exactly. So we're going to take this conversation in progress right now. Robin Denholm, chairperson of Tesla's board of directors. Let's listen in.
Well, thank you for having me today. Yes, as part of our annual shareholder meeting, I meet with the top investors in Tesla on the institutional side, and obviously also talk to retail investors through forums like this morning to encourage everybody to vote, but also to answer any questions that they have. From a board perspective, we really like to engage with our shareholders, understand their questions, their concerns, their optimism for the future, and so it's a really important part of the process we go through on a quarterly basis, but also with the proxy on an annual basis as well.
So the initial feedback, is it one of optimism around the pay package? We've heard from Glass Lewis, from ISS, which have said they're not in agreement with the way in which the pay package is thus formed. The key concern seems to be the sheer amount of money going to Elon Musk, if indeed he achieves all of those key milestones. But for you, it's about, and for Elon, influence, it seems like. So how are you managing to discuss that with the investors, institutional and retail?
Yeah, so firstly, it is a performance package. So he gets nothing if he doesn't perform against the pretty audacious milestones that are part of the performance criteria that's been outlined by the board in the performance package. So I think rather than compensation, it's actually about the performance and the goals that we have for the company as we move forward. And so for me, it really is about making sure that investors understand that they actually get paid if he hits the milestone before he will. But to your point, it is about voting influence. Elon's been very public, including on last week's earnings call, about the fact that it's around the voting influence that he could have in future shareholder meetings, as opposed to the economic interests of the shares that he would get as part of the performance plan.
Robin, good morning from Washington, D.C. You've acknowledged that there is a very real risk that Elon leaves if the vote is a no. The question we get most often from shareholders to you is, what's the plan B? Either is there a plan B as a different person stepping up, or have you discussed with Elon the idea that it will result in a no vote and that you can use some kind of bridging mechanism, another interim pay award, for example?
Well, he's been quite public in terms of the implications of a no vote being on his leadership, as well as on the, obviously, on the performance plan itself. And so from our perspective as a board, we obviously take our fiduciary responsibilities really seriously to all shareholders, and having a succession plan, those types of things are things we've discussed on an ongoing basis, particularly, if something untoward were to happen. So from our perspective, succession planning is an important part, and so much so that we've actually baked in an orderly succession plan, a plan for a plan, if you like, as part of this performance plan. So the last two tranches of the performance plan are unlocked by having a robust performance plan succession plan that Elon would be part of.
If Elon Musk walks away from Tesla on November 6th or 7th because of a no vote, is there a contingency where there is an individual already within Tesla or an individual outside of Tesla that is lined up as a near-term option?
Yeah, so from our perspective, the most important thing at this point in time is making sure that we're explaining all of the items on the shareholder agenda for the annual shareholder meeting, making sure that institutional investors, retail investors have their questions answered. That's our most important thing right at this point. And we are only...
Well, Robin, that is their question. Who's the backup plan is the question that they're asking you.
Well, there is no other person that is Elon. We think that he is the right leader for the company over this next decade and delivering the plan and the opportunities ahead of us. So it's about how do we create the most value for the company and for our shareholders over this next period of time. And he is the right leader for us over this next decade.
Can you give me a sense of probability? If the vote is no, what probability Elon walks?
So right at this point in time, it's too early to actually make a call on the outcome. Most investors wait to the last minute to vote. So we're still early in that cycle, which is one of the reasons why I'm in New York to meet with our institutional investors. And we'll get a better sense, as the votes come in. And some institutions are more public than others in terms of how they're going to vote. So yesterday there was a public announcement by the pension fund in Florida, and so other investors will start to make their votes public as well.
But if it's no, the probability that Elon goes, 100%?
Well, time will tell, but he's been very, very public in terms of, it would be more of a say on his leadership over this period of time, not just about the performance plan itself in terms of a no vote. Yeah.
Robin, you've been generous with your time. We've already spoken with you in September at length about the goals that you've set for Elon Musk. But one of the things that came out of that from, again, the shareholder base is why are the energy products not as strictly mandated to Elon? When you consider the earnings that just posted, that was a growth driver, right? It's such a key part of Elon Musk's master plan part 4 and this abundance that he's going after. So why didn't you include energy products as a stated goal?
Yeah, so there are many different goals that we looked at. Energy is an important part of the Tesla product lineup today and in the future. And you can see the impact that energy is having not only on the results, but also on the transition to sustainable energy longer term. So it is embedded in the plan. The EBITDA goals that we have as a company, you can't get there without a robust energy outcome. And so, again, if you look at the results of last week, energy contributed very significantly. And to get to $400 billion of adjusted EBITDA is a monumental task for anybody. No one out there, at least to my knowledge, is at that sort of level. And so even the first EBITDA goals at $50 billion is nearly 3 times our highest EBITDA goals that we've had. So from our perspective, it is absolutely embedded in the goals. To your point, it's not a specific line item in terms of the revenue or the units or the kilowatts of energy or megawatts of energy that are out there, but it is implicit in the plans. And the master plan for, talks about that as well in terms of getting to sustainable abundance.
Robin, has the special committee and the advisors that you took on discussed the use of interim awards in the event of a no vote and how you might replicate what you did already?
Well, there's an important other measure on the board as well, proposal in terms of increasing the share pool that we have, firstly for our employees. As you know, we're in a talent war at the moment, particularly around AI talent, and adding to the employee reserve as part A of that to actually increase the amount of equity that we have for our employee program. But secondarily, we've also asked shareholders to add to the pool in the event that we need to award an amount to Elon to compensate for the 2018 plan, because as you know, we put an interim award for roughly 1/3 of what he earned under the 2018 plan, given the appeal that is ongoing in Delaware at the moment. So we have not ruled that out. The special committee was charged with looking at all matters compensation-wise. As you're aware, in August we did actually award an interim award, which does have a 2-year vesting period and is forfeited if we win the appeal in Delaware for the 2018 compensation program.
It does seem then to be about money. And I'm interested as to how you continue to, you've made very clear it's about influence as well. Some of the feedback has been just the gargantuan amount that could go to Elon in terms of monetary value. But then others are worried about the dilution to other shareholders. How was it in just no way possible to give him more voting rights without the $1 trillion mega money bonus, it feels like?
Yeah, I mean, we looked at many different instruments to be able to award equity that had voting rights versus the economic value. And it's just not possible once a company has gone public to introduce a special class of voting shares. Other companies have that. If you look at some of the tech companies, they have 2 classes and founder shares, if you like, or special voting rights exist. But for Tesla, that wasn't implemented at the time that we actually went public, and therefore we weren't able to use that type of instrument. But what we were able to do was to bifurcate the voting rights versus the economic rights. And so under the plan, all the awards have voting rights that are earned first, and then the economic rights happen.
Tesla's board of directors, speaking with Bloomberg Television's Caroline Hyde and Ed Ludlow, focusing on the pending pay package for Elon Musk at Tesla, amounting to $10 trillion.
Yeah.
I mean,
and kudos to Caroline and Ed for kind of pushing on and saying, okay, if this doesn't go through, then what? You know, is there a successor? Is there anyone? But no, they wouldn't say.
Shareholder vote coming up, so we'll go to the shareholders, and we will stay on top of that, of course, because that's of intense importance for the shareholders of Tesla. We now turn to our conversation with Goldman Sachs CEO David Solomon. Speaking from the Future Investment Initiative event in Riyadh, he downplayed concerns that have surfaced following the collapse of U.S. firms First Brands Group and Tricolor Holdings. Solomon spoke with Bloomberg's Germana Bersetchi. Let's listen in.
The Fed, will cut rates tomorrow, and then we'll see. I know the consensus is you'll get another cut before the end of the year, but the policy rate has been higher. I think they're looking to move more toward neutral, and so we'll take a step in that direction. But I think the Fed always is an observer of what's going on in the real-time economy. The real-time economy can shift very quickly. At the moment, I would say the U.S. economy is in quite good shape, but I wouldn't jump forward. There are lots of forward prognostications about the path of interest rates. I would just highlight mostly, I'd look at the moment. You can project forward, but just because there's a forward projection, it doesn't mean that's where we'll wind up.
There's still a lot of uncertainty out there.
There's a lot of uncertainty.
Do you believe that this is a K-shaped economy? Lots of academic circles have been talking about that in the sense that, upper income earners seem to be thriving, whereas lower income earners are struggling to keep up with inflation, and they're worried about potential job cuts to come.
I wouldn't use that term, but what I would say is businesses that are particularly sensitive to lower income or paycheck to paycheck consumers have been a little softer. And I would say, consumers that are paycheck to paycheck feel more pressure in an environment with 3% inflation. And so there's no question inflation is very, very difficult for people who live paycheck to paycheck. And so it's something I think we have to watch very carefully. I know there's been progress from where we were a few years ago on inflation, but it's important that we get inflation back to target, because in any environment where it runs hotter, certainly people in that income strata feel it more acutely. But I'd still say overall, the U.S. consumer is in good shape. Most of the data that I see around the U.S. consumer is still quite constructive, but I think you're highlighting something that needs to be watched carefully.
Yeah. Another thing that needs to be watched carefully is perhaps, the credit situation. A couple of weeks ago, we were talking about Tricolor, First Brands. One of your peers in the industry described there being potentially cockroaches around. I don't know if there's a certain insect reference that you want to pick up on, but ultimately, how worried are you about some of these individual idiosyncratic credit incidents actually becoming systemic?
I would put the three situations that you mentioned in the category at the moment of idiosyncratic events. But what I would highlight is I think this is a great opportunity for people that are in credit businesses and are deploying significant capital as lenders in credit businesses to look at their procedures, their practices, their underwriting standards, look through their portfolio, and really take a strong evaluation of where they are.
Yeah.
You can't separate the fact that we've been in a very, very long, easy credit cycle, one of the longest I've seen in my career, without a real credit pullback, without an economic environment that's really put an enormous amount of pressure on credit. And in that context, credit spreads are historically tight.
Yeah.
And I know at some point there will be a credit cycle. It will probably come at a period of time when the economy slows more acutely, or there's some sort of a macro event that changes confidence we have in growth and the trajectory of the economy. And when that happens, given the velocity of lending activity, there will be losses in credit, and those losses will be felt across the system. But that's different than a systemic crisis. And I don't see anything in the context of a handful of bad credit situations that's leading me to say that we have a systemic issue around the corner.
Yeah.
Unfortunately, lenders make mistakes. There is fraud in markets. And that's something that as lenders we all have to try to protect against. But we should not be fooled by the fact that this is a very robust credit environment. Credit spreads are tight. And when we do have a cycle, which probably will come when there's an economic slowdown, there will be losses, and we'll feel that across the economy.
Yeah, and that's trickling down to private credit as well. We spoke about that a year ago, I remember. And I just wonder whether you think the easy money, so to speak, in private credit, those days are behind us now, just because of how much interest there's been and how much spreads have compressed there.
I don't think about, when I think about lending, I don't think about easy money. Lending is an activity, whether it's private credit or it's banks lending activity. Lending is a through the cycle activity. There's no question when spreads are tight, you actually earn lower relative returns. But the real alpha for credit market participants comes in the tough cycles when you have to restructure credits. You have to have more conviction to enter credits because you can earn higher returns. And so the real alpha in long cycle credit investing comes from being able to manage not just at times when credit spreads are tight, but also when there's a difficult cycle. And so, I don't think about it as easy money. If you're a lender, you participate, and you hopefully have good underwriting standards, you take good reserves, and so when there is economic pressure and there are losses, you can smooth through the cycle your returns to a reasonable place. And that's what good lenders do.
Okay, so we've talked about equities, Fed, the credit. Let me ask you about the dollar. The dollar, is down almost 10%. Year to date. It has been a challenging year for the USD. People were questioning this theme of U.S. exceptionalism. Do you worry that the U.S. is perhaps somehow losing its relative status?
I don't. I think U.S. preeminence, especially from an investment perspective, is a theme that's still firmly in place. That you can walk around here and talk to capital allocators that are here from all over the world, and they're not fundamentally changing their allocation, across the globe. And if you think about what are the more interesting places in the world to invest at this point in time, the U.S. is still at the top of the list and is the largest, most important economy, the largest, most important tech innovation center in the world. I think that's firmly in place. The dollar has been softer this year. There are a variety of reasons for it, but a perspective would be it's certainly much stronger than it was 10, 15 years ago when we saw, for example, $1.40 euro dollar. So everything's got to be put through a longer term lens when you think about the dollar, but I don't worry about the U.S. and its preeminence as an attractive place to invest, the growth in that economy, the tech innovation ecosystem. I think the U.S. is in a pretty good place.
All right, that was Goldman Sachs CEO David Solomon speaking with Bloomberg Television's Germana Bersecchi. You can catch the full interview on the Bloomberg Podcast YouTube page. Subscribe to watch high-profile discussions across Bloomberg platforms. All right, let's get a little bit of a reset here on the markets. We can do that with a Bloomberg Business Flash with Charlie.
All right, thank you very much, Paul Sweeney. We've got Goldman Sachs shares up 0.4%. This on a day when the Dow, the S&P, NASDAQ, they're all higher right now. A little change, though. That is perhaps the key takeaway at this hour for the S&P 500 index. Up just 2 points right now, trading at a record 68.77, up under 0.1%. The Dow up 180 now, up 0.4%. NASDAQ Composite Index up 78, up 0.3. NASDAQ 100 Index also up 0.3%. For the Russell 2000 Index of small cap shares is trading lower right now. That index down by 0.2%. 10-year is currently yielding 3.97% with a 2-year at 3.49%. Gold down $23 the ounce, $39.58, sliding again down another 0.6% though. Silver bucking the trend, up 0.3%. Silver 47 even right now for an ounce, and Bitcoin up 0.5%, 115,000 on Bitcoin. Apple today hit a $4 trillion in market value, making the iPhone maker only the third public company in history to reach that milestone. Apple shares right now, they're lower, little change, down under 0.1%. If you're wondering about those other two companies, they are NVIDIA and Microsoft. Again, recapping here, little change on the S&P, up now by 1 point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Powell, thank you so much. We appreciate that. Lisa Mateo and Paul Sweeney, we are broadcasting live from the offices of BAM Mutual in Lower Manhattan. I call it the World Financial Center. We've talked about an array of topics regarding municipal bond business. Right now, we want to talk about the potential role of municipal finance in public power. We've been talking, about this AI story for a couple of years now, and one of the ways to play it, and one of the key issues is how are we going to power all these data centers? And that's going to be a big issue for this industry as AI continues to roll out through the economy. John Miller joins us, Senior Advisor covering public power for BAM Mutual. He joins us here at the offices. John, thanks so much for joining us. Talk to us about, just broadly speaking, how the municipal bond market helps finance the public power infrastructure of this country.
Well, public power issues lots of bonds. You know, it's really on the infrastructure business. And, you know, you talked about AI, and we're at a time where there's just massive, unexpected, unprecedented growth that's going on. I have former clients that have, you know, systems of, you know, maybe 50, you know, small member systems. Their total aggregate current usage is 2,300 megawatts. That system has 10,000 megawatts of inbound requests for new power, for new systems. Grand River Dam Authority in Oklahoma was one of my clients. They have a 2,000 megawatt system. They announced the closure of one of their coal plants. They're now keeping it open because they have 2,000 megawatts of new requests coming in. And that's been consistent across the country where, you know, you see just massive amounts of demand. You know, ERCOT in Texas recently released a report that shows that aggregate demand will double by 2030, which sounds preposterous on the face until you look kind of behind the curtain and you see that the Bitcoin mining, the requests for data centers, the new LNG expansion, the population growth, you add it all up and that may be light, maybe low. And so bonds are back, public power is building again, and after 15 years of relatively flat demand and relatively low issuance of tax-exempt bonds, we've seen it roughly double in the last 2 years. And Fitch, the rating service, recently released a report. They did an analysis of all 119 public power agencies that they rate. From 2015 to 2022, it was on average $15 billion a year of capital spending, which is almost all funded by tax-exempt bonds. The announced plans of that same group of public power agencies next year in 2026 will be $36 billion, more than double.
Yeah.
And so, you know, everybody's back in business, if you will, building capacity.
Well, you've been painting this kind of nice picture as to the transition of public power, how it started out huge, took a little bit of dip, and now it's back again. Is that kind of sustainable? And where do you see, there's been a lot of talk about nuclear power, too, on top of it?
Well, there's a lot of questions there.
Sure.
You know, for a pretty long time, demand was relatively flat, and there was a meaningful move to go from fossil fuel to renewables. The acquisition of that capacity largely came through contracts where they didn't own or buy the assets, they just sort of bought power. You know, that's shifting back where you really need hard assets in the ground. There's a lot of influence or really impact on looking for gas to firm up the renewables. You know, as you said, nuclear is getting an enormous amount of play. Well, the problems with nuclear is it's slow, may not be here in time, but there is such long-term demand that people are coming back. Sandy Cooper announced actually this week an agreement with Brookfield to bring back the Summer nuclear power plant that had been canceled to basically invigorate that and potentially, you know, complete those projects. You know, there's small nuclear reactor agreements between Energy Northwest and the state of Washington and Amazon, you know, to build almost 1,000 megawatt facility there. You know, you see, I think it was Google actually signing an agreement to take 100% of the capacity of the 3 Mile Island plant, you know, and restarting that. And so there's lots of activity of taking both pockets of existing power and potential projects that could be built quickly being kind of a relative term, but things that are either built that could be restarted or are partially built that could be completed. This has been a lot of money going in trying to bring a large amount of power on very quickly.
I read the book, The Grid, so I consider myself an expert on all this stuff. It's actually fascinating, the history of the grid in the U.S. Do we have enough? Can the grid handle what people are telling us we're going to need? Or what are we doing here? I mean, it seems like we're going to have to use everything. Fossil fuel, not green stuff, nuclear stuff. It seems like we might need everything.
So there is a very popular trend in public power in particular where the strategy that you must pursue is all of the above.
Okay.
And they call it that, and it's all of the above. And it literally is more renewables, more solar, more wind, and particularly utility scale batteries or storage, which is becoming economic to sort of make that a more dispatchable resource, is clearly massive amounts of combined cycle gas and an extension, not construction, but extension of the life of many of the coal plants that had been at least forecast or planned to be shuttered, in the next few years. That's happening quite a bit. And then obviously nuclear, as we talked about. Some would say that if all that happens, the grid breaks, and that there's not enough transmission to handle all of that. So there is a fair amount of investment, probably not enough, in transmission and grid, reliability, resilience, as it's often called. But that's going to be a test. One of the things that it's kind of an interesting example of that is many of the data center developers, rather than building where they want to be and buying power, which they can't, have gone to places where there's like renewables, for example, that can't get to the grid because there's no transmission. So you've seen development flipped around of taking projects to power rather than bringing power to the projects. And so that's a way to sort of get around the lack of transmission and kind of an interesting development strategy.
Well, I also watched season 1 of Landman, so I know all about the oil and gas industry. I'm an expert there. So there's really, Lisa, I can basically solve this whole problem.
He's got it.
I get it. All right, John, thank you so much for joining us there. John Miller, he's a senior advisor on the public power business at BAM Mutual. Fascinating discussion how we're going to power this AI revolution and what role all the power suppliers are going to play and kind of how we're going to finance it all. So there's a lot of questions out there, but it's a big story. All right, we want to get back to another big story, tracking Hurricane Melissa, its latest path. It looks like it's going to hit Jamaica with a direct hit. Bloomberg meteorologist Craig Allen joins us. Craig, can you give us the latest reporting on Hurricane Melissa?
Absolutely. It is going to be a direct hit, and it's just going to come so hard and so slow with the way the storm is moving now. It did pick up in speed to about 5 to 10 miles per hour, heading towards the town of Negril or Black River. And I'm thinking that it's going to happen during the day today with now. I was just looking at the 11 o'clock observation that came in from the hurricane hunters. 185 mile per hour winds sustained. Wow. That means that there are gusts over 200, maybe close to 215 miles per hour. So let's try to put this into some kind of perspective here. An EF3 or EF4 tornado, when they have those kind of winds, they come in, they hit hard and they hit fast, and then they move on out away from your area, but there's just an enormous amount of destruction. Now, think of a storm of that kind of intensity over your area for something like 4 to 5, maybe even 6 hours. And I'm just trying to grasp what kind of problems, how catastrophic this could possibly be to some of those areas of Jamaica, which are either undeveloped or mountainous terrain where there could be tremendous mudslides. I just think that this is one of the most catastrophic situations I've seen from a hurricane, and I've been doing this over 40 years here. It's worrisome. It really, really is grim and worrisome about what a storm of this intensity and this size could do, especially moving so slowly across the island.
And Craig, I've known you for years, and I know you've covered a ton of these hurricanes. But this one, you said, really, really stands out. You mentioned the topography of the island, the mountains. Right. How much does that impact how this hurricane handles the island and the intensity of it?
Yeah, in a big way in terms of the rainfall. It will actually diminish the winds a little bit, but when you're up over 100 miles per hour, what is the difference? And we're talking about close to 200 mile per hour winds. You will get some frictional forces from the landmass. Remember, hurricanes need that very warm tropical water, and the waters down there were running around, 86 degrees or so. And that's why, Melissa was able to just keep on growing and growing over the water. Well, now you're going to go over land. You'll have some frictional forces and you'll diminish the wind, but you're also going to squeeze out more moisture. As the storm is pushing in with all of its rainfall and hitting those mountains, the air is rising, the rain is falling. So you take that, and that's why there's the potential here. This is just freshwater flooding now of anywhere from 20 to 30 inches of rain in total from this system. And that easily will result in mudslides that will probably devastate that part of the island that takes a direct hit near and to the right of the eye of the system. So you've got that. And now let's talk about another thing here, Paul and Lisa, and that is the flooding that will occur from the storm surge. We've got a 9 to 13 foot inundation of salt water coming on land along the southern coast. Now you think about it, we're 5 to 6 feet on average, you know, as a population. And then you take 9 to 13 feet of salt water and you drive that in, and you're driving it into, yes, the hotels were built well, but you're driving it into areas that are not built as well as we know, or up to complete hurricane standards.
Yes.
And that's why, I mean, just all these factors, these three main factors especially, are just so so scary. And you know, you think about it, Lisa, you know, there's one thing as a scientist and as a meteorologist, we've been looking at pictures of this storm, and it is something that belongs in textbooks. I'm just in complete awe of the colors of everything there. But now you take it from a human perspective, and it is just so, so sorrowful. Yeah.
Craig, 10 seconds. Does the U.S. have anything to worry about from Melissa?
Okay, the answer, a direct answer is no. A direct hit is no. There could be some coastal flooding as well as rip currents and storm, not a storm surge, but rip currents along the southeast coast. But that's it. Melissa will now head on out past eastern Cuba, Turks and Caicos, the Bahamas, and then over towards Bermuda while weakening. So it moves away from the east coast.
Okay, very good. Craig Allen, thank you so much for that. We really appreciate getting the update there. Craig Allen on Hurricane Melissa. Looks like it's going to be very, very tough times for the folks on Jamaica with a direct hit there. All right, let's get a reset of the markets here. We'll go about get a Bloomberg Business Flash with Charlie Peller.
Thank you very much indeed. S&P just turning negative. Do, however, want to begin with the developing business story right now. Headline off the Bloomberg Professional Service. NVIDIA plans to make a $1 billion investment in Nokia, an apparent vindication of the Finnish company's pivot from mobile networking kit into artificial intelligence by the sector's kingmaker. Right now, we do have NVIDIA shares trading higher by about 0.5%. Nokia up by about 1.7%. Equity markets, we got the S&P swinging between gains and losses. Lower right now as I speak, down 1 point. Little change there, 68.73, have been trading at a record. The Dow pushing higher at a record there, up 153, up 0.3%. NASDAQ up 0.2%, but the Russell 2000 index of small cap shares, it is lower right now by about 0.4%. 10-year at 3.96%, the 2-year 3.48%. Gold is down another $18 the ounce at $39.63, down 0.5%. West Texas Intermediate crude trading below $60 a barrel, down 2.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney, we are live with you from the offices of BAM Mutual in Lower Manhattan here. It's time to talk about the credit quality of the municipal bond market. And you want to do that, you talk to the folks at S&P. Nora Wittstruck joins us here, Chief Municipal Analytical Officer for S&P Global Ratings. Nora, thanks so much for joining us here. How is the state of municipal bond credit? I haven't really heard of any real blow-ups out there. Maybe I'm just not paying attention.
Oh, we should knock on wood.
Yes.
When we say that. Yes, thanks for having me back, and so happy to be here in the BAM offices. They're great partners for us, so we really appreciate that. But, you know, I think I was here earlier this year, and at that point, we had sort of released all of our sector views for 2025, and at that point, we were saying it was cautiously stable while some sectors are pressured. And I would say that's largely panned out this year, despite some of the federal policy uncertainty and, you know, issues related to severe weather events like we had in January with the wildfires in California and, you know, just generally things going on with policies and the One Big Beautiful Bill. So it's been a bit of an uncertain period, but you know, the municipal bond market is very resilient, as are the issuers, and many times we see them pivot when things like this happen. And honestly, credit ratings are somewhat correlated to, you know, management teams being able to sort of stave off and plan for some of these uncertain times. So I would say that, you know, largely things are still relatively stable. However, you know, I think to drill down a little bit more, we have seen pressures still in the utilities sector, so in our water and sewer utilities sector, and also in our public power sector, and then even in our local government sector. Actually, we've seen more downgrades than upgrades, and that's really around our K through 12 public school district portfolio.
Now, what about unexpected events? I mean, we're in day 28 of the federal government shutdown.
I know.
You're shaking your head.
I'm like, please, can we just, yeah. Well, you know, the longest one at the end of 2018 into 2019 was 35 days. So we are coming up on that longest period of time. We think that duration is definitely an indicator of stress, and really as it drags on, we do sort of amp up our monitoring, particularly on some portfolios like, you know, GARVs that are issued by some transportation entities. We're looking at other, bonds that are backed by federal payments, whether that be federal leases, where they might be leasing space in a particular commercial office building or something like that. In our affordable housing sector, where certain affordable housing owners are receiving payments from HUD or that type of thing. So far, those payments are continuing to flow, because when there's a shutdown, there's a decision by agencies of what's discretionary spending and what's mandatory spending. And discretionary spending is usually around 28% of the budget, whereas mandatory spending, including payments on sovereign debt, are mandatory. So those things we typically see continue to happen even when there's a shutdown. But yes, I mean, I think our economists say that for every week there's a shutdown, there could be shaving off of, 0.1 to 0.2 basis points on growth for the year. So I think that's what we're really watching. If it leads to, less discretionary spending, if there's more pullback in, consumer confidence, all of those things can add into sort of credit developments for us when it comes to the shutdown.
Nora, we got about 30 seconds left. Higher education, that's under pressure from this administration.
Yep.
Are you seeing risk there?
I mean, higher education also is one that we have a bifurcated view on. There's a lot more pressures on that sector, in particular, with endowment changes in terms of what they have to pay on their endowments, and also, research funding. But at the same time, we haven't seen a lot of pressures yet, but we're definitely watching that for 2026.
Like, I know a lot of the institutions I'm familiar with very nervous about that.
Yeah.
Nora Wittstruck, thank you so much for joining us. Nora Wittstruck, she's the Chief Municipal Analytical Officer for S&P Global Ratings, joining us here at the BAM Mutual offices in Lower Manhattan. I once interviewed at S&P. Did not get the job.
Oh, no.
Exactly right.
So, very high standards.
Exactly.
Look at you now.
So I became an investment banker instead. So I could have had a honest job. But there you go. Looking at the markets here, we got a lift. That's kind of where we are. It's a little bit mixed here. We got the S&P no change, but we got the Dow up 147 points. We got the NASDAQ up 80 points as well. 10-year Treasury yields pretty much flat, but that 3.97%, that's got to bring some mortgage rates down. I would think for some people just asking for a
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Hi, Elise Mateo sitting in for Scarlett Fu. I'm Paul Sweeney. We're broadcasting live from the offices of Band Mutual in Lower Manhattan here. Bloomberg Intelligence today is brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow in your own terms with a partner dedicated to your success. Go to Commonwealth.com to learn more. UPS is in the news today. Reported some numbers, cutting some headcount. The street likes it. The stock's up 7.5%. It's down 24% year to date, but a good day for United Parcel Service. Let's break it down with Lee Klaskow. He's our senior logistics analyst for Bloomberg Intelligence. He covers the rails, the trucks, the shipping, the air freight. He covers it all. But we didn't really talk to Lee too much until the pandemic, and then the logistics. We all became experts on logistics, and we're like, Lee, help us out. We don't know what's going on. Okay, so, Lee, thanks for joining us here. Talk to us about UPS. What's going on there?
Yeah, trust me, I enjoy being a flavor of the month, so I'm glad to be here and talk about transport. What's going on at UPS is they are making progress and they're executing on their plan. And their plan really is to create a network that can not only handle but thrive in an ever-changing environment. And that change is being driven by e-commerce. It's being driven by the uncertainty around tariffs. And what they've been able to do is increase productivity through technology, whether it's automation or AI. And that also, they were stepping away from business from Amazon. They noted on their morning call that they're 3 quarters into a 6-quarter glide down of Amazon business. And the reason why they want to move away from Amazon business, it tends to be lower margin, lower yielding packages. But that's not to say that they don't want to totally walk away from Amazon, because their return business is a good business for them. And we're seeing, the success in the numbers. And, going into the quarter, I think investors were cautious or had low expectations. And management kind of exceeded those with the results. And their outlook really shows us that, expectations for the fourth quarter in 2026, at least as it relates to, sell-side analyst consensus, is probably a bit low and it needs to move higher.
Lee, can you get more into the cuts that we were talking about? 34,000 job cuts. Where were they seen, and what kind of, let's say, year-over-year cost savings does it expect in 2025 from all of this?
So, what they're trying to do, their overall cost savings, which includes, the headcount reductions, they're looking to get $3.5 billion in cost savings this year. They've done around $2.2 billion of that so far. And some of the reductions are driven by, they offered early retirement for some of their drivers. They said they've had pretty good pickup with that. And that payoff should be about a year from what it costs. Cost something $175 to $180 million, and they mentioned on the call that it will take about a year to make those costs back up. So it really should be paying for itself. And they're closing a lot of facilities. So they've closed something like 95 facilities so far. And that's being driven by, they don't need the network they had when they were really handling a lot of Amazon business. And now that, like I mentioned earlier, they're walking away from that business, they're kind of reconfiguring their network. And they're also, as I mentioned, they're increasing overall automation. They noted on their call that they've added automation to around 35 more facilities, and about 66% of their packages touch these automated facilities, which is around 300 basis points more than was last year. And that number is just going to continue as management makes more inroads at modernizing their facilities.
Lee, what is UPS, and maybe FedEx for that matter, how are they kind of talking to you guys about tariffs and how it might be impacting their business just as a big part of the supply chain?
Yeah, it's interesting. So for like a UPS, there's good and bad when it comes to the tariffs and the more protectionist policies in the U.S. We've ended the de minimis exemptions, which, stated that if a shipment came into the United States and it was worth $800 or less, it didn't have to pay a duty or a tariff. The Biden administration was working towards getting rid of that. The Trump administration brought that to the finish line. First it was just packages that were coming in from China and Hong Kong, and now that's been all packages coming to the United States, and that's hurting volumes. They noted their U.S. or their China to U.S. volumes were down around 20%, and that's having a negative impact. Now you look at their forwarding business, because of all these packages are now, if they are going to be coming in, lower value packages have to pay a duty. They need to lean more heavily on their customs business. So you've seen their supply chain business outperform this quarter, and I suspect a lot of that had to do with the additional fees that they generate from helping shippers clear packages through customs.
All right, Lee, good stuff as always. Always appreciate chatting with you about the global supply chain. Lee Klaskow, Bloomberg Intelligence Senior Transport, Logistics, and Shipping Analyst on the UPS and job cuts, but the stock is up 7.5%. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. One of the great advantages of working downtown and living in New Jersey is you can take the ferry from Lower Manhattan to Hoboken, which is a beautiful, and it's such a nice trip. It's such a nice way to go. But you're not doing it, are you?
I'm still taking the subway.
Still taking the subway up to Penn Station and then doing. All right, you do what you can. All right, we had a great time here at the offices of BAM Mutual, as we do every year. We appreciate them giving us the courtesy of being here. This is.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. Hurricane Melissa takes aim at Jamaica, a powerful Category 5 storm. CBS News Philadelphia meteorologist Andrew Kozak tracking it.
We're talking 185-mile-per-hour winds, gusts to 215. And believe it or not, it's picked up speed. The movement north-northeast at 7 miles per hour, but that is still very, very slow.
The hurricane is blamed for at least 7 deaths in the Caribbean, 3 of them in Jamaica. CBS's Jason Allen is in the capital, Kingston.
When the really, really low-lying areas that flood regularly, not just when there is a hurricane, the government has said, well, let's say that they have affected the evacuation to have them go into the hundreds of shelters that are set up. But a lot of people are staying in their homes. They feel that they've made it through past storms, and they feel that they'll make it through this one.
There's been new U.S. military action targeting alleged drug boats, as we hear from CBS's Michael Wallace.
In a post on X, Defense Secretary Pete Hegseth said the strikes in the eastern Pacific Ocean killed 14 suspected drug traffickers. A lone survivor was rescued by Mexican authorities. The U.S. military has now killed at least 57 alleged traffickers in the Pacific and the Caribbean in the last 2 months. Hegseth says narco-terrorists have killed more Americans than Al-Qaeda, and they will be hunted and killed.
On day 28 of the government shutdown, delays are again a big factor at many airports, with more than 1,000 so far today. Cancellations piling up too. Transportation Secretary Sean Duffy.
We have the best air traffic controllers, the best trained, the smartest people in our airspace controlling it. That kind of work, that kind of dedication, that kind of expertise deserves a paycheck.
President Trump in Tokyo met with the country's new prime minister and hailed a new trade deal. Back here in this country, his attorneys have asked a court to toss out his 2024 hush money conviction. Trump has called the case a witch hunt. Amazon said today it's going to cut 14,000 corporate-level jobs. CBS Money Watch correspondent Kelly O'Grady.
This is coming at the corporate level, and so this isn't Amazon isn't doing well or consumers aren't spending. This is them saying, we've got a lot of areas in the corporate level that we think we can be more efficient on, and we're going to take some of those resources away, and then we're going to add some resources in an area that we think is going to be growth-worthy.
Texas is suing the makers of Tylenol, claiming autism risks were hidden. President Trump claimed the use of acetaminophen by pregnant women is linked to autism without offering proof. Kenvue, one of the 2 companies sued, says there has been misinformation about the safety of acetaminophen. Checking Wall Street. Right now the Dow is up 188 points. The S&P is up 5. This is CBS News. An important milestone for an NFL star last night.
Mahomes, end zone, caught by Kelsey. Touchdown.
Chiefs tight end Travis Kelce scored the 100th TD of his career, counting both regular season and the playoffs. Watching from a luxury suite above, Taylor Swift. Kelce celebrated his achievement with a victory dance that came straight from the video for his fiance's song. Kansas City beat Washington 28-7 at Arrowhead Stadium. Deborah Rodriguez, CBS News.
Game 4 of the World Series is tonight in L.A. The Dodgers won last night's 18-inning epic 6-5 thanks to a Freddie Freeman home run. It was quite a night for L.A. star Shohei Ohtani with 2 homers and 2 doubles. Plus, he walked 5 times, reaching base each of his 9 trips to the plate. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
This is David Gura in for Joe Matthew here on Balance of Power on Bloomberg Radio and YouTube. I'm in Washington, D.C., where Vice President J.D. Vance is scheduled to have lunch with Senate Republicans on this, the 28th day of the federal government shutdown. A lot of worry about what's going to happen here in the coming days. On November the 1st, 40 million Americans scheduled to lose their SNAP benefits have a huge impact on those families. Half a world away, President Trump is on his trip to Asia. He sat down with the Japanese Prime Minister for their first face-to-face meeting. We're going to dig into what they talked about in terms of policy and plans, what they said about each other. The president also going to an aircraft carrier, making a speech to U.S. military personnel. The president teasing in a meeting with business leaders that he's going to be seeing Jensen Huang, the CEO of NVIDIA, tomorrow. I should say Jensen Huang is here in Washington today for a major conference NVIDIA is putting on, a developers conference, and he's scheduled to make a major keynote address. That coming on the heels of some news that just broke and is really moving markets on this Tuesday. A deal that sees NVIDIA taking about a 3% stake in Nokia, the Finnish cellular telephone company. Dig into that more here over the course of the hour. But first, let's get a check on national, international headlines, maybe some more intel on that Nokia NVIDIA deal with Charlie Pellet, our world headquarters in New York.
Charlie? Thank you very much, David Gura. Yes, let us begin with market reaction to Nokia. Right now, the stock is surging 16.7%. NVIDIA, all eyes on Washington and Jensen Huang. NVIDIA shares are up by 1.2%. NVIDIA planning to make $1 billion equity investment in Nokia, an apparent vindication of the Finnish company's pivot from mobile networking gear into artificial intelligence by the sector's kingmaker. Again, looking at Nokia shares, NOK on the ticker, they're up by 17.9%. NVIDIA shares are also expected to get a boost from the company's AI conference called GTC in Washington, where CEO Jensen Huang will be giving a keynote address. All of this as stocks gain. The Dow, the S&P, NASDAQ trading at records right now. An advance of 5 points on the S&P to 68.80, up by under 0.1%. The Dow up 192, up 0.4. A NASDAQ right now up another 105 points. The NASDAQ Composite Index up by about 0.4%. Our Mag 7 Index ahead of key earnings this week on Wednesday and Thursday. 5 out of the 7 companies check in. The Mag 7 Index right now up by 0.9%. 10-year, 3.97%. Spot gold down another $19 the ounce, down 0.5%. And West Texas Intermediate crude below 60 at 59.90 now. WTI down 2.3%. President Trump working on trade deals with the government shutdown now in its 28th day. Jonathan Lieber is head of research at Eurasia Group. He was a guest this morning on Bloomberg Surveillance.
Yeah, it's notable because they really don't seem at all connected. It's like Trump's living in a totally different world and playing a totally different game than the Democrats are. And he continues to kind of create his own reality this way by just going about business as normal. He's knocking down the East Wing. He's doing business deals in Japan. He claims he solved another war while he was overseas. And so he's just doing his thing. And it's almost as if the government shutdown doesn't matter to him at all.
Jonathan Lieber of Eurasia Group interviewed this morning on Surveillance. Again, repeating our top story, we are seeing a surge in Nokia shares. They're up now by just about 18%. NVIDIA planning to make a $1 billion equity investment in Nokia. Recapping, stocks higher. S&P at a record, up another 6 right now, up by about 0.1%. Balance of power continues in Washington. Back we go once again. Your host, here he is, David Gura.
Charlie, thank you very much. David Gura in for Joe Matthew and Kaylee Lyons on this Tuesday, and I'm sticking with what I heard there from Jonathan Lieber, the Eurasia Group. A totally different world the president is living in his own reality, pursuing these trade deals as this government shutdown continues here in Washington. Well, in Tokyo, the president had his first face-to-face meeting with the new Japanese prime minister, and it was interesting just to chart sort of how these two leaders emerged from that conversation, talking about, yes, the policy that was high up on that agenda, but also just how they talked about one another, the praise they had for one another, and the rosy assessment they had for the relationship between the U.S. and Japan.
This will be a relationship that will be stronger than ever before, and I look forward to working with you. And on behalf of our country, I want to just let you know, anytime you have any question, any doubt, anything you want, any favors you need, anything I can do to help Japan, we will be there. We are an ally at the strongest level.
An ally at the strongest level. I should say there was an exchange of gifts, the president giving the prime minister a hat, ball cap that says Japan is back, the prime minister of Japan giving him Shinzo Abe's putter, the golf club, along with the nomination for the Nobel Peace Prize, something that we now see kind of de rigueur when the president meets with these world leaders. Tyler Kendall, my colleague, is traveling with the president in Asia and joins us now from Tokyo. We can talk about the atmospherics here in just a moment, but let's get to the deals, so much as we had them during the course of this meeting. What was discussed by these two leaders when it comes to policy, Tyler?
Yeah, hey, David, good afternoon. Well, we did get a slew of headlines today, really designed to bolster the U.S.-Japanese relationship, but also it appeared to counter China. We saw these two countries sign today a critical minerals deal, as well as a memorandum of understanding when it comes to shipbuilding. About a third of the global fleet right now is contained by China. Of course, as you well know, when it comes to critical minerals, China has a huge grip on that market. About 70% of global rare earth supply came from China last year alone. 90% of the processing also from China. So these appear to be a bid to enhance both nations' cooperation on these key industries, but the actual agreements themselves are a little sparse when it comes to tangible details. Though we did get some more tangible details when it comes to Japan's planned investments in the U.S., actually the most details to date, as we have been long awaiting additional measures when it comes to this pledged $550 billion investment fund that Japan had committed to in exchange for a lower tariff rate, that preferential tariff rate of 15%, also importantly extending to autos. Now, today, President Trump hosted a reception with business leaders that have convened here in Tokyo, including many prominent Japanese executives, including those from SoftBank and Toshiba. Those were two companies that President Trump really highlighted his personal relationship with in particular, as we've seen David play out how important personal relationships really have been on this trip. I'll also mention, though, that we saw some U.S. executives here in Tokyo as well, such as Apple's Tim Cook, who was seated next to the Treasury Secretary Scott Bessent during that reception earlier today.
Tyler, I listened to a bit of that speech this morning. I'm curious what stood out to you as you lent an ear to it as well. The president invoking Ford F-150s, talking about Toyota building more plants in the U.S. There was kind of a lot of stock political rhetoric in the speech as well. We focused on kind of the defense spending aspect of the meeting between the prime minister and the president. What stood out to you from that speech, the remarks that he gave to those business leaders?
Well, really underscoring that event in general was this competition with China. All of the business leaders in that room represented critical sectors that the U.S. has identified as essential for upping the U.S.'s competition when it comes to Beijing. You mentioned defense spending. I have to say, this new prime minister here in Japan only had a matter of days to prepare for President Trump's visit, but she did appear to take some key steps ahead of time that paved the way for a successful visit from President Trump, and that included the country announcing that it's going to expedite its military spending to GDP ratio. They're trying to get to 2%. She wants to bring that timeline up to 2 years earlier than previously expected. That was something that was broadly applauded by this White House. And President Trump himself coming out and saying that he received a pledge from the Japanese Prime Minister that they're going to start to boost their imports when it comes to U.S. military supplies. So that was sort of playing in the backdrop here as we got President Trump's remarks. He told the room that he is expecting a good meeting this Thursday with Chinese President Xi Jinping. Of course, there were some other moments there. He commented on the future of the Fed chair. He was speaking generally about the economy, saying that he would still like Treasury Secretary Scott Bessent to be up for the role. But as the Treasury Secretary has told us reporters in Washington many times, he's not considering himself in the running because he thinks he has the best job in Washington. So it was interesting to hear President Trump's thought pattern here. But the really underlying message in all of this had to do with building up that competition with China in an attempt to, of course, bolster the U.S.'s competitiveness abroad.
Yes, we heard the president acknowledge the fact that Scott Bessent, the Treasury Secretary, has told the president he's not interested in that job as Fed chair. You're outlining for us really expertly here, Tyler, the kind of economic statecraft, the might that it's trying to present, the U.S. is trying to present here against China economically again. There was also an attempt here to show off military might as well. We saw these two leaders make their way to the USS George Washington, this major nuclear-powered aircraft carrier south of Tokyo today. The president gave another speech there as well. A kind of familiar scene now as his second term gets underway of him speaking to and against the backdrop of U.S. military personnel and kind of diverging from talking about policy to talking about politics. What stood out to you from that speech from the president today?
Yeah, you're exactly right, David. It recalled images of the campaign trail, really. We heard President Trump do his signature weave. He hit on a bunch of topics, everything from immigration to crime and the National Guard and our troops. So it really was sort of a weaving tale from the president earlier today. He did invite on stage the new Japanese prime minister, of course, trying to paint this picture that these two allies are so closely connected, particularly when it comes to defense cooperation, which brings us all back to the main topic that we're talking here, which of course has to do with South Korea. With China. Now, I mentioned South Korea, though, because we do have some new reporting today out of Bloomberg News that the U.S. is expected to ink a cooperation deal with that country when it comes to artificial intelligence. We know that the U.S. is looking closely at how this technology could be used for defense purposes. So that's something I'm keeping my eye out as we look ahead to later this week, because President Trump is resting right now in Tokyo. But in the morning, your evening, he's getting up and he's flying straight to South Korea for some pretty hefty meetings.
You mentioned the corporate leaders who were in that reception that the president held. Jensen Huang, the CEO of NVIDIA, not there, but the president says he looks forward to seeing him tomorrow. I should say Jensen Huang speaking here in Washington as we're underway here on Balance of Power, delivering a keynote address at a developers conference here in Washington. And we'll monitor that, of course, for headlines as that speech continues. Any sense of what they're going to discuss when he finally makes his way to Asia? Sounds like the president is anticipating his arrival in South Korea.
So this is going to be on the sidelines of the APEC CEO Summit, which is happening on side-by-side track with the APEC Leaders Summit. So that's why you're seeing a lot of executives in this region, but also a lot of world leaders coming to Asia. Now, I can say that I personally have my eye on, of course, what the future of U.S. export controls related to semiconductors looks like when it comes to China, because we heard from the U.S. Treasury Secretary earlier this week saying that the U.S. has no plans to loosen its currently in place export controls related to advanced chips in what appears to be this framework teed up for President Trump and Chinese President Xi Jinping to finalize. But that statement from the Treasury Secretary could ultimately work to be a step back for NVIDIA's bid to try to regain access to the Chinese market. We know that this is something that Jensen Huang has been lobbying Washington for. It's partly why we're seeing this huge event in the nation's capital today, trying to get perhaps lawmakers on board with this broader vision when it comes to more market access for NVIDIA's products. So working very closely here with the administration on that. So I'm going to see if there's any sort of development on that front. As you mentioned, President Trump saying that he's looking forward to seeing the NVIDIA CEO here in Asia.
Tyler Kendall traveling with the president in Japan, making her way to South Korea soon as well, as we continue to follow his movements here on Balance of Power. And a headline crossing the terminal elsewhere in the world, Benjamin Netanyahu, the Prime Minister of Israel, ordering the IDF to carry out powerful strikes on Gaza. More to come here on Bloomberg Radio.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story, this out of Israel, where Israeli Prime Minister Benjamin Netanyahu has instructed the military to immediately carry out strikes in the Gaza Strip. That, according to the Prime Minister's office in a post on X. That story breaking right now. We'll keep you up to date on any developments. The Dow, the S&P, NASDAQ, all advancing right now. We got a rally in the world's largest tech companies, and that is leaving stocks at records. S&P right now up another 3 at 68.79. Gain there of just under 0.1%. The Dow up 179, gain of about 0.4%, while the NASDAQ Composite Index is up 98, higher now by 0.4%. An up day for much of the market, a down day, however, for small cap shares of the Russell 2000 index, slumping by 0.1%. But our Mag 7 index keeps on going. We got 5 out of the 7 names in that index reporting both tomorrow and Thursday. Mag 7 index up now. The Bloomberg Mag 7 index up by about 0.9%. 10-year, 3.98%, with a 2-year, 3.49%. Gold continues its descent, down another $19 the ounce, down 0.5%. $39.61 on the precious metal. West Texas Intermediate crude down 1.8%, holding just above $60 a barrel. Was trading below $60 a few minutes ago. Trump Media and Technology Group plans to make prediction contracts available on its Truth Social network, allowing users to bet on events ranging from political elections to election rate changes. That, according to an announcement today from Truth Media and Technology Group. Again, recapping, we do have stocks higher for now. S&P up by 4, gain there of 0.1%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you very much. David Gura here in Washington, in for Joe Matthew and Kaylee Lyons. And one of the things I like to do when I'm in town is walk by the Walter Washington Convention Center, just a few blocks away from Bloomberg's headquarters here in D.C. And this week, NVIDIA playing a very prominent role in the life of that part of the city, holding a developers conference, a lot of companies there participating in that event as well. And Jensen Huang, the CEO of that company, we were just talking about him with Tyler Kendall a few moments ago, delivering one of his famed keynote addresses. You see him there in his characteristic leather jacket, strolling the stage and making all manner of announcements. We'll bring you updates on that as we get them. Huge announcement broke just before that speech got underway. We learned that NVIDIA is going to make a $1 billion equity investment in Nokia, the Finnish cell phone company, as it tries to reinvent itself. NVIDIA buying 166 million shares in that company. It'll hold about 2.8% of Nokia when all is said and done. This is part of kind of a broader partnership. For more detail on that and the celebrations underway at the convention center, Eric Weiner joins me now, senior editor at Bloomberg News. And Eric, let's start with this deal and what we know of it so far. I'm very curious how Nokia is evolving from the company that made kind of a wonderfully primitive cell phone I actually miss into its newest iteration, how it's looking at AI and the role here that NVIDIA might play going forward.
Well, a big part of the AI play is where it's going to show up. This is a big bet on Apple. Although they haven't actually really invested all that much in AI, the idea is that the iPhone will eventually be where AI plays out. So if you're NVIDIA and you're thinking, well, let's see if we can compete, Nokia isn't a bad bet because you can really have some influence on kind of how the customer touches what you're building.
When I laid out the terms of this, 166 million shares that NVIDIA is buying here, what do you make just of the magnitude of this deal? What does it say to you just about the state of investment in and interest in AI at this point in time?
Well, shockingly, it's pretty small, actually, when you consider what I know it's $1 billion. But when you're looking at what the big companies that are going to be reporting tonight are spending, you're talking about something in an order of magnitude of about $400 billion. So a $1 billion investment is, to Jensen Huang, is kind of pocket change. That said, it really speaks to kind of how they're diversifying out. This isn't necessarily about building into chips or building into the technology. It's building into the way that consumers are going to be accessing it. And that's something that's further on down the line for AI, but it also indicates that the companies are actually thinking about that. And the returns on the investment are going to be important over time, and kind of how this spits out will be in things like, Nokia or, say, Apple.
There are many great cities in this country with convention centers. Why has NVIDIA decided to come here? What does that say about this company's ambitions when it comes to its relationship with the federal government?
So we did a big story on that this weekend. The speculation, they've done events in D.C. before, so we have to say that. Wong has never done a keynote at those events. And when you look at how much the White House has influence the market by sort of investing in Intel and other companies, NVIDIA really can't afford to be left behind. So the idea that they have come to DC, that Wong is on the stage now in the city and is speaking directly to the Trump administration and various different representatives on Capitol Hill, it kind of tells you that this is a new phase. These were companies that like to stay in their home markets, were very happy to be in Silicon Valley, and they've kind of been pulled out into DC, and that's a really interesting step for them.
Jensen Huang speaking now on stage at the convention center, saying he's going to discuss AI, 6G, quantum, and robotics over the course of this speech. Again, we're going to be listening closely and bring you headlines as they cross the Bloomberg. Eric, put this in the broader context of how investors are looking at AI. There's a lot of criticism, there has been of late, of kind of the circular nature of the relationship between companies like NVIDIA and OpenAI, all manner of them, investing in one another. And I think on the heels of that, you see a pop in one company's stock, and then maybe investors wondering when there's going to be proof in the pudding. Talk a bit about sort of that narrative that's emerging and kind of gathering more steam here on Wall Street.
Those are really the two hot button issues that you touched on. The first is, when are we going to see the returns on the capital outlays, and what are they going to mean? You have a tremendous amount of spending going on, and if you look at past technology periods of technological euphoria, you could go back to the fiber build out in the early 2000s. It can take a while. So you don't necessarily know. You can know that the technology is going to be the leading edge. You don't necessarily know when that is going to happen. And so what investors really need to start seeing is some payoff from this spending spree. Now, you do expect it to take some time, but you also want to see progress. The other idea is, if they're all investing in each other, and they are all propping each other up by, we're going to hand you this money, you're going to take this investment, you're going to do this, we're going to do that, and they're not necessarily involving other firms. If one gear, say it's like an engine, one gear flies off, you can sort of see how the whole thing slides down. And that's really the big risk when you have this kind of small circular environment. And that doesn't mean this is wrong. These are the companies that are developing it. These are the biggest technology companies in the world. But when you have this small circular environment, if any capital gets cut off, if spending commitments don't get made, it kind of bleeds over into everything else. And you're also talking about, like, this week, you have 5 companies reporting that Charlie was talking about in the Mag 7. They represent about 25% of the S&P 500. So if they start sliding, this has a much larger impact on the broader market than anything else possibly could.
Eric, really appreciate your time. Eric Weiner, Senior Editor for Equities, joining us from New York with that update on NVIDIA as Jensen Huang delivers his keynote address here in Washington, D.C. I want to pivot here to another story, and that involves Hurricane Melissa, Category 5 storm in the Caribbean right now, going to make landfall in Jamaica in just a matter of minutes, according to forecasts. It's already caused several deaths in the Caribbean, and government officials and meteorologists really warning about its might and the potential to cause serious damage, injury, and death on the island of Jamaica. Lauren Rosenthal joins us now. She's a weather reporter for us here at Bloomberg News. And Lauren, I just want to start with sort of where we are. This has been a challenging storm to forecast. It's a massive storm. I'll ask you first just to describe it and give us the best sense we have right now of sort of what this impact is going to look like.
Yeah, so Melissa has a relatively small footprint, but Jamaica's a relatively small island. Right now, the storm is packing what we call sustained winds of 185 miles an hour. It is a very strong Category 5 hurricane. Jamaica has not seen one of those in records dating back to the 1850s. So this is a fairly unprecedented threat that the island is facing. Those winds are strong enough to demolish structures in its path. The island's prime minister has warned, Jamaica's infrastructure is not up to the test it's about to be put to. So pretty shortly here, we could see widespread devastation across most of the country.
Talk a bit, if you could, just about the geography of this island and how that stands to complicate things. We think of Jamaica's beaches, of course, but this is a mountainous country, and I wonder how that affects the way that this storm is going to come on shore.
Sure, some of the tallest peaks in Jamaica are more than 7,000 feet tall, which matches or exceeds peaks in the eastern U.S. Those winds that the storm's packing will feel stronger at higher elevations. The National Hurricane Center in the U.S. has warned wind speeds could feel up to 30% stronger on higher elevations, and it's been raining for days leading up to the storm's approach. So terrain is really soggy. Trees, buildings could easily give way, and we might see some really substantial landslides on those hills.
I look at the latest Bloomberg reporting on this, and a verb stands out to me: ambling. The storm has been ambling along at about 7 miles per hour. How does that pace, the pace of movement of this storm, affect the impact it's going to have?
Yeah, I mean, in recent days, it's been moving slower than walking speed. Like you or I could have easily outpaced it. That means the storm has been sort of parked offshore, gathering energy from extremely warm waters in the Caribbean Sea. It's also drawing in moisture from the surrounding environment. And kind of as I referenced a moment ago, it's been raining for days, not just in Jamaica, but in Haiti and the Dominican Republic. So we've already seen flooding and landslides as a result. We are going to see some really significant waves and potentially what we call storm surge. So essentially the storm pushing water ashore onto Jamaica's beaches as it passes over the island.
What is the counsel that experts, including the Prime Minister of the country, have given people who live there in the face of this mounting disaster? What should people do who are on the island?
Yeah, it is not safe to go outside. It is not safe to go outside as the eye of the hurricane passes over. Conditions can look calm as that's happening, but there is still a back half of the storm following in with strong winds and really devastating rain. So experts and local officials have warned people to hunker down wherever they are, to take shelter in the most inner portion of whatever building or house they may be in. The U.S. Hurricane Center also advised people to cover themselves with a mattress. Think about putting on a helmet to provide extra protection. So it's a pretty extraordinary warning.
Very quickly here, where does it go after Jamaica? What do we know of the path? We've got about 20 seconds.
Yeah, the storm's on track to strike Cuba next. We could see that within the next day or so. There are threats also and warnings up for the Bahamas and Bermuda, Turks and Caicos, so really a threat across a pretty wide swath of the Caribbean. Right now, the storm is not expected to have direct impacts on the United States. We could see rough waves and choppy surf at eastern beaches, but no landfall for the U.S.
Lauren, thank you very much for the reporting. Lauren Rosenthal, Bloomberg weather reporter, her colleagues and she continuing to report on this storm. As I say, we're very, very close to that storm making impact on Jamaica, and we'll be tracking that here on Balance of Power as the show continues. Coming up, we're going to go back to Japan, where President Trump remains, before heading to South Korea. He spoke to military personnel on an aircraft carrier there. Our political panel is going to weigh in on the message the president conveyed to those military personnel. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all very much in the green right now. Rally in the world's largest tech companies, leaving stocks at records. Indeed, could see a record close today on the S&P. All of this amid speculation that AI will keep driving earnings for the group that has powered the bull market. S&P up 10 right now at a record 68.85, up by about 0.2%. The Dow higher by 233 points right now. Dow Industrials up 0.5, and we've got NASDAQ up 132 for the NASDAQ Composite Index, a gain right now of just about 0.6%. 10-year at 3.98%, with the 2-year currently yielding 3.50%. Spot gold down another $28 the ounce, down 0.7%, $39.54. West Texas Intermediate crude 60.12 a barrel, was trading earlier today below $60, down now by 2%, and Bitcoin up 0.4% at 114,964 on Bitcoin. Day 28 of the government shutdown. The stock market pushes higher at a record, but what about the broader potential impact of the shutdown and what it means for either the market or the economy? Kim Crawford is Global Rates Portfolio Manager at J.P. Morgan Chase. She was interviewed on Bloomberg Television.
You know, if it does continue lengthening for a significant amount of time and more paychecks get missed, then you go into the realms of non-linearity and discussions around more permanent scarring. But for now, we still think there are guardrails in place and that the macro impact will be relatively short-lived.
Kim Crawford of J.P. Morgan Chase. The state of Texas is suing Johnson & Johnson and Kenvue, alleging the companies hid the risks of autism and other disorders if mothers take Tylenol during pregnancy. The suit comes weeks after President Trump claimed the drug caused autism in children, a link that has not been proven. Kenvue shares down 3.5%, J&J down now by 1.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Balance of Power continues. And back we go to Washington. Once again, your host, here he is, David Gura.
Charlie, thank you very much for that update. Do appreciate it. David Gura in for Joe Matthew and Kaylee Lyons here in Washington on Balance of Power. And it's become a familiar tableau, the president speaking to military personnel. And the speech goes from focusing on policy to focusing on politics. That happened today just south of Tokyo on the USS George Washington. Here's a taste of what the president said on that aircraft carrier.
Unlike past administrations, we will not be politically correct. You don't mind that, do you? When it comes to defending the United States, we're no longer politically correct. We're going to defend our country any way we have to, and that's usually not the politically correct way. From now on, if we're in a war, we're going to win the war. We're going to win it like nobody ever before. You know, we'd go in, we'd blast the hell out of countries. Shouldn't have gone in. By the way, if you don't go in, that's even better. We don't have to go in. Peace through strength.
This president, once again, proudly doing what his predecessors would not. I think that a clear example of that. Our political panel joins us now. Adam Hodge, managing partner at Bully Pulpit International, Democratic strategist and Bloomberg Politics contributor, and Greta Joins, policy director at Brownstein Hyatt Faber Schreck, and a Republican strategist. Great to have both of you with us. And Adam, let me start with you and just get your reaction to that. This isn't novel, as I said out at the top there. This is something we're seeing time and time again, and perhaps we're becoming inured to it. But there's something different about this president's approach to speaking on matters of politics in front of military personnel.
There's no question. I mean, look, David, we all know politics used to stop at the water's edge, but Trump, like with most things, has thrown the conventional wisdom and the way that we typically do business out the window. I think that you look back at his speech with Pete Hegseth to the generals when they called him back into Washington. And I know this has sent real shockwaves throughout the military establishment. I'm talking to former colleagues of mine from the National Security Council around the national security establishment. They just feel like this is beyond the pale, and putting politics in front of the troops sends the message that they're arm of his political ambition, not the arm of the Constitution and the military. And so that is where I think you see a lot of objections from some Democrats and even some sort of middle-of-the-road Republicans who just feel like this is just a bit too far. But Trump doesn't seem to care about that, and we know that from just how he's operated.
Greta, how about you? Do you think it's a bit too far, as we hear Adam there invoking the fact that some Republicans do feel that way?
No, I don't. I think that the president won his election based on the idea, and I think he reiterated this today, reawakening the warrior spirit, not being politically correct, and pushing back on some of the narratives that Democrats, and in particular progressive Democrats, tried to push on our military over the past 4 years.
I wonder what you make of the motivations for it. So is this a president who, I don't want to say has an inability to focus during a speech like this, but can meander, can weave, as he is so fond of saying, or is there something more deliberate at play here in him bringing up these issues and talking about these issues in front of and to military personnel? Greta.
I think he talks about these issues to military personnel because military personnel respond positively to what the president is saying. I think if you watch the speech, and I think if you watch the reaction he gets from the crowd, they are overwhelmingly supportive. I think that the enlisted are certainly appreciative that a lot of the DEI type of initiatives that were thrust on them over the past 4 years are now going by the wayside, and they're focusing on what the core belief of the Trump administration was coming in, which is peace through strength and strengthening the military and empowering enlisted individuals to have the opportunities to be successful.
Adam, I'm curious how you see that being transmitted to military personnel. So if that indeed is the message, how are they interpreting that?
I mean, I just know from having conversations with people who are, serving, who have served, and they just feel like this is just not the country that we should be. I mean, it's one thing to have, peace through strength, but a lot of the efforts around getting rid of quote unquote DEI in the military really is about injecting mediocrity into the military. I mean, look at some of the predecessors of Pete Hegseth and some of his, who just do not add up to quite the same level of expertise and experience that have served America well for decades. And I think where you've seen the president misstep is injecting more politics into the military. Again, the military should not be a political arm of the White House. It should be squarely in service of the Constitution, the rule of law, and serve certainly at the direction and guidance of the president, but not from his politics. And I think what you're seeing, injecting troops on the streets of the U.S. To do a mission that they're not trained for, they will do whatever the president, as his commander-in-chief says, but they're not trained to do that mission. And so that's where I think it creates a split between where the military is and where the American public is. And that's why I think you've seen it be unpopular among most of the American people.
And I'm glad you've brought us here because I wanted to highlight a portion of the speech in which the president talks about that, his efforts to send the National Guard to cities across the United States. Let's take a listen to what he had to say on that front during that speech south of Tokyo today.
What we're doing is we're going to make it totally safe. It'll be very safe very soon. And we're doing that with all of our cities that are troubled. We have cities that are troubled. We can't have cities that are troubled. And we're sending in our National Guard. And if we need more than the National Guard, we'll send more than the National Guard because we're going to have safe cities. We're not going to have people killed in our cities.
Let me ask you just about that line in particular, Greta. It stood out to me. The line being, if we need more than the National Guard, we'll send more than the National Guard. So Adam, just a moment ago, highlighting some of the difficulties we've seen of National Guard personnel having to do work that they wouldn't have done customarily. Here you have the president seemingly invoking the fact that he might send other members of the military to these U.S. cities. Does that give you pause?
I would think that if I lived in a city and I live just outside of Washington, D.C., my office is 2 blocks away from where a House intern was shot going to McDonald's. I think that if there's an opportunity to get more support to make cities safer, that Democratic mayors should take it. I'm sort of mystified at why they do not. But in the event that they believe that they're willing to make the investments and really strive to make cities safer, as the president ran on and the American people elected him to do, then he certainly has the opportunity to work with mayors like Mayor Lurie in San Francisco, who had a conversation with the president, said that this is what we are doing differently in San Francisco. Give me time and the opportunity to be successful. The president spoke with him at length. He spoke with other individuals that he knows who live in the city who said that they thought that the president should give him a shot. So, you can do one route, which is whatever the heck Governor Pritzker is doing in Illinois, or you can try to work with the president and find solutions that are going to keep people safer. If Democrats' message is we are fine with the amount of crime in these cities, I mean, that's a strategy, but it doesn't seem like a very good one to me.
David, just
let me stick with you just on Go ahead. Yeah, Adam, please jump in.
No, I was just going to say, I think actually what Greta is alluding to, I think there actually is a lot of common ground between Republicans and Democrats on wanting to see, our streets in the city, in our cities across America, to be safe places to walk and live and raise a family. I think the key difference, though, is like having trained police in the cities who are trained to do that job, who have training to do that mission. And I think back, where I live, I do live in the district, and the Congress has cut, and threatened over $1 billion of DC funding that would go to fund more troops, more cops on the streets in Washington, D.C. that would keep our city safer, who would be trained to do the mission that the National Guard is just not trained to do. So I think it's a question of how you apply your resources. And if the president was serious about this issue, I think he'd give D.C. the funding that they need to put more cops in the streets.
Greta, I just want to return to the efficacy of this. So this was rolled out first in Washington, D.C., where both of you live. And I looked as I came down here, 12 people shot over the weekend in 7 different locations. And the president's very fond of trumpeting the fact that D.C. is much safer. We've seen him walk from the White House to a steakhouse to get a meal, again, saying that he's made the District of Columbia a much safer place. How do you think of the efficacy of this in light of the fact that we still see startling crime statistics like that here in D.C.?
I mean, it is certainly going to be a challenge. We have years of ineptitude in Washington, D.C. to try and overcome. And I think one of the main problems is that nobody wants to be a cop here, because unfortunately they are hamstrung by a very progressive attorney general here in Washington who refuses to prosecute individuals for the crimes that they commit. So what is the point of trying to come around and be a cop and, arrest people just to see them released hours later to commit the same crimes? I think ultimately that is where we're going to have to go, and putting more people on the street is certainly helpful, and trying to stop crime as it happens and ultimately be a deterrent. But frankly, the George Soros judiciary is really trying to prevent any sort of major changes in how we're arresting people and prosecuting crimes. And that has to be a part of the discussion as well.
Adam, I imagine that the audience for the speech that the president gave wasn't in the Pacific, but in the Pacific Northwest, in a city like Portland, where the president's threatened to send in troops. How should the mayor respond to or react to what the president said today?
I mean, what you've seen from the mayor and governors across the country is they're going to stand up for their cities and stand up for their own autonomy to govern their own localities, as is spelled out in law and in the Constitution. So I don't think that's going to necessarily change the way that the mayor of Portland reacts. I think where Democrats have to get better is just delivering on the things that people care about, and putting points on the board to keep people safe, put food in their stomach, put a roof over their head that is affordable. And that's where I think we should focus on. And yes, that includes having safer streets and safer communities. I think that is something that Democrats should be willing to work with Republicans on. But it's not going to be by resorting to name calling or talking points about George Soros funding a judiciary. It's going to be on what are the common sense solutions that actually reduce crime. And putting our National Guard troops on the street for a mission they're not trained for, I don't think, and a lot of Democrats and even some Republicans don't think, is actually the solution to the problems that we face.
Greta, in the minute we have left here, I think Adam's talking about comedy and having conversations among local and federal leaders and Democrats and Republicans. I just wanted to get your perspective in the minute we have left here, Greta, on sort of the status of what's going on Capitol Hill when it comes to the shutdown, where there really isn't any comedy to speak to, any conversations happening. Are there off-ramps that you see here in the near-term horizon?
No, and Frank, in fact, I'm not even really sure exactly what Democrats are specifically asking for at this point. I know that they have already turned down a year-long extension of the ACA subsidies, which frankly was surprising to me because it would have gotten them beyond the midterms, and I think they could have probably claimed victory to that. So I think that we're trying to figure out what the off-ramp is here. I don't know if it is ultimately they want to blow up the filibuster, but this shutdown existing in perpetuity is ultimately not going to be helpful to either side. And frankly, considering how tight the polling is across the board on it, I don't really see either side winning. So I don't know. It's a mystery to me how we're going to get out of this.
Greta, Greta and Adam, thank you both very much. That's Greta Joins, Policy Director at Brownstein Hyatt, Farber Schreck, and Republican strategist Adam Hodge, Managing Partner at Bully Pulpit, International Democratic strategist, and a contributor here at Bloomberg Politics. As Bloomberg Balance of Power continues here on Bloomberg Radio and YouTube, we're looking ahead to a conversation I'm going to have here with Matt Whitaker, the U.S. Ambassador to NATO, about the path forward for Ukraine. Also going to keep track of that storm, Hurricane Melissa, slated to hit Jamaica in just about 30 to 60 minutes' time. Continuing to follow that throughout the day here on Bloomberg Radio.
From Washington, D.C., this is Balance of Power with Joe Matthew.
I'm David Gura in Washington, in for Joe Matthew on this Tuesday, where a lot's happening here in the nation's capital, but also around the world. Of course, this is the 28th day of the federal government shutdown, looking ahead just a couple of days to when SNAP benefits will expire. Some 40 million Americans slated to lose those benefits. Also happening here in Washington today, Jensen Huang, the CEO of NVIDIA, delivering a marquee keynote address at the convention center, talking about quantum computing, talking about robotics, the role that NVIDIA can play in the economy more broadly. and we suspect, talking about the deal that was announced just a short while ago with Nokia, the Finnish cell phone maker. I mentioned a lot happening around the world. Some news out of Israel. The Prime Minister of Israel, Benjamin Netanyahu, announcing just a short while ago he's authorizing powerful strikes in Gaza, raising concern about the fragile ceasefire that has been in place there in that part of the world. As we continue to spin around the globe, of course, the President of the United States right now is in Tokyo, in Japan, wrapping up a leg of his trip through Asia there. He met with the Prime Minister of Japan for the first time. They had their face-to-face meeting, talked about deals and trade and the prospects of future collaboration. He is now looking to go to South Korea on the heels of that trip, the final stop on that tour. We're going to get into all those details with my colleague Tyler Kendall and talk about the wider geopolitical implications of this trip and the news I just mentioned with Matthew Whitaker, the U.S. ambassador to NATO, who's going to join us live here on Bloomberg Television and Bloomberg Radio. But first, let's get a Bloomberg Business Flash with my colleague in New York, Charlie Pella.
Right, thank you very much, David Gore. Indeed, we got you covered globally. That's what we do here at Bloomberg with the Dow, the S&P, NASDAQ, all very much in the green right now. We're close to session highs right now. By implication, a record for the Dow, the S&P, NASDAQ, Russell 2000 index back in the green. A little changed, up under 0.1%, keeping it all in context. S&P right now at 68.92, closing in on 6,900. We're looking at a gain now of just about 17 points, up 0.2%. The Dow up 345 on the industrials, up 0.7%. NASDAQ Composite Index up now by 0.6%. The Mag 7 Index pushing higher by 1%. 5 out of 7 members of the index will be reporting today, tomorrow and Thursday. And again, the index advancing by 1%. The 10-year yield 3.97% with the 2-year 3.49%. Gold is down $24 the ounce, 39.57, down 0.6%. Silver heading in the other direction, up by 0.5%, 47.07 on silver. West Texas Intermediate crude down 2%, 60.10 a barrel. Earlier in the session was trading below $60. Bitcoin up 0.8% right now at 115,410. NVIDIA plans to make $1 billion equity investment in Nokia as the AI sector's kingmaker, bets on the Finnish company's pivot from mobile networking gear into artificial intelligence. Nokia shares, they're higher now by 25.8%. NVIDIA up by 1.3%. All of this is NVIDIA's 3-day AI conference called GTC is underway in Washington, D.C. All eyes, of course, on the keynote address at the Convention Center by CEO Jensen Huang. While GTC events have been held in Washington before, this is the first one to feature a keynote from the CEO. Again, NVIDIA shares, they're up by 1.3%. So recapping here, we do have stocks pushing higher. S&P 500 index, again, very close to session highs. Checking one more time, up 20 points right now, up by about 0.3%. Balance of power continues right now in Washington. Back we go, and once again, your host, here he is, David Gura.
Charlie Pella, thank you very much. David Gura in for Joe Matthew on this Tuesday. And for our listeners on radio, we saw Jensen Huang there strolling the stage at the Convention Center holding a giant version of what I assume is a Nokia chip, some sort of microchip. Again, we'll bring you headlines from his comments as they cross the Bloomberg. I was kind of going around the world, giving headlines of what's happening right now. Is remiss in not mentioning what's happening in the Caribbean. We've had landfall of Hurricane Melissa, a massive storm, Category 5 storm, and we note here it's one of the most powerful hurricane landfalls of record in the Atlantic Basin, and we'll bring you an update on what's happening there in Jamaica as this hour continues. I want to go first, though, to Japan, where President Trump is on the second-to-last leg of his trip in Asia. The president met face-to-face with Japan's new Prime Minister, Prime Minister Takaichi, in Tokyo, and the two leaders emerged from that meeting talking an awful lot about the relationship between the U.S. and Japan, and also lavishing a lot of praise on one another. Let's take a listen.
This woman is a winner. So, you know, we've become very close friends all of a sudden because their stock market today and our stock market today hit an all-time high. That means we're doing something right.
You see the thumbs up there from the Prime Minister there on the USS George Washington, where the President was speaking. I should say there was a gift exchange that took place over the course of the day. The President prepared hats that said, "Japan is back." black ball caps. He gifted those to the prime minister. She gave him a putter that belonged to Shinzo Abe, the former prime minister who was assassinated, a close friend, the president said, of Donald Trump, and also a nomination for the Nobel Peace Prize. My colleague Tyler Kendall has been burning the midnight oil. She's in Tokyo covering the president's trip. Tyler, get us up to speed here. I mentioned those gifts. I mentioned the obvious familiarity that was developed between these two leaders over the course of the meetings and time they spent together today. What came out of this in tangible terms? Yes, they now have kind of a path forward for talking about real issues. When it comes to trade, when it comes to business issues, what do we learn from these two leaders today?
Well, David, the central theme today here in Tokyo was bolstering the U.S.-Japan alliance, but the underlying theme appeared to be countering China. Just look at the headlines that we received after that expanded bilateral meeting between President Trump and the new Japanese Prime Minister. One is that President Trump confirmed that Japan is going to boost its imports of U.S. military supplies. The second is that the countries entered into an agreement on critical minerals. It appears to be some sort of cooperation pact, though we're still waiting some additional details there. And then also they signed a memorandum of understanding when it comes to shipbuilding, another industry that we know China really has a grip on. So that was sort of the underlying theme here, trying to bolster up against China. We even saw this in some of those investments that came out of today as President Trump hosted a reception with business leaders at the U.S. ambassador to Japan's residence here in Tokyo. The common theme among all the attendees there tonight, from Apple's Tim Cook to Anduril's Palmer Luckey, was that they all represent those industries that the U.S. has deemed absolutely critical when it comes to competition with China. Now, I do want to point out that Japan is actually already the top investor, foreign investor in the United States. Government data shows us that Japan invested more than $750 billion in the U.S. last year alone. Now, we know that they're trying to make good on this pledge for this $550 billion investment fund. That is, of course, as you well know, part of the deal with the U.S. to receive that more preferential tariff rate of 15%.
Tyler, I'm curious what happens next on this trip, if there's any likelihood that you're going to be stopping in Pyongyang on the way to Seoul or on the way beyond it. The president had teased that he was looking perhaps to meet with the North Korean leader. What do we know of what's likely to unfold here on the last leg of this trip?
Well, it doesn't seem like the latter is going to happen, but you're right. President Trump did allude to it, but then ended up telling reporters that he didn't think he would have time, but he does welcome a meeting with the North Korean leader when the time is right. We are looking ahead, though, to two other critically important meetings. One, of course, is with South Korea's president, as that country is still trying to ink the finalized version of their trade deal, which would also see a mirrored 15% tariff rate. Much like Japan, it would also extend to autos, which we know is really critical for that country. President Trump also teasing earlier that he's set to meet with the NVIDIA CEO Jensen Huang on the sidelines of the APEC CEO summit. That's also happening tomorrow in South Korea. But then we are really just beating the drum ahead to Thursday, when we are going to have this highly anticipated sit-down between President Trump and Chinese President Xi Jinping.
I think it's safe to say Jensen Huang will walk off that stage at the convention center here in Washington, make his way to a plane to get to that meeting in time. Tyler Kendall, thank you very much for the reporting. We look forward to more of it as the president's trip continues. I want to stick with defense spending, if we could here. And as Tyler was mentioning, that's been really the substance of a lot of the conversations the president has been having on this trip to Asia. It's a theme he returns to time and time again when he meets with foreign leaders. It's something that he thinks is incredibly important, that foreign nations spend more on their own defense. It is part of my next guest's job to convey that to NATO allies in particular. My next guest, Matthew Whitaker, the U.S. ambassador to NATO, who joins us now from Brussels, where, of course, the alliance is headquartered. Ambassador Whitaker, let me start by asking you just sort of how there's a common thread between what we're seeing in Asia and, again, that message of increased defense spending that you're conveying to European allies. How is this part and parcel of a larger kind of foreign policy perspective that the president has?
Yeah, well, first it started with Donald Trump being elected last November and saying early on after his election that all of our allies, especially our NATO allies, needed to boost their spending to 5% of their gross domestic product. And by what we accomplished in June of this year at the NATO summit, we kind of set that as the benchmark now worldwide. I'm not sure we fully anticipated that. I'm sure Donald Trump thought about it, but now that is the benchmark, the 5% on defense spending. And, you know, the nice thing about the NATO alliance is it's the 32 countries, certainly, that are members, but we have partners all over the world, including our Indo-Pacific partners, Japan, South Korea, Australia, New Zealand, and they are great on the interoperability, on the standards that we set for munitions and weapons. And so it's sort of being inculcated across all U.S. allies. And this is really good news, not only for the strength of the United States and our alliances, but it's also good for our weapons and defense industry, but it's also good for all of our allies, because that strength is going to allow all of us to project power and obviously address any threats, whether it's the Chinese threat, whether it's the Russian threat, or whether it's other threats that are maybe not as symmetrical.
Mr. Ambassador, at the last meeting of the NATO defense ministers, I heard you flag that some big pledges for Ukraine to purchase U.S. weapons. Can you tell us how much money we can expect to see spent on top of the $2 billion that Ukraine managed to secure by the end of last month, by the end of September?
Yeah, well, so right now we have set up a system where the commitments kind of are rolling forward. We have probably another $2 billion or more to bring in the next several months, and we fully expect that will be done here very soon. We have a foreign ministers meeting at the beginning of December, which will most likely kind of top that off. And then as we get into 2026, the key is sustainment. The key is the 12 or 15 billion dollars that are needed to buy the critical armaments needed by Ukraine to defend themselves and to continue this fight at the front line is going to be raised. It's going to be U.S. weapons, and I'm confident about that. And I think this is another example of Europe stepping up, of our NATO allies here on the continent stepping up in supporting Ukraine in the defense, ultimately, of the European continent. And it's we're watching very closely. Secretary Hegseth was very clear about that President Trump is interested in the success of this, since he announced it over the summer when I was there with him in the White House. And so it's a good news story, but our work is never done, because this war continues. And that's, I think, the most important thing that President Trump has impressed on all of us, including our allies, is this war needs to end, and Russia needs to come to the table and resolve this dispute, resolve this war. They've made no progress in the last 3+ years of fighting. They still only control about 20% of Ukraine, and they're not going to accomplish much more, even if they continue to fight for years. And so the time is now to end this war.
It was a couple of days ago that the Treasury Department announced these new sanctions on Russian oil producers, and we've heard the president say publicly he hopes those sanctions won't be in place for very long. Given that, what can you tell us about how vigorously the U.S. is going to defend those sanctions?
Oh, well, I mean, obviously, we have implemented those sanctions. We plan to enforce them. I think the president's point is very clear, is that we expect now, with these enormous sanctions that have been placed on Lukoil and Rosneft, that this will maybe be the thing to unlock President Putin coming to the table and ending this war, and at least entering into a ceasefire so we can negotiate a final resolution. But remember, as I've said before, President Trump holds all the cards. This is just one card that he's playing. There are many more. I was just today with CIA Director Ratcliffe here in Brussels, and we talked about a lot of other options that the president has available to him. And President Trump is going to play those as appropriate. But again, all we want is this war to end, and the killing to end, and the death and destruction, and to again have peace and prosperity. We have a peacemaker as president, and he's going to continue to work on this until he unlocks the right combination of leverage to get Vladimir Putin to agree to end the war.
You mentioned those cards, and I imagine a big one are these Tomahawk missiles. And you'll forgive me, but I just don't know what the state of play is on the U.S. being willing to give those to Ukraine now. What's your sense of how the president plans to deploy those or not?
Yeah, well, obviously that is ultimately President Trump's decision. Deep strike capabilities are not just available from the United States. There are other countries that are helping Ukraine that can provide those to be used on the battlefield. And we've already seen Ukraine developing its own, whether it's long-range drones or whether it's their Flamingo missile. There is all sorts of ways that long-distance strikes can be brought to the oil and gas infrastructure of Russia and their weapons and armaments manufacturing. no matter how far it may be behind the main line of contact. And so, we're going to obviously keep some of those things close to the vest. President Trump is going to continue to look at whether Tomahawks are necessary or whether there are other opportunities for other countries to provide long-range strikes.
We see the European Union struggling to kind of come to an agreement on the use of frozen Russian central bank assets to back a loan to Ukraine. And I wonder sort of what the U.S.'s perspective on that is as you have conversations with European diplomats. Is the U.S. ready to kind of move in tandem with European nations to use those frozen Russian central bank assets to back a loan to Ukraine?
Yeah, well, what we really want is our European and NATO allies to move at the same time as the United States. In this case, we'd like the EU to move first. I mean, there's $140 billion that could be used to help Ukraine, whether it's on the battlefield or whether it's with their economy and with other needs that they have as a country. But, this is an opportunity, really, and we've been encouraging the EU to make this move. We were disappointed that they didn't at this last meeting, but there's another meeting coming up in about a month where I think they'll have an opportunity. And they're just, my observations from, here in Brussels, it's across, town, but is that they continue to try to make sure that they have all their pieces and parts lined up so that they can feel confident to make this move. Obviously, Belgium, where I'm sitting right now, has some concerns, but I think those will ultimately be resolved. And this would be another opportunity to bring Russia to the table, to negotiate and to resolve and end this war.
We've got about a minute left, and I want to ask you about the news that just broke that Prime Minister Netanyahu of Israel has authorized powerful strikes on Gaza and certainly calls into question the integrity of the ceasefire that's been in place there. Of course, this isn't your remit specifically, but it does play into kind of foreign policy and international politics more generally. How are you thinking about the path forward here, the fragility of that ceasefire and what it means for stability in the region?
Yeah, well, we obviously were very proud that President Trump was able to make this historic ceasefire. Always knew that it was going to be fragile, always knew that Hamas has been a problem and could continue to be a problem, and we'll just have to watch it. I know that one of the things that we were able to do in these negotiations was bring a lot of the Muslim world, a lot of the Middle East and the Gulf countries together to put pressure on Hamas to enter into this. We got all the living hostages were returned home, and that was obviously a very important moment in this dispute and this war. But we'll just have to watch it. I think the people of Gaza want peace. It's only Hamas that is the problem, and so Israel has certainly a right to defend itself, and we'll just have to see what additional pressure and additional opportunities the world can bring to make sure that Hamas is not hostile and doesn't continue to wreak havoc in the Gaza Strip.
Mr. Ambassador, thank you very much for the time. Really appreciate it. That's Ambassador Matthew Whitaker, the U.S. Ambassador to NATO, joining us from Brussels on this Tuesday amid a swirl of international headlines around the world, in Asia, in the Middle East as well. Appreciate his time. Of course, he's the former acting Attorney General of the United States as well. Much more to come here as we chart the path of Hurricane Melissa on Bloomberg Television and Bloomberg Radio.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with headlines out of NVIDIA, headlines out of Washington, D.C. NVIDIA sees $500 billion in business over the next 6 quarters. NVIDIA's CEO, speaking in D.C., says 20 million Blackwell Rubin GPUs will be shipped. And the NVIDIA CEO also says Blackwell is in, quote, full production in Arizona. Those headlines coming right now from Washington, D.C. The Dow, the S&P, NASDAQ are all advancing. S&P holding close to session highs. Tech leading the advance today. We've got the S&P right now at 6894, 16 points away from 6,900, up 19 again, up by about 0.3%. The Dow up 352, at a record, up another 0.7%. NASDAQ pushing higher as well, up 0.7%. But on an up day for much of the market, notable exception, the Russell 2000 index down by 0.1%. Our Mag 7 index up 1.2%. 5 out of the 7 stocks in that index will be reporting both tomorrow and on Thursday. 10-year 3.97%, with the 2-year right now 3.49%. Spot gold down $14 the ounce, $39.67, down by about 0.3%. While West Texas Intermediate crude is down 1.8%, $60.19 a barrel on WTI. Crypto, Bitcoin at 115,525. Bitcoin up by 0.9%. Trump Media and Technology Group plans to make prediction contracts available on its Truth Social network, allowing users to bet on events ranging from political elections to inflation rate changes. That according to a statement today from Trump Media and Technology Group. Also, Polymarket, headline right now on the Bloomberg Professional Service, plans to return to the U.S. within weeks with a sports focus. And we're just getting word that the medical supplies firm Medline has filed for a U.S. IPO, seeking to list on NASDAQ under the ticker MDLN. Again, recapping, stocks higher. S&P at a record, up 19 now, up by about 0.3%. Balance of power continues now in Washington. Back we go. Once again, your host, here he is, David Gura.
Charlie, thank you very much. A lot to keep track of, and you're indeed doing it up there in New York, and really appreciate it. David Gura in for Joe Matthew and Kaylee Lyons here in Washington, D.C., where on day 28 of this government shutdown, we continue to look for signs that there is maybe an off-ramp somewhere, some sign that there could be some pathway to resolution. We have Vice President J.D. Vance scheduled to be on Capitol Hill to meet with Senate Republicans today. Of course, on November the 1st, some 40 million Americans slated to lose their benefits, their SNAP benefits. That could be a pressure point, perhaps could get Congress to move into action. Megan Scully joins me now on set. She's our congressional editor here at Bloomberg News. And I'm curious, if as you look at this terrain, look at the status of this shutdown, now in the 5th week. Are there any indications that the terrain is shifting in any way?
So yesterday, when the largest union of federal workers came out and really put pressure on Democrats, urging them to essentially pass something at least resembling the Republican passed, stopgap spending bill.
A clean CR.
A clean CR. I thought maybe that would budge things a little bit. It did not. As of last night, we saw Senate Democrats really remaining resolute, including Senate Democrats in this area, those who represent Maryland and Virginia, who have, some of the largest numbers of federal employees who work in their districts and states.
What is the quality of conversation, so much as there is a conversation? You mentioned the Senate Democrats. Are they talking to House Democrats? Is there any kind of inter-party communication happening on Capitol Hill right now?
So there is some inter-party communication happening, but it is at a lower level. It is certainly not involving the president or congressional leaders. Yesterday, Senator Murkowski, a moderate Republican from Alaska, went to the floor and demanded higher-level bipartisan talks to end this shutdown, but those have not happened. And remember, the House isn't even in session, so they are not in Washington, aside from some leaders, and some Democrats have been sticking around. But they're not in the chamber. They're not taking votes.
Lastly, what is your assessment of how seismic an impact it's going to be when these SNAP benefits are no longer funded? As I mentioned, more than 40 million Americans rely on them. How are lawmakers thinking about the effect that'll have, yes, on their constituents, but on this kind of political narrative that's taken hold here in Washington?
Well, it's certainly a huge forcing function, and one that Democrats say that the administration can move funds to cover these bills. And there's certainly a fight over that right now. They say that this is not necessary, that even if the shutdown shutdown persists past Saturday, which is the day that the SNAP benefits, the federal benefits, are expected to be cut, that there is money to pay for these. Certainly, the Trump administration did move money around in mid-October to pay for the military personnel. It's unclear whether they'll do that again on November 1st, so that's another big date. And then the other big issue we're keeping an eye on certainly is air traffic. This afternoon or this morning, Transportation Secretary Sean Duffy talked about air traffic controllers, TSA going without paychecks, and the havoc that could wreak on air travel. That was the issue that forced the last shutdown to end. And certainly as we're heading into holiday season, the pressure becomes higher and higher in that regard.
Megan, thank you very much for the update. We'll get more to come. I know Megan Scully, who leads our congressional team here at Bloomberg, joining me on set. And Megan mentioned just a moment ago the pressure that this is putting on federal workers. More than 700,000 of them received paychecks for $0 at the end of last week. There are, of course, many who are furloughed and not being paid as well. In this area, in the greater Washington, D.C. area, we have a lot of workers looking to find food through other ways, going to food pantries. Here are some who went to a World Central Kitchen food pantry in search of food just a couple days ago.
It's a little challenging to be a federal employee right now, not knowing when we'll head back to work.
It's starting to get real. You know, we just missed a paycheck, so definitely moving money around, playing money games, and you know, you can't sustain this for much longer. I mean, at some point, you're just going to dry out your savings and all that.
It's just tough that people who are supposed to be supporting us and showing up for us aren't showing up for us.
Our political panel joins us now. Adam Hodge, Democratic strategist, managing partner at Bully Pulpit International, I should say a Bloomberg Politics contributor as well. And Greg Joins, policy director at Brownstein Hyatt Farber Schreck, and a Republican strategist with me here in Washington. Adam, let me turn to you as we talk about pressure points. You listen to those federal workers talking about the pressure that they're feeling brought to bear on their shoulders in this moment. How do you think lawmakers are listening to that, seeing that, reacting to what they're hearing now increasingly from workers who have either been paid $0, as I said, or have been furloughed now for 4 weeks' time?
Yeah, look, David, it's not just federal employees here in Washington. The federal employees around the country who are concerned that they're going without a paycheck. And I think the key thing that everybody understands, if you just unpack these issues, is that the way to get out of this shutdown is to do a deal on healthcare that extends the ACA tax credits and that coverage, and also reopening the government. That is just the math in the Senate, and that is the reality on the ground. I think the political reality is also that the healthcare issue has truly become the salient issue of this shutdown fight. And you see Republicans on a bit of the defensive, trying to explain what their alternative would be, and it's coming back to bite them. And the polls that I've seen repeatedly over the last few weeks have shown that the majority of Americans, the majority of Democrats, independents, and even some Republicans are blaming the Republican Party for the shutdown. So I think that's where we get to getting a deal that gets the ACA issue resolved and reopening the government.
And Senator Tom Tillis of North Carolina warning Republicans that this could have an impact on their election prospects in the midterms. Greg, I want to kind of go to you on what Adam was bringing up, and that is we've heard from the Senate Majority Leader John Thune, look, if Democrats agree to open the government, he is more than willing to have a conversation about these health care benefits. What is your sense of, your understanding of what Republicans are willing to do if that comes to pass? In other words, what is the Republican plan when it comes to health care in this vein of talking about subsidies, these Obamacare subsidies and Medicare?
Well, I think it's really important for Republicans to really dig down deep and find out why the Affordable Care Act is actually so unaffordable. You know, these subsidies, these additional subsidies were a part of COVID funding. And if we are in a position where we are beyond COVID, the subsidies have to continue to exist in perpetuity. And Democrats just want to rubber stamp that without really asking any questions as to why the promises that were made when the Affordable Care Act were not met, and ultimately what the Democrats plan to do about it other than simply increase subsidies in perpetuity. There is really no concrete way to have that discussion while being held hostage with a closed government. Unfortunately, Democrats seem to be willing to sacrifice SNAP recipients and air traffic controllers and the American people hostage until they get what they want, which is just putting more money into the system without trying to reform it.
But Greta, what you're proposing sounds like kind of a broader philosophical conversation that we've had many times in Washington about the role that the government should play in healthcare benefits. Why would a person who's worried about his or her benefits going up so expensively feel confident in the fact that they're going to be able to get through that broad philosophical conversation, find some way to give that person some relief?
Well, I think it's because the two Democratic leaders in Congress have already turned down a year-long opportunity to extend the subsidies. So they just want it done in perpetuity. And ultimately, that is not realistic. It is an unfortunate situation that Chuck Schumer and Leader Jeffries are willing to hold the American people hostage in order to achieve this. But I think it's about time that we ask some harder questions as to why they don't want to have those conversations about why the Affordable Care Act has been a failure.
Adam, the President of the United States, as we've talked about over the course of the hour, is quite far away from Washington, 7,000 miles away in Asia, holding these meetings, going to South Korea next. He's not here. And I was on Capitol Hill last week, spoke with Hakeem Jeffries, the minority leader, and he really stressed there's no opportunity for progress here without the president in town, either giving his blessing to conversations that would take place between Republicans and Democrats or participating in them himself. I wonder if you agree with that and sort of what, absent that, could catalyze these two parties talking with one another and trying to find some resolution to this.
I agree, but I think it's simple. Just take the president's words himself. I mean, he said that he's the Speaker of the House. He said that he's, in addition to being President of the United States, and in practical reality, he is. And so any deal that is going to get done has to have the president's push and the president's blessing. And I think what I've also heard that really stood out to me, the president understands the potential damage to Republicans if they don't get a deal on health care. I think you've heard from everybody from Marjorie Taylor Greene on the extreme right to more moderate members in the middle who recognize the political salience of this issue because it's the right thing to do. I mean, you got people who are already getting premium increases, and there's a real question about whether they're going to be able to afford their health care in the long term. Those subsidies, yes, they were part of COVID, and they helped add 10 million people to the rolls, and more people with health care help stabilize the market. That is just kind of economics basics. And so I think that is why I think you get a permanent extension of this of the Obamacare credits. You provide some certainty to the market, and you get a political deal that, quite frankly, is in the Republicans' own best interest.
Adam, I'm going to give you the last word this hour. I gave it to Greta last hour. Just as you look ahead here, what you think that the catalyst is going to be? Is it going to be a calendar-based catalyst? Is it going to be the Veterans Day holiday, for instance? Is it likely to be this November 1st pressure point? In the minute we have left, where do you see sort of any opportunity for movement here?
Look, I think you're starting to see it already with people showing up at the town halls for Republican members of Congress, and they're talking about the premium increase that they're already getting. I mean, that is real pressure for their constituents. I think you get to November 1st and people miss a paycheck. That is certainly painful. And again, we can get out of this deal. If there was a little bit more trust between Republicans and Democrats, that they would actually be real negotiation, I think you'd get there. And that rebuilding that trust is going to be key somehow, some way.
Somehow, some way. Adam Hodge, managing partner at Bully Pulpit International. Greta joins policy director at Brownstein Hyatt, Farber Schreck, joining me here on Bloomberg's Balance of Power. We continue our coverage, focusing more on the shutdown when we come back after a short break. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are higher across the board, on track for a record close. Do want to begin with some headlines out of NVIDIA because the stock is advancing right now. We do have NVIDIA shares gaining by just about 2.4%. NVIDIA says it sees $500 billion of business in the next 6 quarters. That word from CEO Jensen Huang speaking now at an event in Washington, D.C. NVIDIA also saying today it will make a $1 billion equity investment in Nokia. Shares of Nokia, they are surging by 23.8%. Again, NVIDIA up by 2.5%. The Dow, the S&P, NASDAQ all pushing higher with the S&P now at 68.95, up 20, gain there of 0.3%. The Dow up 315. On the industrials, up 0.7%. NASDAQ up 0.8%. But the Russell 2000 index of small cap shares is down 0.1%. The Mag 7 index ahead of earnings from 5 of the 7 members tomorrow and Thursday, up now by 1.3%. Year 10-year at 3.97%. The 2-year 3.49%. Gold is down 0.4%, $39.65 the ounce, and West Texas Intermediate crude oil 60.21 a barrel. WTI down now by 1.8%. And Bitcoin at 115,564, up by 1%. We've got the state of Texas suing Johnson & Johnson and Kenvue, alleging the companies hid the risks of autism and other disorders if mothers take Tylenol during pregnancy. The suit comes weeks after President Trump claimed the drug caused autism in children, a link that has not been proven. Right now, Kenvue shares, they're down by 4%. J&J down by 1.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Balance of Power continues right now. Once again, your host, here he is, David Gura.
Charlie, thank you very much. David Gura in for Joe Matthew on this Tuesday, on the 28th day of this federal government shutdown. And all throughout, we've been talking to lawmakers. We've been going back and forth to their districts, states, coming back to Washington, bringing us news of how their constituents are thinking about this shutdown as it stretches onward and onward. Please now that Congressman Greg Murphy joins us. He represents the 3rd Congressional District in North Carolina, my home state, and I might invoke my anchor's prerogative here in just a couple of moments to talk about the geography and maybe the political terrain in that district as well. But great to have you with us here in Washington. Let me start with that question of sort of what you're hearing as you go back home about how long this has dragged on and how there doesn't seem to be, at least at this moment, any clear off-ramp to this shutdown.
Yeah, no, I think the Democrats have sewn themselves into a corner. It's really true. Well, I'm hearing, hey, stay firm, hold the line, because it's just an asinine, ridiculous amount of requests in something that shouldn't have any requests in it. This is a clean bill to continue funding a month ago on a Wednesday, just like we did on a Tuesday. And so people are understanding that, and I think they're sensing some of the desperation of the other side.
I was up on Capitol Hill last week, and I sat down with Hakeem Jeffries, the minority leader, and just feet away, the House Speaker was doing a news conference, and I said to the minority leader, you know, you're so close to one another. Do you speak with one another? Are these conversations happening? Yeah. I was also struck by how quiet the place was. But is that happening? Are you talking to Democrats? Is there any kind of conversation happening at the member level?
Conversation, you know, it reminds me of Seinfeld a little bit. That was a show about nothing. Yeah. This is the shutdown about nothing, because we literally just wanted to fund the government. Let's just be very clear, David. Let's just tell it what it is. This is because AOC scared Schumer and the progressive left scared Schumer because he did the exact same thing in funding the government in March. Period. Let's just distill it down to what it is. And so they've now put $1.5 trillion in demands, basically reversing everything that the 2024 election said to do, because they say they don't like it. And so I think the American people understand that. Look, you had the Federal Credit Union yesterday, federal employees say yesterday, look, 2/3 of us are saying enough of this. Vote for the clean CR. Let us get back to work. Let us get funded. So I think the cracks are starting to occur. We know that some moderate Senate Democrats who spoke on the condition of anonymity last week said, look, we'd vote to fund the government, but our guillotines would kill us. Our far left would kill us. So.
You are a medical doctor by training. You're a urologist, I believe. The Democrats say this is about healthcare and the rising cost of healthcare. Yeah. I wonder if you have any sympathy for that, maybe stepping back, not talking about the subsidy specifically, but just the weight that healthcare costs are bringing to bear on Americans, including those in your district.
Yeah, go back and look at 2014 with Obamacare. This was a ticking time bomb that was going to explode at some point. And then look at all the different variables. Look at why things cost so much today. Yes, we're living longer. Yes, care is more expensive. We're doing great new therapies. You know this from Chapel Hill. But sadly enough, we have grown since 2014, since Obamacare has exploded the middlemen in society, the insurance agencies, the pharmacy benefit managers. These are great, as Ross Perot would say, the great sucking sound of medicine. We need to destroy the huge monolith that's occurred in the middleman and get back to making healthcare affordable. They want these subsidies. These subsidies are basically subsidizing insurance company profit. Sorry, not going for that.
I will put the question to you here. What do Republicans propose to do? If you don't extend these subsidies, how do Republicans bring those costs down?
Well, I think there are a lot of things. If you look at Medicare Advantage, United Healthcare is really the worst offender with this and all the upcoding and things that they do. If you look at pharmacy benefit managers, where they're taking the middlemen out, squeezing our independent pharmacies and causing drug prices to be high because they get paid more because of that. Looking at efficiencies, look at what Trump RX has done. They're saying we're going to go straight from the pharmaceutical company to the patient. We can cut a lot of costs with this. There are many, many different ways we can do this. Inherently, we're living longer, we're living healthier, and those things do cost more, but there are a whole lot of efficiencies that can be obtained that present-day bureaucracy is not allowing us to do.
I said I was going to wax reminiscent. I'm going to do that now. You represent a territory that has some of the most beautiful beaches in the world, I'd say. Objectively, I spent a lot of time on Emerald Isle in Carteret County. Of course, went to Ocracoke as well, one of the most beautiful and isolated places in the world. You're in a strange predicament right now. The Republican legislature in the state of North Carolina has redrawn the maps. How are you thinking about the consequences of that at this point in time and what that means for your kind of electoral fortunes going forward?
Well, they took away my beaches. I've always had a coastal district, and frankly, I'm not too happy about that. But that said, I'm always going to represent to my fullest extent the people that are within my district. If you look around the country, look at Illinois, look at California, look up in the Northeast, it's always been, regardless of any Republican people there, it's always been gerrymandered against Republicans. And it's really interesting that now we're playing the same hand that they've played against us. I don't know that this nuclear war is a good thing for the country. But it's just literally trying to turn the tide back, which has been put against Republicans before.
How do you see all this playing out? So you bring up that slippery slope and turning back that tide. Is it going to happen? How do you see this ratcheting up even more?
Yeah, you mean in North Carolina?
Well, just in the United States more broadly.
No, look,
I states where this is happening. Indiana's another one.
Yeah, and I heard Virginia was going to try to do it too. I don't know. I think history will tell us whether this was a good thing or not for the country. Or whether it was a partisan initiative that's in reaction to a previous partisan initiative. I don't know. Time will tell. We're going to have to let the dust settle on this one before making any real judgments.
I think of you and your relationship with Don Davis, the gentleman from Snow Hill in Greene County, and you've gotten along, I think, reasonably well. And we talked at the top just about the level of comedy among Democrats and Republicans, or the lack thereof. How does this stand to strain that even more? If this process continues and you see, again, these maps being redrawn and more strains being placed?
Well, Don knows that I'm not directing this. I'm literally, I'm running in the district where I'm the incumbent. We have worked together on a lot of issues. We worked back when I was in the state legislature on the issues. But, this is a team sport, and it's one team against another team, and push comes to shove, regardless of what happens in the future. This is the hard part of politics.
In the time we have left, let's just go back to the Hill and think about the state of play here. I imagine you'll have meetings among your caucus. You'll hear from your leadership. What are you looking forward to here in the days to come? We have the president who's still overseas. Does he need to be back in town for there to be real action here?
No, not at all. I mean, look at the wins that he's having overseas. My God, look at all the trade initiatives and all the trade deals that he's doing. The Biden administration, during the entire 4 years I was on the trade subcommittee for Ways and Means, we did absolutely nothing. And the president has win after win after win. No, this is a Senate Democrat problem, period. And when the cracks appear in that, which are going to happen sooner than later, we'll get this resolved and we can actually go ahead with government.
Bit unfair here, but a headline crossing the terminal. A federal judge plans to block Trump shutdown layoffs. This is a unique shutdown in so many ways. We have Russ Vought, who's running the Office of Management and Budget, trying to move things around, keep some people paid, keep some programs running. When you hear a headline like that, how do you react to it? Just kind of the limbo that a lot of these federal workers are in right now.
It's so funny that you say that, because last time when the Democrats were saying, well, I'm going to vote to keep the government funded, but I don't, because they didn't want to give the power to the president to do certain things. And now that they've shut down the government, guess what's happening? The president has the power to do these things. Whether this is a rogue judge or what, I don't know specifically about that. But, actions have consequences, and the Democrats have now going to have the consequences of their actions.
Congressman, thank you very much.
All
Appreciate
right,
it. Carson, Greg Murphy of North Carolina. I'll second that. Joining me here in the studio in Washington, D.C., as we continue to watch a number of events around the world, I want to return to the Caribbean here in the last few minutes that we have left. Hurricane Melissa making landfall in Jamaica, and my colleague Lauren Rosenthal, who covers weather for us here at Bloomberg News, has been tracking that. And Lauren, I wonder what the latest is on the impact of that storm on Jamaica, what we've seen in these last 30, 45 minutes.
Sure. So Melissa has officially made landfall in Jamaica, packing winds of 185 miles an hour. This is the most powerful storm in record keeping, going back to the 1850s, to strike Jamaica, which is no stranger to hurricanes. And it is also tied for the strongest storm ever to make landfall in the Atlantic Ocean basin. So really an extraordinarily strong and dangerous storm currently making its way across the island.
Lauren, as you look at this storm, obviously incredibly fast wind, the prospects for a lot of rain. What in the end will do the most damage in all likelihood to Jamaica? Is it the rain or the winds?
I mean, the winds are extraordinary. The island's prime minister has said there are no structures that are capable of withstanding winds this strong, in Jamaica or likely in most countries that could see a storm like this. But we know from history that storm surge and flooding is typically the most dangerous part of any storm. Melissa was predicted to bring more than 13 feet of storm surge ashore, which is, a story and a half tall of water being pushed onto land, just given how powerful the storm is. And then up to 40 inches of rain could fall over Jamaica in the coming days.
You mentioned the kind of unique devastation that Jamaica faces here. If you kind of look for analogs, are there other storms? Have there been other storms like this in the past in the Caribbean or elsewhere? Kind of how does this compare to some of the bigger hurricanes that we've experienced and seen?
Now, this is really interesting. I've talked with experts who said in the same way that Hurricane Helene, which sort of threw an unbelievable amount of rainfall at the Appalachian Mountains in North Carolina, causing just sort of unbelievable devastation there. Because the storm is moving so slowly, and folks may not recognize how mountainous and rugged Jamaica's terrain really is, we could see substantial flooding and communities and settlements being washed away over the next few days.
I'm curious what you're going to be watching for. So this is going to kind of linger over Jamaica for a time, but over the next couple of hours, what are you going to be watching for? Sort of how does this develop?
Yeah, we'll be watching to see, reports of damage. We know that the island's largest airports both sit on the coast to the north and the south. They're incredibly vulnerable to storm surge and to flooding. The island has invested in coastal defenses, with the understanding that as sea level rises due to climate change, a lot of that property is at risk. So we'll be seeing, how those defenses have held up, but really waiting for news of potential loss of life and injuries from the winds and the flooding.
As you may have heard, we were just having a conversation, with the congressman here in D.C. about the federal government shutdown, and I'm curious if that's had any impact on how much of an understanding we have of this storm. Obviously, a lot of federal workers who are furloughed or not working or not receiving paychecks. Has that diminished our ability to track and forecast the path of this storm?
I will say this was a difficult storm to pin down in the early days, like over the past week, just because it wasn't very well organized, as we call it. That made it hard to forecast where it was going. Our sources have told us that the U.S. National Hurricane Center was accepted from the shutdown, so folks are working there long hours to predict the path of the storm and give updated reports. And as you said, are not on a list of workers who will receive pay.
And for those in the U.S., maybe in coastal areas watching all of this unfold, does this pose any threat, this storm pose any threat to them?
Yeah, the storm is not predicted to make landfall, to pass directly over communities in the U.S., but eastern beaches will see rough surf, unusually heavy wave action as the storm makes its way back across the Atlantic toward Europe.
Lauren, thank you very much for the reporting. That's Lauren Rosenthal. She covers weather for us here at Bloomberg News. As Hurricane Melissa, that Category 5 storm, making landfall in Jamaica, just a massive storm, as she described, those winds of 185 miles per hour. I saw reporting they could get up to 200 miles per hour, so really promising to wreak some severe damage on the island nation of Jamaica. And we'll continue to follow that for you here on Bloomberg Television and Bloomberg Radio as we continue to follow the president's trip through Asia. and that keynote address that Jensen Huang gave, the CEO of NVIDIA, here in Washington, D.C. at the Washington Convention Center. I should note my colleague Ed Ludlow, co-anchor of Bloomberg Tech, going to sit down with Jensen Huang coming up here on Bloomberg Television in just a few minutes' time. So stay tuned to hear more from him as he prepares to make his way to Asia for meetings with President Trump. He's supposed to be in South Korea tomorrow. All that to come here on Bloomberg Television and Bloomberg Radio. David Gura in for Joe Matthew and Kaylee Lines as our coverage continues.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, just putting a little news notice out there. I've hit my quota of headlines for the week because there was so much today.
Bad news, Carol. It's only Tuesday. So,
it's only Tuesday,
and there's Big earnings this week.
Unbelievable.
A lot happening today, too.
I know, right? And you've got U.S. stocks kind of muddling along, folks. We're off our lows of the session. Another record high when it comes to U.S. names overall. This is as Apple becomes the third stock in history to top $4 trillion in value, Tim.
Yeah. Also, Microsoft seems to cement its ownership relative with OpenAI to the tune of $135 billion. NVIDIA taking a $1 billion stake in Nokia. I'm just looking at other headlines that are crossing right now that have just happened in the last few minutes. Did you see this, Carol? Uber's eyeing a fleet of 100,000 NVIDIA-based robotaxis. That's beginning in 2027.
Well, let's remind everybody, big NVIDIA event going on underway in the nation's capital. Jensen Huang just coming off, or I think, is he still speaking? I don't know, guys. Is he still speaking? All I know is keynote's over, lots of headlines, lots of big headlines, right? And so we are we're just kind of inundated, if you will. We're going to hear, actually, from Jensen Huang. He's going to sit down with our own Ed Ludlow because NVIDIA took a $1 billion stake in Nokia. So we're also going to hear from the Nokia CEO.
Also, we're going to get a look at the U.S. economy. We've got the Wayfair CFO on what the consumer is up to in real time. That stock on a surge today, too.
Yeah, I think what's interesting is we're going to hear from really, things that really matter right now. It's all about AI and the tech spend in a big way, but also what is the consumer up to here as we get ready for a Fed decision tomorrow, Tim?
Yeah, layoffs, too. A worrisome economic sign one day before that Fed decision. Matt Luzetti, chief U.S. economist for Deutsche Bank, is stopping by in just a minute.
Well, needless to say, so much to come. Do not go anywhere. Lots to come over the next 60 minutes. First up, though, let's get an update on the trading session. We've got just about 2 hours to go until we wrap up trade on this Tuesday. Here is Charlie Pellet.
Lots of headlines. Yes, we got you covered here at Bloomberg. Do want to begin with NVIDIA, yet another headline. NVIDIA and Oracle are going to be building an AI supercomputer for the U.S. Energy Department. NVIDIA shares, they're up right now by 3.2%. Oracle shares, they're gaining by 1.1%. We'll bring you a whole lot more on NVIDIA and Nokia coming up right here on Bloomberg. Right to the equity markets. We're looking at records now, just under 2 hours to go. S&P 500 index trading higher by 23 points, up 0.3%, 68.98 where we stand now. Dow Industrials up 325 on the Dow, gain there of 0.7%. Nasdaq Composite Index up 181 right now, up by about 0.8%. Interestingly, though, on an update for much of the market, indeed records, a retreat for the Russell 2000 Index of small cap shares, down now by about 0.1%. The Mag 7 Index ahead of earnings out of 5 of the 7 members tomorrow and Thursday. Right now, that index is gaining by 1.2%. 10-year, 3.98%. Spot gold down another $21 the ounce to $39.60, down by about 0.5%. And West Texas Intermediate crude down 1.9%, $60.14 for a barrel of WTI. As we have been reporting, NVIDIA plans to make a $1 billion equity investment in Nokia, an apparent vindication of the Finnish company's pivot from mobile networking gear into AI by the sector's kingmaker. Again, Nokia shares, they are surging up by 26%, and NVIDIA up by 3.4%. And also, we're getting word that medical supplies firm Medline has filed for a U.S. IPO, seeking to list on NASDAQ under the ticker MDLN. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, along with Tim Stanovic, live here at Bloomberg headquarters in New York City. Well, the era of labor hoarding seems to be over, something we know that was done during the pandemic when workers were scarce. Another thing at play, the impact of artificial intelligence. And Tim, I feel like we're trying to get our heads around what is going on, because it does feel like companies are letting go of workers, but then it's like, is it because of AI or other factors?
Well, let's go through some of the companies, and then we'll get to the big question about why and how AI is at play. Amazon plans to eliminate roughly 14,000 corporate jobs just after CEO Andy Jassy warned that AI will shrink the company's workforce. Amazon not alone. UPS, Carol, eliminating 34,000 jobs this year. We're talking drivers, package handlers, sweeping cost savings. Target, we talked about this last week, 8% of its headquarters team Meta cut hundreds of jobs just last week in AI.
And then you've got Sequoia Capital investing in an AI tool that could replace junior bankers. We also had a most read story, was it in the last week or so, about what's going on Wall Street or in the investment banking area. We could go on and on and on. So what does it all mean? Bloomberg's Jo Constance is with us. She writes about work and management at Bloomberg News. She's the author of the Management and Work newsletter, joining us here in studio. We pass the baton to you, the big task. What is going on? Is it AI leading to job cuts? I mean, what are you hearing from the management of companies?
I think it's tough to disentangle, especially at this moment where we have so many macroeconomic pressures alongside, the promise of AI to increase efficiencies. So, it's hard, especially if you take Amazon as an example, it's hard to know exactly how much of this is really still unwinding all of the overhiring that happened a couple of years ago. And so, it's a little tough to parse out. And of course, saying we are going to be on the front end of this, we are going to be lean and efficient and poised to use artificial intelligence is a much better narrative than, we made a mistake and hired too many people.
Okay, I'm going to have you just give us your prediction about how this all shakes out. Are we undergoing some sort of industrial revolution or industrial revolution when it comes to AI right now that is going to allow us to be more productive, maybe work 4 days a week? And you're laughing. Was it the 4 days a week that?
Yes.
Was it the 4 days a week thing that got you?
Yes, yes.
But if we think about other big movements in the past and adoptions of technology, this is what led to the rise in leisure, or like going from a 6-day work week to a 5-day work week. Are we talking like something like that on scale?
It's I laugh just because the talk right now in Silicon Valley is all about 100-hour work weeks. It's all about working even more, working 6 days a week, 7 days a week. So it's kind of funny. It's a little dissonant right now to think about scaling back. And I was reading a really interesting blog from a software engineer who is also a writer, who was saying AI agents are kind of like when electricity meant that we can suddenly work into the night. The craftspeople didn't have to put down their tools when the sun set. Similarly, AI agents can just keep working and working and working. So there's a compulsion for us to work.
Yeah, so great to have a smartphone where we can work on our commutes.
Exactly. So
get even more hours in the new day.
The sarcasm.
Yeah.
Yes.
Well, I guess what we're trying to understand, and we're having some fun with this, but I mean, we're at this point where we have a government shutdown, not lots of economic data, some private reports, trying to understand, what is going on in our labor force. Is it indicative of a turn in a cycle, especially as we wait the Fed decision tomorrow? We're going to talk about this with Matt Lazzetti in just a moment. But, is there something going on? Is AI an extra pressure that it's going to be cool on some levels, but maybe not so much for the workforce, which we all kind of seem to think when we first started talking about this?
Yeah, I think the context of this is companies are pouring billions into investments for artificial intelligence tools. And so they're really looking for a return on that investment right now. And part of that is cutting headcount.
So they have pressure.
There's pressure. There's pressure from boards. There's pressure from investors for sure. And there are some efficiencies that are coming from these tools, but it's not so easy to say, we have an AI agent that can directly replace a junior banker. We're not there yet. And it's going to be a while until we're there. So I think they're pushing to see how much more productivity and efficiency they're able to get from their current workforces for the most part, and holding that headcount steady. That's a big theme.
But is that productivity because of AI?
I think it's part of it. I think that's what they're hoping for. But I think that there's a disconnect between how enthusiastic and hopeful investors and executives are, and what the rank and file workers are expecting to get.
So labor hoarding over. It's a different environment. Do you feel like, just one last question, just 20 seconds here, are companies nervous a little bit about the outlook? Is there any of that you're hearing as you guys put out your newsletter and look at this world?
I think that there's a good amount of uncertainty, and for some executives, they're waiting to see how the models, the AI continues to evolve, and whether it continues to improve in the way that they're hoping and expecting.
All I know is they're all spending big time on this Tuesday. Joe, thank you so much. Bloomberg's Joe Constance. She writes about work and management, Bloomberg News, author of the Management Work newsletter. Tim, we're going to stay on the economy. Jobs, tomorrow's Fed meeting.
Yeah, it is a Fed Tuesday, after all. The U.S. government shutdown also now in its fourth week. We've got some private data points to share. Home prices gained the least in over 2 years, slowing for the seventh straight month in August. Buyers gained leverage in negotiations. Inventory actually grew. And then, Carol, there was consumer confidence for the month of October. It fell for a third straight month on dimmer views about the outlook for the economy and the labor market.
And ADP now releasing U.S. payroll data on a weekly basis. We got some numbers this morning. Hey, let's get to the U.S. economic backdrop. Back with us is Matthew Lazzetti. He's chief U.S. economist, head of U.S. economic research at Deutsche Bank, back here in studio. It's a lot. How are you?
Good. How are you doing?
Doing okay. How do you think, how are you guys thinking about AI and the impact on the labor force?
Yeah, I think, there's some clear evidence of it. I think the research that's out there kind of arrives at mixed results, and it depends on how you think about the substitutability between AI and the workforce. There's this really impactful paper by Eric Brynjolfsson and some colleagues at Stanford, which showed for particular categories, computer scientists, some call center workers, you saw, particularly for younger age groups, there's been this negative impact. I think when you look at the labor market across different demographic groups, it's a super interesting story. You have the 25 to 54 age group, what we call prime age. The labor market looks completely fine. Unemployment rate's low and stable. Employment to population ratio is elevated. Labor force participation rate is elevated as well. All of the weakness from a demographics perspective is in that lower age groups. Now, I do think some of this is related to AI. I think, but I think more so it's reflecting what is a weaker labor demand backdrop and people that are coming into a workforce at a time where there's lots of uncertainty in the macro backdrop.
I mean, does that view change with Amazon and the 14,000 jobs that it's cutting, the 8% cut at corporate headquarters at Target, the thousands of jobs at UPS that will be gone this year? I mean, it just does seem like today we're getting a deluge of news.
It does, but I want to put those numbers into context. So when you look at the U.S. economy, you take the JOLTS data, we have 1.7 million layoffs in a typical month. 30,000 is a drop in a bucket relative to the typical labor market flows that take place. Every month, we hire 5 million people. So the 50,000 jobs that we see added or 100,000 jobs we see added is the net of massive flows, millions of worker flows that are taking place back and forth. I like to look at the macro data that we do have. So far, the initial jobless claims data is not showing us really anything. We get WARN indicators, which is at the state level. Those haven't shown any deterioration or pickup. So I think it's important. It does fit into the narrative that AI may be impacting the labor market idiosyncratically here and there, and it is a story. But still, I think we're in an environment where layoffs remain low.
All right. So, Matt, is the overall U.S. economic backdrop okay? And Fed, hey, you don't need to cut rates tomorrow?
Yeah, no, well, they will cut rates. We expect they cut rates by 25 basis points.
Should they, in your view?
I think that they have a strong story to cut rates, but they are dealing with this significant divergence between a growth backdrop that looks fine. We had close to 4% growth in Q2. Q3 growth looks like it's going to be somewhere between 3 and 4%. The Atlanta Fed tracker is closer to 4%.
Feels kind of okay to me.
That sounds, I think, fantastic and is not at all a reason to be cutting rates. But the labor market picture has shown some weakness. We've seen job gains which have slowed materially. There's been some upward movement in measures of labor market slack, all somewhat at the margins. But it does push the Fed in a little bit more worried direction about the labor market than inflation.
How does the lack of government data that we've gotten or that we haven't gotten over the last few weeks really muddy the view of how confident you think the Fed can be in what it says tomorrow?
I don't think it's too problematic for tomorrow, to be honest. We had the last FOMC meeting in September. We were only expecting to get one more jobs report between the September and October meeting. That can be supplemented a little bit by the ADP data we got earlier in the month.
Yeah.
Plus, we now have this weekly reading, which I would add, actually, this morning looked pretty good. If you aggregate it over the past 4 weeks, looks like the private sector added almost 60,000 jobs. That sounds low from a historical perspective, but when we think you only need to add 50 to keep the unemployment rate stable, it seems okay. I think it becomes highly problematic for the Fed in December. If we haven't had the government reopen, if we don't get an October inflation print, if we don't have an unemployment rate that's coming from the October jobs report, and a period of time where I think it's going to be a far greater debate within the Fed about what to do in December, I think that's when it becomes problematic.
I mean, you've got to believe the Fed's going to lean on whatever, the regional banks. There's got to be lots of conversations going on to get an idea of really what's going on. Having said that, in terms of the Fed, isn't it better for the Fed to be late rather than early with policy?
So I think this is always a debate that's ongoing, and I think that comes down to how they think about the risk distribution. I think for an extended period after seeing tariffs, they were more worried about upside risk to inflation, and therefore they were willing to be later rather than earlier in terms of cutting rates. Today, I think the risk distribution has shifted for them pretty clearly. They are now less worried about the inflation side, more worried about the labor market side,
right.
And therefore they are moving a little bit, not preemptively, but at least reacting closer to real time to what's happening in the labor market.
The 5 names that I won't want to say we got them yesterday, but they were kind of confirmed in a way yesterday for the next Fed chair. How do you view, not these people as individuals, but the fact that this process is playing out in such a public way, and whether or not that undermines at all the power of Jay Powell right now for the next few months?
Yeah, coming into this whole period, there was Secretary Bessent had floated this idea of having a shadow Fed chair out there that was kind of nominated long ahead of time, that could be out there speaking and trying to undermine, potentially divert attention away from Chair Powell. I think that there's probably some of that happening. We all know that Governor Waller is one of the top 5 candidates. He's on the short list at this point in time. He's been ahead on this idea of cutting rates because the labor market was weaker, and I think that has emboldened his position a little bit. Governor Myron, similarly, is coming out very aggressively calling for rate cuts. At the same time,
know his playbook, right?
Correct. I mean, it's very clear he's going to dissent tomorrow in favor of 50 basis point rate cuts again. At the same time, you have a committee that I think Chair Powell continues to lead, and a committee that's very divided on the path ahead.
Matt, I want to go back to kind of where we started, and we're talking about labor market and AI and the impact. You focus on big economic factors, and this is a day where Tim and our whole team has been kind of laughing and being crazed and stressed in the newsroom because it's just one headline after another in terms of the AI spend.
Yeah.
A lot of it's NVIDIA today, but it's not the only one. How do you guys, investors are looking for assurances when it comes to that AI spend, and whether it's the spend and the economic impact or the creation of jobs, how do you guys roll any of this into market strategy or economic strategy?
Yeah, I think...
I just got about a minute.
Of course, yeah. So in the near term, it's been all about AI CapEx boost that has happened. And if you look at the first half of the year, it was a tremendous driver of CapEx. So the contribution to GDP that we got from software spending and information processing equipment was the largest on record in the first half of the year. That said, if you go back to the late 1990s, we were seeing somewhat similar spending that took place and extended over 5 years. So the information processing, the tech boom that we had during that period, the CapEx spending was extended for a very long period of time. I think that remains to be seen how long this is going to be boost. Eventually, I do think that this shows up in productivity gains. I don't think that it's shown up meaningfully yet. What I think we've seen in terms of strong productivity is mostly reflecting the fact that we had a very tight labor market for a period of time that incentivized firms to do capital deepening, CapEx, find productivity enhancing projects for a period.
And the only thing I would say is do productivity gains buy shoes and handbags and clothes and dishwashers and houses. You do wonder, right, if the workforce gets reduced as a result of AI. Thank you so much.
Thank you.
Appreciate it. Matthew Lazzetti, Chief U.S. Economist, Head of U.S. Economic Research at Deutsche Bank, joining us right here on Bloomberg Business Week Daily.
You said it, Carol. AI news front and center. Microsoft and OpenAI cementing their relationship. NVIDIA investing in Nokia. More when we continue.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. A rally in the world's largest tech companies sending stocks to records, right to the numbers here. We've got just about 1 hour, 39 minutes to go ahead of the closing bell. S&P right now up 31, trading at 69.06. That is a gain of 0.5%. The Dow up 395, up 0.8%. NASDAQ up by 1%. The NASDAQ 100 index up 0.8%. On an update for much of the market, though, the Russell 2000 index lower a little change, down under 0.1%. 10-year 3.98%. Gold down $22 the ounce, down another 0.6%, $39.59. West Texas Intermediate crude down 2%, $60.08 a barrel, and Bitcoin up 0.6%, 115,182. Apple hit $4 trillion in market cap, making the iPhone maker only the third public company in history to reach that milestone. Apple right now up by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. NVIDIA shares, just to rehash, up about 4% today. This as the NVIDIA GTC event is underway in Washington, D.C. Jensen just off the stage giving his keynote. Also there is the co-host of BTech, Ed Ludlow. Ed, so many headlines, hard for us to keep up. What really matters? What's news in terms of what we got from Jensen?
Yeah, for the market, it's the idea that this big cycle is alive and well, right? What Jensen Huang said is that for their Blackwell Rubin generations of accelerator cards, they're expecting over the next 6 quarters to ship 20 million units, which equates to $500 billion of revenues. There's a lot that NVIDIA didn't say about that number, by the way. He's literally standing on stage and there's a slide behind him. We don't know if it includes other gear like networking, and if it strips out the impact of other generation of processors. What we do know is that $500 billion figure excludes China. And so the market kind of took that and was like, okay, what is Jensen Huang trying to tell us here? And it's this idea that maybe we're not in an AI bubble, you know, that they have line of sight for many quarters to come, that all of this, like macro level investment on the infrastructure, but now increasingly a broad range of industries is buying into the thing that Jensen Huang's trying to sell.
Ed, you're going to, in just a few minutes, be speaking with Jensen Huang, along with Nokia's CEO as well. NVIDIA will invest $1 billion in Nokia in an AI networking push. Ahead of that interview, what are the details our audience needs to understand about this deal?
I mean, this was the surprise piece of news probably because look at Nokia's ADRs. I think they're still up 25%, right? The structure of the deal is that Nokia will look at using NVIDIA's infrastructure for training purposes, strategically looking at AI. NVIDIA will look at Nokia's mobile networking gear in its own data centers. But the main thing is that this is strategic. It is about national security. In the first instance, they're talking about cooperating on 5G networks, but then the future 6G network. And, think about who the big players are in that market, particularly in Europe, the Middle East, and Africa. Number 1 is Huawei. Number 2 is Ericsson. Number 3 is Nokia. This is NVIDIA making a pretty significant investment and bet on a domain they're not yet in, mobile networks. But I think that when we have this conversation, we have to talk about what was it in this for America, beyond just the investment that NVIDIA is making.
So lots of headlines from NVIDIA. I mean, I'm just looking at all of them, and including partnership with Palantir. There's something with Lucid, NVIDIA teaming up on driverless cars. There's just so much stuff here. What do investors who've been on this ride with NVIDIA in terms of buying up the share price, making it one of the largest market caps out there, what should they be asking of this company right now, or what should they be watching out for?
Yeah, it simply will boil down to whether the technology industry and NVIDIA's investors share Jensen Huang's vision for the next 5 years and beyond, the future. He went through basically the entire history of American technology from the invention of the transistor onwards. Actually, he brought up the light bulb and Edison, but we won't go there. And the point that he's making is that he's trying to say we're in the next phase of this. We went from computing to accelerated computing. We have built out the infrastructure layer when it comes to data centers, but he wanted to look us at these other parallel industries, robotics, autonomous autonomous driving, as you pointed out. They didn't say much about healthcare. And the one thing that jumped out at me that Jensen Huang said was the AI chatbots are now worth paying for. And if you take that in aggregate with Jensen Huang's commentary on where we are with Moore's Law, it seems to be that he's saying we are not in an AI bubble. And if I get a minute or two at the end of the interview, I'm going to ask him, are we not in an AI bubble?
All right, a good preview there. Before we get there, Ed, and this is just the last question we have for you right now. You know, we talk to you quite a bit all over the country. Oftentimes, though, you're in California, you're in LA, you're in San Francisco. Sometimes you go to a facility in the middle of the country. I don't recall ever doing anything with you at a big tech event in Washington, D.C. I think the fact that GTC is happening in Washington, D.C. is a story in and of itself. What's going on with that?
Yeah, so, I mean, there have been GTCs in DC before. It's the first time that Jensen Huang has made a keynote at it. And, you know, based on our reporting, I think there was a very firm expectation when this date was announced that the President of the United States would be here. And, you know, Jensen Huang this morning, I believe he spoke to reporters on the way in saying effectively that. We know that the president is expecting to see Jensen Huang tomorrow in Asia. So I'm assuming he's done talking with me and then gets on a plane and goes straight to Korea, I believe. So that's what this was about. It was about us being a few blocks away from the White House. And throughout the course of the presentation, you know, Jensen Huang was complimentary about the president's policy base, from energy through to some broader topics on deregulation, and what that's allowed NVIDIA to do. The big unanswered thing was what happens with China. And that is the question to ask.
Yeah, massive, massive issue. Hey, we're looking forward to that interview coming up a little bit later on this hour. That is, of course, our Ed Ludlow. He's co-host of BTech. He's out there in Washington, D.C. at NVIDIA's GTC event. So, again, we will be hearing from Jensen Huang and also the CEO of Nokia on their deal that was announced earlier today. As we've said, Tim, there's just so much coming at us on this Tuesday, and a lot of it is because of NVIDIA. But there's just so much going on when it comes to AI-related news today.
Yeah, OpenAI continues to forge relationships, as does PayPal. The two announced a tie-up whereby PayPal's digital wallet will be embedded into ChatGPT. It'll send PayPal shares up the most in more than 6 months, or it did send PayPal shares up the most in more than 6 months. And then the Microsoft news that we've talked about quite a bit, Carol. Longtime backer Microsoft, a 27% ownership stake in OpenAI, this part of a restructuring plan that took nearly a year to negotiate. It removes a major uncertainty for both companies and clears the path for ChatGPT and the maker of ChatGPT to become a for-profit business.
It's a lot. So let's get into it, and really just how OpenAI continues to be at the center of so much. But we have so many questions about why Microsoft is doing this at this time. Bloomberg Intelligence senior technology analyst Anurag Rana joining us from the Bloomberg News Bureau in Chicago. Anurag, why is Microsoft doing this? Did the company need to do this, kind of cement that relationship financially and otherwise with OpenAI?
Yeah, I mean, they had to do it because OpenAI has been, raising capital with the idea that they will go from a not-for-profit to a for-profit company, eventually going public someday. So, I mean, this had to be done. The big contentions were there are so many things that they were arguing against, revenue share, technology share, all sorts of different things. Microsoft had control over which cloud providers that they can use, etc. So this new agreement kind of cements a lot of those things, removes a big overhang that's on, I would say, more on Microsoft than on OpenAI, frankly, because Microsoft is using OpenAI's technology in their products, in the Copilot products that are out there. That's, I think, for us, that's the most important thing. Frankly, it's not so much the other financial details.
Since Microsoft will have this 27% ownership stake in OpenAI, can we look at Microsoft's share price on a daily basis as some sort of public proxy for OpenAI and how investors are valuing OpenAI? Or am I trying to do too much math here?
No, I think that's a bit too extrapolation over there. The thing that you want to focus on is, for how many years will Microsoft have access to OpenAI's leading models? So when you look at frontier models, you have OpenAI, perhaps, most in the lead. Then you have Anthropic and Gemini. Those are the three big ones that everybody talks about. Down the road, Microsoft needs to make sure that the Copilot products that they are selling out to the public, both on the M365 and then the GitHub Copilot, which is used for coding, they really have an alternative to OpenAI. One answer could be they have their own models, but they're not there yet. So this contract, extend that to 2032, which is, you can say that they're giving themselves 7 years to figure this thing out.
Help me out, though. It's just like OpenAI and Microsoft. I'm looking at the Bloomberg. OpenAI and PayPal, OpenAI and SoftBank, OpenAI, pick your company. They are just, I feel like, lining up deals or agreements or relationships with everybody and anybody. I mean, Microsoft, are they going to have to share the wealth, if you will? And does it become a little bit messy? Because I'm just assuming that there will be companies that maybe in some ways are also competing with Microsoft that have deals with OpenAI, or is that not right? I don't know.
See, it's a very common thing in technology. Almost everybody who's competing with each other are also working closely with each other. So that's, that's on the side. But when you look at OpenAI, that's an area where you and I use ChatGPT a lot. But imagine that now what you can do is, let's say they have a partnership with Walmart. With PayPal today, you are looking at a product and you decide that you can just buy the product seamlessly from that. They have a similar agreement with Stripe and Shopify. So what OpenAI is basically saying, let us be the front end for a lot of what you're doing, let's say on the consumer side. So example that I gave you is more for a retail purchase. But on the other hand, they also have a deal with Salesforce. So for example, if you are in ChatGPT and you want to look at your Salesforce application, you can do that as well. So OpenAI wants to make sure that they are the front end for a lot of discussions that are going to happen. And that's where I think a lot of the fighting is going to be down the road.
Anurag, we had this conversation with Jan Van Eck of Van Eck yesterday, and he talked a lot about AI and the AI trade, but he also mentioned some stats about when web traffic is going from ChatGPT to websites. And it got me thinking about how people are increasingly replacing or supplementing what they do on the internet using ChatGPT. The news today, too, that this potential PayPal tie-up where you can pay for stuff within ChatGPT also got me thinking, does Alphabet have to be scared about its core business here?
But that's been the case for so many years. People have been talking about this the first day ChatGPT was launched, that, what's going to kill Google's search business? So far, I haven't seen those numbers that are out there that is having a very large financial impact. I'm sure there is some share loss in searches, but I haven't seen it. So we'll see, how this shapes up. Google has, or Alphabet has, a lot of interesting assets. They have semiconductors that are very important. They have a cloud platform. They have a large frontier model. So I think they have all the pieces out there. The question is, whether the market is big enough for a lot of them to exist or coexist at the same time.
Hey, Anurag, over the summer, Bloomberg put out how OpenAI said Elon Musk identified Mark Zuckerberg as one of the people with whom he had communicated about potentially financing a deal to purchase OpenAI. Does this Microsoft deal put an end to any other big player coming in? This is theirs.
I think so, but again, legal ramifications are such that you don't know how some of the judges will move towards. But this is basically OpenAI saying we have figured out a way to how to go, you could say, become become for profit, and eventually someday go public.
Yeah, that's going to be interesting, right? Listen,
at what valuation?
Well, and for OpenAI, right? They can kind of stop the money grab for now, right? Because they just got a massive cash infusion.
Yeah, but they are also spending at the amount that nobody has seen. They have a very large contract with OpenAI, with Oracle, and they, today with this agreement, they've committed another $250 billion of computing capacity with Microsoft. So it's, their expense is far exceeding the revenue right now. They are doing these, you could say, investments so that down the road they can recognize the value of some of these investments. So that's, I think, where the mismatch is for a lot of people. And so unless there is some equilibrium, I think it's going to be very tough for them to go public.
Yeah, the money flows around AI in, out is like phenomenal. Anurag, you too, phenomenal. Thank you so much. He is Bloomberg Intelligence Senior Technology Analyst out there in our Bloomberg News Chicago Bureau. Just a quick check on shares of Microsoft, Tim. They've been up as much as 4% in today's session. Still, though, a gain of about 2.2% in today's trade.
Yeah, how about NVIDIA? Shares up another 4.3% in today's trade, close to session highs, just hovering around session highs. We're going to have more on AI and the deal between NVIDIA and Nokia. In just about 10 minutes' time, BTech co-host Ed Ludlow sitting down with Jensen Huang, the co-founder, president, and CEO of NVIDIA, along with the president and CEO of Nokia. That happening in just a few minutes.
All right, so we're going to get back to that. As we said, tech focused today, but we're also thinking a lot, as we talked about with Matt Luzetti earlier, we're thinking a lot about the U.S. economy. We do get a Fed decision. 24 hours from now, we will have that Fed decision, and we are expecting a rate cut. But we wanted to talk a little bit more about the economy and do it through the lens of Wayfair. Those shares are surging as much as 24% higher in today's session. The stock trading near the day's high, even at this hour, which is the highest level since April of 2022. The e-commerce home furnishing retailer reported net revenue and adjusted EBITDA for the third quarter that easily topped expectations, Tim.
We've got Kate Gulliver, Chief Financial Officer of Wayfair, back with us. She joins us from Boston. Kate, good to have you back on the program. Thanks for joining us. Investors certainly loving the update on the business. How is business? How is it kicking off in this final quarter?
Yeah, thank you for having me back. Happy to be here. We're obviously quite pleased with the third quarter results and the subsequent reaction to them. And I do think it shows, all the work that we've been building to over the last few years and the enduring strength in the model. And so you saw that top line come in pretty nicely at 8%, net 9% adjusted for the German business. And that really is compounding share gains there on the top line. And that, of course, flowed through quite nicely to adjusted EBITDA gains.
How would you describe the consumer?
Yeah, it still remains for us that the consumer is quite focused on promotional events. And so our consumer is typically a woman, mass market, and she needs those promotional events to really come in off the sidelines and get excited to shop. We've talked in the past about, how the promotional events really work as a marketing banner to get someone interested in the category and to then bring them into the site. And that is still the case. Those promotional events are pretty necessary to get the consumer engaged and excited. We do see relatively more strength in that higher end consumer. For us, that's consumers that are transacting on our Paragold site, which is our luxury brand, or our specialty retail brands. We've said that those are actually growing at a faster rate than the core Wayfair.com business, and you are seeing more strength in that consumer segment.
Talk about promotions. You mentioned them. You have to get consumers excited. Do you have to get them more excited now than you did in any other part of this year? We're really trying to understand the economic environment out there.
What's interesting is this category in particular has been down for so long. So the category, obviously boomed during COVID and then had a pretty significant pullback 22, 23, 24. So throughout 24 and 25 for this category, promotions have been critical. I would say what we have seen, really throughout 25 is there's also been some mix shift dynamics in addition to sort of higher end consumer and mass market consumer. You do see consumers that are shopping for, things like decorative accents, decor, maybe things with a lower ticket than, buying a new couch or a new chair. And I think that's the idea. Someone wants to refresh and is excited about that, but they want to be mindful of how much they're spending. And so they're looking for the smaller pieces, maybe opposed to the big piece.
Well, to that point, Kate, I think about the pandemic. We realized that's the anomaly. I mean, I'm looking at your stock is up 142% this year, which is quite a run, but it's still down about 69% from 2021. We know everyone was at home, spending on their home. That's why people were working at home, spending on their pets. There was a lot of stuff going on. So I am curious about when you look at the third quarter growth, how much came from intrinsic share capture versus category stabilization? Because it does sound like we're seeing a lot of stabilization here.
It's a great question. We think the category itself is roughly flat to slightly down. So I do think the category has stabilized. And we see that. We look at a variety of different data sources, and they're all slightly different, but they coalesce around a flattish category. This is in contrast to last year where the category was down maybe, mid-single digits to high single digits. So that's certainly an improvement, but we don't yet see the category as having returned to growth. So when we look at sort of 8% growth, right, that's definitely us gaining share on a category that is, say, flattish.
When consumers are buying from Wayfair, are they buying to replace stuff, or is this trade-up activity? What is the data telling us or telling you?
Yeah, that's a great question. We're certainly starting to hear that a bit from folks. Have we hit replacement cycles? And really, to the conversation we were having around the pandemic, it speaks to so much of the pull forward in demand that happened during that pandemic period. I think we see a few things that drive purchase events. One is moving, and obviously that part of the category has still been quite suppressed. One would be life cycle changes. So, your kid, you had a baby and now they're moving into a toddler bed, or the kid's leaving the home and you're turning their bedroom into an office. So sort of as your life cycle evolves, regardless of if you're moving. And then a third would be, replacement categories or sort of, zhuzhing up your room. In replacement cycles, I think a lot of folks are eager to see if, what was bought in 2020 and 2021 needs to be replaced at this time. And I think what's helpful to understand there is it's just very category by category specific. So if you bought, opening price point outdoor furniture, and you live in the Northeast, maybe 5 years is, an appropriate time frame. But if you bought a, nice couch, you're certainly not hitting the replacement cycle on that yet.
I gotta say, I love zhuzhing. I love buying pillows, but I'm afraid if I bring any more pillows home, my husband's gonna divorce me because he's like, I can't even find I can't find the bed anymore. Hey, listen, you talk, Kate, about the higher end brands like Paragold. You're seeing some strength certainly in that area. I am curious too about your retail expansion, the physical store retail expansion, or your loyalty program. If that's adding incremental customers versus shifting existing digital ones. What are you seeing on that front?
Yeah, great question. So on the physical retail side, we are adding incremental customers. We're actually seeing in our first large format Wayfair store that's been open for a little over a year now, more than 50% of the folks who are transacting in that store are actually new to the customer file. We have a 100 million customer file, right? So to be getting new customers at this stage is pretty exciting. So it's definitely acting as a way into the brand. Paragold, we actually just opened 2 stores for Paragold. So we opened one in Houston in the spring, or sort of early summer, and then we just opened in West Palm Beach in Florida a week ago. So it's very early days on those stores, but we do think that they should work as a nice customer acquisition channel. The loyalty program, which is about a year old, I would say that's acting more for existing customers to get them to be increasingly sticky with us. So what we're seeing from loyalty customers is nice incrementality, meaning, if they were going to purchase, 6 or 8 times a year, and maybe they were buying 1 to 2 from us, hopefully we're getting that next purchase, that second or third purchase as well now.
Kate, on the layoffs that we've heard from other companies just in recent days, Amazon planning to eliminate roughly 14,000 corporate jobs. This as Andy Jassy warned that AI will shrink the company's workforce. You have a 2,500 person tech team. How are you thinking about headcount? Are you reallocating headcount toward AI applications, or are productivity gains allowing you to do more with a similar cost base? What are the numbers there?
Yeah, it's a great question. Actually, our CTO, Fiona Tan, was on our earnings call this morning speaking to some of what we're seeing from AI, both on the top line perspective and where we're going with, personalization, but also on, efficiency. Every employee in the company, not just in tech, is actually enabled with AI, tools and AI resources. And right now, what we're seeing is really nice, efficiency and enhancements to individual employee work. And then in different pockets throughout the company, including within tech, as we use more specialized AI tools, you see, uptick in efficiency there. I frequently actually talk about our legal team, so not a tech team, but a team that, has been able to adopt AI quite rapidly for document review and the ability for them to sort of manage, for example, increased lease load as we've been expanding the physical retail network without having to add incremental folks has been pretty impressive. And so we certainly are seeing gains, from that efficiency internally.
Hey, do you feel like, though, in this environment that you want to be lean and mean? I mean, I guess I feel like all companies want to be lean and mean, Kate, but I do wonder if you're seeing, as you look down the road, we are in this funny environment, funny, not funny, haha, but funny, difficult, in that with the government shutdown, we're not getting data, so we're trying to figure out by talking to folks like you, where we are in our economy. So do you feel like there's pressure to be leaner and meaner than maybe, I don't know, a month ago or so, or you feel more confident about what's kind of coming down the road here?
I think you framed it well, Carol, when you said you should always feel, the importance of being lean. I mean, we're a mass market retailer, right? We operate on basis points of margin. So we absolutely need to be maniacally focused on cost at all times, regardless of the macro that we're operating in. And over the last several years, you saw us go through a number of restructurings, frankly, to bring down that overhead cost pretty significantly. Our most recent restructuring was actually March of this year, where the conversation on tech employees, we did lay off some of our tech team as we completed our replatforming exercise, and we're able to actually increase some efficiency on that team, pointed more of those resources, towards AI, et cetera, as they have stayed. So, we continue to be quite focused on efficiency and efficiency gains. We feel good about, where the team is right now and the efficiency that we're seeing from that operating team, but that comes on the heels of, several rounds of restructuring over the last 24 months.
Well, on AI, on the consumer side, when it comes to AI, I'm wondering about the traction from Muse and Decorify, the decorating platform, the new pilot. How has that been with shoppers so far? Is it driving broader consumer adoption of AI-led design?
Yeah, so we've tested out a number of AI, tooling as it relates to how the consumer can experience our website. We offer millions of different SKUs across thousands of suppliers, across a wide range of styles. So the holy grail is really personalization. And how do all three of us may be searching for, those throw pillows for the bed that Carol was talking about, and we all may have a different aesthetic. So how do we land on the site and get to our aesthetic as fast as possible? Decorify and, now we have a tab on the app called Discover. These are ways for individuals to sort of browse and engage in a way that should be more personalized for them, and we do see great engagement there. But even on, the main part of the app, so not using one of these specialized tools or the main part of the website, we are using generative AI to make that experience better. We spoke on the call this morning about combining generative AI from a merchandising perspective with actually human designers. And for folks that landed on those SKUs that were the combo of the both, we saw a third, uplift and sort of engagement with that SKU. That's really exciting because that means that SKU is probably far more relevant to you than where you were going to land before.
All right, great stuff as always. Great read on what's going on in retail and certainly the consumer. Kate, thank you. Kate Gulliver, Chief Financial Officer of Wayfair. And so we did talk about AI there with Kate a little bit in a broader conversation. It is a very big theme for us on this Tuesday. This as we are seeing shares of Nokia ADR soaring on news today. On the news that NVIDIA plans to make a $1 billion equity investment in Nokia. It's an apparent vindication of the Finnish company's pivot from mobile networking kit into artificial intelligence by the sector's kingmaker. We've got all the details.
And NVIDIA CEO Jensen Huang, he's the co-founder, president, CEO of NVIDIA. He's sitting down right now with Justin Hotard, president and CEO of Nokia, along with Bloomberg Tech co-host Ed Ludlow. Take it away, Ed.